useful because you help us paint that picture that this isn't about throwing an AI at a problem and suddenly solving a question that we couldn't solve before, but it is about speeding up the process that is involved in trying to answer that question. And I think that's really useful exactly to keep in mind, right? And that's what we're talking about almost with the bioweapons. Like, it's all part of that same argument that we have so much to do. AI just helps us get through some of that stuff, not actually solve the problems.
It helps us get through it, and it will help us get through it much faster. Building an AI scientist will not just help science, it will help AI also.
What is the next frontier?
The next frontier after the AI scientist.
Yeah, after you solve all this AI scientist related stuff, which sounds like a walk in the park. So
yeah, we'll be, check back in a few days. We'll probably have finished it, right? Accelerating discovery research, after we have access to an AI scientist that will make science move much faster, we need to understand how fundamental biology works so that we can cure diseases. And, I'm hopeful that there are many, many diseases that we currently struggle with that we will have treatments for or cures for in our lifetimes by virtue of the acceleration that will come from, from combining AI, from bringing AI into science. So that's thing number one. And then thing number two is on the other side, once we have an AI scientist and people are able to benefit from access to that expertise, I really hope that the quality of medical care, for example, will get much, much better worldwide.
Sam, thank you so much for joining us.
Thank you. This was great.
Thank you so much for joining us.
Great to be here with both of you.
So you're President Biden's scientific advisor, and you also lead the Office of Science and Technology. You also spent a lot of time at DARPA, which is the federal agency that developed technology like GPS and the foundations of the internet. Many people don't know that. And that's because government today isn't exactly known for being at the cutting edge of technology. Can the rise in AI mark a change in that, where government plays a bigger role in driving innovation versus playing catch up to the private companies that are developing it?
Well, AI is changing a lot of things right now, and that's why President Biden's been extremely clear that it's one of the greatest opportunities of our times, and it's going to come with risks that we have to manage. And the work that's underway, the White House has been driving a lot of forward action here in this area. That work is about managing risks, but it's also about seizing the opportunities. And some of those big opportunities from AI are about the research that continues to be funded by the federal government.
So do you think that government can be a driver of innovation in this new age of AI versus just relying on private tech companies to come up with that technology?
Well, we're seeing a surge, and we're very happy that that surge in AI technology has come from American companies. It builds on the shoulders of many, many, many decades of publicly funded R&D, and now what the companies are doing on top of that. So I very much see it as a system where all the pieces have to work together. I spent half of my professional life in public service, but the other half in commercial technology, and every big thing this country has ever done has taken all of us, and that's certainly going to be true for seizing these opportunities from AI as well.
What are some of the moonshots that the US government is currently working on that could incorporate AI in advancing them?
President Biden likes to talk about this being the only country in the world that can be defined in a single word, and that word is possibilities. And that's what science and technology is all about. So I'll mention a couple of areas. One very important area of focus is changing health outcomes. And in this area, the President and the First Lady last year reignited their cancer moonshot. It set an extremely aggressive goal of cutting the age-adjusted cancer death rate by half over the next 25 years. That's about double the rate of progress that we've been making on cancer. The other goal that went with that is to change the experience of people and their caregivers and their families as they are all going through this cancer experience. And if you think about it, who isn't touched by cancer? This is one of the most foundational things, and an area where everyone in this country can pull together for a moonshot goal that really, really matters. Well, how are we going to do that? Well, to do that, we need to prevent more cancers. We need to detect more cancers quickly so that they can be caught. And we need better treatments for when cancer does move forward. And all in every one of those areas, from public health to developing new drugs to tailoring clinical care for an individual, every one of those is an opportunity for AI to help accelerate progress in some very dramatic ways. So that's one huge example. I could tell you a similar story about dealing with all the effects of climate change as they're coming, modeling extreme weather and helping the country be more prepared for resilience.
Could you expand a little bit on your outlook on how that could be achieved?
Well, let's step back for a minute. What these AI systems are so powerful that they can seem magical, but really what they are doing is statistics at an extraordinary scale. So large language models that led to chatbots are about training these systems on human language so that they can build statistical estimates of answers to your prompts. When you're thinking about something like weather, that's another very, very, very complex system. Think about how huge the atmosphere is that surrounds the world. Think about how complex the calculations are when we run simulations to try to estimate how the weather will progress in the short term. And then think about how hard that problem is when we're thinking about climate effects over many years and many decades. That is the complexity that AI helps wrangle because of this new approach of training a computer on a lot of data so that it can build better estimates of what could happen in the future. And harnessing that power is going to lead to some very practical advances, we think, in both understanding weather better, but also understanding long-term climate effects. That's what's going to help us be more prepared and more able to deal with what's coming.
And obviously the US is a huge key driver in developing AI technologies, but I'm curious, as a non-US citizen, who do you see elsewhere in the world doing interesting things?
Well, this is a global technology. First of all, again, AI, it seems like magic, but it really is human beings and corporations that are building compute, that are training it on data. They're using algorithms that are developed in research communities and widely shared. And so the ability to build AI of various sorts, it happens around the world. And in fact, I think that's good because there's so many applications globally that we'll want to pursue. But of course, it does mean that it really comes back to the question of what kind of a future we're going to build. And, if you think about it, it's such a powerful force right now. Every country around the world is using AI to build a future that expresses their own values And I think this is why it is so important that like-minded countries with democratic values and norms come together and agree about how we're going to build the rules of the road for AI.
You're advising President Biden on this new age of artificial intelligence. How is the Biden-Harris administration thinking about AI?
The starting point for this administration is what the president talks about every time he talks about AI. He sees its power and its potential, and every time he talks about it, you can hear his optimism about all the things that it's going to bring, and he's very clear-eyed that that doesn't come for free and that managing its risks has to go hand in hand with it. President Biden frequently talks about the fact that we're at a pivotal moment in history in which the choices that we make in the next few years are going to shape many, many decades ahead. AI for him is very much part of this moment. And that's why you've seen this administration move out so actively with urgency, starting by listening to all kinds of communities. We talked about the work that we've done with industry, but also we've had very active engagement with civil society.
Dr. Prabhakar, thank you so much for joining us.
It was a pleasure. Thanks for having me.
Nima and Kumar, thank you so much for joining us. So you're a professor at Caltech and you're senior director of AI research at NVIDIA.
Which actually makes you the perfect person to answer a question that we've had, which is really broadly, how is AI changing, or has it been changing the scientific process over the last couple of years? Let's begin with that.
Yeah, this is such an exciting time. Thank you for having me on this show. And, the world has seen ChatGPT and the power of AI when it comes to language models. But to me, that's just the beginning, because beyond language, we can think of all kinds of scientific processes. And by understanding that through AI, we can do everything better, faster, cheaper, more accurate, and really be able to come up with new inventions and discoveries.
Let's dig into that. What does an AI-enabled lab look like?
Yeah, to me, like AI will completely transform the scientific workflow the way we know it. Ever since the 17th century or even earlier, the way we came up with new inventions or discoveries was somebody has some intuitions, right? They went to the lab, they tinkered, they're like, oh no, this doesn't work. And okay, this works, let's move ahead.
Trial and error.
Right? Exactly. And now think about AI being able to do that in the virtual domain, like being able to accurately simulate many of the processes or learn from data, right? The observations directly. And with that, be able to come up with better design, better discoveries than what would have taken really long in the real world.
What's changing the most right now? When you look at the landscape, is there any particular field that you see evolving much more quickly than any other field?
I mean, one thing that we're working on heavily is the Earth-2 project at NVIDIA, where our goal is to build very accurate digital twins of this planet. Be able to predict not only short-term weather, but also long-term climate change eventually.
The digital twin of the Earth, what is being twinned?
Yeah, all the processes on this planet. Think of like the atmospheric processes of convection currents, storms, right? Even really like fine scale features of cloud turbulence, what's responsible for hurricanes, for instance, how would this hurricane paths change, and can we come up with the right risk assessment? Because these are chaotic systems. These hurricanes can go in so many different ways. Can we really hone in on what is the risk to different human populations based on what we see today? So these cheaper and faster weather forecasts with AI will also enable us to create better probabilistic assessment of extreme weather events.
Let's talk about some of the other fields that AI is making transformations in the scientific process. For example, genomics or even drug discovery. What's going on there?
Oh, it's such an exciting time there because, the same kind of generative AI that we see for language, you can replace the letters of the English alphabet instead with nucleotides. ATGC, if you recall, what makes up our DNA, right? And with that letters, you can now ask the language of the genome and have a model learn that.
So if there are tasks that artificial intelligence can make more efficient or even replace humans in a lab, what's kind of the vibe in the scientific community? Is there as much fear as there is in other industries that AI could take their jobs?
I mean, I don't think it'll happen anytime soon, and maybe never, because humans are such creative beings, right? We're always thinking of the, next unknown question, right? There's so many deep mysteries of the universe. There's so much we still need to understand. And AI is a tool. This will enable lab scientists to rule out a lot in simulation before they can go and do their experiments. So they only need to do a few. But then I feel like there'll be always things that'll be still unknown and to be conquered.
There's a lot of, I don't want to use an unpleasant word, but there are a lot of people who don't believe in things like climate change. And there are a lot of skeptics who believe that science is out to get them, or that, we're all just sitting here lying. Is there work being done that you think could actually win over some of these skeptics? Is there a way to demonstrably show them?
Yeah, I do think all the work we're doing will help towards this because, this is not some model that's in some supercomputing facility, right? Not available to the public. I mean, you can download this and go try some of this yourself. Just like a video game, you can play the game of climate change one day, right?
Quantum physics.
So everything becomes accessible. At least my hope is, chunk of the community that is curious will have resources online that is much more open, so they feel like they can participate in that.
If you think about the scientific journey that humanity's been on over the last 300 years, it's been quite good. Just take us 10 years from now. Like, how different will things be?
I think the whole process of scientific research and development will be accelerated many, many times, right? Even orders of magnitude in some areas. And that'll just mean that we can quickly rule out things that don't work and hone in on things that work. Certainly, drugs designed by AI, they're already coming into trials, and that'll just increase fully. Personalized medicine for cancer and all of these, where we really haven't been able to understand, right, for various different targets, how to quickly design drugs. This can make it much faster and also cheaper, because right now so many of these treatments are too expensive to be done at scale. So it'll make this democratized and cheaper. And yeah, I think this will hit every area. I don't think any area is immune to this.
I think it will be interesting, won't it? 10 years time, if it takes the average drug 10 years to come to market, and if AI systems right now are coming up with some of the potential candidates for a future successful drug, then in 10 years' time, are we going to see a waterfall of new drugs?
I mean, it may not be a huge number, right? Because you can't test all of them. It'll be more targeted. It will be personalized. It will
actually work.
Exactly, effective.
Thanks so much for joining us.
Thank you. It's
Thank you,
been
Maud.
fascinating. Yeah. Thank you for taking the time.
Over the past decade, China has gone from a Silicon Valley copycat to a top contender in technology on the world stage.
Its ascent is peaking at a time when geopolitical tensions with the US and Europe are intensifying, and the rise of artificial intelligence has sparked a new arms race.
The US is rushing to curb China's influence in AI while balancing the need to regulate the powerful technology within its own borders.
How America manages these competing priorities will have implications for where the balance of power in tech will shift to next.
On this episode of AI IRL, we'll explore how China's playbook went from imitation to innovation and discuss what's at stake in the competition between these two superpowers.
Mustafa Suleiman, thanks so much for coming in. Now, you are the co-founder and CEO of Inflection AI and a venture partner at Greylock. Some people will know you as one of the co-founders of DeepMind, now owned by Google. Tell us, what made you want to start fresh with Inflection?
Well, now is really the moment. I mean, it was very clear to me during 2020, 2021 at Google when I was working on Lambda, the conversational AI that now powers Bard, that these large language models were truly going to be the future. And I wanted to start a company to build personal AIs, an intelligence that is completely aligned to your interests on your team and really functions as a personal assistant or a chief of staff, one that knows you intimately and over time can actually help you with practical tasks like scheduling, prioritizing, planning, and those kinds of things.
And that's what you're working with Pi.
Exactly, yeah. Pi stands for personal intelligence, and we see it as your personal assistant, essentially.
How do you feel about the concentration of power in technology right now among the big companies coming out with their own AI models? Microsoft, Google, Meta.
Well, I mean, I think you're right to point out that the big companies have the resources and the people and the compute infrastructure to be able to adapt and compete faster than ever, right? And that is a very impressive, reality of how technology works these days. It requires a huge amount of compute. And at my own company, Inflection, we've managed to raise a lot of money and build one of the largest supercomputers in the world. But on the flip side, the other trend that's taking place is that the open source movement is now almost at cutting edge. I mean, it's probably about 12 months behind the very largest models built at the big tech companies. And so that's kind of a contradictory trend. Like the big companies are getting bigger and better faster, but also everybody is now going to be able to get access to these same capabilities in open source.
Let's fast forward a little bit into the present day, where the world order has changed since you first entered the tech industry. How did China go from being a copycat culture to a contender when it comes to digital innovation and specifically AI?
Yeah, I mean, China is more than a contender. I think in many respects, it's one of the leading players now. I mean, they've always been incredibly creative. And I think that we may have sort of overstated the extent to which they were simply copying, what we were doing. And I think it's important to remain humble about the fact that, these ideas are going to be widely available to millions and millions of people. And, in many respects, all of our cultures are, equally creative, and they've been able to take, tools and ideas that are available both in open source and the academic literature and move them forward, innovate at the cutting edge. They've produced a lot of very good papers, contributions to the academic conferences that have been peer reviewed. So, I just think overall it's better to take an approach of humility, acknowledging that, they're also going to be a really significant player in this field over the next few decades.
How would you rank the United States in terms of technological prowess in that world order?
Well, I mean, there's no question that we, in the US and in the West more generally, are currently in the lead. I mean, we have the very best, most innovative technology companies and technology hubs. There's, without doubt, Silicon Valley is leading the pack. And I think we'll continue to. I think we worry too much that we're going to sort of be dislodged from our podium position.
For how long do you think?
Well, I think the question is, what does it look like to be dislodged? And is that really the right framing in the first place? Like, what is the difference between first and third? And, people talk about there being a race for AI, and it's very unclear what that looks like to come second or third in that race. I think it's sort of the wrong metaphor.
Are we talking about superpowers, Clash of the Titans sort of stuff? It reminds me of back when the previous US administration banned companies from doing a lot of business with Huawei, and Huawei ended up basically having to get a lot better very quickly at making its own chip designs and all that kind of stuff. And it feels like it backfired a little bit.
Yeah, you've also advocated for the US restricting sales of some NVIDIA chips, which are crucial in training AI systems, to buyers who don't agree or who refuse to use them ethically and safely. So what do you think is the best way the US can actually flex its power? Is it through the technological innovation or by stifling effectively some of its adversaries through regulation?
The first thing I should say about that is I don't think now is the time to do that. I mean, I think in theory, when the time comes, if the time comes for us to adopt a kind of global anti-proliferation strategy, we're worried about technologies being so powerful that we have to stop their spread. If that moment arises, and I think we're quite a long way from experiencing that, then technically that would be an appropriate containment strategy. Because much as this technology is manifested in software, it lives on the internet, it still sits on chips, whether you're training a model or serving a model. So in order to ask a model a query, you have to have access to one of those NVIDIA GPUs. And, for what it's worth, there are really only like one major company in the world that produces those high-end GPUs, NVIDIA, and they manufacture the vast majority of their chips at TSMC in Taiwan that use one single company, ASML, a Dutch company that manufactures the core chip that produces the chips, and they sit in the Netherlands. So it's actually a very narrow supply chain. And so I think the point I was sort of trying to make is that if you wanted to adopt a containment strategy, there is a supply chain where you can impose chokeholds on it.
And in 10 years from now, which country do you think will be leading the world in AI? Is it going to be the US? Will it be China? Will it be Europe?
It's going to be the US. I'm pretty sure of that. I mean, the fundamentals in the US innovation ecosystem are unquestionably the best in the world. I mean,
what could flip that balance of power?
Well, I mean, I think it's hard to say. I mean, I really do think that the US is in the strongest possible position. At the end of the day, you know, it's talent that drives, you know, this innovation. And talent still concentrates around a small number of physical places. Despite everything that we've experienced in the pandemic and people wanting to work remotely, you know, it's still really important to be physically proximate to other people who, you know, are working with you in the office. I mean, you know, I think that trend isn't going to change. I do think China is going to catch up. I think they're going to develop their own AI chips, their own fabrication facilities. But that is going to take 5 years or so. The export controls that the US has implemented, you know, are real, and they really will prevent China from getting access to the next frontier of models, so the GPT-5 onwards. Right now, I don't really see how China could train those kinds of models.
Is there any downside, any unintended consequences that could come from this containment strategy the US is employing?
Yes, I think it is a very aggressive strategy. The counterattacks have already started, right? China restricted galenium, which is a raw material used in chip manufacturing. And I expect them to have their own reactions in time. You know, we're very dependent on their supply chain. And so the idea that we could completely decouple, I think, is misguided.
I'm going to just put you on the spot really briefly and wonder, like, can you tell, because we're all friends here.
Sure, go for it.
Like, do you have a major regret about your work in AI? And do you also have a major single goal?
Yeah, my major single goal is to show that it is possible to create safe and ethical artificial intelligences which are accountable to humans. There is a possible trajectory where, you know, some groups may recklessly experiment with algorithms that can self-improve. And if in 10 to 15 or 20 years' time, those kinds of AIs are set loose on the open web in, you know, a reckless way, then I can imagine that possibly causing serious harm. And so for as long as I can remember, almost 15 years that I've been involved in AI, I've been trying to raise awareness and concern about the possible ways in which it can go wrong. And part of doing that is to show a bunch of practical ways that it can go right, both with writing my book and laying out a series of containment strategies and things that we have to do in politics to improve our governance and regulation, but also in actually building and making Pi, which I think is hopefully going to continue to remain a very safe and controllable personal AI that can work for you.
Mustafa, thanks so much for coming in. Been a pleasure.
Thanks very much for having me. It's been great.
Helen Toner, thank you so much for joining us. You're a director at Georgetown Center for Security and Emerging Technology, and you're also an OpenAI board member. Dan Wang, thank you so much for joining us. You're a visiting scholar at the Tsai China Center at Yale Law School, and you've been studying technology and China for many years now.
And we've just heard from Mustafa Suleyman, and he thinks that China's emerged as one of the biggest contenders in AI. So Helen, I'm just curious to start with, do you think we're overestimating China's capabilities?
It's certainly true that they're a big player. And it's also true that we shouldn't underestimate them and that we have a bit of a history of underestimating China's ability to innovate. I mean, I think 10, 15 years ago, the story, at least in Washington, D.C., where I'm based, was, yeah, China can't innovate. If they're producing things that look like new technology, it's because they've stolen them. I think that's clearly no longer true. At the same time, I think it's also very possible to overestimate them. And sometimes I think I see that as well. So are they a serious competitor? Yes. Are they eating our lunch? No.
So that copycat culture, it's fair to say that most people are thinking we're past that stage. Dan, what do you think of that?
Well, I think it's certainly the case that China focuses on different things. So President Xi Jinping is, I think, a little bit less enamored with the internet platforms, with a lot of the cryptocurrencies, with a lot of the AI businesses that Silicon Valley specializes. He's also a little bit less enamored of Wall Street and financialization and hedge funds. And if I had to think about what Xi's broad views are, it would be much closer to being something like capitalism with German characteristics, which is much more about building cars, building hydraulic pumps, building heavy machinery, the heavier the better, about all sorts of these major industrial projects. And I think China is very much a leader in things that include electric vehicle batteries now, solar photovoltaics. It is making a lot of electronics products, and it is innovating on a huge sort of a lot of the automotive supply chain. But I think they have a little bit less of a focus on AI, and therefore there is not so much political direction anymore to really push forward these consumer applications.
I think it's fair, though, that some of those areas, the US is also innovating very, very strongly. So are there any areas where China is innovating significantly better than the US?
Well, I would say something like electric vehicle batteries, where China has something like the 70% of all global expansion, all global capacity of electric vehicle batteries is now mostly in China. When it comes to the clean technology supply chain, again, these very industrial projects, these pieces of heavy machinery, that is a little bit more the focus. I think the US is really strong in things that include semiconductors, artificial intelligence, biotechnology. These are things, the smaller things where China is not so good, but there are big areas in which China is way outbuilding the US.
I mean, the semiconductors is getting significantly better in China. I mean, partly maybe as a result of the Huawei issue. Helen, what's your view on the semiconductor side of this?
So China's definitely been investing for decades in trying to have their own independent semiconductor supply chain, and they've been making some progress. The thing to know about semiconductors is there's a huge range of sophistication, from the really basic semiconductors, computer chips that go in basic devices, your smart fridge, your car, up to the kind of more advanced chips that might go in a brand new iPhone, up to very advanced chips that go in kind of the data centers, gigantic warehouses full of computing, which is what you're training advanced AI systems on. So China has made a lot of progress on the more basic end of the semiconductor sort of scale, and is still really struggling to hit the most advanced end. And that's where, it's not even, you can't even say the US is, alone able to create those advanced semiconductors. But what you have is an incredibly advanced global supply chain.
Many describe artificial intelligence and its development across these two superpowers as an arms race. Is that framework misguided, do you think?
I think it's a bit misguided. I think you really want to look at what kind of AI are we talking about, and in what way might it be a race. I think the place where it's clearest that it makes sense to think in a competitive framework is in kind of military domains. So, it's just true that the US military really wants to make sure that it is keeping pace with, and ideally a little ahead of, the Chinese, or a lot ahead of the Chinese military in terms of what technology they have.
Dan, Washington has taken some steps to curtail some of China's ability to get their hands on the cutting edge chips that really power these AI platforms. What's your take on that? Is that an effective strategy, or will China just find a way to build their own?
I think that China is going to try to figure out a lot of the way to build their own. A lot of the chip makers now have been under very significant stress from U.S. sanctions dating back to about a year ago now, released by the Biden administration, that is really stopping their ability to access not just the high-end chips, but also the semiconductor production equipment as well.
And I think in general, it's really difficult to distinguish between what kinds of technologies should the U.S. really not want China to be able to develop, and where is it fine. So, you mentioned, clean technologies before, where China, if you're looking at, manufacturing solar panels, as you mentioned, EV batteries, a lot of other areas, China is doing amazingly at that. And what you're starting to hear in some, U.S. policymaking circles is that maybe that's a bad thing, that China is making a lot of kind of clean technology stuff. And I find that a little sort of tricky to reckon with, is at what point do we want to really shut them out or prevent them from being, able to manufacture anything if it's something good, useful that we can use. Of course, if it's technologies that we think have really significant military value, I understand, but then it starts, the lines between those categories start to get very, very blurred.
It seems like these tensions are just ratcheting it up even higher as time goes on. With each administration, they're intensifying. So to your point, if we do need these other technologies, solar technology for this transition into a greener future, I mean, what kind of happens next? How much do we place on kind of the AI arms race that could then potentially work against us in climate change? Is that a concern, or is that too far in the future still?
Well, a few months ago, Beijing did announce some export controls on certain solar technologies involved in making production wafers.
So it's already happening.
It is already happening, that there are some threats out there that, relatively speaking, Beijing has been pretty restrained against retaliating against American companies of the likes of Intel, of the likes of Tesla so far, but these things could escalate more.
How does the relationship between, the ruling party in China play out against the kind of the development of companies?
I think the Chinese system is definitely more top-down when it comes to AI development. You see less kind of individual tech companies like OpenAI or Google taking the lead, and more these kind of multi-institution partnerships, or maybe you have a university and a tech company and a government, department all collaborating on big AI projects. That's much more common in China. At the same time, China is a huge country, so there's a limit to how much the government can achieve from the top. So a lot of what you see is sort of Beijing providing direction, providing ideas, providing sort of signaling of this is what we in the central government would be excited about.
Dan, how would you compare how the Chinese government is handling AI with its people versus how they handled social media?
Well, I think President Xi Jinping doesn't necessarily view AI right now, a lot of these ChatGPT-like applications, as some of the most economically productive things that are coming into our society. So I think that President Xi looks much more at AI like he would at Facebook or Twitter, now known as X or whatever it is. These are platforms like TikTok that, if you're asking me, is something like TikTok or Facebook really increasing my personal productivity? Well, I would say actually it is really horribly detracting from my productivity. And so I think that a lot of these AI platforms right now create speech issues. When an ordinary Chinese person sitting in Beijing or Shanghai asks AI, well, what happened in 1989? Well, what do you think of socialism? What do you think of President Xi's performance? These AI tools are having a lot of challenges actually answering socialist correct values that are in line with the government's ideas. And so these are major speech platforms, first and foremost, and perhaps not really the economically miraculous thing that raises our productivity growth at the very moment. Now, it might happen later on. Right now, I think the party views it as somewhere between economically not that useful and potentially very socially destabilizing.
So from a consumer standpoint, AI is it can potentially create more problems for the Chinese Communist Party. But then if you look at it from like a surveillance standpoint or military type of AI applications, that's kind of in a different camp. Is that right?
Yeah, that's right. And I think they're definitely, one area where China is, I would say, leading in AI is on surveillance. They really have leaned hard into facial recognition, voice recognition, even gait recognition. So how you walk in a crowd, can they pick you out by that? I think in the West, there's been some development of these technologies, but with a lot of criticism from civil society, a lot of hesitation, sort of, I would say, like very yellow light. And in China, it's been blaring green light.
On the topic of WeChat, when we spoke ahead of this, I think we touched on the fact that there are some generalized misunderstandings about China's approach to social media and data and AI. AI relying on huge amounts of data, and the perception is that because of things like WeChat and similar things in China, that there's this huge pool of data that the population in China is very happy giving over and is used to giving over, and therefore is just sitting around waiting to be exploited by AI. And I remember that you made a pretty significant point. It's like, that's probably not really the case. And people think that's the case, but it isn't. So I wonder if you could touch on that.
Yeah, I think people have this perception that because the Chinese government is very controlling and has a lot of access to what's going on in Chinese citizens' private lives, that means that there's these beautifully curated, extremely complete, large databases of information that can be used to train AI systems or to do other things. But for anyone who's ever worked with data, you know that cleaning data, structuring data, making sure that the right information is flowing in the right places is incredibly challenging. So it's both true that the Chinese government can get very detailed information on the private lives of its citizens if it chooses to, and also true that it's incredibly messy the way that works, and incredibly difficult for any given actor to get access to something. So, for instance, a company trying to train some AI model using data is actually subject to a pretty significant data governance setup in China, data governance regulations that make it really challenging to use customers' data for things it wasn't already designed for, or that you didn't already get consent for.
Which we learned from Cambridge Analytica scandal just as one case, and there are many others. That is not the case in the US. It's not the case in Europe. There's a lot going on. The EU's AI Act is pretty widely praised by some people, not everybody, but it's quite broad and far-reaching. But that's not the case in China, in terms of what you're saying.
So China's setup is now more similar to the GDPR that exists in Europe. So around kind of protecting consumer data and giving people the right to opt in to different uses. Of course, in China, there's always the exception, unless the security services think that you might be a dissident, and then they're going to get whatever they want on you. But in terms of kind of companies, they're certainly relatively restricted in what they can do.
Switching gears a little bit, Dan, I'm curious about how China's sluggish economic growth recently weighs into the government's calculus and how they're thinking about AI's potential to spark social unrest.
I think that the Communist Party is very much involved in trying to think about, how to control possible social unrest. I was in Shanghai in November 2022 when there were protests in the streets denouncing zero COVID, denouncing the Communist Party by name, that these were things that were erupting. And so I very much sign on to Helen's description of AI, that China is leading in the AI of censorship. It is leading in the AI of facial recognition. That right now it looks very much like the US is a place where ordinary consumers can tinker with and play around on a lot of these AI tools, whereas in China is mostly reserving these very powerful tools for its own use, potentially to control society. That right now China is in a moment of economic weakness. This might deteriorate further, this might get a little bit better, but there is always this presence hovering over there that the state security might ramp up its technology really to make sure that there are no socially destabilizing incidents.
Well, Helen, Dan, thank you so much for being here. It's been great to learn from the both of you.
Thanks so much.
Thank you very much.
Good morning. This is Horizons Middle East and Africa. Our top stories this morning. Talks continue. The United States says technical negotiations with Iran are ongoing after 2 days of airstrikes tested the fragile ceasefire. Stocks extend gains. Asian markets rally as investors pile back into semiconductor stocks on renewed optimism over AI-driven demand. And SK Hynix in focus after pricing its $26 billion U.S. share sale. Its ADRs are set to debut on the Nasdaq later today, topping Alibaba as the biggest ever foreign listing. It's just gone 8 a.m. across the Emirates. I'm Abir Abu Omar outside in Dubai. We're taking a quick look at where equity benchmarks are this morning. The S&P futures are trading sideways. They were slipping earlier in the day. So were the Nasdaq futures. Turning to a less positive session in the S&P 500. Yesterday, we saw a gain of about 0.8%. We're keeping an eye on individual names in the United States, namely Micron yesterday, which said that it was planning on increasing spending on new plants to about $250 billion to help meet unprecedented demand for memory chips. So we're seeing this demand for memory chips still very much in focus, still very much in the game. And the turning back to the AI trade, the AI boom, is seemingly what is the case in the market today, seemingly what is the case in Asian equities today that are now 1.7% higher, led by, no surprise there, the Kospi in South Korea. SK Hynix, $26.5 billion in the ADRs, debuting later today in the open in the United States. We've got Winnie in about a minute just to talk to us about what is happening in Asian equities generally. And then Brent crude edging higher, 0.4%. Lower than what we saw yesterday. Now, it did reverse gains yesterday during the trading session. We're seeing a little bit of a mute in the escalations in the Middle East this morning. We're reporting that the technical negotiations between the U.S. and Iran are back in focus. We'll talk also more about that later on in the show. And then we're also keeping an eye on the 10-year yields in the United States. 4.54%. A big story from yesterday about Fed Chair Kevin Warsh announcing the leadership for 5 new task forces. Now, he did say that he wanted a regime change within the Federal Reserve. Is this signs of that happening? Perhaps some of the names that Warsh tapped into include former BOE governors, former Brazil Central Bank governors, and we'll talk more about that, but we're noticing that the yield on the 10-year notes is 1 basis point lower this morning. Now, for a check on what is happening on the moves in Asian markets this morning, we've got Winnie Su, as usual, for us in Hong Kong. Winnie, what do you have for us this morning?
Good morning, Abir. Finally, a positive day after a very volatile week in Asia. You just mentioned MSCI Asia here extending gains to about 1.7%, led by gains in the technology shares. And that is coming after those spending plans by Micron, supporting investors' optimism that the AI demand remains strong. And of course, ahead of that massive U.S. listing by SK Hynix. And that's why you are seeing Kospi here leading gains up more than 5%. But also we are seeing gains in Hong Kong shares, especially tech shares in Hong Kong, ahead of Chinese chip maker CXMT's IPO next week. And that is also likely going to become the biggest mainland IPO. So lots of optimism around that front as well. Taiwanese markets closed today as a typhoon is approaching. But flip the board, we also want to take a look at the Japanese assets because we are seeing this triple rally across assets after the finance minister Satsuki Katayama urged pension funds to invest further into the domestic market. And that's why you are seeing Nikkei 225 here extending gains to close to 2%. Japanese yen also strengthening by 0.5% here to an intraday high 161.5. And also when it comes to bonds, we did see, in fact, yields falling about 10 basis points across the curve. Now, it really goes to show how there is more optimism that more money will return to the domestic market, especially because GPIF, in fact, now invests about half of its investment in overseas markets. Back to you, Abir.
All right. Bloomberg's Winnie Su in Hong Kong. Keep an eye out on those Asian market moves. Now, returning to the geopolitical story in this region, the truce between the U.S. and Iran is in limbo after a 2-day exchange of airstrikes and the reimposition of U.S. oil sanctions. Bloomberg News has learned that technical talks are continuing as Washington remains committed to finding a solution with Tehran. For more on this story, we're bringing in Honor Ant, Bloomberg's managing editor for the Middle East and North Africa. Honor, good to have you on this morning. We've been reporting on the past 2 days' events, the airstrikes, the back and forth. but they're returning to the technical talks, according to our sourcing. What is your read on that?
Yeah, as you said, the talks are continuing, and the U.S. is committed to finding a solution. That is according to a senior U.S. administration official. And this was broadly the consensus, and you can see that from oil markets, where the prices did jump indeed earlier this week following the skirmishes. But we're seeing Brent trading well below $80 a barrel, and that's well below the peaks that we saw earlier in the conflict. And that says something about the general consensus, which is that neither the U.S. nor Iran wants to go back to a full-out war. Even when President Trump signaled that the ceasefire, as far as he's concerned, is over, he did say that he would allow his negotiators to continue to engage Iran. So it was more about Trump trying to exert pressure and test the other side's limits than expressing a genuine desire to go back to war. But the problem here is, Abir, is that when the fighting starts, it's hard to foresee when and how it stops again, which is what's keeping markets and everybody else on edge.
Yeah, on edge for sure. And you did mention oil markets almost reacting instantly to the remarks President Trump made at NATO, but then steadying a little bit. But when it comes to the overall narrative, Onur, do you see more of this happening, this back and forth, this President Trump coming out saying something and then, going back on his remarks, and then we continue to see this MOU discussion kind of unraveling slightly, but never really collapsing?
Well, if history is a judge, yes, it might happen again, because the differences between the two sides on key issues, especially Hormuz, which is probably the most immediate issue to be resolved, remain really large. Iran does not want ships to take the southern route near Oman. It also wants to retain a certain amount of control over which ships pass and under what circumstances. So yes, it is likely, or it is possible, to see a recurrence of what we have seen at least twice over the last 10-15 days during the remainder of the 60-day period since the interim agreement was signed in June.
Yeah, so more of the same patterns. All right, Onur, thank you as always for your time this morning. As Onur Ant, Bloomberg's managing editor for the Middle East and North Africa. Now let's continue the conversation on this story, and for more analysis on it, we're now joined by Rachel Ziemba, founder of Ziemba Insights. Rachel, good to have you on. Thank you for joining us this morning. You were listening to what Onur was just saying about those same patterns repeating themselves. President Trump coming out and saying something, and then we go back to a state of plateauing when it comes to the negotiations. Do you forecast that to be the case for how long? For the remainder of the year?
Yeah, thanks for having me, Abir. I think we will see some form of, or we'll see some periods of violence, some frictions, but I don't think we're going to see a long-term resolution. At best, we might see a return to the MOU, but even if there are sanctions lifting in the future relating to Iran, I think the hardliners in the United States might limit the benefits to Iran. So I think these dynamics, we're still navigating towards a new normal. And, the buffers are pretty low out there in the global economy. So I think the markets are still looking a little bit optimistic on this.
So, Rachel, you talk about the new reality, and this is a notion that's shared by a lot of people that talk about the new norm, how things are going to look like. So how do ship owners now start to make their way in the Strait of Hormuz with this new reality? But do you think that in a few years' time, the Strait of Hormuz would lose its strategic importance as a shipping route, as a major shipping route?
I do think there'll be less volume. We're already seeing commitments from the UAE and Saudi Arabia in particular. They have used the bypass they invested in already. They're trying to do that as well, especially Saudi Arabia, for other goods, not just oil. So I think, we had 20 million barrels a day of oil and oil products going through the Strait of Hormuz. end of February, right before this phase kicked off, we might see lower volumes. But there's a lot of infrastructure and logistics, whether it's Jebel Ali, whether it's different ports. I think there will still be some reliance. Ultimately, though, it's not just about Hormuz and a strategic imperative, but also about whether there are risks from Iran and other regional actors to other infrastructure. For example, the UAE port of Fujairah has emerged as a very important vehicle, but it can be reached by Iranian missiles. So at the end of the day, in a context of escalating war, which is still not off the table, that remains a risk. But in the region, as well as around the world, I see more commitment to alternate pipeline routes, even if those upfront costs are large. And I'm watching, for example, what will happen with Iraqi supplies. Will there be pipelines that go through Syria, especially now that it's finally coming off the state sponsor of terrorism list? These things won't happen overnight.
Yeah, but Rachel, just going back to the Strait of Hormuz itself. Just going back to the Strait of Hormuz, and it is really at the heart of all of this, right? Because during the MOU discussions, we're seeing the nuclear component take a little bit of a backseat. That's Trump's main goal. So in a nutshell, now, as things stand, who do you think has the upper hand in this conflict? Is it Iran or is it the United States?
It's hard to tell. Iran definitely thinks they have the upper hand. Trump is sensitive to higher energy prices. This new escalation is coming after energy prices have come off, or at least crude oil prices have come off. Oil products are still in short supply and getting worse, in part because of dynamics in the Russia-Ukraine conflict. But that's another story. And ultimately, we're seeing Iran press its hand and look for oversight and influence over the strait in the future. And that's going to be something I think that will lead to lasting risk premia changing in the region and maybe persisting in some of these in some of these discounts that are offered in the region. And in particular, I'm watching, you asked about tanker owners. I think we'll continue to see some of these dark transfers and a subset of vessels that are maybe more willing to take the risk and use of the same or some of the same evasive techniques that Iran has been using for some time.
All right. Rachel, we're going to have to leave it there. Thank you, as always, for your time. Rachel Ziemba, founder of Ziemba Insights. The funeral for Iran's slain supreme leader, Ayatollah Ali Khamenei, has ended more than 4 months after he was assassinated in U.S.-Israeli airstrikes. Khamenei's casket traveled across Iran and neighboring Iraq over the past week and was laid to rest on Thursday in the northeastern city of Mashhad among a huge crowd of followers. And still ahead, OCBC tells us why they think logistics and transport costs around the Strait of Hormuz may pose a near-term challenge to central banks with explicit inflation mandates. More details on that ahead. This is Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Good morning. Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia Trade.
This is Wall Street Week.
Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend. This is Bloomberg Television.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers, and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech.
Every weekday, only on Bloomberg Television.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Asian stocks are climbing as investors pile back into semiconductor stocks on renewed optimism over AI-driven demand. The rally is being led by South Korea's Kospi, though the regional benchmark remains on track for a weekly loss. Joining us now to discuss those market moves is Selena Ling, Chief Economist and Head of Group Research at OCBC. Selena, thank you for coming on the show this morning. We spoke about equities and the Kospi in the intro, but I really want to start with the geopolitics just because it is the focus in the region. Now, you mentioned that the situation remains volatile, and the question that I have is the Strait of Hormuz still key for the reads that you have on those inflationary risks and other consequences that will reverberate through the global economy?
Well, thank you. Definitely. I think we know that the US-Iran ceasefire talks are hitting a little bit of a stalemate right now. We do know that the situation is quite fluid, but generally, I think we do expect that the Straits of Hormuz reopening is not going to be without speed bumps. So what that means is that oil prices are still going to gyrate around. The good news is that they are still trading within the $70 to $80 range, which suggests that markets are looking past this most recent development a little bit. But that said, as long as we don't have a more permanent peace deal, we don't have guaranteed complete access to the Straits of Hormuz, it is very likely that related transport and logistics costs will probably stay elevated in the short term. Maritime insurance, for instance, is unlikely to completely return to the pre-war levels, given that we still have this situation that's developing. I think for businesses, they would recognize that, it's very hard to see a very clear path, to lower costs in the short term, especially given that energy prices have lag effects.
Yeah. Selena, the underlying asset in this whole thing, in the Strait of Hormuz, is oil. And we saw how oil reacted to President Trump's remarks earlier this week when he was speaking at the NATO summit. But then we saw a steadying in Brent crude, at least. Do you think that going forward, oil markets will take those remarks seriously? Or do you think, that we'll start seeing more of a plateauing effect on oil? And what would it take for the market to reassess this war and go back to a state of very elevated levels?
Well, if you look at the traffic that's passing through the Straits of Hormuz, is still very low. It's really not normalized yet. But on the supply side, the good news is, of course, we're starting to see OPEC Plus basically wanting to hike production in the coming months. We also see that, U.S. crude inventories have actually rebounded in the latest week data. So I think all these kind of point to, no immediate urgency, or panic on the oil market front for now. I think the key really is in the coming weeks, and as we build out all the way to the U.S. midterm elections, is there going to be greater pressure for a more lasting peace deal? And I think the hopes are that, this will materialize. Of course, central bankers are concerned because inflation may not have peaked yet. And in fact, going into the third quarter, we may continue to see inflation creep a little bit higher. So the policy dilemma is really how to, marry this higher inflation prints for the coming months and the quarter versus the fact that, we do expect that eventually we should get to some sort of a deal between US and Iran, and hopefully the Straits of Hormuz will reopen without too many speed bumps along the way.
And just speaking about central banks, I want to pivot to the Fed and Kevin Warsh's the 5 task forces that he established. He did promise a regime change, and we're seeing by the end of the year, traders are still betting on a rate hike, 35 basis points in total. What do you think Kevin Warsh is going to be trying to do until the end of the year?
Well, I think actually the path of least resistance is to not rock the boat, which is why our house view is that, the hurdle to a rate hike is actually still pretty high. You really need the incoming data prints, whether it's on the inflation side or on the labor market side, to be signaling, significantly higher inflation for the hike to actually materialize. So rhetoric is leaning hawkish, but it may not necessarily materialize in a rate hike, even though the futures market has already priced in. As far as the regime change is concerned, I think that's imminent. The 5 task force will announce their recommendations by the end of the year. I think if you look at the picks that he has chosen to head up those task force, it's a very interesting mix of people, but generally people with quite a bit of institutional knowledge, if not industry knowledge. And the inclinations are basically leaning towards, less Fed communication, especially in terms of forward guidance, tighter balance sheet, a greater role for AI in the US economy, and also in terms of the overall framework of how to tie inflation expectations, a more rules-based monetary policy framework. So I think all these are basically, in the cooking, so to speak.
All right. So cooking is a good word for it. Selena Ling, Chief Economist and Head of Group Research at OCBC, thank you for your time this morning. Now, Taiwan has suspended stock trading and closed schools as Typhoon Bavi approaches the island. The storm is expected to dump heavy rain over a vast area and could lead to extensive flooding, even though it isn't expected to cross Taiwan's coast. Bavi is then forecast to move toward China's east coast, where heavy rainfall is expected across several provinces through the weekend. And the Federal Reserve Chairman Kevin Warsh has announced the leadership of 5 task forces to examine the central bank's approach to key aspects of policymaking. The groups will examine issues including communications, the Fed's balance sheet, jobs, and inflation frameworks. Warsh says the aim is to ensure the central bank is using the best tools and policy approaches, with recommendations due by the end of the year. But coming up, shipping traffic through the Strait of Hormuz grinds to a near halt. We'll get the latest on the oil markets next. This is Bloomberg.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Joanna Bersetchi in El Ola, Saudi Arabia, and this is Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Meta shares jumped in New York after the tech giant unveiled the latest version of its most advanced AI model, Muse Spark 1.1. The update includes a new paid tier for developers, marking the first time Meta has charged businesses for access. CEO Mark Zuckerberg told Bloomberg the new model has, quote, state-of-the-art or very close to it, agentic reasoning, and pricing will be, quote, very aggressive and attractive. And former Fed Chair Ben Bernanke has been appointed to Anthropic's Long-Term Benefit Trust. It's a governance body designed to safeguard the startup's public interest mission, advising management on decisions around AI risks and impacts. Bernanke has 3 fellow trustees hold no financial stake in the company, but will have the power to appoint and remove board members. Coming up, we'll get an update on oil markets. This is Bloomberg.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream, and a lot of dreams are, you know, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is, nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. You don't start on the 3rd floor or the lobby. You actually have to start in the basement.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Talks continue. The U.S. says technical negotiations with Iran are ongoing after 2 days of airstrikes tested the fragile ceasefire. Stocks extend gains. Asian markets rally as investors pile back into semiconductor stocks on renewed optimism over AI-driven demand. And SK Hynix in focus after pricing its $26 billion U.S. share sale. Its ADRs are set to debut on the Nasdaq later today, topping Alibaba as the biggest ever foreign listing. It's just gone 8:30 a.m. across the Emirates. I'm Abir Abu Amr in Dubai, still keeping an eye at where equities are this morning. We're now seeing S&P futures back down 0.1% lower. The tech-heavy Nasdaq futures were also slipping earlier, so pointing to perhaps a negative session in the S&P 500 later today. We did see U.S. equities edging higher yesterday, 0.8%. Some individual names there are in focus, namely Micron, the chip-making giant in the United States, saying that it's aiming to build or to increase spending on new plants in the United States to $250 billion. So we're seeing more and more of these big names relevant to AI coming and increasing their capex. Well, we have spoken multiple times on the show about what that means for the AI trade and the boom that we've seen since the beginning of the year. And speaking of the AI boom that we've seen since the beginning of the year, Asian equities 1.6% higher, led by the Kospi in South Korea. I spoke at the top of the show about SK Hynix and its listing set for later today in U.S. opening hours. We'll talk more about that towards the end of the show. And Brent crude is 0.5% higher. We're still below the $80 on the barrel mark. We're keeping an eye out on the developments in the region, but we seem to have a less retaliation, less muted or more muted reactions from the Middle East today. We still keep an eye out on President Trump, his remarks, what the Iranians decide to respond with, and definitely the movement in the Strait of Hormuz, those oil barrels that have come to a standstill yesterday, and we'll talk about that as well in a second. And then the yield on the 10-year notes, 4.541 1 basis point lower. Kevin Warsh said he wanted a regime change in the Federal Reserve, and it seems that he's doing that. He had appointed a leadership for 5 new task forces. Some of those people, or some of the people that he tapped into, include Mervyn King, who's a former BOE governor, Arminio Fraga, a former Brazil Central Bank governor, and other people with academic backgrounds and also policy-making backgrounds. So that is something to keep an eye out on. And the hawkish tilt that we've been speaking about over the past few months since Warsh was appointed in May. But for a look at what Asian equities are doing this morning, we've got Winnie Su again in Hong Kong for us. Winnie, what do you have for us now?
Yeah, morning, Abir. It's quite a nice way to wrap up our week in Asia, with the MSCI Asia here up 1.6%. In fact, having its best day in a week. Now, as you just mentioned, the gains are really being driven by technology shares, especially after Micron announced those spending plans, reassured investors that the AI demand remains solid. And hence, we see that the Kospi here up about 5%. And in fact, just as in the past 30 minutes, we did hear that the exchange triggered another sidecar. So you can see lots of excitement and volatility in the gauge as well, ahead of that listing by SK Hynix on the U.S. market. Now, when it comes to the Japanese market, we are seeing that triple rally across assets, from stocks to currencies and to bonds, after the finance minister Satsuki Katayama called on pension funds, including GPIF, to invest further domestically. Now, flip the board, we take a closer look at technology shares, because all eyes are really on SK Hynix, which is fluctuating a bit today right now, ahead of that $26.5 billion of U.S. listing. Now, that is going to make it the biggest U.S. listing by foreign company, but also the world's 3rd biggest listing. So all attention on that. For now, we are pricing about 3% premium against Thursday close in Korea, but we will be very closely watching out how that premium changes once the trading starts, because that will give investors a good idea in terms of where sentiment is for that AI trade. And also across the region, flagging that we do see Chinese chip maker here, Hua Hong, for example, rising 7% ahead of that big IPO by CXMT, which is Chinese, a a Chinese memory chip maker giant due next week. So lots of attention on that as well. Back to you, Abir.
All right, Bloomberg's Winnie Su wrapping up the week's market moves for us. Now, turning back to oil prices have stabilized after a turbulent week as the U.S. and Iran continue diplomatic talks despite a recent flare-up in fighting. For more on the movements of oil, we're now going to move to our oil and shipping reporter, Wei-Loon Soon. Wei-Loon, good to have you on this morning. What's the view as of now of the market to this recent flare-up that we've seen catching on earlier this week?
Thanks, Abir. As you mentioned, oil prices have stabilized today, and I think that says a lot about what Washington is trying to do, trying to convey some form of confidence that the interim peace deal, the talks with Iran are still going on. But if you take a look back, we started the week with Brent closing around low 70s. Now we're nearing to $77 a barrel. And that tells you how much that sentiment has been so fragile throughout the week. We have Iran striking 3 ships, one with Qatari, one with Saudi, and one with Emirati cargo. So that was a very strong signal to shipping. And then later on, you have the U.S. attacking Iran in retaliation for those Hormuz attacks. So it can tell you that sentiment is still very fragile. It can change a lot in just one moment.
And Wei-Loon, the two sides have really stopped short of a return to a full-fledged war. That's what we've been reporting over the past couple of days. But when it comes to the Strait of Hormuz, that's really at the heart of this. Iran asserting dominance over the Strait of Hormuz. This is how this whole thing started. What does the traffic look like now in the waterway? What are the expectations? Are we still near a standstill there?
Right. So visible traffic, that means ships with their transponders on, those were almost non-existent since Thursday and also a little bit of today. We do see ships going through Hormuz in the dark, but these are few and far between. So if you take all in all, since Thursday, the average daily transit has plunged than when the interim peace deal was signed. And if you look at it, since the beginning of the war, there's only one single supertanker that's left stuck inside. So all of those backlog have now exited the Persian Gulf, but we do not see empty tankers going back in. So there's still a certain sense of cautiousness among ship owners, and that's crucial for Persian Gulf exporters to continue exporting. They need those empty tankers to go in.
Yeah. All right, Wei-Loon. We're also keeping an eye out on Qatar pausing the push for a quick LNG ramp-up. This was a story that we also reported yesterday. Wei-Loon Soon, Bloomberg's oil and shipping reporter. Thank you as always. Now, for a look at some of the other stories that we're following, Morgan Stanley has cut its outlook on Saudi equities due to signs of easing Middle East tensions. The bank moved the oil-rich kingdom to equal weight from overweight and said that Saudi equities would be challenged by falling oil prices and growing downside risks to the U.S. dollar. And Deutsche Bank is expanding its presence in the Middle East with a new research hub in Doha. The center will support the bank's global research and Aliyah initiatives, with staff set to relocate to Qatar over time. The move comes as international banks continue to expand in the Gulf despite heightened geopolitical tensions. And coming up, Tanzanian billionaire Mohamed Dewji explains how he plans to tap growing global demand for graphite. That is coming up next. This is Bloomberg.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Tyler Kendall in Geneva, Switzerland, and this is Bloomberg.
Welcome back to Horizons Middle East and Africa. METL President and CEO Mohamed Douji has told Bloomberg he aims to invest hundreds of millions of dollars in refining graphite in Tanzania. The billionaire business tycoon spoke to our chief Africa correspondent Jennifer Zapasatra about his plan.
Africa in history has always mined, but the processing has moved to other countries. So we are going to initially put in a project of about $25 million where we're going to do primary processing of graphite, where we'll get about 94% purity. And then the second medium-term plan is to invest $250 million to refine that into 99.5%, create spherical graphite for cathodes. Then we can market directly. And this is the value that Africa should look for.
Graphite is largely dominated by China at this point in time, both synthetic and pure. What is the value play that you see, especially if you have a China that is dominating this market?
I think that's a very brilliant question. As a matter of fact, not only that China is dominating, all the technology of that pure graphite is only in China. And 90% of this is processed in China. But as we can see, there's a little bit of a rift in the West. The Europeans, the Americans are getting a little bit nervous around China. And I see this as a great opportunity for Africa to step up and to have a supply that is out of China, which brings a lot of comfort to the West. To that extent, I was in France and I met some very senior people, and they have this export credit finance structures where generally ECAs are meant for you to buy countries' technology and bring it to your country, and they finance that because it supports the whole industrial base. But today Europeans are open for me to buy Chinese technology on an export finance of a European country as long as I give them offtake. So I'm stepping into a gap between China and Europe and the West.
So you already have partners then in the West that you've spoken to, investors who are buying into, would buy into?
On offtake purposes, but this will be principally METL Group's total investment plan.
What is that? What's the timeline for this?
So the first timeline, the first process, I think we have already quantified reserves of the graphene. Within 18 months, the primary processing will be set up. And then I believe from there, in the next 24 months, that $250 million investment will come in.
From METL?
From METL Group, yes.
Into the mining sector. Yes. Then do you expand out to other minerals, or do you focus in on graphite for the moment?
Right now I'm concentrating on graphite because you see, when you talk about mining, you can do copper and gold, and Tanzania has got a lot of gold. Yeah. But those are a little bit of speculative businesses because the Barrick golds of this world have got enough concessions and they are big enough to try and miss. See, I have gold concessions, but the question is, yes, there is gold. How deep is the gold? One, what is the purity of the gold? Two, what is the economics to extract that gold? So I haven't reached that stage. So first, I'm focusing on graphene and graphite.
That was Mohamed Douji, President and CEO of the METL Group, speaking to our own Africa correspondent, Jennifer Sapasadra. And Jen joins us now from Cape Town, not Johannesburg, this morning. Jen, great interview. Good to have you on. Let's talk a little bit more about it. What is Mohamed's timeline for the rollout of these investments?
Well, I think what's key, Abir, is that this is quite a significant shift for the METL Group. For decades, they've been focused on manufacturing consumer goods, and this is the industry they have really zeroed in on over the past few decades. But he clearly, as you were just hearing there, sees an opportunity to tap into some of the demand for minerals, especially when you think about some of the diversifying that we're seeing some major countries do in terms of their partnerships. And so as far as his timeline goes, he's really targeting what he told me was 50,000 tons per annum as it pertains to graphite in particular. And he does hope that some of these partners that he has been speaking with in Europe and also in Asia, we should point out, will be the partners that he sees moving forward with some of these mining opportunities. But, I know you heard there a bit about some of his discussions with the West and with the U.S. He still potentially sees down the road there could be some opportunities, especially when you think about the demand for graphite right now. It is dominated by China as far as the mining goes and also the processing. And so he also has a rollout for what that looks like in terms of being able to purify the graphite over time and how that might change then who he's ultimately selling to.
And Jen, if this is a successful feat, how would it impact the Tanzanian economy?
It's key for Mohamed Douji when he thinks about the long-term success and really the growth of the Tanzanian economy, especially when you look at some of the numbers and what we have seen over the past few years with the economy. The government is quite ambitious as far as what they're seeing GDP and economic growth to look like. They're targeting growth of over 6% for this year and potentially it going even higher. And a lot of that is supported by investment into sectors like mining, like agriculture, like construction. And so Mo sees this potentially fitting into some of those plans that the government is already in the process of working on. We should also note that we've been reporting quite a bit about Aliko Dangote, which is, of course, Africa's richest person, in discussions with the government to also invest in some of those infrastructure projects. So potentially this is a boon to what we are seeing. But the Tanzanian economy still is undergoing quite a bit of a tight monetary policy situation. We're seeing stagnating foreign direct investment coming in to the government. And so there's still quite a bit of a gap that needs to be made in terms of private investors like Mo, like Aliko Dangote and others to potentially catch up the economy to where the IMF sees it going.
All right. Jennifer Sapasadra, our Chief Africa correspondent, joining us from Cape Town this morning. Now, for some other Africa stories, the World Bank says Kenya's economy is likely to grow at the slowest pace since COVID. The Washington-based lender blames the U.S.-Israeli war on Iran for higher crude and fertilizer prices. The economy is also facing higher debt service costs and weak revenue. East Africa's biggest economy is expected to expand just 4.3% this year. Nigerian equities have overtaken South Korea's to hand investors the highest dollar-based returns this year. Souring sentiment on AI stocks have pushed the Asian nation's world-beating rally into bear territory. Nigeria's gains have been led by financial services companies, and the S&P Dow Jones Indices is considering upgrading the country to frontier market status. And coming up, South Korean chipmaker SK Hynix raised $26.5 billion in its ADR offering, making it the largest ever U.S. first-time share sale by a foreign company. That story is coming up next. This is Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers, and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech.
Every weekday, only on Bloomberg Television.
SK Hynix raised $26.5 billion in its ADR offering as the chipmaker powered through volatility to deliver the largest ever U.S. first-time share sale by a foreign company. We're now joined by Bloomberg's Balazs Pens from Hong Kong. Balazs, was everyone expecting this share sale to be so big?
Well, we knew it was going to be a very, very big share sale. From the moment it was announced, at some point we expected as much as $29 billion to be raised in this deal. The Hynix stock has come down a little bit in Korea over the past couple of weeks, so the size was a little bit in question. But in the end, they pulled through. They delivered about a 3% premium over the Korean stock, and it just got in above Alibaba to make it the biggest first-time share sale by a foreign company in the U.S. ever. So that just shows the continued demand for the Hynix story, the continued belief in this company's role right in the middle, in the heart of the artificial intelligence, build out the demand for their memory chips and their dominant position on that market. There was very, very strong demand. We heard before the pricing that the issue was 7 times oversubscribed, so a lot of people interested in this stock. And obviously now the attention will be on how the ADRs will perform in the U.S. when trading starts Friday morning in New York.
And Balazs, the SK Hynix story, what does it tell us about the wider appetite for chip stocks?
I think if we look at just the share sale in particular, it suggests that the appetite continues. And just if we look at Asian markets in connection with these, this week we have seen a whole lineup of Chinese chip makers and AI companies coming to the market and raising more and more funds. There was a $4 billion deal yesterday, a $2 billion raised by a company called Minimax, an AI model maker today. So it shows that there's still a lot of enthusiasm, a lot of demand, and these companies continue to come to the market to tap into that enthusiasm and to raise funds for their own build-outs and to be able to increase production because the demand for these chips, especially the ones that Hynix makes, remains so strong around the world.
All right, Bloomberg's Balazs Pens with the latest on SK Hynix. And we'll hear more from the SK Hynix chairman as the chipmaker makes its U.S. debut. Don't miss that conversation in a special earlier edition of Bloomberg Tech at 6:30 p.m. Dubai time. That's 3:30 p.m. London time and 10:30 p.m. in Hong Kong. Now, Goldman Sachs has tightened its personal trading rules, restricting employees from betting on a range of prediction market contracts. The updated policy covers wagers tied to company-specific events, regulatory approvals, global conflicts, and even the future price of Bitcoin. Employees who violate the policy could face penalties ranging from forfeiture of profits to being fired. And Kylian Mbappe had a goal and an assist as France beat Morocco 2-0 in the World Cup quarterfinals. It was Mbappe's 8th goal of this year's tournament. He later left the game to an injury scare but said he's fine despite a right ankle issue. France will now face either Spain or Belgium in the semi-finals. That is it for Horizons Middle East and Africa this morning. Stay with us for Daybreak Europe. This is Bloomberg.
Some people would say that there's maybe a little bit of a bubble in AI. When you have companies with market caps of $5 trillion, you don't see any bubble there at all?
Whenever we have an acceleration in technology and people get excited about it, you have significant capital formation around new companies that are trying to capitalize on that opportunity. And, you know, we've seen this before through history, and you're seeing it now. It won't be a straight line. The opportunity set with AI is enormous. There will be winners and losers. And it's hard to pick the winners and losers now. And certainly a lot of the capital that's being deployed will not produce adequate returns. And a bunch of the capital that's being deployed will actually not produce any returns. But it's hard, it's hard to call the timing on these things. And the thing I'd point to just from a historical lens is in the fall of 1996, Alan Greenspan talked about irrational exuberance in stock markets, and the NASDAQ was at 1,300. And the NASDAQ peaked 3.5 years later at over 5,000. So, these things can go on for a long time, but ultimately, there are adjustments, there will be drawdowns, there'll be rebalancing, and just, it's hard to call it because the technology trend and the investment is real.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Live from London, this is Bloomberg Daybreak Europe. I'm Lizzie Burden with your top stories. Stocks extend gains with tech leading Asian markets into the green. SK Hynix making its Nasdaq debut today, confirmed as the biggest ever US listing by a foreign company. Truce in limbo. A US official tells Bloomberg that technical talks are continuing with Iran, even after both sides traded fresh rounds of strikes. And Europe's biggest car maker looks to slash up to half its model lineup. But management at Volkswagen fails to agree on deeper job cuts. Well, those are your headlines this morning. Welcome to Friday. Here is the picture in markets. As I say, Asian stocks powering ahead this morning, up 1.4%. Investors piling back into chips on the renewed optimism over AI demand. Futures pretty flat on both sides of the Atlantic, just in the red, although we are looking through the geopolitics now and waiting for earnings season to affirm that AI optimism. Now flip over to the cross-asset picture. Here's where it gets tasty. You've got oil steady after a volatile week. The US and Iran, according to the US side at least, agreeing to keep talking despite the strikes both ways. But take a look at what's happening in Japan. We've got the yen strengthening from multi-decade lows, now trading at 161 per dollar on Japan, urging its pension funds to invest more at home, and yields down on the 10-year JGB as well. You're looking at it currently down 10 basis points at 277. So that. Then at 9 a.m. we get the IEA oil market report across Europe. These are the final prints for June. Then at 9 a.m. we get the IEA oil market report, of course in particular focus given the geopolitics. And then today is the day when SK Hynix starts trading in New York. It's set to be the biggest ever first-time share sale in the US by a foreign company, knocking Alibaba off the top spot, and the Kospi already lifted this morning on the back of the listing sentiment. The Kospi up 4.5%. So plenty to get through. Let's set you up for the day ahead. Well, happy Friday, everybody. We end the week with stocks in Asia on a positive note, on renewed optimism over AI demand. We're also seeing a boost to the yen. Let's go straight to Winnie Xu in Hong Kong. Winnie, talk us through what's happening where you are.
Yeah, good morning, Lizzie. What a really nice way to wrap up our week in Asia after a very volatile week. We have the MSCI Asia here up 1.5%. In fact, having its best day in about a week. Now, the gains are mainly being boosted by the technology shares after Micron's spending plan really reassured investors that the AI demand remains solid. And here you can see that Kospi here still leading gains up almost 5% ahead of SK Hynix's U.S. listing. But also, we are seeing some strength coming through for the Hong Kong market as well. Hang Seng Index up 1.6%, also headed for its best week in more than a year after being one of the worst performers globally so far this year. So you're seeing investors finding some more value in some of these shares. Now, flip the board, we take a closer look at the tech stocks because front and center, we have SK Hynix having its U.S. debut later today. Right now, having raised $26.5 billion US dollars, which, as I just mentioned, is going to make it the world's biggest U.S. listing by a foreign company, but also the world's third biggest listing in history. So lots of excitement here. We are looking at the listing at about 3% premium against the Thursday close in Korea, but investors will be closely watching out how that premium evolves after the trading starts, as it's going to give a good gauge of where investor sentiment when it comes to the AI trade is. Also, similarly, we are seeing gains in Japanese tech as well as a Chinese chip maker. Here, Hua Hong Semiconductor up about 5%. Some optimism coming through ahead of China's memory chip maker giant CXMT's listing IPO next week, and that is likely going to become the biggest mainland listing so far this year. Now, flip the board, we take a quick look at Japanese assets. We are seeing that triple rally across assets. Japanese stocks extending gains with the yen strengthening and also bonds rallying after the comments from Finance Minister to urge pension funds, including GPIF, to invest further in the domestic market. Back to you, Lizzie.
OK, Winnie, thank you so much. Two big themes to pick up on there, tech and the Japanese story. Let's start with tech. SK Hynix raising, as Winnie says, $26.5 billion in its ADR offering as the chipmaker powered through volatility to deliver the largest ever US first-time share sale by a foreign company. We can go straight to Seoul now. Our bureau editor, Denny Thomas, joins us now. Denny, what does that tell us about investor appetite for the AI trade right now? A confident start here, $149 per ADR, more than 3% above yesterday's closing price in Seoul. Confident, to say the least.
Yeah, so I think that the premium and the fact that the book build generated more than 200 billion worth of demand clearly indicates there is a lot of interest, global interest in the tech sector, and the two chip stocks in Korea are, as we know, the foundation for the whole AI investment build out. And so I think this coming at a time when there's a lot of investor angst about whether this rally will continue. The fact that SK was able to raise this kind of money at a premium is a strong point. Also, fundamentally, if you look at the earnings of these companies, they've been generating a lot of cash and profit. Samsung this week reported 19-fold increase in their operating income, and which was more than 50% more than what the previous quarter generated. So fundamentally, it's a strong story, but the huge run-up makes investors a bit nervous. But what we see by the listing and by the fundraising by SK is that there is still ample demand for this sector to keep growing.
So is this going to reopen a meaningful pipeline of Asian listings into the US, Danny?
I mean, that's the big question mark. It's not clear which other sector can lead. Right now, there's a lot of demand for the tech industry, but we don't have many meaningful companies left. Samsung is a big name here, but we haven't heard any kind of discussion around whether they want to do forward with what kind of an India listing. But definitely this listing and how it trades once it starts trading on NASDAQ and how it does over the coming weeks and months might set the tone for others to consider, because it definitely narrows the discount that some of the Korean companies have had traded for. And if SK can show that this is a win-win for them and investors, it might open the floodgates. But right now, we're not hearing any more conversations around any big listings into US from Asia at least.
OK, Danny Thomas, thank you so much for that update. Well, Bloomberg's Ed Ludlow will be speaking with the SK Hynix chairman at 3:30 p.m. London time, so don't miss that interview. Turning to the second theme in Asian markets, though, Japanese bonds and the yen have rebounded from multi-year lows after the finance minister called for Japanese pension funds to invest more in domestic assets. Let's get more now from our Bloomberg MLive strategist, David Savage. David, what's the thinking behind this call, and how are they going to make it happen?
Hi, Lizzie. I think it shows that the government is aware that the bond market was increasingly, uncomfortable and concerned that the Bank of Japan was behind the curve as it pertained to inflation risks. And that was really underscored earlier today, where we saw, a 7.1% print, PPI print. And that seemed to spook the bond market a little bit. We saw JGB futures give up earlier gains. And then these comments from Finance Minister Katayama really, helped the yen and of course, helped particularly long-end bond yields. And so I think a lot of it is certainly positioning. I think at a certain point, just given the sheer size of GPIF and the whole institutional universe, it means that traders certainly started unwinding some of the shorts they had, but certainly it had helped long-end bond yields, which had moved a long way in the last couple of weeks. So we saw the 10-year come off, 10-year bond yield drop about 10 basis points, a pretty significant move. But obviously it comes after weeks of bond selling and persistent weakness in the yen.
Well, so given that the Government Pension Investment Fund, the GPIF, owns trillions of overseas dollars, what's the consequence going to be internationally? I'm thinking particularly about treasuries, which I think make up just over half of its foreign bonds.
Yeah, I mean, if we saw that move, it certainly puts more pressure on treasuries and would support yen assets, so the yen and JGBs. And I think in the near term, positioning might start to move in that direction. That you might have this become a more present risk, and therefore you might see that support, particularly long-end bond yields in Japan. But it remains unclear as to whether one, the pension funds are actually moving in that direction, and two, how long it might take to actually start to see that. But I think in the near term, you might start to see positioning sort of front run, that actuality.
Okay. David, thank you for the update. That's Bloomberg M-Live strategist David Savage. As we see the Nikkei, the yen and JGBs lifted off the back of this news. We're still ahead. Models to be reduced, but no deal on VW job cuts. We'll discuss the restructuring impasse at Europe's biggest car maker. But first, to the geopolitics. The US-Iran truce in limbo after days of strikes. We'll look at what could come next. This is Bloomberg.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
Good morning. Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals. Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Every weekday, Bloomberg puts a spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Welcome back to Bloomberg Daybreak Europe, 6:13 a.m. here in London. Well, the truce between the US and Iran is in limbo after a two-day exchange of airstrikes and the reimposition of US oil sanctions. One US official has told Bloomberg that the technical talks are continuing between the two sides, and the US is committed, nonetheless, to finding a resolution. For more, let's bring in Abir Abu Omar, who is Bloomberg's Horizons Middle East and Africa anchor. Abir, good morning. What are the prospects for peace talks, given the strikes and the rhetoric that we've seen in recent days?
Good morning, Lizzie. Yeah, look, you're seeing the same thing that we've been seeing play out over the past few weeks. Now we're hearing from a U.S. official. This is Bloomberg reporting that a U.S. official telling us that the technical talks between Iran and the United States are set to continue happening. Now, we don't have a time frame. We don't have clarity on where they would take place. But overall, the narrative repaints itself, really. And it looks like we're going back to the state of back and forth with the U.S., namely President Trump coming out with these really strong remarks, similar to what he has said at the NATO summit in Ankara a couple of days ago, that the ceasefire talks, according to him, or as far as he's concerned, are over, but that the negotiators, Steve Witkoff and Jared Kushner, can go back to having these technical talks with the Iranian side. So we've seen 2 days of straight attacks by the United States in Iran, killing over a dozen people and injuring dozens others, and then Iran saying that it will strike back. At the heart of all of this, obviously, remains the Strait of Hormuz, and it looks like it has taken the edge of President Trump's main goal in this entire MOU, Lizzie, and that is the nuclear component. We haven't really heard of much progress in the nuclear component or the element of that in the MOU. What we've been hearing a lot about is the Strait of Hormuz, the blocked assets, the frozen assets, and the oil sanctions that the Treasury Department in the United States has waived or revoked that waiver for Iran. So we've been hearing a lot about that, not much about the nuclear component. So when we go back to those discussions, it'll be interesting to see just what exactly is being discussed.
Yeah, that's the diplomacy. Interesting that you've got Brent there at $76 a barrel, even though we're hearing that traffic in the Strait, as you say, was pretty much at a standstill yesterday.
Yeah, it was at a standstill, and our energy teams reporting this morning that the ships that have the light on, as you would say, are nearly vanished. They're not there. We might have some movement in ships that have turned off their lights and are going through the waterway. But for the time being, we're not seeing a lot of optimism in the Strait of Hormuz. We're seeing ship movement continuing at a near standstill. We're hearing that Qatar, Lizzie, if you remember, it came out 3 weeks ago or so and said that it will ramp up its LNG production in one of the facilities that was damaged during the war. It will ramp up fixing that facility. And now Qatar yesterday saying that it will pause that ramping up, because if you remember, I mean, the way this whole thing started was with Iran attacking an LNG-laden ship flagged to Qatar at the beginning of this week. And so you're not seeing a lot of signs of optimism. But when it comes to the oil market and the reaction by traders, it was instant when President Trump made those remarks. But we seem to have steadied since then. We seem to have Brent prices calm down a little bit, just because the market seems to understand that this state of back and forth will continue to be the case, with the MOU discussions unraveling every now and then, but never really collapsing altogether.
OK, Abir, thank you so much for the update. That's Abir Abu Omar, Bloomberg Horizons Middle East and Africa anchor. Well, turning to the US now, and Federal Reserve Chairman Kevin Warsh has announced the leadership of 5 task forces that will examine the central bank's approach to key aspects of policy making. They include former central bankers, academics and corporate executives as well. We can go to Bloomberg's Jill Desis for more on this now. Jill, good morning. What more do we know about these task force lineups? I see former Bank of England Governor Mervyn King as one of the names on the list.
Yes, that's right, Lizzie. I mean, this is really a pretty significant list of heavy hitters here. As you mentioned, Mervyn King overseeing the BOE during the global financial crisis. You also have former heads of central banks from Brazil, from India. So I do think in terms of, sort of that knowledge there, it's quite interesting. As you mentioned, some academics as well as several executives. You've got Mark Andreessen is on the list, Andreessen Horowitz, and then also Asha Sharma. She's the fairly new Xbox CEO at Microsoft. In a previous life, she oversaw Microsoft's core AI product. So when you look at some of the task force initiatives that these people are supposed to be looking at, in addition to sort of examining the Fed's balance sheet, you've also got some various questions around productivity, AI usage, that kind of thing. So again, you're seeing a few more names on your screen right now, taking a look at really a lot of fairly significant names across a number of different businesses.
OK, so a list of heavy hitters. How soon could we see their findings changing the way the Fed operates?
Yeah, so I think, at this point, Lizzie, you've got, Kevin Warsh, who, when he came in, has been tasked with essentially, what he calls a regime change. These task forces are supposed to present their findings by the end of the year. So you could see something, once those initiatives are actually, filed, maybe you're looking at next year that you could potentially look at things that are in place. I do want to point out, one expert that we talked to does mention that the Fed already has an army of PhDs looking at a lot of these types of issues. I mean, questions over the size of the Fed's balance sheet, questions over productivity. I mean, these aren't necessarily new issues. And so I think, there's significant challenges that you would presume a lot of these task force members have to face in terms of finding, some new solutions to how exactly the Fed operates. But obviously, you've got Kevin Warsh, who, again, is, really, really sort of interested in trying to find, new and different ways, bringing in those different regimes. So I think when you're bringing in these outside voices, it'll be kind of interesting to see what they ultimately come up with.
Is there precedent for anything like this at the Fed, Jill?
Well, look, I think that at this point, you've had, instances in the past, perhaps, but like, I mean, in terms of like the scale of this sort of initiative, I think that's what makes it quite interesting, right? So you've got, again, this army of names, and we've just talked about a few of these people that are kind of coming in. So I think that that's what makes this, sort of different. But, there's all sorts of unprecedented things that are happening across government of the United States right now, as you go. So we'll have to see, again, ultimately what they sort of come up with in this report by the end of the year.
All right, Jill Deesis there. Thank you so much. Have a great weekend. And coming up on Daybreak Europe, how young people are investing more and taking bigger risks. We'll take you to the details next. This is Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Welcome back to Bloomberg Daybreak Europe. Now, with home ownership out of reach for many young people and AI reducing their job prospects, many are turning to investing in the hope of securing their future. But with index funds seen as too slow an investment, more young investors are putting their money into meme stocks and options and crypto. Bloomberg Originals has been looking at why they're prepared to take on so much risk.
There are many types of risk. And now, even trading is an extreme sport.
In this video, I will start with risking only $100 per trade.
Bro, it's simple. If you can scroll TikTok, you can trade.
You have the fear of missing out on a trade.
And judging by social media, everyone is getting rich.
We're at $232,000.
Just today, I made $16,000.
More young people are investing than ever before. And they're learning about markets in a way no generation has.
Gen Z really is distinct from other age groups. If you go on social media now, you will see a lot of sophisticated trading techniques used in ways that I think no one would have imagined a 20-year-old in 1990, 2000, or even 2010 doing or even knowing about.
I want to show you this trade I'm taking.
A lot of that activity has also broadened to sports gambling, for instance, or trading on prediction markets.
But there are worries that these investors are over-leveraged, taking one too many risks.
I've always been a big risk taker. It's kind of just part of who I am.
3, 2, 1, to the moon! Holy Well, you know what?
Gen Z has a highly differentiated view of risk.
They don't drive, they don't date, they don't drink. On the other hand, they are also this extremely risk-taking generation.
And for many, it's the only path they see to getting ahead.
YOLO stands for you only live once. So YOLO bets would refer to risky investments where the trader has an attitude of, you go big or you go home. And subscribers can watch that full documentary right now on the terminal and at Bloomberg.com. And next week, Bloomberg is also hosting a webinar on the new wealth playbook, exploring alternatives and the next-gen client. So do scan the QR code on your screen to register and to take part in the audience Q&A. So that'll be from 3 p.m. London time next Tuesday. Now to some other top stories we're following this morning. Meta has unveiled the latest version of its most advanced AI model, Muse Spark 1.1. The update includes a new paid tier for developers, marking the first time Meta has charged businesses for access. CEO Mark Zuckerberg told Bloomberg that the new model has state-of-the-art, or very close to it, agentic reasoning, and pricing will be, quote, very aggressive and attractive. Elsewhere in tech, S&P Global has downgraded Oracle's rating to BBB-, one level above junk, citing the company's growing spending on AI. The agency says Oracle's rapidly expanding infrastructure business is increasing its overall credit risk. It expects Oracle to burn through $42 billion of cash in fiscal 2027, up from its prior forecast of $24 billion. Well, that's your latest in tech. Just checking in again on these markets. In the equities and futures picture, Asia powering ahead on that AI demand. Futures a little more cautious on both sides of the Atlantic. But let me just take you to what's happening in Japan, because some real outsized moves here off those comments from the Japanese foreign minister calling on pension funds to invest more in domestic assets. It's boosting the Nikkei 1.5%, the yen as well, up from multi-decade lows, and you're also seeing a lift to JGBs, so yields down about 10 basis points on the 10-year at 277. But coming up, a reduction in car models, but deadlock over job cuts when it comes to the VW restructuring. We'll get you all the details next. This is Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Joanna Bersecci in El Ola, Saudi Arabia, and this is Bloomberg.
Live from London, this is Bloomberg Daybreak Europe. I'm Lizzie Burden with your top stories. Stocks extend gains with tech leading Asian markets into the green. SK Hynix makes its Nasdaq debut today, confirmed as the biggest ever US listing by a foreign company.
Meanwhile, truce in limbo. A US official tells Bloomberg that technical talks are continuing with Iran even after both sides traded fresh rounds of strikes. And Europe's biggest car maker looks to slash up to half its model lineup, but management at Volkswagen fails to agree on deeper job cuts. Those are your headlines this morning. Welcome to the programme if you are just joining us, 6:30 a.m. here in London. Happy Friday. It has been a volatile week in markets, both for tech and off the geopolitics. But we end it with Asian stocks powering ahead, up 1.3% on the MSCI Pacific Index. A little more cautious on both sides of the Atlantic. We have Euro Stoxx 50 futures down 0.2%. But flip the board cross-asset and you can see, yes, oil is higher at $76 a barrel, but it's only 76 for Brent. We've got the US and Iran, as we were hearing from Abir Abu Omar, agreeing to keep talking despite the strikes both ways. Meanwhile, real action happening in Japan. This off the back of the call to pension funds to invest more at home. So the yen strengthening off the back of multi-decade lows. 161 per dollar is where we trade right now. The yield on 10-year JGBs down now 9 basis points at 278. You've also seen a boost to the Nikkei. It will be interesting to see just how much of the government pension investment fund repatriates, given its sizable holdings of treasuries and other foreign assets. So that's what's happening in your markets. Let's flip over to the front pages now. We'll kick off with the Financial Times. It leads with a report on OpenAI and Google selling AI models to Chinese tech giants blacklisted by the Pentagon. Although the sales are legal, the paper says that they have reignited calls for tighter US curbs on models. Flipping over to the Wall Street Journal now. It focuses on details of President Trump's trading and how an automated investing strategy in his Charles Schwab account triggered a wave of activity after the president secured a court ruling throwing out a $500 million penalty against him after a case brought by New York State. And if we end on Le Monde out of France, all focus on the football after the country's team became the first to qualify for the World Cup semi-final with a 2-0 victory over Morocco, which the newspaper puts down to their blazing attack. Well, we've got a big weekend of football coming up, but in the meantime, you can get a roundup of all the stories you need to know to get your day going in today's edition of Daybreak, which terminal subscribers can find by going to D8YB Go. Well, turning back to the automotive sector, and Volkswagen has announced plans that it's going to cut its model lineup by as much as 50%. The move is part of a savings plan announced after a supervisory board meeting that stopped short of agreeing on deeper workforce reductions. Let's go now to Elizabeth Berman, our European Autos editor, for more. Morning, Elizabeth. Just talk us through what was agreed by the board.
Well, that will be a very short answer because they didn't really settle on anything. You just mentioned this push to reduce the model lineup by half, which will really cut back on complexity, which is also slowing down the company. However, the release that we got yesterday didn't mention any of the big plans that had made such waves, specifically the plan to double job cuts to 100,000 and close as many as 4 plants in Germany. Instead, they focused on a plan that was pretty long on ideals and short on specifics, is one reaction that I saw early this morning. But this is very much the starting gun, I would say, for further talks on how to bring costs down, make VW more nimble, and also crucially catch up to the competition. But it's fair to say that there was a little bit of a sense of a disjointment between what had gone on in the days before and what we saw last night from VW.
Yeah, because that competition from China is real and rising. You've got the price pressure. So ongoing discussions within the board with the unions. What are the chances of a deal on further cuts?
I'm fairly sure they will agree on something. They will settle on something, the shape of which we got very little indication for last night. It was pretty interesting that the Works Council head was sort of pointing to talks starting after the summer break. So despite all the bravado, beside all the pushback, they're pretty focused on the summer break, it seems, rather than holding more talks. There will be more news trickling out today, a bit more the specifics around what will come next. But in terms of what they're targeting at this point, we're pretty much in the dark on further details. But yes, they will be going for more job reductions, more capacity reductions. But where we stand on closing plants, for example, in Germany, is very hard to say.
Well, as we head towards the European cash open, Elizabeth, what's the sentiment then for broader autos, given this sense of indecision or lack of a conclusion, shall we say, from this meeting?
Yeah, so for VW specifically, I think the share price reaction may be a negative to muted because the market had been hoping for a little more. However, in the days before, we had been reporting as well that real change at this particular board meeting was fairly unlikely. But I think it's fair to say that VW also undershot that low expectation. So in terms of what this means for the broader sector today, VW is a very specific case, as we've discussed on previous occasions, and it's very hard to get reform through. But the cost-cutting issues, the cost-cutting drive that's weighing on all these companies is significant. I might point to Stellantis for a comparison. They've really accelerated on the downside despite putting in place vast changes back a few weeks. So the market there is also really worried about where the operations, where the sales, where the marketing is heading over the next years or so, particularly in Europe.
OK, Elizabeth, thanks so much. We'll look ahead to the start of the trade on Volkswagen in a couple of hours. For now, Elizabeth Berman, thank you so much. Well, now we look to some other top stories that we're following for you this morning, beginning with Andy Burnham here in the UK and his path to becoming the next Prime Minister looking almost certain after 322 of Labour's 403 MPs nominated him to replace Keir Starmer as party leader. Burnham said he was deeply grateful for the support, saying that it reflected a shared belief that Britain needs a new approach to politics. He said the circuit breaker he's offering means shifting power out of Westminster and rewiring the economy for ordinary people. Elsewhere, Taiwan has suspended stock trading and closed schools as Typhoon Bavi approaches the island. The storm is expected to dump heavy rain over a vast area and could lead to extensive flooding, even though it isn't expected to cross Taiwan's coast. Bavi is then forecast to move towards China's east coast, where heavy rainfall is expected across several provinces through the weekend. And Goldman Sachs has tightened its personal trading rules, restricting employees from betting on a range of prediction market contracts. The updated policy covers wagers tied to company-specific events, regulatory approvals, global conflicts, and even the future price of Bitcoin. Employees who violate the policy could face penalties ranging from forfeiture of profits to being fired. And Bloomberg understands that Spain's push to expand joint EU debt issuance has been met with scepticism from some of the bloc's top economies. Sources say that Germany and France were among those who questioned the proposal at yesterday's Eurogroup meeting in Brussels. Nations have been discussing how to strengthen the euro's role as a reserve currency, but many are reluctant about EU bonds because of concerns over fiscal discipline. We'll be speaking with the Spanish Minister for Economy and Trade later on, so don't miss that exclusive conversation at 9:30 a.m. London time. Now, AI pioneer Yann LeCun says that he believes Europe has missed the boat in the race to develop LLMs. LeCun was Meta's chief AI scientist, but left the company to launch his own company, AMI Labs. And he's been speaking to Bloomberg's Tom McKenzie at the RAISE summit in Paris, where he challenged the way generative AI models are being developed.
Most of the details in the world, in the physical world, are not predictable. And so the very idea of a generative model does not work in the real world. It's relatively easy to predict the word that follows a sequence of words, which is really what LLMs are doing, whether it's natural language or code or whatever, right? You show the system a long sequence of words, and you train it to predict the next word. It can never exactly predict the word that follows, but it can produce a score for every possible words in your dictionary or a probability distribution, right? So then you pick a word from that probability distribution, That's the word the system is going to produce. You shift that into the input, and now you can produce the second word, shift that into the input, third word. That's called autoregressive prediction. It's a very old idea, and that's what LLMs are based on. If you want LLMs to reason a little bit, you have it produce lots and lots of those sequences, and then you have another neural net that selects the best answer among all of the ones that are produced, which is ridiculously expensive. But this is how those, coding, mathematics kind of system work, more or less. Now, if you want a system to understand the real world, why not use the same technique? Take a piece of video and train the system to predict what's going to happen next in the video. And if you train the system to predict at the pixel level, it simply doesn't work. Because most of the details in video are not predictable. Most of the information contained in video is entirely unpredictable. If I take a video of this room, I point the camera on this side, I slowly rotate the camera, I stop here, and I ask the system, fill in the blanks, tell me what's going to happen next in the video. Probably going to predict the camera is going to continue rotating. There's absolutely no way it can predict what every one of you looks like. There's just no information from which that it can use to make that kind of prediction. So if you train a system to make that prediction at the pixel level, you kill it, because you basically are asking it to solve a task that is completely unsolvable. Now, of course, you're going to say, but wait, we have systems that can do video generation. Yes, they can, but they're going to make a prediction that is false. They're not going to predict what you look like. They're just going to put random people there, right? And those systems don't really construct a good understanding of the underlying physics or reality of that. So the technique we've been working on for a number of years, while I was at FAIR, and since we created AMI Labs, is called JEPA, and it consists in training a system not to generate and predict all the details of a signal, but to construct or learn an abstract representation of that signal, of a video, and then to make predictions in that abstract representation space.
So that was Jan LeCun, Executive Chairman of AMI Labs, speaking to Tom McKenzie at the RAISE Summit in Paris. Well, coming up, staying with tech, on the day that SK Hynix makes its US debut, we'll take a look inside the secretive Chinese chip maker that's set to shake up the trillion-dollar memory chip market. That story next. This is Bloomberg.
Look at the more successful economies in the region. The key to their success is continuity. But the way our constitution is written, it actually encourages a lack of continuity. And that's a problem. The term for local government is 3 years. When I first became a congressman, it takes you a few months to learn the business and to make your connections, to network, etc. If, for example, you are not particularly favored in the majority, passing a law in a year and a half is not that easy to do. After about a year and a half, you already hear that there's somebody in your district beginning to campaign and is going to oppose you in the next election. So you have to go back to your district to take care of that. And how much work do you get done?
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
we see tremendous opportunity in Europe. I think both the regulatory environment, the cost of power, and there's an excitement around building data centers. And so it was a no-brainer for us. I think we'll get it all 200 on before 2 years, maybe 18 months. I think some of it will come online in 2026, and most of it will come online in 2027. I think there's tremendous opportunity here.
The Cerebras CEO Andrew Feldman speaking also to Bloomberg's Tom McKenzie. Well, as China ramps up its focus on tech self-reliance, the spotlight is growing on its homegrown chip makers. One such company, CXMT, is launching China's biggest IPO this year as it seeks to double output. Now, the secretive company is the focus of today's Bloomberg Big Take. And for more, we can join our technology reporter, Gao Yuan. Gao, really good morning to you. Thanks for bringing us this story. For anyone unfamiliar with CXMT in our international audience, what do we know about it, and how much of a threat is it to the likes of Samsung and SK Hynix coming out of Korea?
Hey, good morning. Yes, CXMT, many people would never heard of this name before this year. It is a memory chip maker in China. What it does is DRAMs. And now we heard they are potentially doing HBMs, and the way they're doing it is with help of three other companies that are helping them with chip design, chip manufacturing, testing, and packaging. So basically, they have set up an entire supply chain for them to do that. The importance for CXMT is that, as you know, the worldwide memory chip shortage is biting in lots of tech companies, and the fact that China is having someone to help it with this memory chip supply is going to help Chinese companies, especially AI companies in the future, to expand its capacity in terms of AI computing power and storage power, so that one day they hope that Chinese AI industry can thrive from this all homegrown supply chain.
Well, yeah, how big is the global potential for this company? It's interesting that Apple has shown interest.
Yeah, if you talk about the comparison with Samsung and Hynix, it's not there yet. But what we heard is that they are quickly expanding their factories in China, in Shanghai specifically, and we had analysts saying it's expanding at China speed, which really would indicate that it's really growing fast and rapidly in terms of capacity expansion. In hope they can catch the shortage cycle this time and expand and get profit from them.
So I mentioned that this is China's biggest IPO this year. What did we learn from the IPO filing? I said it was a secretive company. What came out in the wash when it went public?
Yeah, unfortunately, the filing didn't unveil too much secrets, but what we know is that they are raising about $4.3 billion. And the money will be spent on, advancing R&D in DRAM and also expanding capacity. So that's all we know. But the importance for this company is that, in China is trying to build an entire full stack supply chain for AI, basically homemade models, home-developed models, home-developed chips, home-developed servers and data centers. What's the CX team's importance is that the company is critically, is a critical supplier of DRAM and HBMs in China, so that if China wants a full-stack homegrown capacity to help its own expansion, CX team is irreplaceable.
Gao, thank you so much for bringing us this story. That's our Bloomberg technology reporter, Gao Yuan. And of course, you can find today's big take on the terminal and at Bloomberg.com. Now to some other top corporate news this morning. Former Fed Chairman Ben Bernanke has been appointed to Anthropic's Long-Term Benefit Trust. It's a governance body designed to safeguard the startup's public interest mission, advising management on decisions around AI risks and impacts. Bernanke and 3 fellow trustees hold no financial stake in the company, but will have the power to appoint and remove board members. Elsewhere in tech, Netflix shares slipped in late trading after the Wall Street Journal reported that the company's battling declining subscriber engagement. The report says it's exploring the addition of live TV channels and bundled subscriptions with other streaming services. Netflix is also said to be discussing bids for the next 2 FIFA World Cups. And US Commerce Secretary Howard Lutnick has called on Samsung and SK Hynix to expand chip production in the US. Speaking at an event hosted by Micron Technology, Lutnick confirmed that he's in talks with the South Korean memory producers, but didn't offer specifics. His comments came a day before SK Hynix ADRs make their trading debut in New York. Now, SpaceX has shown the might of American space technology and financial muscle with its record-breaking IPO. And on today's episode of Bloomberg Tech Europe, Tom McKenzie looks at where Europe is behind in the space race and how it can secure space autonomy going forward. The man who oversees Europe's space agenda is Josef Aspacher, the Director General of the European Space Agency. He acknowledges that while the US is an important partner, Europe needs to do much more as it pursues greater autonomy in the field.
We see now, of course, with the IPO of SpaceX that the support of NASA and the Space Force really leads to world-dominating space companies. And this is something, of course, where volume is just as important as excellence.
And you can catch the full episode at 8:30 a.m. London time right here on Bloomberg TV. Plenty more coming up on Daybreak Europe, though. Stay with us. This is Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Tyler Kendall in Geneva, Switzerland, and this is Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anim, only on Bloomberg.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Artificial intelligence is the technology that will shape competitiveness and economic power in the 21st century. Europe must create the right conditions, mobilize the necessary capital, and enable its companies to achieve the scale to compete globally so that the next generation of global AI champions is born, grows, and remains here in Europe.
the Eurogroup President Kyriakos Periakakis yesterday. Well, it was tech stocks that saved the tape through the geopolitical uncertainty yesterday. A sharp rotation into semis, really defining the Wall Street session to absorb the macro shocks that normally, historically, would have undermined the broader index. So breadth giving back, but still holding the edge, as you can see here. Flip the board over, though, and one other big piece of big tech news over the past 24 hours that we've been discussing on the programme is this Bloomberg scoop that Meta is considering whether some of its AI infrastructure could be more valuable if rented to outsiders. Think about SpaceX renting access to its Memphis data centres to Anthropic. And you can see here Meta could do with a boost, couldn't it? It's been lagging the rest of the S&P, the Mag 7 in 2026 so far. Just finally, of course, the big milestone today is going to be SK Hynix's US listing, the biggest foreign debut in Wall Street's history. And part of the appeal is surely a way of escaping some of the volatility that we've seen in Korea on the Kospi. So it'll be interesting to see how much retail participation it attracts. But what you can see here is actually Micron, listed in the US, has been more whippy than SK Hynix over the past month. So let's see how it all plays out when SK Hynix lands in the US. Well, to access all these charts, go to CHRT TV Go on your terminal. It's all the charts we've used throughout the day on Daybreak, but also across Bloomberg TV through the programmes. And just a quick look at the risk events on the docket for today. From the top of the next hour, we'll get the final June inflation prints across Europe. We'll also have the IEA report on oil for given the geopolitics very much in focus. And as I say, SK Hynix ADRs beginning trading as well. We'll also have an interview with the chairman of SK Group as those ADRs start trading at 3:30 p.m. London time. This is Bloomberg.
As an exchange, what can you do to make it more attractive to be a publicly traded company?
Talk to our customers. We spend a lot of time with our listed companies, listening to their concerns, particularly the offices of the CFO, head of IR, listening to their pain points, general counsels as well, and then act as an advocacy group for those companies to really focus on structured reform to allow a company to tell their story in the most efficient way possible and reward them for the good disclosures that they are making in the market.
Is there any sort of financial innovation that you could drive to get more companies to list? Tokenization has come up.
Well, we did announce our tokenization initiative earlier this year. We already built the technology, we've already done a variety of proof of concepts. It allows for instantaneous settlement, 24/7 trading. It importantly allows for the rights associated with a share to move into that electronic form, but it is going to be a platform that runs in parallel to our more traditional exchanges.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia Trade.
This is Wall Street Week.
Welcome to Balance of Power.
You're watching Bloomberg Deals. Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
It's Friday the 10th. This is what's going on. Japan wants its pension money back. SK Hynix raises lots of cash in America, and Andy Burnham looks certain, Lizzie, to be the UK's next Prime Minister.
Well, happy Friday, Guy. Here's how all of that's playing out in the markets this morning. The SK Hynix listing in the US lifting sentiment on the Kospi this morning, up nearly 4% as things stand. But the action in Japan really notable. As that money from the pension funds is being pulled back, or will be pulled back eventually to Japan, the yen lifted off multi-decade lows, and a boost for JGB yields, for JGBs as well. 277 down 10 basis points on the yield. The Nikkei lifted as well this morning. The countdown to the opening trade starts right now.
Friday morning, how you doing? Let's talk about what's going on. Japan, absolutely firmly in focus. This was a press conference that nobody thought any news would really come out of with the Finance Minister, Katayama. It was a regular scheduled press conference, and then we get this bombshell, pointing us towards the idea that what the government would like would be the large pension funds, and there are many in Japan, but there's one big one. Basically, the idea is that they would like these pension funds to reallocate domestically. Is this one of these moments, one of these huge moments, a bit like QT, where you just have to look at this and go, this could be a seismic shift in what happens in terms of global capital flows? Is it one of those moments? Because the largest pension fund, the government pension funds, runs $1.8 trillion worth of assets. If it starts moving, that's a super tanker. It will leave a big wake in it behind it.
Yeah, so just how much does the GPIF switch out of Treasuries and into JGBs? This morning you're seeing JGBs lifted at the long end of the curve, but not so much movement when it comes to Treasuries yet, because we need to see how...
This is the largest foreign holder of Treasuries there is.
Exactly. Treasuries make up just over half its foreign bonds. So let's see, when we know how this is going to happen, how far they're going to go with it, how much of a reaction we see in Treasuries. Basically, as the Bank of Japan's normalising policy, the Takaichi government wants to channel more domestic savings into a new phase of economic growth driven by AI. It's the stuff of dreams for the likes of the UK.
Yeah, we would like to see more domestic investment here. How would that work? What kind of flows would we see? Andy Burnham paying attention. We'll get to Andy Burnham in just a moment. But I think this kind of... I think this is a kind of QT story. It's maybe not of that scale, but it is of that kind of significance. For big investors, and you've got the GPIF, then you've got other funds that basically track the GPIF, so you're talking about huge amounts of money here. Other investment, you just kind of think about the concentric circles. Other investors are going to look at this and go, how do we invest? Do we follow the money? How do we hitch our wagon to this train? That's the kind of narrative potentially you're looking at here. But Japan has basically been the piggy bank to the world for decades. It has provided the capital to the world for decades. And capital is becoming an increasingly scarce resource that is becoming increasingly highly valued. And if the Japanese decide that they want theirs back, that is a big moment.
I've got a note here from Ben Eamons reacting to this morning at Highline Asset Management, calling it a good example of financial repression.
Yeah, it basically is. We are going to control it. We as a government are basically signalling, telling you what to do. Yeah. And QE, maybe I got that the wrong way around earlier, is another example of financial repression. This is government taking the market where it wants the market to go. Let's talk about SK Hynix as well, because this is a huge moment as well. It's raised $26.5 billion in the United States. The ADRs are going to come through later. We're going to be talking to the chair. Again, you need to take a step back and look at this story, because what you are basically looking at here is another example of a massive raise. SpaceX, one example of a massive raise recently. Then you get Google, Alphabet coming through, a massive raise. These are equity raises in the United States. Again, you come back to this idea that capital is becoming a scarce resource, and these big technology companies are consuming it in vast quantities at the moment. Previously, we've seen a market that's been shrinking. Now you're getting a market that is expanding in terms of the base of stocks that are available. That, again, is a seismic shift in what we're seeing in terms of the landscape that we've known for the last few years.
What we really need to see is who buys it today. Is it going to be retail investors? Is it going to be institutional investors?
Looks institutional.
Yeah, if you're trying to escape the volatility that we've seen in Korea, you would hope it's institutional, right? And I was just showing on Daybreak a chart from our Dan Curtis, actually showing that Micron has been more volatile than SK Hynix over the past month. So do you see that expectation of less volatility actually playing out when Hynix comes to the US?
It's interesting they didn't put a discount on this.
No, very confident, more than 3% above yesterday's closing
precisely.
price.
So this is a really confident. We know we're going to get the money. We're confident we're going to be doing this. I think I saw Joe Weisenthal posting a picture yesterday. I think it was the JP Morgan headquarters lit up with the Korean flag yesterday.
Oh,
so Wall Street's all in on this trade. I'm assuming that picture is real. But I think it is fascinating that they're looking to tap this huge amount of desire within the United States to get access to this trade. And you wonder how it's going to be, again, deployed. Let's talk about burden on Burnham.
Yeah. Well, look, it looks like we have our next Prime Minister almost nailed on here in the UK. It's likely to be Andy Burnham because the nominations for Labour leader opened yesterday and there's no one else in this one-horse race. You had 322 out of 403 Labour MPs formally nominating him to be the party leader, which is just outstanding, given that we have no idea what this man really stands for.
This is amazing. Like this is basically a complete leap of faith by the Labour Party. That it has no idea what he wants to do. He's given us light indications as to what he thinks his policy path is going to be. Somebody described it as almost North Korean in the way that this process has unfolded.
Yeah, basically totally undemocratic. He's been elected by the people of Makerfield and he's going to become the Prime Minister. He's been out of Westminster for, a decade up in Manchester. And the likes of Theresa May pointing out, former Prime Minister, that it's very different running the country to running Manchester. But interesting, he had a piece in the Times newspaper on his foreign policy, basically saying that his focus is going to be domestic. There won't be a huge change from the Starmer regime. Let's see how he handles President Trump, because there's no running away from the fact that the foreign is domestic in this geopolitical situation.
I'm just reading the next story just with a little bit of interest because I'm trying to get my head around what is happening here. Apollo, not Castlelake, Apollo has reached a deal to buy EasyJet for £7.15 a share. Apollo is doing this. The proposed cash offer at EasyJet at $5.7 billion. It's a statement on possible offer. Holders would be entitled to get $7.15 a share. So this is a last minute kind of offer that's come through. Castlelake started this process. The private equity firm that specialises in these kinds of assets sort of started this process, and it looks like Apollo, like a heavyweight in the sector, to say the least, has basically come in with a higher offer and beaten the rival proposal from Castlelake. Huge surprise, I would argue, here. So the carrier, EasyJet, Kenton Jarvis, the CEO, saying Apollo's bid is superior and, quoted, is no longer minded to recommend the Castlelake proposal. This according to a statement from EasyJet.
Yeah, 6% higher than the last offer of $6.50 per share. They've got until August 3rd, right?
Yeah, I think that's the put up and shut up date. They got pushed back.
See some more.
But now I think it becomes interesting. How does Castlelake react to this?
Yeah.
Is this a bidding war? Is that this is what I would have thought EasyJet would have wanted, a bidding war for the assets. Which, it's going to... how much further does this process run? But that is a big surprise. We'll try and get some analysis on this and come back to you with some news that we can bring you here at Bloomberg on that story. OK, what else we got coming up on the show? David Forgash, PIMCO's head of leverage finance, is going to be joining us. Lots to talk about with him. Sophie Wynn, BNP Paribas asset management portfolio manager and dynamic asset allocation strategist. Heck of a title. And Carlos Carenza, M&G Senior EM Debt Fund Manager, and critically this morning, after the France win, co-author of the firm's World Cup prediction model, which I have to say having looked at the numbers this morning, is doing quite well.
Yeah, well, we'll be able to tell you who's going to win the World Cup later on in the programme, perhaps. But let's look ahead to what else we're watching throughout the day. Today, we have EU finance ministers gathering in Brussels. We also, as we've been mentioning, have SK Hynix's Wall Street debut. At 9 a.m, we have the IEA oil market report, of course, very much in focus given the geopolitical background. And then later on, Delta earnings reporting before the US market open.
OK. There's quite an interesting story developing around this debt story, that Spain pushing quite hard to get joint debt. Now, this is a reasonably common theme, and a lot of people have basically said, yes, if you're a peripheral country with lots of debt, you are going to be pushing this idea. The Germans increasingly, obviously, have pushed back on this story. Nevertheless, it is kind of one of those stories that it feels like it is slowly gaining traction. I don't know how it's going to evolve and how long it'll take, but it does feel as if you are going to compete with the US Treasury market, you need to have increasing amounts of joint debt in Europe. So how long can Germany hold the line on this one? Even Christine Lagarde is kind of talking about proposals and understands why this would be something that would be of benefit to Europe. But obviously, we have a joint currency but different debts. And that remains a key kind of architectural glitch that we have in terms of the way that we run money in Europe.
Yeah, anyone at the European level saying it's pretty obvious, Lagarde or Kyriakos Pyrrhikakis saying that this is a good idea, but when you get to the national level, a lot more scepticism, a lot more caution. Well, Bloomberg's Oliver Crook will be speaking to the Spanish Minister for Economy and Trade, Carlo Cuerpo, later on this morning on this subject and others, so don't miss that exclusive conversation at 9:30 a.m. London time.
Coming up, we're going to look at your stocks to watch. What have we got at the open, including Volkswagen? Got the German automaker looking to cut its model lineup by up to 50%. Please don't cut the Golf as part of a cost-cutting drive. Plus, Mark Zuckerberg speaking exclusively to Bloomberg about Meta's plans to develop cloud businesses and read out AI infrastructure. More on that interview. Up next, we're going to be joined by Zoe Gillespie, Senior Director at RBC Bruin Dolphin. We'll get her take on what is happening with this Japan story, plus all the other asset allocation decisions that she's talking about right now. You want to join in the conversation? And we'd love to hear from you folks. IB Plus BB TV Go is the function. This is Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Burr.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything. When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers, and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech.
Every weekday, only on Bloomberg Television.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action. bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
Well, we are 45 minutes away from the opening trade. Here's what the futures picture looks like. Not really following the optimism that we saw in the Asian session. The MSCI Asia Pacific Index up 1.2% on the enthusiasm around tech. But here in Europe, we're down 0.1%. And S&P E-minis and Nasdaq futures both in the red as we head towards the Wall Street Open as well, Guy.
OK, let's talk about what's been going on in Asia. There's the tech story, but there's also the Japan story. Japanese bonds and the yen rebounding from multi-year lows. This after the finance minister called for Japanese pension funds to invest more in domestic assets. This a little bit of a surprise. Bloomberg senior editor Brian Fowler in Tokyo with this story. Is this a surprise? Where did this come from? How big a deal could this be?
Yeah, you've asked just the right questions we've been trying to answer. So the context is important. This was at a regular press conference following a cabinet meeting in which she talked about lots of topics, including BOJ independence. And then she was asked a question about the growth strategy that was announced a week ago that plans trillions of dollars of investment in 17 sectors over the next 14 years. And the question was, how does this plan benefit ordinary people? And her response was, well, we really hope that pension funds, as well as individuals, will invest more in domestic assets. And that's basically what she said. So it's kind of hard to know, for example, how serious this is. On the other hand, it comes against the backdrop of Japan having persistent inflation at 2% for the first time in a very long time. And I think there's a very real sense in the government that Japanese individuals need to be more invested in domestic assets if they want to stay ahead of inflation.
And how easy is it going to be to get Japanese pension funds to comply, especially when you've got one massive one, the Government Pension Investment Fund, one of the world's biggest? Is it likely that it would do what the finance minister would like it to do?
So the first thing, the finance ministry does not oversee the GPIF. It's overseen by the health and labor ministry. So that's one thing. And then the GPIF sets its allocations every 5 years. And the latest round of that was in March of last year when it kept its allocations at 25% each for domestic stocks, domestic bonds, overseas stocks, overseas bonds. There's some wiggle room, of course, in case asset values for one of those components rise versus the others. But as of March this year, the GPIF was keeping very much right at those allocations. It was just almost 25% even across the board. So there's a process. Now, having said that, could Takaichi could have give the ministry a little hint, a little nudge saying, we'd really like to see those asset allocations tweaked a bit? She could definitely do that, and who knows, maybe the ministry would respond to that. We're still trying to kind of get a sense of how independent the GPIF is. So there's no real way to answer that for sure, but if they do respond, it would definitely be a big boost to the yen as well as bonds.
Absolutely. Kind of even small tweaks here could have a big ripple effect. And it's interesting to see the PPI number coming through as hot as it did a little earlier on as well today. Brian, great stuff. Thanks for catching up with us and look forward to the further coverage on this. Bloomberg senior editor Brian Fowler joining us out of Tokyo. Let's bring in Zoe Gillespie, senior director at RBC Brewin Dolphin. Good morning.
Good morning.
You've got an underweight. Let's just talk about this story for a moment. You've got an underweight on Japan. Would something like this make you go back and go, let's have another look at that? we don't want to change things quickly, but let's just have the new information. Let's re-examine.
Of course, you would have to revisit it because you would have to look at your case and I think when we've looked at Japan, we've been, it's obviously had a run because of, again, the AI trade, the tech names have done very well there. But structurally, you're looking at increased inflation, whether borrowing costs are going to come through. So I think there's other factors, but you're right. I mean, if it's going to be supportive of equities, then that might change your stance on having, as you say, look at it again and see if we do change our opinion on it.
How difficult is it at the moment to kind of make big calls? You've got a tech trade that is looking extended, maybe late cycle, but still has the potential to go a lot higher from here. You've got a narrative around what is happening with inflation. How easy are the calls you're making at the moment? Because it feels like tectonic plates are beginning to move under a market that's got used to being stable for quite some time.
I think it's really difficult, as you say, to make decisions. And I think this week as well, with what's happened in the Middle East, it's thrown another, I think, factor into it. We're coming into earnings season, and I think that's going to be key for us to make any real changes because we're looking at companies, and we had the last, certainly earnings season that companies had reported a increase in earnings, which was, again, supportive for equities. But you're looking for any, I think, hints and changes in consumer patterns, you see, with inflation coming through. The AI names, are they going to deliver? And we have seen a real shift this year. So making decisions about portfolios has become increasingly tricky, and it seems to be every couple of days the news changes, and it moves the dial quite considerably.
Well, yeah, are we in a bubble when it comes to earnings expectations?
I think there's a lot of pressure on it, but I think it depends what sectors you look at. I think with tech, yes, but there's other sectors where valuations don't look that compelling. So if we do see some upside or as you say, decent earning growth coming through, then we may see a bit of a pop in some of the share prices. So I think it really is. But you're right. I think the expectations are high coming into Q2 earnings, and it's whether we do see the same I think numbers that we got through in Q1, and I think that's going to determine a lot about how we position portfolios going into the second half of this year.
Well, you like European stocks, but not the UK.
Yeah.
Is that a hedge against the AI trade?
Yeah, I think certainly we see there's more value in Europe just now, and I think when you look at some of the sectors we've liked this year, European banks have done really well. I think the industrial names have done well, so we've picked up these, and as you say, it is a trade against the AI. And certainly with the UK, it's more defensive names, and you've got your energy stocks, healthcare there. So it is the trade-off trying to have that diversification within portfolios just to make sure that you're not just having that big AI bet, and if something does happen there, which we have seen volatility, that it has more of an impact on portfolios.
You're overweight cash.
Yeah.
Is that because you think something's about to happen? You think there's an opportunity coming? Presumably it is. Or is it just it's a safe asset that is yielding fairly decent amounts at the moment, and actually from a risk-reward point of view makes sense?
Yeah, I think a bit both. I think we've sat on the sidelines, and I think when markets have got a bit ahead of themselves, we've maybe taken a bit off the table to try and deploy at other times. But yeah, you're right. I think it's given good returns, and it is a safer asset just to hold just now.
Why do you like gilts?
Well, interestingly, we're underweight bonds, but we like gilts. And I think going into, you're certainly within the bond space, with inflation, you're looking at potentially yields going up. But within the UK, we think there's potentially less, scope for further rate hikes from here. Yeah. Again, the political pressure, obviously, you've got the change of Prime Minister, and I think there's been a lot of talk about whether there's going to be a more left-leaning government. But if you look at it and you think, well, Burnham has agreed to stick to the fiscal rules. He's said that he's not going to change significantly from the mandate. So we think that's supportive for gilts from this point onwards, and we favour that more than other bonds. But we are underweight bonds, but we do prefer gilts in that space.
Just back to the UK asset story. Why are UK equities underweight? I look at the story this morning. EasyJet, a massive bid coming through this morning from Apollo. You've got a bidding war for another UK asset that's potentially going to be taken out. People are buying UK assets privately because they think they're cheap. Why can't the markets value UK assets at a higher level when private is prepared to come in and make kind of significant premiums?
And we have seen that across the board, but for some reason valuations still seem to be depressed in the UK, and it seems to be the unloved market. And I don't know whether it is the lack of tech names and the excitement of other things, but
precisely. But if everything else is overloved and the UK is underloved, isn't the UK the hedge against the overloved stuff?
It has been, and we saw that in 2022 when certainly that happened. But it doesn't seem to be that money has been going back into the UK. And you're right, we have seen international companies coming in and taking out some of our assets instead of, as you say, shareholders actually starting to benefit.
Zoe, thanks for coming in to see us. Zoe Gillespie there, Senior Director at RBC Brewin Dolphin. Guy.
OK, what else you need to know this Friday morning? A US official has told Bloomberg that technical talks are continuing between the US and Iran, despite a flare-up in hostilities this week. The comments are likely to ease fears of a return to all-out war after the US launched fresh strikes on Iranian targets. Washington said these strikes were in retaliation for what it says were attacks by Tehran on ships in the Strait of Hormuz. To Germany, and Volkswagen plans to cut its model lineup by as much as 50% as part of a shake-up at Germany's largest car maker. The savings push was announced after a closely watched supervisory board meeting that stopped short of agreeing on deeper job cuts championed by CEO Oliver Blume. Volkswagen is facing its most significant restructuring in decades as it contends with slumping profits in China and weak demand in Europe. And AI teams at JP Morgan have delivered some promising results as they seek to latch on to the boom in automated trading. Researchers at the bank built an array of AI-powered investing agents that shift between stocks and bonds depending on the changing market conditions. In back tests spanning the past 2 decades, the best-performing system topped a traditional 60-40 portfolio by 0.7% a year. Now, that doesn't sound like much, but if you compound it, I guess it probably is. But that was the best one.
Yeah.
Outperforming a 60-40.
And we have to say that it's not based on live investing, it's based on historical simulations, so
sure.
An important caveat.
No, but you want to, but you backtest this stuff.
Yeah.
Like 2 decades of backtesting over the data sets that they have probably gives you a pretty accurate idea of whether it would have performed or not.
Yeah. Well, let's see. It's taken 2 years to get to this point, basically, so it's only going to get better, surely.
Presumably it will get better, yes, but... And 0.7 is not an insignificant number in terms of overall outperformance. Again, if you compound that number.
But also, if everyone's at it, all using AI,
precisely.
Then we all think the same way.
And it cancels the advantage out within a market that is increasingly driven by this kind of process. OK, but yeah, another example maybe of how the finance world is going to change.
Well, coming up on the programme, a hot credit market presents an opportunity for junk-rated firms. We'll discuss with PIMCO's David Forgash next. Stay with us. This is Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Oh, hello there. Just wanted to say, Primer is back. We've been scouring the frontiers of science and technology to help explain the difference between the next gold rush and whatever this thing is. And in season 2, we're upping the stakes. More danger.
Now that is some high-grade uranium mineralization.
We used to have a stable climate on this Earth. Right now, we do not.
More science.
We're pushing the envelope of technology in multiple directions. Software, hardware, chemistry, physics.
The cable is like
very cold.
And more CEOs that can nail the photo shoot.
Hundreds and hundreds of billions of dollars are at stake.
While the problems are economic, the solutions are too.
And yes, we will be talking about AI.
There is a lot of humanoid hype out there.
But our future doesn't run on hype. It runs on innovation. Watch season 2 on all these lovely channels.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
Okay, here we go. 30 minutes to go until equity markets open here in Europe. It's Friday morning. It's a weekend coming up with lots of sport and lots of things to talk about. There's some nice tennis taking place as well today. Keep an eye on centre court. In terms of the futures picture, like relative to what we've seen out in Asia, but this is kind of the daily theme, we are seeing a relatively becalmed market. Certainly not as whippy as we've seen, Lizzie Burden, out in Asia overnight. The Cosby having another dramatic session.
Yeah, I mean, some pretty pronounced moves in Asia when it comes to the long end of the Japanese bond curve, given all that we've been discussing when it's in terms of what the finance ministry's been saying about pension funds bringing assets home, and those moves on the 10-year down 10 basis points at 277, not quite translating here to Europe, but we are seeing yields lower at the start of the trade. The 10-year bund yield down 2 basis points at just over 3%. Well, junk-rated companies are seizing on credit markets flushed with cash to secure better terms from lenders. Bloomberg data shows that loan repricing volume in Europe hit over $43 billion in June, the single highest monthly total since 1999. The repricing is not popular with Wall Street, who must either decide whether to find a new home for their money or stay invested with lower returns. To discuss, we're joined now, I'm pleased to say, by David Forgash, who is Head of Leverage Finance at PIMCO. Great to have you with us in London.
Thank you.
Basically, we're reporting that there's so much cash in the loan market that even weaker borrowers are repricing debt more cheaply. I wonder how much that situation could change given the situation in the Middle East if we actually have all-out war. Trump's saying that's not the possibility right now, but, you know, if we end up with an inflation problem again and higher rates again.
Yeah, well, it certainly makes it more difficult, especially for leveraged loan borrowers to refinance. And that has been a big concern, which is why you've seen so many of them trying to come in during this period of no hostilities or less hostilities, trying to come in and do these refinancings, these extended amends, anything to push out the maturity schedule. Now, if you do see this continue and you do see rates increase, that's obviously a direct effect on those borrowers that have floating rate exposure, and that is the leveraged loan market.
And you say that there's this growing divide then between high-yield bonds and direct lending. Why do you think high yields become the safer part?
Well, high yield has become safer, and it's witnessed by just looking at ratings. High yield now is much more double B, so the higher credit rating within high yield than it ever has been in the past. It's almost 60%. Double B in the U.S. and in Europe, it's even higher. It's about 67%. So it's much higher quality. The duration is much lower in high yield. It's the lowest it's ever been. It's about 3 years. So, and the refinancings that have taken place in high yield have taken the maturity schedule, the wall that we call it from time to time, out to about 2029. So very little in 27, almost nothing in this year. And then it pushes out towards 28 and 29. So they've done a very good job. It's a much safer market than it's been over the past several years.
Is capital becoming a scarcer resource?
Capital is there. Capital is there for the right deals. It's the demand for that capital that has increased through AI infrastructure. There's much more of a demand for this. That ecosystem of AI, whether it's from the data centers, the chip manufacturers, whether it's investment grade, high yield, it has increased quite a bit. So it's not a crowding out as of yet, but there is more options to invest in if you're a high yield or leveraged loan investor, which for us is fantastic. It gives us an opportunity set that wasn't there prior.
What does that mean in terms of yields?
Well, generally, when you have more demand for the same product, you're going to have. It's so far that demand has not been made having to have much higher yields. The spreads have moved wider. So now spreads have moved wider. One of them was a downgrade we saw yesterday in an investment grade issuer. But it's more the ecosystem now is controlling and realizing that if you're going to have this much of a demand for capital, that clearly you have to make sure there's a profit towards the end of it. So you start to have some doubts about that. And then spreads start to widen for that reason. I think that's just what we saw over this past week, which was actually quite healthy for the market, getting paid more for that risk and the need for more capital.
OK, but on the negative side, that's the opportunity. You say that you don't think you need a recession to see stress emerging. If growth stays reasonably solid, where do you expect the cracks to actually show up?
Yeah, so the idea of stress in the market, it's less of stress, more of dispersion, because there isn't a lot of stress in the market so far, and it's less of a macro story. It's more of a capital structure story. So capital structure within each of these credits, which means that capital selection or credit selection, single name credit selection, becomes more and more important. So you have these large capital structures that have borrowed oftentimes during 2020, 21, when rates were very low, and the debt to EV, the multiples that we use, the EV/EBITDA, had been very stretched. Low borrowing costs, very stretched. Those capital structures are unsustainable many times.
When do those vintages break down?
They break down when there's a refinancing.
When does that happen?
That happens this year and next year for many of the leveraged loan borrowers, and that's why the anticipation is.
Is that a pricing problem or a recovery problem?
That is a recovery problem, because that becomes, at that point, the pricing of it is already coming into effect. Pricing goes lower because the concerns about refinancing and recovery and liability management exercises, which we should see pick up. But that is very much in, say, the software area of leveraged loans and definitely the private direct lending market.
So how different would it be to previous credit downturns?
Previous credit downturns are usually based upon the economy, a recession, fears of recession. That's less so right now. We haven't hit that point of being concerned. Growth is still quite strong in the U.S. It's not as strong here in Europe. So it's less of a story about a recession causing it. It's more of a story about capital structures that cannot maintain going forward because there's less ability to refinance those.
Coming back to this issue of crowding out, what did you make of the Oracle downgrade?
So anytime you have a downgrade, it resets the whole ecosystem, right? So it's less about a single downgrade, and it's more about the circularity of the AI industry, right? Because you've got these data centers, and you've got the demand side, the offtake, you've got everything that goes into the data centers, you've got the chips that need to be financed, you've got the energy infrastructure that needs to be financed. All of that, when you take it as a whole, the natural way to look at it would be that there's more stress in it and more doubt about how the long-term earnings are going to end up for that. Because in the beginning, it's very optimistic that these will end up having earnings that will offset that capital that you're using. So when you have a downgrade like this, I think it brings people's minds into the idea that you've got more risk in that, and you need to get paid more for that, which I think is quite healthy.
When you look at that, how are you thinking about, what metrics are you using to assess the pace at which the investment into data centers is going to pay off? Because the longer it is, presumably, the bigger the problem we have. What are you looking at? Are you looking at the real economy, trying to figure out kind of whether companies are getting productivity benefits? Where are you looking to try and judge that cadence within that story?
Yeah, and I think that's the trouble that the market is coming to the realization of right now, is how far out are those earnings and how large will they be? And if you bring those back, will they offset all the infrastructure that's being built into it, right? So it's a single name underwriting that you need to do, whether it's the data centers, the idea of what the contracts are and how strong those are, how quickly those data centers could be built, whether the infrastructure will be in place, because you need to energize them, so you need to have the energy into them, and how good those contracts are for them. Now, in the end, there is some guesswork for a lot of the economy as far as what that end result will be. Now, we take a look at it and we see what we can actually see as far as looking forward on the earnings that is the expectation based upon each individual company. And we have a lot of analysis that goes into that. Sure. And I think we do a very good job of it. But in the end, the market is repricing the concerns about how do you, in the end, recognize whether that will pay off. And I think what the market's telling you right now is we need more information on that.
Okay, David.
Yep.
The big question remains. David Forgash, Head of Leveraged Finance at PIMCO, thank you very much for stopping by to see us while you're in town. Well, EU policymakers, meanwhile, are calling on Europe to take AI more seriously.
Artificial intelligence is the technology that will shape competitiveness and economic power in the 21st century. Europe must create the right conditions, mobilize the necessary capital, and enable its companies to achieve the scale to compete globally, so that the next generation of global AI champions is born, grows, and remains here in Europe.
Kyriakos Piriakakis, the Eurogroup president, of course, speaking at a gathering of EU finance ministers in Brussels. We'll have more on the AI story next. This is Bloomberg.
Do you mind being called an ideological lunatic or a bunch of left-wing nut jobs?
You know, I've been called worse things than that.
Oh! You'd think she owned the place.
23andMe, I think, is so incredibly valuable. We're coming back.
It had that kind of detective story feel to it. You know, when you're hot on the trail of something, you know that it's very exciting. What magazines were you reading as a kid?
I don't think I was reading magazines until I was in them.
You are on the cover of all of these.
Oh, and there's many, many more, but we just don't have time.
Why should people trust you?
I don't think anybody should trust any company or entity completely with any of this.
It's very uncomfortable. Artificial intelligence is this force that is far bigger than we are.
I want to build better businesses around these brands.
The shock will never wear off.
So you're a brother and sister running one of the most powerful companies in the world. When you argue, who wins?
No one. The way I could see AI being banned or blocked is if something really went wrong. And if something really went wrong, then maybe it deserves to be.
So is it paradise ahead or Gattaca?
Maybe somewhere in the middle.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
The key word right now is rotation.
So literally everybody knows tech stocks are crowded. What you don't want is you sell tech, but you also sell everything else. That higher correlation environment at either a single stock or a sector level, that's where you get these dangerous turns in markets.
Three things that are really going on. The first is exactly the part you talk about, and that's the macro side. So that is oil prices, which of course is driven by nervousness about the Middle East. Second, you've got the fundamentals, which is the earnings and the earnings power and what that might look like. And then on the third, you've got the crowdedness of positions. At the moment, it all depends on what the day before looked like.
You have Kospi Vol trading above 80 for extended period of time. That's 3 times more than, say, Hong Kong, for example, and 5 times more than the VIX, right? So if you're going to have your biggest, most high conviction positions in an 87 vol index, you will have to reduce the size of the index, size of your position.
What you're seeing in Korea in particular is that there's still that kind of dip buying within retail. Yes, you may have had some profit taking post Samsung results, but until I think you see persistent weakness over multiple days, multiple weeks, I wouldn't really call it a bear market.
It's going through sentiment cycles, and I think that's a bit what we're dealing with. The dispersion is just shocking, what you see between some of the Max 7 even. In the very near term, I would not be surprised if the Max 7 or the hyperscalers will trade a bit better, and if the semiconductors continue to be quite volatile.
Quite volatile. Yeah, let's pick up on that thought. Some of our guests talking about what we're seeing in terms of the tech story, the earnings story, the rotation story that we continue to watch makes your head spin. Let's stick with the SEBI side of things, because talking of kind of head-spinning numbers, let's talk about SK Hynix, set to list today on the Nasdaq after raising $26.5 billion in its ADR offering. Got priced yesterday. Just taken down with just extraordinary appetite, 7 times oversubscribed. The South Korean chip maker's US debut now tops Alibaba to become the 3rd biggest listing in history and the largest in the United States by a foreign company. Big numbers, head-spinning numbers. Let's talk to Bloomberg senior strategist Neil Campling. Neil, another company, another big kind of AI-related tech company raising gargantuan quantities of money in the United States. SpaceX is one that instantly springs to mind. You've got Google doing the same thing. Now you've got SK Hynix coming to the market and raising huge amounts of money. What does this tell us about the state of where we are right now and the demand there is for this stuff and how this kind of ultimately plays out?
Yeah, I mean, it's a great question, because there is huge amount of appetite for this deal, as you mentioned. And actually, as you've said on the intro there, talking about momentum and dispersion and tech positioning and crowded trades, and that they are all very true. And this goes more to that point that there's still huge, tremendous appetite for these transactions. And actually, in conversations I've had with clients, there's more interest, I would say, in this Hynix deal from institutional funds than there was maybe even for the SpaceX deal. So there is great appetite for this. There's huge amount, obviously, they're raising that's going to be put to work themselves into capex, and there is other trades around whether this could potentially have some index inclusions, whether there's passive fund involvement as well. But of course, as you mentioned, volatility as well in this particular sector is likely to continue, because there's going to be more leveraged ETFs around this new instrument that's coming to the market. So volatility in this part of the tech space in chips is unlikely to stop anytime soon.
OK, so we'll watch how the listing goes down. You mentioned SpaceX, Neil. SpaceX, of course, rented access to its Memphis data center to Anthropic. It feels like maybe Meta wants to do something similar. We had this exclusive interview with Mark Zuckerberg talking about considering whether some of its AI infrastructure would be more valuable if it were rented to outsiders. Is that not spin? Is it not a bad look when you've got spare capacity like this?
It's an interesting conundrum, because Meta have been very clear that they need all of the compute power for internal purposes. But the suggestion was they had such high demand at such high prices that they see a great opportunity for them basically to turn really their energy into tokens and sell. I think the other plan is to sell access to intelligence, much like Alphabet has done as well. So Meta's been early in collecting energy, in building data centers, and the vision that they have. They're also, I think this is telling you that by monetizing these strategies, in selling compute power, they are not done by any means in terms of their own investment phase. To add into what we were discussing earlier, and with Hynix's raise as well, I suspect you're going to see the capex estimates of Meta to move higher as well, and they could also look to do what potentially in time what Alphabet has done recently in terms of coming back and tapping the markets for more capital. So requirements go up in terms of compute power, demand is going up, and now we're seeing this step forward. I think that Meta is looking to compete directly against frontier AI labs. Whether it's successful obviously remains to be seen. Execution's a key risk for them, clearly.
OK, Neil, thank you very much. That's Bloomberg's Neil Campling. And Bloomberg's Ed Ludlow will be speaking with the SK Group chairman at 3:30 p.m. London time.
Looking forward to that interview. Definitely tune into that. OK, the Japanese want their pension money back. Our executive editor for Asia Markets, Paul Dobson, joins us now. Paul, how significant could this be?
Yeah, good morning, Guy. Financial repression appears to be alive and well and living in Japan, with the comments that we heard from Finance Minister Katayama today talking about wanting the pension funds to invest more of their money in Japanese assets. Our reporting uncovered that this was a sort of pre-planned statement that she gave at a regular press conference. And so the idea being that it's not certain whether this is jawboning or if this is definitely a start of a new policy and a new plan among the Japanese government to get more of those investments that are overseas to come back home. The effect of that, of course, would be to put a bit of a cap on Japanese government bond yields, which would be very handy for the government and also support the yen. Also favourable for the government, given the pressure that the yen has been under. Best way to do it? Have higher yields, make your Japanese government bonds more attractive, but they don't really want to do that. So we'll see. It will take a while for pension funds to actually change their mandate. We'll see whether this starts the ball rolling for some initiative that could really change things.
But Paul, what could it mean for treasuries if you have a switch out of them and into JGBs?
Yeah, so one more reason to be a little bit more worried, particularly about the long end of the US yield curve. Japanese investors hold a significant amount of treasuries, a significant amount of European government bonds as well, for that matter. And were they to reduce their holdings overseas in order to put more into Japanese government bonds, that would, of course, cause a rebalancing effect. And it might set a precedent for other nations to follow as well. So it might be a sort of knock-on effect. I think the bigger concern here is exactly who is buying all of those US treasuries at the moment. The ownership has changed quite a lot. We know that hedge funds own a lot more. Part of the basis trade by shorting the futures and arbitraging the gap between them. That makes them much more volatile and susceptible to kind of flight in times of risk. So it's not great for the US government. They would prefer long, stable pots of cash investing in US treasuries.
Yeah. I think everybody would like that. That would be very nice. Paul, we're going into a weekend. The US markets will close. Are we going to get more Gulf-related action at that point? Is that the risk that we worry about going into this weekend?
Well, so the trading pattern that we had, remember we had a conversation like this during the war, that weekends were the worst time of the week for traders because they weren't able to, change their positions if there was any kind of flare up in the tension. So people would get very nervous on a Friday and be closing down their positions as much as possible, so there wasn't that much risk at the weekends. I think we're in a different environment right now. The market is still relatively calm, despite the flare-up that we saw in the tensions over recent days, and the reaction in the crude oil price even wasn't that extreme. So maybe not the same as we were before, but people will still be watching their mobile phones for news.
Paul Dobson, Bloomberg's executive editor for Asia Markets. Thank you very much. Have a great weekend. Well, let's get to the stocks to watch now with Chloe Melly. And Chloe, you're looking at EasyJet.
Absolutely. Good morning, Lizzie. The EasyJet saga is back on, and now we have got a takeover battle on our hands. So EasyJet has just received this morning a rival offer from the private equity firm Apollo, which is actually superior to the bid from Castlelake. So we have seen the shares go on a really wild ride over the last month or so as Castlelake kept upping its offer to try and bring EasyJet to the table. The fifth takeover bid was the successful one, but now we've got this surprise twist, this new player coming into the game, and so we will be definitely seeing probably a huge market reaction this morning. This is really going to be the story to watch. So EasyJet definitely on our minds this morning. We also have Volkswagen to think about because the company is planning to cut its product lineup by as much as 50%. This is part of a broader restructuring plan for that car maker. The CEO wants to cut lots of jobs and close down a few manufacturing sites as well. It's because he said that this business model of making cars in Germany destined for export is just not viable anymore. This will have consequences as well for that broader European car making sector, with Bloomberg Intelligence saying that we could see a prolonged run of profit warnings until we get that EU policy reset, a stronger policy support. And finally, staying in Germany but going to the banking sector with KBW upgrading Deutsche Bank to a market perform rating. This is a company that's been really benefiting from its trading business, but then also has the challenges of the private credit exposure and a slowing loan growth in Germany as well. And so we have seen the company underperform, as we can see here on the graph, the broader European banking index. But maybe this vote of confidence from KBW will lift the shares this morning. So also keep an eye on Deutsche Bank at the open.
Great stuff, Chloe. Thank you very much indeed, Chloe Melly, on the single stocks we need to watch out for. So EasyJet closed at 588. The Castle Lake offers at 590. The Apollo offers now at 715. I've seen 5 to 10% on the upside for EasyJet this morning. Apollo's got a few questions it needs to answer here, one of which is how does it get round the ownership rules relating to Europe? I haven't seen any information on that yet.
Surely there's a risk of overpaying if they get into a bidding war here.
This was a very depressed asset, but yeah, that is the risk.
Yeah,
but we are now into a bidding war.
Yeah, and we've got high jet fuel. Who would want an airline right now? Right, the opening trade coming up next. This is Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas.
The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors.
We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Joanna Bersachi in El Ula, Saudi Arabia, and this is Bloomberg.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers, and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech.
Every weekday, only on Bloomberg Television.
Morning, how you doing? A couple of minutes ago until we start trading here in Europe. Let's talk about this. This was a chart from yesterday. And basically what it's telling you is we've got a little on the upside to price in to the European picture. We went out there, finished a little bit higher, but there's still some upside maybe to focus on. So let me show you the futures picture, give you an idea of what we're looking at there. You've got a lot to fold in this morning, haven't you? You've got the whole Japan story, you've got what's happening with the tech story, plus you've got the gold story. All of that to fold into the narrative. Eurostoxx 50 futures, a little negative, but only down by 1/10%. Elsewhere, you're getting some positivity returning to the FTSE 100, which got hit hard yesterday by AstraZeneca. DAX futures absolutely flat. So it looks like we're going to see a little bit of calmness into the Friday session, but there's still obviously a weekend to come, and we're going to be watching very carefully what happens in the Gulf as a result, Lizzie.
Perhaps not calmness, though, for EasyJet, Guy. It's indicated higher by double digits on TradeGate after that fresh offer from Apollo. Of course, that beats a rival proposal from Castlelake, so we're all in the mix now. We'll keep an eye on EasyJet. Also watching Volkswagen. They had this showdown at the supervisory board meeting yesterday. The CEO pushing for job cuts, didn't get them, but they are looking to halve their model lineup after the impasse. So TradeGate not suggesting much of a move, but we'll keep an eye on them. And then also in Germany, Deutsche Bank upgraded to market perform at KBW. Do we see outperformance for the individual shares this morning on the DAX, Guy?
OK, here we go. Let's talk about the market open. Let's give you an idea of what the numbers are actually going to tell us. We think it's going to be relatively quiet. Look below the surface, though. There could be some really interesting narratives beginning to develop. The airline sector, I think, is going to be fascinating today. We'll see exactly what happens with this extra Apollo bid coming into the market for EasyJet. But keep an eye on the oil story as well. Anyway, let me show you some numbers, give you an idea of what is going on. This is the picture. We're anticipating a fairly flattish start for the FTSE 100, maybe a little bit of upside. Got battered yesterday by Astra. We'll come back to that, I think, over the next few days. The FTSE it's expected to be 0.02% higher. Elsewhere, I think you're going to see not a lot of activity. The Stock 600, absolutely nothing to see here. Europe feels again, after the volatility of the Asian session, like a sort of area of calm. Does that signal something about it as a diversifier, it as an area of reduced volatility, a place to hide maybe from some of this volatility we're seeing both up and down, obviously, with the story surrounding tech? So here we go. Fuller picture. Stock 600, nothing to see here. FTSE's up a little bit more. CAC's doing nothing. AEX is down by 0.4%. We'll dig into the details of why in just a moment. The IBEX has got nothing to show for itself this morning. The DAX is a non-starter yet. We'll come back to that market in a moment. And we'll look deeper into the FTSE 250 for some of the stocks that are moving there, particularly in the airline sector. Lizzie Burden.
Well, let's take a look at the sectoral breakdown. You've got about 3/4 in positive territory this morning. At the top of the basket, basic resources at 1.3%. Autos up 0.6%. And I'm just checking in on Volkswagen. Those shares actually up 0.9%. As I say, they didn't get to a decision on job cuts at that supervisory meeting yesterday. But at the bottom of the basket, energy, you'd flagged that, Guy. If you look at the oil price this morning, Brent is weaker by 0.2%. It's been in flux throughout the session, but $76 a barrel is where we trade. We have reported that the US side, at least, in the US-Iran talks, wants to keep talking despite the strikes both ways. And then we're also keeping an eye on airline and EasyJet in particular. So where are we for that? Not trading yet. So we'll wait for that. But other sectors moving. Tech, bottom of the basket, down 1.1%. So not following on from that enthusiasm that we'd seen for the AI trade in the Asia session.
No, but is that something that tells you, if you're looking for a diversifier at the moment, if you're looking at the tech trade, if you think it's over its skis, if you're worried about the volatility that you're seeing within that space, you come into the European sort of space, you can breathe a sigh of relief, you can sort of sit down, figure out what's going on. Are these assets that represent, therefore, if you are looking for the rotation, if you are looking for some safety, a place maybe to hang out and hide out?
Well, let's call the ref. We can speak to Sophie Wynne, who is Portfolio Manager and Dynamic Asset Allocation Strategist at BNP Paribas Asset Management. Welcome back.
Hello.
Before you sat down, you said it was going to be a quiet summer, which I feel is very confident. talking of the tech trade, we've had all of this geopolitical uncertainty reignited this week. Some people thinking tech's where I want to be when you have that, because, you know, this is the thing that grows regardless. Do you agree with that? I mean, do you just bat away the geopolitics, look through it and think the two sides have got to come to a logical conclusion because we've got the midterms later and it hurts everyone?
I think I agree with you medium term, as in we're still in this phase where we're in this physical AI stage. There's going to be this build out of data centers, need for power and so on. But in the short term, given the high level of volatility on this high momentum trade, which is the AI trade, how do you go on vacation? So you need to manage
on holiday next week, don't say that.
You need to monitor your factor exposure and duration exposure, as you mentioned with Middle East, but also potential ripple effect from higher JGB yield. So I think that means what we've seen so far has been this technical rotation where there's been this factor neutralization because we're going on vacation. But at the same time, I think where are you going to find some safe haven? And if you think about like the Venn diagram of factor exposure, where it's more short momentum, a bit less exposed, and also less duration exposed, I think Europe makes sense in some of the laggard sector where earnings momentum have been more disappointing versus the AI-related stocks. But I think the big, you know, like where you should put your money at this point is China.
Oh, okay. Where in China?
China internet names have rebounded, and if you look at some of the names, the fact that we got all this announcement about data centers investment, so compared to the US peers, it's nothing. As in, like this year, they have been investing 600 billion renminbi compared to 700 billion on the US side. But it's clear that they're stepping up. They have an independent supply chain. They are making effort to become much more independent on the semi side as well. I think that's where you want to hide as we wait for this factor rotation to finish.
It's interesting. Our big take today is about CXMT.
Yeah, looking for an IPO.
Yeah, and how we don't really know much about it. We haven't really learned much about it as the details have come out through the filings.
Yeah.
And yet this is trying to rival the likes of SK Hynix and Samsung coming out of Korea.
That's an issue. So how do you invest in China? A lot of Western investors don't know enough about the nuance and the detail to invest there. Can you go single stock? Do you buy baskets? How would you make that move into that market? How specific would you get?
So one way to look at it, so we're still long the China A shares, and they have been lagging peers, and they will benefit from, on top of it, consumer demand recovery because we're expecting more fiscal, and also the property green shoots that will start to appear. But I think you also have some indices that are just purely China internet names. They are trying to find a way to monetize AI. They're investing in data centers, but at the same time, the drag we've seen in the past due to subsidies that was very negative for the cash flow, it's finally behind us. So we're looking ahead in terms of AI. But I think one important point as well is in a world where Europe is stuck in the middle, we could come like in a world where, you know, like the AI frontier models in the US stay in the US, but China at the same time are just 6 months behind. The models are not by their open source, and it could be, you know, like a source of opportunities there.
EasyJet's open, it's up by 14%. We'll come back to that story in just a moment. Is the Chinese, if I make that trade, has the Chinese government got my back? Because it feels like the Chinese government's trying to impose quite a lot of rules around the AI narrative at the moment. Is that going to throttle back the AI story in China? How do I invest around that narrative? They're very keen to make sure that they control the story.
They are investing in terms of the hyperscalers. Like internet companies are investing. If you look at the power, it's not a problem for them. So they're going to be much more, I think, resilient in terms of infrastructure build out. They don't have any shortage of materials. They have so much stockpiled and inventories of energy, base metals. So they're much more independent on that. We're not going to hear about shortage stories, delay of plans. They're powering ahead. I think the only point is, yes, the government is behind, but at the same time, it's going to make like the path a bit smoother, as in like you have government support. Yesterday there was an announcement about utilities companies allowed to invest in data center capacity. I think that's where we're going. So government support in a way is not that bad, but I think I'm thinking about we live in Europe where are the plans?
So you like China, but what about Korea? I mean, we're talking a lot about SK Hynix today, all of the oversubscription. Do you read that as a sign of genuine enthusiasm? Do you buy dips when they arise for the Kospi?
We're buying dips, as in like we still believe in the AI story, but I think from a portfolio perspective, it's hard to hold on to markets and also names that were highly volatile. And, you know, like you got this exuberance from the leverage ETF. So that's why we're waiting for the vol to come down a bit at this point and playing this rotation that could or could not be confirmed by, you know, like the earnings season. So kind of hiding a bit, but medium term, Korea and Asian equities really make sense.
And would you expect that volatility to be imported to the US with the US listing for SK Hynix?
I think it's a hard thing to say, as in like the volatility would only, there's going to be only some contagion if you start to see retail investors disinvesting from Korea and buying the stocks in the US. But from a tax perspective, I don't think it's that attractive. So it means that retail investors, I think, will remain in Korea for now.
Can I assume, therefore, you're not wild about Europe in all of this? A moment ago, you said Europe is the sort of diversifier, but is China a better diversifier? If you were ranking places to hide out, where would Europe sit? Are there better places to hide out than Europe?
I think second after China.
Okay, second after China.
So it's more like we're looking for the earnings season. The earnings season, if you look at the non-AI sectors, the earnings momentum has started to come down a bit. You got earnings downgrade since the start of the year. So it's not as if like you got high expectation on the laggard sectors such as like, let's say, auto, discretionary, all the sectors. So if the earnings season turned out to be not that bad, I think that's where you could have some safe haven, like a place to hide, because they are short momentum. I think positioning is quite bearish on them. So that's how you want to rotate at this point.
Nice to see you. It's going to be hopefully a quiet summer, but an interesting summer. Yes. Sophie Wynn, Portfolio Manager at BNP Paribas Asset Management. Call 6 looks a little bit like this. We're certainly watching the tech trade quite carefully. We'll keep an eye on ASML, but there's other big stocks out there that are on the move. EasyJet is one. Vodafone is another. We'll come to that Etisalat stake in just a moment. But as you can see, broadly, actually, some of the big stocks are weaker this morning. ASML is down by nearly 2%. You've got some of the defence stocks under a little bit of pressure. Even some of the kind of safe haven places like Nestle under a little bit of pressure as well. But there are areas of the market that are flying higher. Sorry. Chloe Melly, over to you.
Good morning, Guy. Indeed, as expected, EasyJet is soaring this morning, up more than 13% after receiving that rival offer from Apollo, which is actually superior to the bid from Castlelake. Earlier this week, it looked like it was set in stone that Castlelake would get its way and buy EasyJet, but we've got now this surprise twist, and we can see that this is leading to a lot of movement in that stock. So we'll be watching out for any further developments there, but we're up, very strongly there. Moving on to another big mover in the UK market, and that is Vodafone, which is up 12% after its biggest shareholder, Emirates Telecom, sold its entire 16% stake in Vodafone at a premium. So we're seeing that really boost the shares this morning here in the UK for Vodafone. Moving on to some steel stocks. So we've got an upgrade from JP Morgan, upgrading Voestalpine, Salzgitter, and also ArcelorMittal, and that is really driving those companies this morning. This is a sector that's really benefiting from the EU imposing those tariffs on steel imports, which is something that is set to kind of safeguard that European steel industry. And so we're up actually very strongly, as we can see here for Salzgitter, up almost 10%. Moving on to Bayer, which is also in the green this morning after selling its minority stake in its contraceptives business to Apollo, which it seems that they are everywhere. We're up about 2% on this, and they said they would take those proceeds and reinvest that in their capital structure. So we're up there on on the back of that. And finally, let's end on one downside mover. We've got St. James's Place down this morning more than 5% after a report that one of the biggest advice firms within its network had decided to exit, which is pointing to maybe some retention problems at the company. And so we're down quite a bit there on the back of that this morning for St. James's Place.
Okay, great stuff. Thank you very much indeed. As you say, Apollo, very busy this morning. You've got the buyer story that we are watching carefully as well, plus also this offer for EasyJet that has come through. So where are we trading on EasyJet right now? 667. So just think about kind of where the bids are. You've got Castle Lake at 690. You've now got Apollo coming through at 715. We're still not at those levels. Why is we've seen a big jump higher this morning, but you do wonder whether or not this is increasingly looking like an offer will be successful by one of these firms. Why aren't we trading at offer price? Kind of what is going to happen next? Are there still, and this is maybe what the market is worried about, issues surrounding whether or not either of these two firms can get around the ownership issue?
Yeah, surely Apollo would need a European partner there.
Yeah, it does. And we don't have details on that, but hopefully we'll learn about that next week. But they are going to need to figure that one out. The Castle Lake team had put a couple of Irish guys on the board, and we're hoping that would be enough to maybe get round that. And you do wonder whether this is a kind of short-term story. Do you need to just get the acquisition done and then you can break it up and then you don't need to worry about that kind of ownership thing? You just need to kind of tick the box and make sure you can kind of deliver upon that. But yeah, it's like Apollo's decided that it wants to step in with a higher offer. EasyJet got very depressed in terms of the share price. If you take a look, let me just quickly check where the GP is on this one and when we last traded at these kinds of levels. It's not been for a year. Obviously, we've been dealing with the Gulf War, and obviously that's been a factor. But I think you've got to go back until you've got to go back into 2022, early 22, before it was when it was last trading north of 7.
And you have to wonder if there's going to be a different way that Apollo would run EasyJet. I mean, when we had the takeover potentially from Castle Lake, we were reporting that pilots were worried about their job security and who'd be in charge going forward.
Yes. Why are you buying this asset?
Yeah,
are you buying this asset to run it, or are you buying this asset to break it up? The holidays business, you wonder whether there's talk of a lot of people are talking about that being a spin out. That's kind of worth more if you spin it out potentially. But it's been quite successful. So kind of that is one area that you could see certainly that working. But it's got a lot of delivery options coming out of Airbus with the 320 family. Those at the moment those narrow body assets are worth quite a lot. Just having those delivery slots from Airbus is worth quite a lot of money. But you've also got a whole load of quite valuable airline landing slots as well, which potentially... So is this a breakup target? I talked to the Lufthansa CEO a few days ago. I talked to the IAG CEO a few days ago, Air France CEO a few days ago, all telling me, yeah, there's nice assets in here. If they came on the block, we'd be interested. So is this a sum of the parts argument, or is this an operating argument? Do I run it, or do I break it up?
OK, it's going to be interesting to hear from Apollo when the time comes. But for now, EasyJet shares really flying this morning off the back of this news.
That was better than mine.
I didn't actually mean to do it, I promise you. Look, coming up on the programme, the World Cup with a Bloomberg skew. We're going to be discussing the global sporting contest and perhaps who'll win with Carlos Carranza, Senior Emerging Markets Debt Fund Manager at M&G, who's been building a model to tell us exactly that answer. That's next. This is Bloomberg.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. rates, risk, and the cost of capital on Bloomberg Real Yield, and personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anim, only on Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Tyler Kendall in Geneva, Switzerland, and this is Bloomberg.
Welcome back to the opening trade. 19 minutes into today's session. Here's how we're looking. The Stock 600 up 0.2%. Not such an enthusiastic end to the week, really. The DAX up 0.1%. The CAC 40 and the FTSE 100 both up about 0.2%. We are seeing outsized moves from the likes of EasyJet this morning, Guy, up 13% off the back of that Apollo bid. So really, it's more exciting when you look under the hood.
It's always more exciting when you look under the hood. OK. I didn't watch the game last night. I hear Kylian Mbappe had a pretty good night, though. A goal, an assist, France are through. I don't think it's a massive surprise. We were expecting France potentially to go all the way. So they've got a semi-final now, beat Morocco 2-0. The results, surprisingly, maybe not surprisingly, was predicted by the Bond Vigilantes team at M&G, who have developed an economic sport model that has called the correct team to go through in 15 out of the 16 games in the round of 32. If you're wondering who's going to join them next, what does the model predict? Look away now if you don't want to know. Spain, England and Argentina apparently will all make it. That's going to make for a much more relaxing Saturday night for me. Joining us now is one of the minds behind the model, Carlos Carranza, Senior Emerging Markets Debt Fund Manager at M&G. Not a sports prediction model kind of builder in his day job. This is the side hustle. Yeah. Okay, so why does this model work? Because it seems to be. I looked at the data this morning. It seems like you're having a fairly good run. So why is it working?
Yeah, so I would say the following: the model is intended to generate two things. The first one is to connect two things we like, which is, for example, football and macroeconomics or financial markets. So we try to think of a connection between the two, and the model is basically a 50-50 blend, where the 50% is using actual football data, where we look into FIFA's ranking of countries in the World Cup, and the other 50% is where we look at macroeconomics of the country, and based on that we look at GDP growth, population size, inflation dynamics, and very importantly fiscal dynamics, which are a key point of discussion when we look at all these games that are coming ahead of us. And based on that, we create this formula where we predict the score. Yeah. But it's important to keep in mind that the idea is to think of a way in which we can connect football that everyone is talking about, but channel that through an angle of macroeconomics. Because
Lizzie's just waiting. She's so sceptical.
No, because all of these brilliant international players from such an early age go and play elsewhere outside their home country? I'm thinking of Haaland, right? Yeah. Playing in Manchester. Why would the success of the Norwegian team then be tied to the macroeconomics of Norway?
Yeah, it's a fair question. It's a good question. We've been thinking about that ourselves too. Sometimes it's the law of the large numbers. The larger chances you have to fund sports in the early stage of any country, then the higher the likelihood that you can find stars that will eventually play for that country. And then, of course, there's exceptions. There's Messi, for example, is a player that most of his professional career was in Spain, yet he's playing for Argentina. He was born in Argentina, spent his early years in Argentina. But Argentina did not have, at that time, enough money to fund the treatment that he required in the young years of his life. And he was very, very close to playing for Spain in the World Cup. Eventually, he ended up playing for Argentina, but there was a point where apparently there was some debate which country was he going to play for.
Well, yeah, people always ask Haaland if he would have played for the UK had he stayed for longer, yeah.
Right, exactly. So, but the size of the country sometimes, it's less relevant, but the funding towards sports in countries that have been developed for longer, they have a higher likelihood of making a sport a big deal into the country.
Is that why Europe's doing so well?
In part, yeah.
But if it's a numbers game, why isn't the US winning the World Cup year after year after year?
Yeah, it's another question, but I would say the following. The US also, soccer or football,
that's the fundamental problem. They don't understand that you play it with your feet. Like, they call it soccer. Like, it's football.
Well, the president thinks if you call teacher, you could win.
But it's true that the US has a variety of sports. It has basketball. It has so many other sports where young kids play. Yeah. It's not just football alone. Other countries have. Argentina has the majority of the kids play football, right? So then that what happens when we get cases like Maradona or Messi, right? Whereas in the US, I think they have resources to invest in sports and they have a large population, but they have so many other sports which are more mainstream to their day by day.
So basically, if England win, Keir Starmer can take the credit for it as his final act.
On the economic stability model. Yeah. But you would have thought China, so in theory, China should do very well, but doesn't. You would have thought India do very well, but doesn't. Like, India plays cricket. That's not kind of where they focus their attention.
Exactly. It has to be the main sport that they care about, the main sport that they're passionate about.
Are you surprised how well the model has done in terms of predicting the outcomes?
Well, I mean, in part, there's two things to that, right? I believe the model has had great traction in terms of generating synergies, in terms of discussing stuff, in terms of thinking, how do we think of the macroeconomics of this country versus the macroeconomics of the other country, especially with what's going on today with fiscal dynamics being so important for the world in terms of investing. Now, as for the score of the model, I'm not that surprised because also in football, there's always this randomness component. Yeah. For example, if a team goes to penalties, some statistics say that it's almost equal to flipping a coin. So you put the best team in the world, the team number 1 ranked by the FIFA, and a team number 10 ranked by the FIFA, and they go to penalties. Yeah. And it's almost equal in terms of who can score, because players get super stressed. Messi has missed so many penalties.
Emotion comes into it,
Yeah.
So, who's going to win?
Well, the model predicts only one game per time, so we don't put the full stream. But let me tell you one interesting scenario that we have analyzed. Argentina is one of the top 3 in the FIFA. It has Messi. And France is definitely a very, very strong, probably the best candidate by far. We've seen an excellent performance in every single game. If you put them together in the final, you will have a football clash, obviously, but you will also have a fiscal clash, because Argentina is the country, one of the countries in the world that delivered the best fiscal adjustment almost in the entire world over the past 2 years. And France has a 5% fiscal deficit. Still very large, debt to GDP at 120%. So fiscal clash, football clash, very interesting.
Carlos, it's going to be a big weekend for you and for us. Carlos Carranza there, Senior Emerging Markets Debt Fund Manager at M&G. Well, coming up, SpaceX has shown the might of American space and technology with its record-breaking IPO. That's next on Bloomberg Tech Europe. This is Bloomberg.
Western countries, all of them are cutting funding to Africa. And some of these programs were supported by funding coming from Western countries, like for human resources, for testing, for transportation of samples. And suddenly, African countries have to think how to fund money and to cover this gap. But it takes some time. And I think the combination of all of these factors are fueling this mistrust that we see at community level. We value the support we got and we are still getting from the US. And we think that if we continue to work together, and there is no reason for the US not to work with Africa CDC, Africa CDC is the leader in terms of public health in Africa.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this yield forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia Trade.
This is Wall Street Week.
Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
You are watching Bloomberg Tech Europe. Coming up, the hype around SpaceX's historic IPO made it the hottest ticket on Wall Street, and proof that the US dominates the race for space. Europe's space industry, meanwhile, might lag well behind both America and China, but it's not backing down as it pursues its own path to space autonomy. Those involved in the mission say success will require an all-hands effort from Europe.
We see now, of course, with the IPO of SpaceX that the support of NASA and the Space Force really leads to world-dominating space companies. And this is something, of course, where volume is just as important as excellence.
We speak to European companies and policymakers leading efforts to develop the homegrown space economy, including Ellen Ubi from the Exploration Company, the head of the European Space Agency, and the chief executives of Pulsar Fusion and BioOrbit. Welcome to Bloomberg Tech Europe. In this episode, then, we are asking what is needed for Europe to compete in space and whether any of the pieces are already in place or still years away. Europe has world-class satellite infrastructure. It has Galileo for navigation, Copernicus for Earth observation, and major players like Eutelsat, Airbus, Thales, and Leonardo. But the weakness is access to orbit. Last year, the US attempted around 181 orbital launches. China attempted 92, Europe just 8. Europe did actually improve last year, but Ariane 6 is still not a reusable, high-cadence, low-cost launcher on the scale of Falcon 9. That matters because the new space race isn't simply about rockets, it's about overall control of launch, data, and communications. And the region's strength in satellites is offset by weakness in launch and reusability. Europe's aim is not necessarily to beat SpaceX, it's to avoid being dependent on SpaceX.
I give SpaceX less than a 10% chance of succeeding at all, to be clear. In fact, I told people this. I said, look, we're probably going to fail, but, we should give it a try because If we don't, if there's not a new company that enters space, we will never be a truly spacefaring civilization.
The European Space Agency now has a record 3-year funding package, and private investment is picking up, with European space tech startups raising $1.3 billion in 2025. But the gap with the US remains large. So the risk is clear. Europe could be excellent at building satellites, but still dependent on US launch, US platforms, and US low Earth orbit networks. One aerospace manufacturer developing and operating reusable modular spacecraft and keeping Europe in the space game is the Exploration Company. CEO and co-founder Ellen Uby told me the company's goal is to overcome the barriers currently limiting access to space.
It's all about transportation. Transportation is what is very difficult to master, the highest barriers to entry, so very few are going to succeed. But once you make it, you open space to, of course, Europe, but also as many nations as possible in our case.
What does that full stack in space transportation look like? What is the cadence that you're targeting?
So we've done things a little bit the other way around, because we didn't start with a rocket. We started with the capsule.
Yeah.
Right? One reason for that is that Europe never had its own capsule. So every time we want to fly an astronaut, we need to give cash to our dear friends of SpaceX. And I kind of, hey, we could use that money to build the technology here and also to inspire people.
What does sovereign and sovereign space mean to you?
So it means for us in Europe the capacity to be a leading space nation with our own technologies.
How big is the gap right now versus the US?
The gap is significant. The gap is significant, especially in space transportation. We are very good in satellites, but the gap is significant in space transportation. That's why we've also, we've been very focused on that, because I want to have an impact where there is a gap, basically, and we can significantly contribute to this European sovereignty. The market is going to go towards very, very big launchers, because on the demand side, you have more satellite constellations, the satellites becoming bigger, and also you have more like exploration demand, and on the supply side, you have Starship. So the market is going to go to very, very big launcher. And if we want to have a capacity in Europe that can serve not only European sovereign demand, but also other countries, because I very much believe in the collaboration across countries, and this is one of the very big strengths of Europe. We've been able to build this collaboration across nations. And with the Exploration Company, I want not only to reinforce Europe as a space power, but also to scale this collaborative spirit worldwide.
Is Elon Musk an inspiration for you?
So he's an inspiration for many great things he has accomplished. I mean, what he's built with SpaceX in terms of products, it's outstanding. And if you want to build something that lasts and something which is among the best in the world, you need to be inspired by the very best. Like, you're a componist, you're going to listen Bach and Mozart and etc. So you can really write the best music. Doesn't mean that you're going to write the same music, right? So this is exactly what we're doing. We are, with humility, learning from the best while building our own style. And we don't want to occupy Mars. We want to build a space future which is more peaceful and more collaborative.
Is SpaceX a catalyst or a major challenger?
I hope they will become a major challenger, because then it means that we will have become also a challenger.
Let me push you on the timeframes then.
Yeah.
To get to the point where SpaceX is with their reusable rockets. What timeframes are we realistically looking at for the Exploration Company? Is this something achievable within this decade, Ellen?
Absolutely. Within this decade, absolutely. We plan to fly to the International Space Station with our cargo capsule in November 28. This is the date we have in the schedule right now. So we might have a little bit of delay here and there, but the team is working very, very hard to make it happen. And so far, since company creation, we have accumulated about 10% of delays on all of our programs. We've delivered all of our programs on cost. And we've met our cash target every quarter but once. So it gives you some data points. So I hope we continue that way. For the rocket engine, we again have an aggressive planning, which means we might be a little bit late. But like, because you have an aggressive planning, it means you're going to reach your aggressive goal with like more probability than if you have like a very comfortable planning. So we plan to perform the engine demonstration test end of 28. Again, very aggressive. And then in the business plan that we're sharing with the investors, we plan to fly this very big rocket in 2033. Again, it's aggressive, but this is benchmarked on the industry. You take the best, you take SpaceX, you take Rocket Lab, and you look at how much time they needed to build the rocket and then to build the next generation of the rocket and bigger rockets. We are within this benchmark.
The exploration company's CEO and co-founder, Ellen Ubi. Now, the man who oversees Europe's space agenda is Josef Achbacher, the Director General of the European Space Agency. He acknowledges that while the United States is an important partner, Europe needs to do much more as it pursues greater autonomy in space.
One is never comfortable with any dependency, because you always have to evaluate, what does it mean and how much independence or autonomy you want to achieve for Europe. And this is something that I have discussed with the ministers just last year when we had the ESA ministerial conference, which brought a record budget for ESA, 22.3 billion or 31% more than the previous ministerial conference. And the argument of independence or autonomy was a very strong one, that we need to build up our strength, not to be isolated and to be, I would say, alone with our capacity, but really being a strong partner, also for international partners in the US, in Japan, in the UAE, in India, and in other countries. So this is really something where we build up our strength, more autonomy, but also more autonomy to be a stronger partner in global space programs, of which we are having quite a large number.
And to your point, you have successfully increased the funding now available for the European Space Agency as you coordinate all of these efforts. Is it enough, though? Is Europe doing enough to fund its space economy and its space industry?
No, it's not really enough. I mean, we have made huge progress, and the success was quite outstanding, as you mentioned. But if I compare the figures of public funding in Europe with those in the United States, for example, which is always our benchmark, the United States is spending 6 times as much as in Europe. So if Europe has 1/6 of the public funding, that means in Europe it is the European Space Agency, it's the European Commission, it's national agencies and member state activities, then if you only have 1/6, you can be brilliant and excellent, but of course with much less money you can never achieve the same. Or the other way around, of course, if you have much more money at your disposal, you can develop very different space companies. We see now, of course, with the IPO of SpaceX, that the support of NASA and the Space Force really leads to world-dominating space companies. And this is something, of course, where volume is just as important as excellence.
Is SpaceX good for Europe or bad for Europe, a challenge for Europe?
I mean, first of all, SpaceX is, of course, a US company, but it operates globally. I take a lot of inspiration and a lot of motivation for Europe to really see what can be done with a very, I would say, a very ambitious, a very aggressive schedule and a very aggressive set of goals. So I have been in SpaceX quite a few times. I know their factories, also the leadership pretty well. We have also interactions and cooperation with SpaceX. For me, it's really something that helps us also in Europe to say, look, this can happen if you do a number of things right.
And above and beyond funding, and maybe that is key, what would be your 1 or 2 priorities in that clarion call for governments around Europe to support this ecosystem, the incumbents and the startups? What would you prioritise to them? What would you say needs the most urgency right now to support that ecosystem?
What is needed is always funding. This goes without saying. But what is also needed is acceleration. We need to be simpler, faster, sometimes a bit leaner in the processes, and certainly avoid fragmentation. That means that member states of within Europe, the European Space Agency, have to work together in one common project rather than doing it nationally, because fragmentation also weakens us. And in times like these, where security pressures, economic pressures are so high, we need to stick our heads together, and united we can be extremely strong.
Okay, that was Josef Aschbacher, Director General of the European Space Agency. Coming up, I speak to the leaders of two firms making big bets on the growing space economy. We're going to hear from Richard Dynan from Pulsar Fusion about his ambitious plans for orbital energy, and Katie King from BioOrbit joining me in studio to discuss developing new medicines in space. That is next. This is Bloomberg.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, "Succession starts now."
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacroix. Listen and watch on Bloomberg Television or wherever you get your podcasts.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
Welcome back to Bloomberg Tech Europe. Now, Pulsar Fusion is a British company that builds Stage 2 propulsion systems. These kick into gear once a rocket has delivered its cargo or satellite into orbit and are designed to operate in the vacuum of space. I spoke to CEO Richard Dynan about making the economics of space work from the UK and his ambitious plans to develop fusion power in space.
So for us, we need to be in a situation where we're delivering 30 engines a month to clients, which doesn't actually sound like a great deal. But these engines have to be built in a clean room here in the UK. They then have to be qualified in a vacuum chamber and delivered to various client satellites. So doing this at scale is the challenge.
And you will be shipping these products from next year Can you tell us about your clients, your customers? What is driving that demand?
It's the demand of, as the access to space gets cheaper due to launch technologies improving, it means that all these nations are looking for their own sovereign capacities of satellites, and whether they want their own Starlink or they want their own constellations. All of these satellites need their own engines. On top of that, as the market starts to look at a cis-lunar economy, or even a cis-Martian economy, and people deploying assets further out into the solar system, all of these depend on their own maneuverability and their own stage 2 engines. So I think the market has never had such a demand, and I think it's actually the supply of engines that can restrict what missions are possible at the moment.
To what extent has the innovation that we've seen at Blue Origin, at SpaceX, the focus on data centers in space, been a catalyst for your business in terms of driving interest, in terms of driving customer interest, investor interest?
I mean, it's been absolutely enormous. I think, as you know, we've been doing this for 15 years now, and I can tell you that I think suddenly seeing that the appetite, we know how many times have we used a satellite today on the way in, you know, for just getting here, for checking the weather. Several mobile apps are using their own satellites, and a lot of this technology needs to be replaced. So again, for England, this is a very big opportunity, because we don't have a launch provider like a SpaceX or a Blue Origin, but we do have the skill set to manufacture these stage 2 engines, and the plasma physicists and the sort of key personnel and talent pool. And it's Pulsar's ambition to be the first company to do fusion in orbit, and we have every chance of doing that.
This is fusion in orbit by 2031 is the target.
We want to demonstrate fusion in orbit by 2031.
Okay, that was Richard Dinan, CEO of Pulsar Fusion. So from energy in space to medicine in space, UK startup BioOrbit is making a bold bet that by sending drug making towards the stars, it can help save lives and billions of dollars potentially from health providers like the NHS, and potentially pave the way for novel cancer treatments that are easier to use. The company has a lofty goal. It wants to harness weightlessness or microgravity to produce protein crystals that could pave the way for cancer treatments that people can inject at home instead of receiving by IV. In March, BioOrbit won a £250,000 contract from the UK Space Agency to develop the technology. Katie King, BioOrbit's co-founder and CEO, is with me now in the studio. Katie, thank you for coming in. When I was talking to people about what you do, people who are not in your space, in your sector, excuse the pun, there was kind of befuddlement. Wow, that sounds like science fiction. But you have come through with a really important proof point just in the last few months. Talk us about the progress that you and the team have made.
Great. Hi, Tom. It's great to be here. Thank you for having me. It's a really exciting time for BioOrbit. We've just launched a record-breaking mission to the space station, producing the largest scale production of protein crystals in a space environment by one order, if not two orders of magnitude. And this is a necessary stepping stone towards taking those cancer treatments and enabling them to be self-administered at home.
Why is this so important, and what can space allow you to do that we can't do back on Earth?
So to get a self-administered cancer treatment, you need to take all of that drug from that IV bag and get it into a small pen, tiny, tiny volume. And that is a huge challenge to do. The solution to that is making crystals of these drugs, and it can get it really concentrated in that small volume. The problem is that gravity inhibits that process, so we cannot achieve that quality of crystal here on Earth. We need space to make that happen. So at BioOrbit, we are taking it from small-scale R&D into a scalable production of these crystals so that we here can benefit from it.
OK, so you sent these up. They've come back down. They were up there for about 6 weeks in space, launched via SpaceX. You're now analysing what you were managed to achieve up there. Success, what does it look like? How does it set you on the path going forward? What are the next milestones that you hope to achieve?
So with this mission, it was successful with what we set out to achieve. We have shown that crystals can be produced in a continuous way that's scalable for the future. So this is a massive step change for the industry away from this experiment into production. And so for us now, the next step will be to test the capabilities and the limits of the system. Crystals can bring benefits to a wide range of drugs, not just the oncology drugs. So we really want to see which of these other markets that we can also bring benefit to.
OK, so you talked about scalability, because cynics would say that that's one question, is how do you scale this? And they may also bring up the question of cost. How do you make this cost effective? How do you respond to those?
Yes, so when we think about factories, we think of massive football field type factories. The fact is that for this, we're just doing the crystallization step. So the factory is about the size of a microwave. And so to hit global scale production of these crystals for, say, Crude, world's best-selling drug, we would need maybe 10 or 15 of our microwaves to then be able to form the correct quantity of these crystals. So that's possible. And with how infrastructure's changed and cost of launch and cost of return has plummeted, scale is possible. It's not science fiction.
What is the timeline then between what you're doing now, the progress that you've made, the proof points that you've achieved, and us actually getting access to drugs that have at least partly been made and produced in space?
So before anything can be given to a patient, to a human, everything must be regulated.
Yes.
So we have to produce these drugs just in the same way with regulation as any other drug that's produced. And so that's the first stepping stone. We're working with the MHRA, with the Regulation Innovation Office, UK Space Agency and CAA about this roadmap to what does pharma production in space look like. And the UK is leading globally on this.
Are regulators aligned with your vision? Are they proactive?
They are incredible. The UK has been fantastic. Yes, they are backing it, and they are like, we see the benefits of this and want to make it work. So again, we're working with the regulators so that that is possible, and that is really where the UK will win.
OK, so in terms of getting these drugs onto the market, are we talking early 2030s, potentially?
So we have to go through these trials first. So for regulation by the end of the decade, and then we can go into these human trials. So then it will depend on if we're taking a drug that's already in existence, then that's an accelerated process. If it's a novel drug, it will take a bit longer, but we're looking at 10 years.
OK, about a decade away. Are you partnering with pharmaceutical companies? We've obviously got some significant strengths in the UK when it comes to pharma. Is that something that you're working on?
That is definitely something that we're working on. Again, working with Big Pharma to then bring about and unlock these new drug formulations for their pipeline and their portfolio.
OK, what is the investor appetite? You're backed by the likes of Local Globe, who are really significant investors, particularly in deep tech. Are you raising capital again? It's capital intensive, presumably. What is the state of funding right now?
So because we're just focusing on the product and we're not doing end-to-end, the capital required is less than if you were building a rocket company.
Okay.
So that's a really key point because the infrastructure's there. We will be raising at some point in the near future, again, to take us to our next step, to then scale and then to be able to work with all of these pharma companies. So that is the next step for us.
Okay. You work with SpaceX very closely. Are they a good partner? Do we need a SpaceX? Do we need the exploration company? What LNUB is doing? How important would that be for your business?
It's so critical. It's infrastructure. And once the infrastructure's there, they are effectively being our courier system to space and back from space. So then companies like BioOrbit and others can then use that infrastructure. They don't need to build it themselves and then bring about the new markets and new applications of using space.
OK, so you're at the application layer, they're at the infrastructure layer. Europe needs to play its part as well. You're focused on oncology right now. Do you expand that portfolio into in the future? What are your ambitions beyond oncology?
Yes, so again, the benefits of crystals, one of them is to then turn IV treatments into self-injections. Another one is extended release rates. So if you have injections that you have to typically take daily, through using crystals, that could become a monthly injection. So for the same technology, there are many benefits that can come depending on the drug class. So we will be that expert across the board when it comes to crystals. OK, really fascinating. Thank you for giving your time and explaining the progress that you and the team have made, of course, and the potential future as well of this technology. Katie King, co-founder and CEO of BioOrbit. That is it for this edition of Bloomberg Tech Europe. In the next episode, we're going to be looking at how Europe's robot revolution is changing the future of work. Join us for that episode, August the 14th, here on Bloomberg Television. That is it for Bloomberg Tech Europe. The Pulse is up next. This is Bloomberg.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech.
Every weekday, only on Bloomberg Television.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Newsmakers and market movers. This is The Pulse.
Good morning and welcome to The Pulse. I'm Tom McKenzie in London. These are your top stories. Nasdaq futures pointing lower after the AI rally returned to Asia. SK Hynix makes its debut today, confirmed as the biggest ever US listing by a foreign company. EasyJet shares jump after the budget carrier receives a surprise offer from Apollo that sets up a potential bidding war with Castle Lake. The yen gains after the Japanese finance minister calls on pension funds to invest more in domestic assets. Meanwhile, Goldman says carry trades face the best conditions in more than 2 decades. Plus, don't miss our exclusive interview this hour with the Spanish economy minister, Carlos Cuerpo, as Spain calls for Europe to pull more of its debt. Let's get to the markets then. We said in the headlines, pointed out that Nasdaq futures then, after the gains of yesterday, currently pointing lower by around 0.5% of a percent. We're getting a redhead across the terminal as we consider what is happening cross-asset across these markets. UAE oil output hitting a record of 4.1 million barrels per day in June. Barrels per day, 4.1 million barrels per day. Let's check in on the oil price then. You're currently looking at Brent at $75 a barrel, down 1%. WTI at 71.34. The Japanese yen in focus. Strength today then on the back of those comments from the Japanese finance minister. We'll unpack that story for you throughout this hour. Currently up 0.4% versus the US dollar. And it's the weakness in Brent that is giving some relief across the fixed income markets as well, at least for today. Let's take a look at the European markets map. Across the benchmark, the Stoxx 600 is currently essentially, well, it was flat. Now it's up about 0.1%. You're seeing the gains coming through for the FTSE 100, up 0.2%. Pretty modest, just adding 22 points. Stronger gains over in Italy. The FTSE MIB is up 0.5%, and 0.4% is the gain coming through on the IBEX over in Spain. The DAX in Germany at 25,145, just adding 20 points so far in the session. So modest upside coming through for European equities broadly across the board. Now, US futures pointing lower then after another volatile week, of course, despite sentiment getting a boost from SK Hynix, raising $26.5 billion in its ADR offering. Shares start trading today. Let's bring in Bloomberg senior strategist Neil Campling for the details. Neil, there is strong investor appetite, it seems, then, for SK Hynix. What does it tell us about the broader sentiment in this space? How much and what kind of indicator is this listing giving us?
I think one of the indicators we had into the deal, Tom, is we've seen the likes of some of the Mag 7 stocks, in particular NVIDIA, as being a funding trade and positioning trade to allow some of the investors to prepare assets into this listing. There's clearly huge appetite for the memory trade. The memory stocks themselves, Hynix and Micron, trade at very low valuation multiples relative to the market. There's reasons for that around cyclicality. But in terms of giving access to the liquidity here, from discussions with clients, we actually felt there was more institutional interest potentially in this trade than there was actually in the SpaceX IPO, because this is an established AI business in terms of the HBM4 memory chips that go into AI, as opposed to SpaceX that is at the early stage of building out its own AI platform. So it's of huge interest. One thing, though, to be aware of is that investors are cautious on, I think, in the medium term, is around volatility. These stocks are very volatile relative to the market, and that's likely to continue when you think that, as Bloomberg reported overnight, there are a lot of leveraged ETF funds that are going to be partaking in this memory listing to have Hynix on the list. So, and potentially, there could be a way of Hynix moving into the benchmark chip index, the SOX index, in due course this year as well.
Yeah, that's interesting, isn't it, in terms of what's happening with the leveraged ETFs, and we've seen, to your point, the role that they played in the volatility, arguably at least when it comes to the Kospi. Neil, what is your sense? Are we getting any signals that this opens the door for other Asian companies looking to list in the US?
We've been down this route before, Tom, but I think what we need to be a little bit cautious here, because this particular listing tapped into the AI trade, it tapped into memory, it tapped into momentum, and it tapped into parts of the market that there's huge appetite for. If you look at other Asian companies, there's less obvious routes to US listings, especially when a lot of the kind of tech positions that are there are around sort of some of the Chinese blacklisted companies and stuff. So I wouldn't necessarily mean it opens the floodgates for listings, but if there are some unique opportunities that play into the same types of the part of the market that there's appetite for, then it might well do. It's something to keep an eye on, but I wouldn't expect a deluge of offerings to come to market, to be honest.
OK, maybe not a deluge, but something to monitor. Neil, thank you for the context, the details as ever. Bloomberg's Neil Campling. Meanwhile, Bloomberg's Ed Ludlow will be speaking with the SK Group chair. Catch that interview at 3:30 p.m. London time today. That is one certainly to mark on your calendars. Make sure you tune in for that conversation. Now, to talk about some of the concerns around AI CapEx spending, let's bring in Marina Zavalok, Chief European Equity Strategist at Morgan Stanley. Marina, good morning. Always lovely to see you. Thanks for coming in this Friday. How are you thinking about the AI trade right now and Europe's place in that story?
Yeah, I mean, I think this is a healthy pause. We were seeing parabolic rises in some of these AI CapEx share prices, especially in the US, but also in Europe. If that continued, we'd be reaching the end of the cycle pretty soon here. So I think this debate on, whether we're at the end of the cycle is a healthy debate. It tends to happen as we go up into the end of the cycle. I don't think we're there yet. When you look at indicators like M&A, even if you look at IPO volumes, we're not at peak cycle levels. We're going to get there, at some point, but we're not there yet. Is
that a this year story? Is it more of a 2027 story? Timelines I know are difficult to pin down. But
M&A, like we published this in our note today. If you look at global M&A volumes and you draw a line across the peaks, we're like 2/3 of the way to a peak. I'd be more worried if we were at that peak. Then we'd be evaluating this a lot closer. Earnings trends are really positive. A lot of the AI kind of spenders on AI are actually upping their CapEx guidance at the moment. So I'm generally not concerned, and I think it's healthy that we have a pause and we have this kind of choppy sideways trading. But in Europe, going back to your question, I mean, the perception is we don't have AI. We do. We estimate about 14% of the weight of the MSCI Europe index is direct AI CapEx beneficiaries.
And those are companies that play into the data center and infrastructure story.
Exactly. Yeah.
Okay.
And they tend to have exposure outside of Europe. So to the build-up in the U.S. and Asia.
Is that underappreciated still? Is there still is there a valuation gap? Is there still an opportunity for investors to get exposure to those names?
I mean, the valuations on most of those names are high. And we have this kind of scarcity premium in Europe among those names. But I think from an earnings point of view, some of those names like European semis, the earnings trends are just starting to take off more strongly, more sharply compared to the U.S. So you're going to have that a bigger earnings kicker, I think, in Europe.
Okay, so there's a catch up.
Yeah, on the earnings front.
And investors maybe can get exposed.
Yeah,
to
plus we have less levered ETF exposure, so the volatility is not as high. Positioning's not as high.
Which ties into, of course, what Neil was talking about when it comes to SK Hynix and the story over in Korea in particular. You talk about a barbell approach.
Yes.
Explain that. What is the rationale for that? And what's the conviction in that barbell approach?
Yeah, so with this pause in the AI CapEx trade that we've seen recently and the volatility and the levered ETF exposure, what I've been noticing is investors are coming to me, non-dedicated investors, for the first time in a while since earlier this year. And they're saying, I love the AI CapEx trade. I have a lot of that in my portfolio already, but I'm concerned about this volatility. It's impacting, my risk-adjusted returns, and I need to diversify. And I see Europe as possibly a good diversifier. And so we are recommending an approach of you hold on to the AI CapEx plays, but you also diversify. You go back to, you stop ignoring the kind of multi-year compounders, the areas where fundamentals are improving. So you have a bit of both. And having those non-AI compounders allows you to reduce the volatility in your portfolio. And we're seeing demand for both sides of that trade. And we've been recommending broadening, and you're seeing, like, we just published our earnings preview for Europe today. We're really constructive. Earnings strength in Europe is led by the AI complex, but you have broadening elsewhere as well. So you have quite a lot of strength outside of the AI complex as well.
You're really constructive on European equities.
Yes.
Part of that is being led by the AI story, as you just said.
Yeah.
But there's a broadening.
There's a broadening.
Does that broadening continue if the energy and inflation shock comes back? This time last week, it was all about lower oil prices, lower yields, maybe an expectation central banks can be on hold. That has been put into question again as a result of the geopolitics and Iran and the Strait of Hormuz.
Yeah.
What is your level of conviction that we can broaden out and diversify, that we can broaden out the trade in Europe if oil prices come back up, if inflation becomes a challenge again?
Yeah, so, part of our constructive view on Europe is inflation. So I think in contrast to popular perception, inflation is good for European equities in particular. We have a lot of real asset exposure. We have banks exposure. Banks benefit from inflation.
You're overweight banks?
Yeah, we're overweight. That's our primary, our number one diversifier recommendation is banks, but then we have more broad exposure. We have that AI CapEx exposure, also inflationary. So if you add up the areas of the European earnings pie that benefit from inflation, 60% of the European earnings pie. So I think people don't realize how much we benefit from inflation. Consensus earnings growth for Europe this year now are 17%. The last time we were anywhere near this was 2022. The last time we had inflation and kind of moderate low growth. So inflation is great for European equities, just given the exposure of the index. And then people were getting really excited, and I saw some of our competitors were saying, oil is going to go down to 60, or clients were saying maybe we go down to 50. I think actually if we stay 70 to 80, that's actually a very, very healthy range for European equities, given our exposure. We need a little bit of inflation to keep earnings
fascinating,
healthy, and margins have just broken out to all-time highs in Europe as well.
Okay, 70 to 80 could be the sweet spot for European
Is the sweet spot, yeah.
Overweight banks and with a barbell approach. Marina, really fascinating insights on these markets and how to position. Marina Zavalok, Chief European Equity Strategist at Morgan Stanley.
Thank you.
Now, EasyJet shares soaring this morning after the airline received a fresh offer from private equity firm Apollo. Let's get more and bring in Bloomberg's managing editor for space and aviation, Benedict Carmel. Benny, a surprise twist then in this takeover saga. Did you see this coming? Did we see this coming? What happens next? How real is this offer from Apollo?
No, I absolutely did not see that coming. I was just settling into my desk this morning when the offer came, so a surprise. We thought that over the weekend EasyJet and Castle Lake had reached an agreement. To remind everyone, Castle Lake has sort of been the original suitor. They had, for the past month, sought to take over EasyJet and made a number of offers, and the last one over the weekend seemed to get them over the line. And then suddenly, out of nowhere, literally, Apollo comes in this morning and says, we are offering more. It's also interesting that they are sort of striking a very different tone. They're quite sort of consensual and say that they are sort of on EasyJet's side. They want to keep management intact. They want to keep the brand intact. That obviously speaks to some of the concern on the EasyJet side that the company would be broken up under Castle Lake. So Apollo trying to sort of be a sort of the friendly owner, shall we say, and obviously offering a higher price. £7.15 is what they're offering, and that compares to $6.90 on Castle Lake.
Benny, thank you very much indeed for that update on that Apollo bid, and we'll see, of course, how that story transpires. That friendly offer then coming through from Benny, and clearly the stock price, EasyJet, benefiting on the back of that story. Our aviation lead, Benny Carmel, joining us with the details. Coming up, how US-Iran tensions and the AI trade are playing out in emerging markets. We're going to discuss with Felix Callan, Global Head of EM Research at SocGen Corporate and Investment Banking. Stay with us for that conversation. This is Bloomberg.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
Japanese bonds rallying this morning. The yen also rebounding from multi-year lows after the finance minister called for Japanese pension funds to invest more in domestic assets? Let's get more from Bloomberg senior editor Brian Fowler in Tokyo. Brian, some pretty significant, sizable moves, particularly when it comes to JGBs, and we're seeing that with yields down pretty sharply on the back of these comments. What is the thinking then behind this call from the finance minister? Was this a non-scripted and unscripted moment, or is this a thought-out plan from the Ministry of Finance to get those domestic flows going?
Yeah, Tom, I think the context is important. So she made these comments at a regular post-cabinet meeting press conference. She'd talked about various other things as well, BOJ independence among them. And so it's not like she said, stopped everybody and said, hey, I want to announce this initiative. She was asked a question about the growth strategy plan that was announced last week. That's the one where they're going to spend a couple $1 trillion investing in 17 key industries over the next 14 years. And the question was, well, what does that do for ordinary citizens? And Katayama's response was, well, I would like to encourage pension funds and individuals to put more investment in domestic assets. The thought being presumably that if the CapEx boosts the values of these companies, then that would boost the stock valuations as well. So it's not really clear how far she's thought this through. It came across a little bit as an off-the-cuff remark. On the other hand, it also comes against the backdrop of consistent inflation now in Japan. First time we've seen that in a while at 2%, and the benchmark rate at 1% at the BOJ. So there is definitely a sense on the government side that individuals really need to be invested more in financial assets if they want to keep up with inflation.
Brian Fowler, thank you very much indeed with an update out of Tokyo and what we've been hearing from the Japanese finance minister, of course, Bloomberg senior editor Brian Fowler in the Japanese capital. Let's check in on Japanese assets then before we bring in our next guest. As I mentioned, yields down sharply, bonds are bid, JGBs are bid. You're looking at the 10-year yields down 13 basis points, yielding 274. And the Japanese currency, as you can see, 161.70, so up 0.4% versus the US dollar. But will this be sustained? How real is this, given that the yen has been at near 4-decade lows? Let's bring in Phoenix Callan, Global Head of EM Research at SocGen Corporate and Investment Banking. Phoenix, good morning. What do you make of what we've been hearing from the Japanese finance minister? Sustained relief in terms of the pressure we've seen on the yen, or is this going to be short-lived?
I think it makes sense for them to want to try to encourage for domestic investors to invest more in local assets, because that's going to help equity prices and also bring down bond yields, which is going to alleviate some pressures on the fiscal side. So it's important to try to do that. Ultimately, I think the growth equation out of Japan is still really lackluster compared to other DMs like the US. And I think in terms of those underlying fundamentals, it's still not great to have a context where you can have sustained appreciation. So I think we're likely to see still interventions in the Japanese yen to try to get it to strengthen. And we can see that over the course of many decades, if you have periods of very sustained, strong appreciation that goes well beyond kind of the fair value models, that can actually cause the seeds of there to be huge unwinds that can last many, many years. And then we get huge periods like right now of sustained depreciation. And you don't want for that to go too far, because the farther it goes, the more painful it is on the way back, as you have these multi-decade cycles through the yen. So I think for us, we're expecting for more interventions, but we don't think ultimately at this point, because of the growth dynamics, that it's going to be very effective.
OK, so more interventions, they won't be effective. So then the spotlight shifts back to the BOJ. I mean, is this a BOJ that's behind the curve? Do you expect them to hike more aggressively than maybe the markets are expecting? What is the cadence for the BOJ then?
Yeah, I think they have to kind of approach that quite cautiously. Right? Yeah. They want to defend kind of the growth that they're nurturing in the market, and at the same time kind of fight against the inflation pressures. But they are going to be quite cautious, we think.
OK. From the yen to the Korean won,
yeah.
There's SK Hynix listing, some reporting suggesting there's going to be flows back into Korea. Maybe that's going to be supporting the Korean currency, which has been also at decade lows and been under significant pressure, despite, of course, this historic rally that we've seen for the Kospi. Part of that is portfolio rebalancing. What is the trajectory for the won? Does the ADR of SK Hynix To what extent is that supportive for the Korean currency?
Yeah, I think that has been quite supportive this week in
terms
of those,
yes,
in terms of those flows. Yes, and in terms of the investments that come on the back of that. But overall, what we've seen is that the dynamics around the Korean won has really shifted from something that's more trade related to now something that's much more portfolio flows related. So whenever we have huge kind of upswings in Korean equities, as we've had over the course of the past 12 months, then you have these huge rebalancing flows from foreign investors to take money out and try to rejigger between the Asian markets. And so that causes outflows and weakens the won. And at the same time, on the other side, if you have periods of risk off, that also causes outflows and weakness in the Korean won. So it's impacted by all of these kind of external dynamics one way, which is weaker.
Does it? Korea is energy dependent, so there's a challenge there, of course, when it's buying so much energy, and the Korean won is at the levels that it's currently at. It's a boost for manufacturing, but a challenge in terms of the inflation story and the energy cost story. Is there a policy response on the back of this? Do we expect intervention from the Korean finance ministry?
Yes, we have actually seen intervention this week.
Yeah.
We are expecting for them to continue interventions. We're expecting for them to continue rate hikes as well. So rate hike at the next meeting, July 16th. And yeah, that will help to curb a little bit of the pressure. But overall, it's still one in which we're likely to see short-term more weakness in Korean won.
What else are you seeing? What are your favourite trades, favourite FX crosses now in the space, in the EM space on which you focus?
Yeah, so our favorite trades are very much in LATAM, especially. So we still like the terms of trades kind of buy the winners theme. So we're still expressing that via a number of long BRL positions. So long Brazil versus Euro, long Brazil versus Chile, long Colombia versus
And that's
Chile.
a balance of trade story.
Yes.
That's a commodity story.
Yes.
And what assumption?
It's a carry story.
It's a carry.
Huge,
it's a carry
huge
story.
Carry story.
Okay.
Yeah.
And there's the window is open for that carry story.
Still, very
for the BRL,
much so.
still.
Yes. BCB is still relatively hawkish.
Yeah.
Market is actually pricing in more hikes for the BCB later this year. And so, yes, that carry story is still going to be there and still is quite substantial. And on the political dynamics, of course, Brazilian elections in a few months, that is causing some consternation about headline risk, fiscal loosening. We think that because the market has actually largely priced in a Lula win, then that removes some of the risk around further currency depreciation because this is what is already anticipated.
What assumptions are you making about the greenback, about the dollar then, as you look at the EM space?
So we're expecting for the dollar to slightly appreciate. But that depreciation, we think, is going to be more against the DM currencies than against the EM currencies. So we think in LATAM, a number of those currencies are likely to appreciate against the dollar. So MEX, BRL, COPI. We think that, some of the Asian currencies might depreciate against the dollar. So most of the bloc outside of China will probably depreciate.
Okay. Is it a balance of trade story when it comes to Central and Eastern Europe? What are you looking at when it comes to CEE in that space?
So in that space, it's more about kind of the tension between how much the central banks are now having the scope to continue some easing. As oil prices are kind of medium term much lower in expectations. And so there have been some indications like from Poland this week, right? They were much more dovish than expected, and that hurt the currency. But overall, we think that the currencies are broadly going to be quite stable there in that space. And so there would be some opportunities to still get back into some strong narratives like Hungary, for instance.
If we were to get another oil price shock, if there is another step up in aggression and violence in the Middle East, to what extent would you have to rethink some of these calls in FX, or is that kind of factored in?
So a lot of the trades around kind of the terms of trade, those are already positioned for any kind of re-escalation. So the Brazil-Colombia type trades are still going to do really well, actually, going to be magnified in their performance if we have a re-escalation. We've got some bullish trades on like long Turkey, and so that might be under pressure.
Phoenix, thank you very much indeed for bringing your views to us this Friday morning. Phoenix Callan, Global Head of Emerging Markets Research at SocGen Corporate and Investment Banking. Coming up, we're going to bring you an exclusive interview with the Spanish Economy Minister, Carlos Cuerpo, as Spain calls for Europe to pull more of its debt. What will the Germans say? That is next. This is Bloomberg.
my old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream, and a lot of dreams are, you know, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. Now, you don't start on the third floor or the lobby. You actually have to start in the basement.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Good morning. Welcome to The Pulse. I'm Tom McKenzie in London. These are your top stories. Nasdaq futures pointing lower after the AI rally returned to Asia. SK Hynix makes its debut today, confirmed as the biggest ever US listing by a foreign company. EasyJet shares jump after the budget carrier receives a surprise offer from Apollo that sets up a potential bidding war with Castle Lake. The yen gaining after the Japanese finance minister calls on pension funds to invest more in domestic assets. Meanwhile, Goldman Sachs says carry trades face the best conditions in more than 2 decades. To the auto sector now. Volkswagen has announced it plans to cut its model lineup by as much as 50%. 50%. The move is part of a savings plan announced after a supervisory board meeting that stopped short of agreeing on deeper workforce reductions. We're joined by Bloomberg's autos reporter Stefan Nicola, who is across all the details of this. Stefan, talk us through what was agreed then by the board last night.
Yeah, this was a key board meeting for Oliver Blume, the Volkswagen CEO. He wants to make Volkswagen smaller, faster, more profitable, and he presented sweeping restructuring push in yesterday's meeting. The board didn't agree on a lot of things. It pushed back on some aspects of it. Labor has pushed back against job cuts and plant closings. But what transpired from the meeting is that VW wants to halve its model lineup. So that means cutting derivatives of individual models, reducing overlap between the different brands, and just become more efficient to focus on the most profitable segments.
The challenges are acute, Stefan, obviously, as you know all too well, not just for VW, but for the broader auto sector in Europe. There's the price pressure, of course, there's the competition from China. There's the wrangling then amongst the board, the unions, and you kind of nodded to that with the focus on labour. What are the chances at this point of further cuts, or are we done?
I don't think we're done yet. The halving of the model portfolio, I think, is the first step. Blume will go into further negotiations with the board, with the labor side. That's broadly expected. So for sure, we'll have more capacity cuts. We'll have job reductions also, we would expect those. The devil is in the detail, in the fine print, and that's going to have to be ironed out over the coming month. For Volkswagen, this is a slow-moving tanker. You have to get almost everybody on board for these sweeping decisions. So the CEO has a lot of work cut out for him, and yeah, it's going to be tough in the coming months.
Yeah, a slow-moving tanker. That is the part of the problem, isn't it? In an environment of rapid innovation and increased competition. Bloomberg Stefan Nicola with the details on a deeply significant story, of course, for the European auto space. Thank you. Meanwhile, zooming out to the macro picture in Europe, Bloomberg understands that Spain's push to boost joint EU debt issuance has been met with scepticism from some of the bloc's top economies. Sources say, surprise, surprise, Germany and France were among those who questioned the proposal at yesterday's Eurogroup meeting. Let's go to Brussels, from where our chief Europe correspondent, Oliver Crook, has an exclusive interview. Ollie.
Yeah, that's right, Tom. We have a lot to unpack here with the Spanish Economy Minister, Carlos Cuerpo, including his sort of pitch to joint debt. He's here in Brussels, of course, for that Eurogroup meeting, but a lot of other things to talk about, including the sort of trade discussions we've been hearing over the last couple of days at the NATO meeting, Spain really playing a starring role there in the mind of the President of the United States. So I'd like to start there, Mr. Cuerpo, if we could, about basically what has the communication been from the United States. He arrived in Ankara, the President of the United States. He says he's going to cut off all trade with Spain, going to cut off effectively relations to a certain extent with Spain. By the end of the meeting, we were somewhere completely different. What are the conversations that have been transpiring over the last 3 days?
Well, you know, the main message I think that has transpired is that Spain is making good on its commitments towards defense spending. Actually, President Sanchez was very clear at this stock-taking meeting of NATO that Spain is the 7th largest defense spender amongst the 32 NATO members. So that actually positions us, as we've always said, amongst those countries that are fulfilling their commitments, that are covering for the capabilities that we did commit to, and therefore being a reliable partner. And I think that's the main message, again, that transpires from the data that is actually speaking for itself.
And the President made some allusion, though, that Spain would say that they made and they will honor requests for lots of payments, and that if they didn't, we wouldn't even talk to them. Did anything change in Spanish policy, from Monday to Thursday?
Well, again, last year we increased our defense spending by more than 10 billion. Again, making good on all the commitments and being a reliable partner. That's a message that we've been trying to convey all along, and that I think now is finally getting there, as we see that we made good on that pitch by actually proving it with the numbers. So that's good news.
But the 5% commitment is still off the table for Spain.
That nothing has changed on that front. As we said already, we will cover for the capabilities that are assigned within NATO. You know how this goes. We have an update of the threats that all members will be facing, and then you assign capabilities to cover for those threats, and our share will be covered by Spain for sure.
But then I want to talk more broadly about the sort of approach of the President of the United States now, threatening the tariffs against Spain. He's done similar things to France about just sort of digital taxes. I'm sure you're thinking about a lot of different scenarios about if these things were to materialize, if there were an effectuation of a tariff threat on Spain, if he were to impose it, would that automatically kill the Turnberry deal?
Well, let's go back somehow to the last 18 months, where there's been somehow a lot of discussion on the new tariff context, and where we've been actually negotiating from the EU side, because as you know, it's an EU negotiation that goes on. All member states are dealt with in trade terms by whatever the EU or the Commission agrees upon. So the August agreement is the one that is valid for French companies, for Spanish companies, or for German ones. And what has gone on, despite all the uncertainty, for example, is that investment from American companies in Spain in 2025 grew by around 18%. So somehow the relationship is so strong that it's actually still ongoing. There's a strong inertia around it, and we have to make the best out of that existing relation. And that's what we're trying to do also from the Spanish perspective, trying to help our companies navigate this new situation, opening new trade offices in the US. I've been 10 times in the last 18 months to the US, again, trying to really strengthen that relationship.
But I think for those companies, it's important for them to try to understand what the reaction function will be from the European side if we do see unilateral tariffs with a single member state. So I guess the question is, if the United States imposes tariffs on Spain, have you spoken to the Commission? Does that, in their mind, there are a lot of clauses that were added to that trade deal, basically kill the US-EU trade deal?
Well, we don't have, let's not speculate on what can happen. There is no specific executive order or measure against any specific country within the European Union. But the Commission has been very clear also this week on the fact that they would, of course, always protect the interests of the Union and of each and every one of its member states. And again, trade is an European policy, European Commission policy, and I think a message to the business community as well. We want to give them predictability, stability going forward. So the reaction function somehow should be that we will make good on the agreement that we signed from the European side. Everything is set so that we can go on with it. We expect also the same from our US peers in the next few weeks. Let's give that positive message to businesses.
And so trade falls under the European remit. You would like to see more debt fall under the European remit. You'd like to see a third of debt issued from the major European economies come from the EU. This obviously debate of joint debt is one that's always been heated here within Europe. You've renewed it. You've come out in the Bloomberg opinion pages to explain it. Give us your pitch.
So somehow it's about efficiency in how we issue debt. So it's reducing fragmentation. This is not about new debt or increasing the overall level of debt in the European Union. What we're proposing, what we're putting on the table is the fact that fragmentation is costing us dearly. So we need a safe asset to back our capital markets union within the European Union. And that safe assets need to be liquid enough, need to actually have a deep market so that we can cover for the demand. There's a strong demand, but there's no supply of jointly issued assets. So it's a very short, small market. And what we're proposing is to increase that market by substituting part of the upcoming national debt, 1/3 of annual redemption, and whatever is allowed by European fiscal rules. So we keep this moral hazard concern in check by saying that we have to comply with fiscal rules in any case. So that would help the joint issuance to reach the 5 trillion threshold, which is what is considered as a genuine benchmark going forward, and that will reduce financing costs. And we estimate, and I will finish with this, that the overall savings would amount to up to 25 billion on a yearly basis. This is taxpayers' money being saved.
But of course, there will need strong political consensus on that. How is that message cutting through, particularly in Germany?
Well, we know that this discussion historically has been a difficult one, but there is a new window of opportunity, and the context is completely different. We're not talking about new debt. We're not talking about a fiscal union or a mutualization of risks. We're talking about efficiency in debt issuance. We're talking about reducing fragmentation costs, as we're doing on other areas. And you know, also, for example, the firms could benefit from us having a safe asset, and therefore lower financing costs being translated also to lower financing costs for businesses. So it's a no-brainer, and we really have to circumscribe that discussion to the current context.
And another sort of difficult conversation is one around China at the European level. You're one of the nations in Europe that is advocating a much stronger relationship with China, yet you acknowledge some of the issues with the trade imbalances. How does Spain suggest that we should deal with those imbalances, and what are the next steps you think at the European level? Well,
we need to be a key player going forward, and that means engaging on a par basis with both the US, China, or other key players. And so engaging means negotiating, having a fully fledged open dialogue with Chinese authorities, both to try to solve these, as you said, trade imbalances, but also to see how we can have a win-win situation in terms of attracting investment towards the EU within our security agenda, but that also produces value added within Europe, that generates technological transfer also to Europe, because we have to admit it, in some sectors there is a technological gap or lag in Europe with respect to China. And so we need to, again, foster these investments that are productive for the European Union and rebalance trade.
And I want to get your perspective also, because another piece of news we got over the last few days was potentially the restart of the war in Iran. Obviously, this will have consequences for the European economy. Inflation is still very high in Spain. What do you anticipate the impact is going to be on the economy? How should the European economy prepare?
Well, somehow, as you said, we had some piece of good news over the past few weeks, although over the past few days, volatility has come back, but prices of oil are still way below what they were around a month ago. What we'll be doing in Spain is putting in place specific measures to protect the industry, to protect sectors like transportation or the agricultural sector as well, and to protect citizens. 5 billion program, fully fledged one, to protect during the first 3 months. And now we extended that program to protect also citizens up until September, although there is a phasing out, understanding that somehow the situation will slowly also be better in the next few months. But in case it's not, we're still ready to come back to the previous level of support.
And one quick final question. We've talked a lot about very important topics. One final important topic. I spoke to your deputy, your counterpart, Deputy Prime Minister of Belgium earlier this week. He predicts a win for Belgium 2-1 tonight with Spain. What is your prediction? Well, I don't want to jinx it, so I won't say a specific score, but I'm very confident that we can make it, and then Spain has one of the best teams, and we will all be rallying behind our national team. Well, Carlos Cuerpo, thank you so much for your time there, the Economy Minister of Spain. And if we don't hear from the Prime Minister or the King, I think we'll take that as the official Spanish position on the match tonight.
OK, we'll take that. That is the essential question, Oliver Crook, ahead of that game between Spain and Belgium later tonight. Belgium, of course, Oliver Crook there with us and with the Spanish Economy Minister. Ollie, excellent conversation as well on the trade story, the dynamics with the US, China, of course, and that joint debt proposal. Ollie, thank you. Other stories that we are following this Friday morning. Andy Burnham's path to becoming the next UK PM looks almost certain after 322 of Labour's 403 MPs nominated him to replace Keir Starmer as party leader. Burnham said he was, quote, deeply grateful for the support, saying it reflected a shared belief that Britain needs a new approach to politics. He said the, quote, circuit breaker he is offering means shifting power out of Westminster and rewiring the economy for ordinary people. Vodafone shares are up after French billionaire Xavier Niel agreed to buy a stake from Emirates Telecommunications Group. Vega, an investment vehicle controlled by Niel's family, will acquire more than 16% of Vodafone's shares for about $112.5 apiece in a $6 billion deal. And former Fed chairman Ben Bernanke has been appointed to Anthropic's long-term benefit trust. It's a governance body designed to safeguard the startup's public interest mission, advising management on decisions around AI risks and impacts. Bernanke and 3 fellow trustees hold no financial stake in the company, but will have the power to appoint and remove board members. Now, with home ownership out of reach for many young people and AI reducing their job prospects, many are turning to investing in the hope of securing their future. But with index funds seen as too slow an investment, more young investors are putting their money into meme stocks, options and crypto. Bloomberg Originals has been looking at why they are prepared to take on so much risk.
There are many types of risk, and now even trading is an extreme sport.
In this video, I will start with risking only $100 per trade.
Bro, it's simple. If you can scroll TikTok, you can trade.
You have the fear of missing out on a trade.
And judging by social media, everyone is getting rich.
We're at $232,000.
Just today, I made $16,000.
More young people are investing than ever before, and they're learning about markets in a way no generation has.
Gen Z really is distinct from other age groups. If you go on social media now, you will see a lot of sophisticated trading techniques used in ways that I think no one would have imagined a 20-year-old in 1990, 2000, or even 2010 doing or even knowing about.
I want to show you this trade I'm taking.
A lot of that activity has also broadened to sports gambling, for instance, or trading on prediction markets.
But there are worries that these investors are over-leveraged, taking one too many risks.
I've always been a big risk taker. It's kind of just part of who I am.
3, 2, 1, to the moon! Holy Well, you know what?
Gen Z has a highly differentiated view of risk.
They don't drive, they don't date, they don't drink. On the other hand, they're also this extremely risk-taking generation.
And for many, it's the only path they see to getting ahead.
YOLO stands for you only live once. So YOLO bets would refer to risky investments where the trader has an attitude of, you go big or you go home.
Well, subscribers can watch that full documentary right now on the terminal and at Bloomberg.com. Next week, Bloomberg is hosting a webinar on the new wealth playbook, exploring alternatives and the so-called next-gen client. You can scan the QR code right now to register and take part in the audience Q&A from 3 p.m. London time next Tuesday. Coming up inside the secretive Chinese semiconductor maker that is set to shake up the trillion-dollar memory chip market. Our big take is next. Some fantastic reporting. This is Bloomberg.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers, and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech.
Every weekday, only on Bloomberg Television.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
AI pioneer Yann LeCun says he believes Europe has missed the boat in the race to develop large language models in AI. LeCun was Meta's chief AI scientist, but left to launch his own company, Ami Labs. He told me at the Race Summit yesterday in Paris why generative models don't work in the real world.
Most of the details in the world, in the physical world, are not predictable. And so the very idea of a generative model does not work in the real world. It's relatively easy to predict the word that follows a sequence of words, which is really what LLMs are doing, whether it's natural language or code or whatever, right? You show the system a long sequence of words, and you train it to predict the next word. It can never exactly predict the word that follows, but it can produce a score for every possible words in your dictionary or a probability distribution, right? So then you pick a word from that probability distribution. That's the word the system is going to produce. You shift that into the input, and now you can produce the second word, shift that into the input, third word. That's called autoregressive prediction. It's a very old idea, and that's what LLMs are based on. If you want LLMs to reason a little bit, you have it produce lots and lots of those sequences, and then you have another neural net that selects the best answer among all of the ones that are produced, which is ridiculously expensive. But this is how those, coding, mathematics kind of system work, more or less. Now, if you want a system to understand the real world, why not use the same technique? Take a piece of video and train the system to predict what's going to happen next in the video. And if you train the system to predict at the pixel level, it simply doesn't work. Because most of the details in video are not predictable. Most of the information contained in video is entirely unpredictable. If I take a video of this room, I point the camera on this side, I slowly rotate the camera, I stop here, and I ask a system, fill in the blanks, tell me what's going to happen next in the video. Probably going to predict the camera is going to continue rotating. There's absolutely no way it can predict what every one of you looks like. There's just no information from which that it can use to make that kind of prediction. So if you train a system to make that prediction at the pixel level, you kill it, because you basically are asking it to solve a task that is completely unsolvable. Now, of course, you're going to say, but wait, we have systems that can do video generation. Yes, they can, but they're going to make a prediction that is false. They're not going to predict what you look like. They're just going to put random people there, right? And those systems don't really construct a good understanding of the underlying physics or reality of that. So the technique we've been working on for a number of years, while I was at FAIR, and since we created AMI Labs, is called JEPA, and it consists in training a system not to generate and predict all the details of a signal, but to construct or learn an abstract representation of that signal, of a video, and then to make predictions in that abstract representation space.
Yann Lequin, Executive Chairman of AMI Labs. Now, as China ramps up its focus on tech self-reliance, there's more attention on its homegrown chip makers. One such company is CXMT. It's launching China's biggest IPO this year as it seeks to double output. The secretive company is the focus of today's Bloomberg Big Take. For more, we are joined by technology reporter Gao Yuan, who has all the details and will be covering this for us. Gao, what do we know about CXMT? It's secretive, as you say. What have you discovered about this company? And is it really a challenge to Samsung and SK Hynix in the memory space?
Good to see you, Tom. Yes, well, CXMT is emerging from a nobody to arguably the most important chip maker in China, all because of this memory chip shortage. So the Chinese AI companies need memory chips, these phone makers need memory chips, and they have to rely on Samsung, SK Hynix, and Micron for those kind of products. Now with the CXMT, they can source from a local supplier, which is great news for them. What we found was that apart from CXMT, it has 3 companies helping them with chip design, chip manufacturing, packaging, and testing, so that they can forward with their plan to expand the capacity, which is very critical for not just for them, but also for China's AI effort.
Is it feasible that Apple uses these chips at some point?
Potentially, yes, but it's a long way to go. Again, they have to expand their capacity first, especially for AI. They need to start to make HBMs for Apple. It will need lots of DRAMs, which CXMT is doing. But in the future, if they want to supply to a bigger client, they will need a lot more capacity. That's the bottleneck for them right now.
Okay, so capacity is the bottleneck. They're building out the supply chain in China, and they could end up being a significant player in the memory space. The IPO coming up, of course. Gao Yuan with a deep dive, and the Bloomberg Big Take is really worthy of your time today. Bloomberg technology reporter Gao Yuan with that fantastic reporting. So look at that on Bloomberg.com and on the terminal, of course. US futures then, talking of tech, NASDAQ 100 futures pointing lower right now by 0.5% after the gains of yesterday. Here in Europe, the Stoxx 600 is currently down 0.1%. Up next, it is Bloomberg Brief. Stay with us. This is Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizon's Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
On AI, some people would say that there's maybe a little bit of a bubble in AI. When you have companies with market caps of $5 trillion, you don't see any bubble there at all?
Whenever we have an acceleration in technology and people get excited about it, you have significant capital formation around new companies that are trying to capitalize on that opportunity. And we've seen this before through history, and you're seeing it now. It won't be a straight line. The opportunity set with AI is enormous. There will be winners and losers. And it's hard to pick the winners and losers now. And certainly a lot of the capital that's being deployed will not produce adequate returns, and a bunch of the capital that's being deployed will actually not produce any returns. But it's hard, it's hard to call the timing on these things. And the thing I'd point to just from a historical lens is in the fall of 1996, Alan Greenspan talked about irrational exuberance in stock markets, and the NASDAQ was at 1,300. And the NASDAQ peaked 3.5 years later at over 5,000. So, these things can go on for a long time, but ultimately, there are adjustments, there will be drawdowns, there'll be rebalancing, and just, it's hard to call it because the technology trend in the investment is real.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia Trade.
This is Wall Street Week.
Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
It's 5 a.m. in New York City, 10 a.m. in London. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. A blockbuster debut. SK Hynix raises $26.5 billion in the biggest first-time share sale in the U.S. by a foreign company. The U.S. says talks with Iran are continuing despite 2 days of clashes this week. A relatively quiet night last night. And Fed Chair Warsh names the leaders of 5 task forces that will examine the central bank's policy approach. Let's get a check on markets around the world now. Some interesting developments in Japan. Let's start off in Hong Kong with Winnie Su for the latest from Asia. Winnie.
Yeah, morning, Bonnie. It's quite a nice way to wrap up our week here in Asia after a very volatile week. Now we have the MSCI Asia here up almost 1%, supported by technology shares that were gaining on the back of Micron's spending plans. But also in the afternoon, we did see those gains trimming a bit ahead of that U.S. listing by SK Hynix. As you just mentioned, this is going to be the biggest U.S. listing by any foreign company, and also the third biggest listing in the world in history. But we also see a bit more caution ahead of China's memory giant CXMT's IPO next week, and hence you did see that dragging down the benchmark CSI 300 down about 2%. Flip aboard, we take a look at Japanese assets. Very interesting. You mentioned this triple rally we are seeing across assets, with the Japanese yen strengthening about 0.5% and yields down about 10 basis points across the curve, and Japanese stocks extended a bit of gains. And that's coming after Finance Minister Satsuki Katayama urged pension funds to buy more domestic assets as well. Back to you, Bonnie.
Certainly helping the yen today, Winnie, as well. Winnie Su there in Hong Kong after a big week. Now let's get over to London for a look at Europe with Justina Lee. Justina.
Good morning, Bonnie. Now, the Stoxx Europe 600 is down a little bit today, but not as much as U.S. futures right now. Tech shares are falling, but a lot of those cyclical sectors, like car makers and miners, are doing better today. 2 big movers out of Europe today. EasyJet surprisingly got a counterbid from Apollo that beats the original proposal it got from an investment firm called Castlelake. And another kind of big mover today, Vodafone, its biggest shareholder, just sold their entire stake to a vehicle controlled by the billionaire Xavier Niel at a premium, and that's why it's surging today. Now, if we flip the board here and look at fixed income, generally, we're seeing yields down a little bit. The news out of Japan that Winnie talked about probably helped. And also oil falling a little bit. And so it does feel like investors are going into the weekend kind of with a quite a bit of calm. But of course, it all depends on what headlines we get out of the Middle East over the weekend as well.
Exactly, Justina. Thank you, Justina Lee there in London. And essentially, markets have erased all of that war shock already, absorbing it pretty much in the tech sector. We had the Philly Stocks Index up for 2 days straight, more than 5% put on to the Philly Stocks in the last 2 sessions. As you can see, we do have futures pointed a little lower today after those gains. We are expecting the SK Hynix offering, though, and that may buoy things a little bit later on in the session. And that all said, volume is extremely low. We seem to have after a massive month of June. Same deal for treasuries, although we have a little bit more clarity now as to what Fed Chair Kevin Warsh is planning in terms of task forces. We have many, many names. We'll be talking about that a little bit later on in the program. As you can see, yields coming down, but just ever so slightly, a couple of basis points across the curve. And then oil also, while it did hold on to some gains, it is not putting on any extra gains. We're staying around $76 a barrel for Brent, and we're approaching that $70 a barrel mark once again for WTI. The VIX index, by the way, back down to a 15 handle. All right, let's get to some individual market movers this Friday. Over to London and Chloe Mele.
Good morning, Bonnie. Netflix is in focus this morning after a report from the Wall Street Journal that the company is considering adding live channels and bundling some streaming services in an effort to counter this declining subscriber engagement. And so we had seen the shares as weak a little bit at the beginning of this pre-market trading, but now we're up slightly as investors try and digest those potential changes. Moving on to CCC Intelligent Solutions, which is an insurance software firm which is rising quite strongly this morning, about 8% after Reuters reported that the company is exploring a potential sale. Analysts are saying this makes sense because of the depressed valuation and very inconsistent results of the last few years. And finally, WD-40, the maker of lubricants and cleaners, is also up this morning after boosting its revenue forecast. Analysts are saying that there's a higher cost that might eat into margins, but it seems that investors are a lot more focused on this boosted guidance than anything else. And so we're up almost 15% this morning for that company.
All right, Chloe, thank you so much. Chloe will be back a little later in the program. Also coming up this hour, we're going to be discussing the U.S. economy's resilience with Seema Shah of Principal Asset Management. And later this hour, Nadia Martin-Wigan of Sveland Capital joins on the volatile week and several months, in fact, for oil products, shipping and much, much more. SK Hynix begins trading on the Nasdaq today. It raised more than $26 billion in its ADR offering, the largest first-time share sale by a foreign company in the United States. Joining us now is Bloomberg's Charles Capel. Charles, how does this work? Is it just like a typical IPO where we have price discovery, delayed pricing, delayed trading and so on today?
We're going to expect this to start trading when the US opens this morning. It isn't exactly like another IPO because, of course, we're offering ADRs as opposed to ordinary shares. What I would say is that we won't have that pre-opening auction, so we won't have that time when we're sort of finding those bids. We obviously had the trading in Korea today, and it was a relatively muted session, especially for a company like SK Hynix, which is so volatile. But what we are going to see is a massive market event with, as you said, $26.5 billion worth of equity entering the market, and an enormous fundraising effort for the AI trade.
Charles, explain to us the difference between when issued trading, which is today, and then regular way trading, which could start as soon as Monday. The ticker changes as well. There's a V at the end, and that'll be on Monday.
Yeah, so when issued trading is essentially a temporary restricted trading. You often see this with new issues, whereas when you have the full trading, which is going to begin on Monday, then that's going to be a more complete set of trading and slightly more. You're going to be able to have fewer restrictions on buying and selling those shares.
Charles, the beginning of ADR trading, is it very different from the beginning of, a new IPO? Or, these are companies typically that shareholders know, right? So we know a lot about SK Hynix already. We've had many quarters to dig into. If you were interested in investing in this company, you know a lot about this history. Will there be the same kind of volatility around the open as there is typically with a regular IPO where you don't have quarters, you just have the S1?
Yeah, exactly. So you aren't going to necessarily get that initial pop that you would expect from an IPO. You know, coming up to SpaceX's offering, the question was all about, okay, well, what's it going to open at? And a huge amount of that was because SpaceX hadn't been tested by the market. You didn't have that live pricing in incredibly liquid trading. So, of course, you do have SK Hynix's entire fleet of earnings reports. You've had its trading history in South Korea. So all of that is going to be able to make it far easier to trade this stock. And it is going to mean that as an ADR, you know, it's going to be heavily linked to that past history. One thing to note is that an ADR is worth a tenth of a full share. So the price is going to be slightly different. You know, it's going to be 10 times more expensive relative in the South Korea price.
Yes, exactly.
But largely you are going to have that read across between the two different lines of the stock.
All right, Charles, and just for context, Alibaba raised 25 billion, Deutsche Telekom around 13 billion, so it's bigger than both of those. That is Charles Capel joining us there from London. And do tune in to our exclusive interview with SK Group Chairman Chae Tae-won. That's at 10:30 a.m. New York time. Joining us now is Seema Shah, Chief Global Strategist at Principal Asset Management. I want to get to these Fed task forces, Seema, but first I have to ask you about SK Hynix. Will it be an event? Will it be a market-moving event today? Would you be interested?
Good morning. I think it's very interesting. I don't necessarily think it's a market-moving event, but the main reason it is interesting is because I think the list of names that have been announced suggests that this is actually more of a credible task force. There were some concerns in the market that potentially there could be pickings of very dovish people that could really shift the interest rate function. But actually what we're seeing is that this is likely to be a really credible investigation with hopefully some important findings that is going to help improve the efficacy of monetary policy.
Yeah, so we have a lot of Harvard economists, right? Raj Chetty, but then we also have people like, you know, Walmart's Doug McMillan, for example. This is on the data collection side of things, which would seem to make sense. Walmart collects a lot of data and knows how to do it really, really well, right? And then there's professors from Chicago, Washington, all sorts of personnel. Do you feel like we're going to see a change in the orthodoxy of monetary policy in the United States after all these task forces have come back with their findings?
So I suspect that we're not going to see any really groundbreaking changes. I think the one which is really the most important, certainly, and that could have really significant findings is the task force focused on AI and the impact on the economy, because we do know that it's going to have either very disinflationary or inflationary impact on the economy, depending, of course, what time period. And it really does affect the way that the Fed should be conducting monetary policy. And I think there's a lot of debate about that. So actually getting some really clear investigation into this will be very important. The other one, which will be important, of course, is the balance sheet policy. But I think we already know which way that is headed. The very interesting one is the data force one, as you said. Having Walmart involved suggests that there is going to be that focus on private data, as Kevin Walsh had alluded to. And we do know that there have been a lot of concerns about the accuracy of the data, the number of people who are responding. So I think these are good investigations, but I question whether or not it's actually going to have a very, very fundamental change in the orthodoxy, as you put it.
Yeah, I mean, it's interesting. One of these things is not like the other, and you pointed to the one that isn't, right? The AI task force. So we have Mark Andreessen, we do have Stanford's Charles Jones, and Asha Sharma, CEO of Xbox at Microsoft, right? That's the one where you might think there might be a little bit more of a clash. But also we know that Kevin Walsh may have a slightly different opinion of what AI is going to do for productivity in this economy than many of the other Fed governors and employees and FOMC committee members. Will there be a clash in terms of how inflationary AI will be and in the immediate term versus the longer term at the Fed in the coming months, Seema?
I think it could be. I think that there is a wider understanding that, at least in the near term, AI is proving to be a little bit inflationary, considering the increased demand for memory chips and how that's feeding through to CPI and PCE. I think the question is whether or not this is something to look through, to respond to today, because it's going to pass within a year or two, or something which is going to become more sticky. Now, of course, there is a debate more generally about the productivity gains that could come through. And if you're going to see significant productivity gains over the next 5 to 10 years, then that should be, by economic theory, that should be disinflationary. So there, as you said, there's a wide range of views, but this is a new topic. Remember, AI is quite new, certainly for the field of economics. So this is really a very, very important and deserved discussion to be having. And I think the market is generally welcoming the idea that this is going to be a topic of real investigation by the Fed.
And Seema, we're almost out of time, but I do want to ask you, I know you feel like we are resilient growth-wise. Is there one concern after this week that you might share with us, given what we saw this week? I mean, the market really turned on a dime. As soon as President Trump said he felt like the ceasefire was over, we did see a major shift.
We did. So I think we've seen a shift in terms of market movement. I don't think that's going to have very, very significant impact in terms of economic resilience, because although we have seen consumer spending slow over the last couple of months, lose a bit of momentum, we have seen that the AI capex boom has stepped in as another driver of economic growth in the US. So we're not too worried about resilience, but we do recognize that, look, if this is going to be something which is more inflationary and therefore results in more second round impact, there is certainly a potential impact in terms of pricing for Fed hikes. So I think that's the area that we should be really focusing from a market perspective.
Seema, thank you so much. That is Seema Shah of Principal Asset Management. Now to other top stories trending on the terminal this morning. EasyJet gets a surprise offer from Apollo. The PE firm is offering £5.7 billion or 715 pence a share, beating out Castle Lake's bid. Volkswagen plans to cut its model lineup in half. The cuts are meant to limit product options in order to reduce, quote, offering complexity, allowing resources to go towards the highest return segments. France defeated Morocco 2-0 to advance to its third straight World Cup semi-final. Star striker Kylian Mbappe scored his 8th goal of the tournament. Mbappe now has 20 World Cup goals, just one behind Argentina's Lionel Messi. France will face the winner of Spain versus Belgium next Tuesday. Coming up, talks between the US and Iran over a permanent peace deal continue. The latest on the Middle East conflict. This is Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals. Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Joanna Bersecci in El Ula, Saudi Arabia, and this is Bloomberg.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers, and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech.
Every weekday, only on Bloomberg Television.
A U.S. official says talks between Washington and Tehran are ongoing despite attacks this week that have threatened a ceasefire deal. Let's get the latest from Bloomberg Horizons anchor Abir Abu Omar in Dubai. Abir, is anything emerging in terms of what morale is like, or whether these talks, took a little bit of a back step after the clashes and also President Trump's comments the other day?
Good morning, Vonnie. Well, I mean, the talks have already been suspended because of the mass funeral of the late Supreme Leader that ended yesterday. But we were expecting them to recommence once that funeral ended. Now, we don't have a lot of clarity on whether they actually were at an official capacity going to commence. But that was the wide expectation in the region. The mediation between Qatar and Pakistan still very much in place. Now, after President Trump's commentary earlier this week at the NATO summit, he said that as far as he's concerned, the ceasefire talks are over. But then very quickly, Vonnie, he did say that the negotiators, Steve Witkoff and Jared Kushner, can go back to having those discussions with Iran. But you saw the impact on the market on oil. It was almost instant. But then we saw a steadying in Brent crude prices and NY crude prices as well, suggesting that the market isn't necessarily taking these remarks as a promise of a return to a full-fledged war. And this is our latest reporting. Bloomberg reporting this morning, according to an American source, that the technical negotiations between the warring sides are expected to continue. But again, as I have just mentioned, we have no clarity on just when exactly that resumption is expected to happen and where. But when it comes to general markets, when it comes to the wide expectation, we don't see a return to a full-scale war similar to the one that we had back in March, with the entire region really dragged into it.
All right, Abir, thank you so much for the update. That is Bloomberg's Abir Abu Omar in Dubai. Coming up, we're going to be looking at SpaceX and corporate governance. This is Bloomberg.
Western countries, all of them are cutting funding to Africa. And some of these programs were supported by funding coming from Western countries, like for human resources, for testing, for transportation of samples. And suddenly, African countries have to think how to fund money and to cover this gap. But it takes some time. And I think the combination of all of these factors are fueling this mistrust that we see at community level. We value the support we got and we are still getting from the US. And we think that if we continue to work together, and there is no reason for the US not to work with Africa CDC, Africa CDC is the leader in terms of public health in Africa.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anim, only on Bloomberg.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
This is Bloomberg Brief, I'm Vonnie Quinn in New York. When SpaceX went public last month, investors were invited to buy into one of the world's most valuable companies. But they weren't buying equal voting rights. Wall Street Week has the story of Elon Musk's extraordinary control over the company and the changing nature of corporate governance.
Maybe the Elon Musk brand is very strong in the US, but it's not so strong in Denmark. Actually, I would rather say that, many people driving a Tesla is maybe a little bit embarrassed about it. And certainly among our scheme members, there's a huge reputational risk in investing in an Elon Musk-led company. So I've been here for 9 years now, and I never experienced in my 9 years as CIO so many scheme members coming back to me with positive comments from a single investment decision as I experienced in the wake of the exclusion of SpaceX.
What do you look for in governance, either to have or to avoid as you make investments?
We hold good governance very, very highly. We think it's extremely important in order to assure accountability and transparency and sound decision making. And I think, good governance to us, to our mind, really lies at the core of the trust that we need in public markets. One share, one vote. The distribution of power should be proportional to the money invested. We have the separation of power between CEO and chairman of the board. We don't like that to be the same person. We think that creates a risk of poor decision making and excessive risk taking. And finally, the third principle is independence. We want an independent board, not only in the board, but also in the critical committees around nomination and remuneration and audit.
For more Wall Street Week's Simon Hampton joins us now. Simon, this really started off with Google, right? And then sort of other tech companies embraced this kind of structure and are getting away with it for the most part. But how important is governance to the global investor?
Yeah, it's sort of like everyone's sort of trying to push the boat out a little bit further. Look, I think investors are always going to weigh up all the pros and cons of buying into a company. And I think the debut of SpaceX suggests that they're buying the story right now. But you are seeing some concerns creep in. We heard there from a pension fund in Denmark that called it catastrophic governance and say they're blacklisting SpaceX and Elon Musk companies. We saw yesterday the news of 2 new ETFs that were filed that were basically everything but Elon ETFs, investing in the S&P 500 and the NASDAQ, apart from Elon Musk companies. And one of the concerns they raised was the governance structure as well. So as we see these sort of models where Elon Musk owns 40% of the company, has 80% of the voting rights come in, you are starting to see some concerns creep in as well.
Yeah, as I say, you did see sort of 2 layers of voting rights in some cases around Silicon Valley, but this is really pushing it to the limit. That said, could it be a template going forward for other CEOs and founders?
Well, that's one of the concerns for sure, is that people can see if Elon Musk can get away with this, why can't they? And I think that's certainly going to be one of the concerns raised. So, but at the end of the day, investors are going to vote with their feet. And if they pull money out, it's going to be harder and harder for new companies to justify that sort of governance structure as well.
Exactly. And voting every day. You have to keep an eye on these CEOs and founders every single day. Simon Hampton, cannot wait to watch the rest of that story. And of course, the rest of Wall Street Week. It's on every Friday at 6 p.m. New York time. Our thanks to Simon Hampton and the team. Next up, we'll be looking at energy and shipping markets with Nadia Martin-Wigan of Sveland Capital.
Now, some people have written that your bank, Revolut, is worth $75 billion. Have you ever thought of taking your organization public?
Well, the way I think about it, we kind of will be ready probably in 2 years' time. But then again, depends on how good the market is.
Since you don't have an IPO, how do people who work for you make some money? Do you make a market for people to sell their shares internally?
Yeah, so we do secondaries every 1 or 2 years when people can sell a certain portion of their stocks to external investors.
So you've done secondary sales for your employees. So employees can then get some liquidity. Do you expect before you go public you'll do any more of those, or are you just going to wait till you go public before you liquefy any more stock?
Yeah, I think so. We might do secondaries as well before we do IPO, because we do it every 1 or 2 years, so we might do secondary as well.
All right, well, if anybody wants to sell their shares to me, let me know. And have any investment bankers told you why they're the best to do the IPO for you?
Yeah, obviously every single one is the best.
Everyone is the best. You're not in a rush to do it. You don't need the money.
So we're a bank, and then for the bank it's super important to have trust, and then public companies are trusted more compared to private companies. So that's the reason.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
It's 5:30 a.m. in New York City, 10:30 a.m. in London. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. A blockbuster debut, SK hynix raises $26.5 billion in the biggest foreign first-time share sale in the U.S. The U.S. says talks with Iran will resume despite 2 days of clashes this week. And Fed Chair Kevin Warsh names the leaders of 5 task forces that will examine the central bank's policy approach. So let's look at those markets then. As we await the SK hynix ADR debut, we are seeing futures pointed a little lower, but markets have pretty much absorbed this latest Iran war shock. We had 2 consecutive sessions now where semis cushioned equities, and volume is just about to run into the summer doldrums. Trading really seems to be at a lull at this point. Let's move to yields, because we're seeing them come down, but only by a couple of basis points. We'll see the semi-annual testimony from the new Fed chair next week and what that brings, but for the moment, all is calm on the Fed front. We even have the names now for all of the task forces. And then oil-wise, we came down another little bit, still elevated from where we were this time last week, and it is the first time that we'll have seen gains week over week in 5 weeks. But Brent crude is still now just above $75 a barrel. VIX, by the way, trading with a 15 handle. Let's get to some individual market movers now with Chloe Melly in London.
Good morning, Bonnie. Meta is in the green this morning after a research firm, Semi-Analysis, came out with a report that was very positive on the company's AI compute business. And they also said that out of all the hyperscalers, Meta was the one that was best positioned to actually catch up with Anthropic and OpenAI. And so we are seeing that driving the shares about 2% this morning. Moving on to CCC Intelligent Solutions, an insurance software firm that is up more than 8% this morning after Reuters reported that this company is exploring a potential sale, including to potential private equity buyers. And so analysts have said that the depressed valuation of the company and mixed results over the last few years actually mean that this potential sale makes sense. So we'll be watching out for any developments there. And finally, WD-40, the maker of lubricants and cleaners, has boosted its revenue forecast, and that is really translating in a huge boost for the shares, up almost 15%. Analysts have warned that there might be the higher costs eating into margins, but it seems that this boosted revenue guidance is overshadowing any potential concern around the margin this morning for WD-40.
It's amazing. We all need a bottle of WD-40 everywhere in the world, right, Chloe? Thank you so much, Chloe Melly. SK hynix begins trading on the Nasdaq today. It raised more than $26 billion in its ADR offering, the largest first-time share sale by a foreign company in the United States. Joining us now is Bloomberg's Charles Capel. Charles, what does the scale of this offering tell us about the strength and liquidity of U.S. markets?
Yeah, look, this just shows the gravitational pull of US equity capital markets. It is an unbelievably vibrant and strong market. Companies can come to the US and raise billions and billions of pounds relatively easily, whereas they may struggle elsewhere in the world. You know, for context, the largest offering here in Europe is just short of 4 billion euros in terms of a new listing so far this year. Hong Kong has also been very strong. But US equity capital markets are really sort of pulling in all of the capital, and they are where companies are going to raise these multi-billion dollar amounts, specifically to fund the AI build-out.
How has SK Hynix's trading in South Korea impacted the fundraising process? So we did see the entire number come down just a little bit thanks to the losses this week, right?
Yeah, exactly. I mean, that's one of the tricky things with trying to build a book or trying to raise funds for a company which is actually currently trading, because you have a moving target, a live commentary on the price. And when SK Hynix first announced this number, the total fundraising was around the $29 billion mark. Then SK Hynix, I mean, it's an incredibly very volatile stock, as with the AI trade, but particularly the AI trade in Asia. So we've seen some double-digit moves and definitely some percentage moves above 5% on the day, multiple of those, which has been starting to move the amount that they can raise by selling that set number of shares lower and lower. We were seeing around 25 billion earlier this week. Now it's gone up to 26.5 billion, but it has made it a more tricky process, as well as sort of providing this live commentary on how well the book building's going.
Exactly. Well, at least with 26 plus, it beat out the Alibaba 25 billion listing. Charles, thank you so much. We'll see how it goes later on. That's Charles Capel, our equity capital markets editor in London. And do tune into our exclusive interview with SK Group chairman Che Tae-won. That's at 10:30 a.m. New York time. Oil steadying at the end of a pretty bumpy week. Brent currently trading just over $75 a barrel. Joining us now is Nadia Martin-Wigan, director of Sveland Capital. Nadia, I'll bet at the beginning of this week you weren't expecting to see what we saw. How concerned were you after we got the president's comments on Wednesday morning at the NATO summit?
Well, at least he chose a point that we had been in a very low oil price environment heading into that summit. So I think the expectations of the market were that we're going to have this supply glut going into the summer. It's all over. So we're rising from a very low level on the oil price in terms of speculation. A lot of shorts are out in that market. And Saudi Arabia had just dropped the oil price massively. $15 discount for their official selling price for August for Europe, and $11 discount month on month to Asia. So they're big moves.
Now, how much did we get done in June? So the Strait kind of reopened, partially reopened, but barrels were really, tanks were almost empty, right? Reserves were pretty low around the world. Did we manage to get the ships out of the Strait and start refilling some of those SPRs and so on? Where do we get to? Because it doesn't look like we'll have really normal traffic through the Strait anytime soon again.
Absolutely. So according to us at Sveland Capital, we think we gained around 6 to 7 million barrels per day of oil month on month in June, which cleared out most of the backlog. That includes Iran. That includes Saudi Arabia, the major GCC countries in terms of what they managed to send out. However, the critical point for us is that we didn't see ships comfortably sailing back into the Strait, which then prevents the GCC countries from really ramping up production, and the Iranians as well, where we've had mixed reports on how those fields have been hit. And so it's yet to be seen if there is damage to their actual production facilities. So we're in no way in a normal market in our view.
And you get these odd headlines. So the US targeting Kharg Island, for example, that was out there as a potential. There was also the idea that Ras Laffan won't be coming online as quickly as we might have thought, the LNG facility. So where do we stand now going into the end of July and August? Are things picking up again, or are we sort of stagnating once more?
I think right now things are a bit more paused. What we saw before this happened is a balanced crude market, but refined products were looking much tighter, meaning diesel, and this is helped by those strikes on Russian refineries by the Ukrainians. We hit in June a 17-year low for refinery runs in Russia of 4.4 million barrels per day. And what we've seen this week is diesel cracks have absolutely skyrocketed. gasoline. That's what we need to continue the driving season and so forth. And U.S. refiners have been running at max. Europeans have not quite been doing that. And the opportunity, in our view, for them, when we got some contango in the Brent curve and we had contango in the Dubai market, was for refiners to really buy that crude. They didn't do it. And then China has now announced that they're relaxing their export ban of refined products, which means to me that they're coming back into this market and they're going to start buying crude. So they had cut their imports by 4 to 5 million barrels per day in the last couple months. So if they're coming back, that 6 to 7 million barrels per day backlog suddenly looks like a much tighter market if they are in fact going to hit those export numbers for refined products.
So are you saying that Western refiners may have missed their window?
Yeah, I think in Europe they may have missed it a bit. In the US, we've been running flat out. So there wasn't more that the US could really do. But what we saw in the data last week is that US product exports hit an all-time high. And historically, China has been the OPEC of refined products, balancing that market. And the U.S. has come back despite all the refinery closures we've had since COVID, because Europeans and others have been protecting themselves and not running fully.
You said China is coming back to the market. Where do we stand with demand destruction in China? Does that demand come back online at some point, or is it permanently gone or shifted to another resource?
Well, part of the demand destruction is really this energy transformation and things like that. And we see that not only in oil, but especially in the LNG market. Part of it is domestic production of oil, of gas, further deals with Russia, and so forth. But China's historically imported 17 million barrels per day. In some months, 15, 17 million barrels per day, if you include their demand that includes what goes into storage and what is imported. That's the 15 to 17 million barrels per day. Suddenly, we had them at a much lower number, and that is that flip that the market is concerned about. In addition, in the last 2 years, we've had SPR building in China, we've had SPR drawing in the US, and China clearly wasn't interested in doing that in the last couple months. I think that their announcement that they will export products mean they think oil prices got low enough and it's time to buy again.
Fascinating. So that rise in oil prices that we did see, I mean, we're back down today, does it reflect reality? I mean, we're at less than $75 a barrel on Brent now, around 70 on WTI. Is that reflective of the situation and what's out there?
In our view, not. We've really lost that geopolitical risk, but of course we're in the holiday season. So typically, people don't want to be don't want to be short ahead of the 4th of July weekend, and then they kind of fade that rally. We didn't have a rally going into that. Right now, it's really led a lot by algorithmic trading, and this is where moving averages matter a lot. So Brent is higher than the moving averages that we've been below in the last month. So that starts to create a buy signal for some of the algorithmic traders. So that very strong short positioning should lessen. But it's also the shape of the curve.
So prices should come down, is what you're saying?
No, prices should come up because now we're above those moving averages. So what has been a continuous sell signal for algorithms now looks like more of a buy signal to buy from.
I want to briefly ask you about shipping costs.
Yes.
I mean, have they come down a little bit? It seems like they should have, but then again, are shippers really still shipping through? I mean, is it safe yet?
So shipping costs became astronomical. Historically, you want the cost of shipping to be 2 to 3% of the value of the cargo. What we saw already in May and June, in the start of June, is that those prices were 20 to 25% of the value of the cargo. What does that mean? Well, oil prices and LNG prices need to be higher and shipping needs to be lower. We had the market declining on the Brent side, which meant that shipping costs really had to come down, and they did. But now we have this geopolitical premium coming back in very low volumes, so let's see what happens. But Brent was down 18% in June. Shipping costs were down for TD3, 25%. That's Ras Tanura, Saudi Arabia, to China for crude oil. Refined products were down 31% for shipping the index. So they had come down, but we didn't have that volumetric difference to make up for that lower price that you were getting for using your ship, which was hitting the tanker equities. Now we're kind of resetting and looking to see what happens, but we don't see those ships flowing into the Strait of Hormuz now.
We could talk to you for so much longer, but we have to leave it there. Unfortunately, Nadia, thank you so much for the update. Nadia Martin-Wigan, Director at Svelland Capital. Always fascinating to speak with you. Now to other top stories trending on the terminal this morning. Fed Chairman Kevin Warsh announced the leadership of 5 task forces to examine the bank's approach to key aspects of policymaking. Warsh tapped several former policymakers, including former BOE Governor Mervyn King and former Federal Reserve Bank of India Governor Raghuram Rajan. JP Morgan building AI agents that beat 60-40 portfolios. The bank has been testing AI's ability to allocate money. The results are based on historical simulations rather than live investing. Shein is moving ahead with prep work for a possible Hong Kong IPO after a years-long effort. The fast fashion giant could launch the IPO in the coming months, pending approval from the China Securities Regulatory Commission. Coming up, Apollo creates a bidding war for EasyJet after a surprise offer topping Castle Lake. This is Bloomberg.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker Playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Hello there. Just wanted to say, Primer is back. We've been scouring the frontiers of science and technology to help explain the difference between the next gold rush and whatever this thing is. And in season 2, we're upping the stakes. More danger.
Now that is some high-grade uranium mineralization.
We used to have a stable climate on this Earth. Right now, we do not.
More science.
We're pushing the envelope of technology in multiple directions. Software, hardware, chemistry, physics.
The cable is like very cold.
And more CEOs that can nail the photo shoot.
Hundreds and hundreds of billions of dollars are at stake. While the problems are economic, the solutions are too.
And yes, we will be talking about AI.
There is a lot of humanoid hype out there.
But our future doesn't run on hype. It runs on innovation. Watch season 2 on all these lovely channels.
Welcome to Bloomberg This Weekend. I'm David Burke.
I'm Lisa Mateo.
And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. A U.S. official says talks between the U.S. and Iran over a permanent peace deal will continue. That's despite 2 days of tit-for-tat strikes this week that threatened the fragile ceasefire. Bloomberg government's Jonathan Tamari is in Washington with the latest. Jonathan, after we got that vote that really chastised President Trump for continuing with the Iran war, does he have a choice? He needs to find some kind of diplomatic solution here. Does he have the power to go back to war?
Well,
he probably does, because Congress, even though they've passed these resolutions, they haven't passed in a way that would actually take force, that would have the force of law against him. And there's even significant debate, and the administration has questioned whether Congress really can stop him. There's also an argument that the war has stopped, that the initial hostilities have stopped, and that this would be a new set of hostilities, which would reset the clock of how long the president has to conduct war without Congress's approval. So I think if he wanted to go back to war, he would be able to do so without a legal problem in the United States. I think the bigger issue is he's got a major political problem. This war has never been popular with the public. We've got a midterm election coming up in a few months, and many Republicans don't want to see this going on. And the president himself has said he doesn't want to tip the economy into a recession or see really high gas prices. So that has kind of probably pushed him more towards the diplomatic route, but they're probably not making much progress there, it doesn't seem.
Yeah, so far anyway. Well, I mean, the funeral has been ongoing, so we'll see what happens if and when they resume properly. What's going on with the Election Assistance Commission? So President Trump fired 2 Democratic members of this commission, which does help states facilitate accurate elections, but a Republican member also resigned.
Yeah, and it's unclear. This is late breaking overnight, but we know the president has tried to put his stamp on elections and tried to restrict the ways that Americans vote and try to adjust how mail ballots are treated. He has long raised serious questions about the security of American elections without any evidence behind those accusations. But he has tried in many ways to affect how elections are run, including by getting a bill through Congress that doesn't appear to have enough support to pass. This is one thing that is within his own power to do without lawmakers. It should be noted that elections in the U.S. are run by the states. The states are primarily responsible. So this commission provides assistance, but it doesn't run the elections. So it's not clear exactly what steps they might be able to take with new commissioners put in place. But it is something to certainly keep an eye on, because the president obviously is very powerful and obviously does not trust the way elections are run and wants them run to his liking and wants the outcomes to his liking.
Jonathan, thank you so much. That is Bloomberg's Jonathan Tamari from Bloomberg Government in Washington, giving us the lowdown this Friday. On the earnings front, Delta is the first major airline to report this quarter after the war. Obviously, a full quarter of war in the books. Summer travel demand and higher fuel costs will be major themes. Let's bring in Bloomberg Space and Aviation Managing Editor Benedict Camo. So, Benny, will Delta have been able to get through the war, higher price spikes for fuel and so on, given its position with maybe wealthier business clientele?
Well, we're about to find out in less than an hour. That's when the Delta earnings will hit. And the theme for this particular airline, but also for the broader U.S. space, has been that the premium side of the operation, so customers that are paying for premium economy or business class or first class, that has really held up. And that's really sort of the sweet spot for Delta. That's where they have a lot of their customer base. So that will probably insulate them from the swings that they've seen on the fuel price, from the swings that they've seen with ticket pricing. Another thing that will insulate them to some degree is that Delta has its own oil refinery. That's an investment they made several years ago, and that's obviously paid dividends now. They can essentially sort of hedge their own fuel price, so they can insulate themselves from the swings of the fuel price. So that should have helped them. They did, when they reported earnings last quarter, they did sort of suspend their full-year outlook. So all eyes will be on the outlook this time round. Might they reinstate the outlook? Might they come back with a fresh outlook? So that will be a big focus of the earnings. They are first out of the gate, so in some ways, and they are also the biggest in the industry, so they will sort of set the tone for all other airlines that follow.
Yeah, we'll get a lot of details out of that call this morning. Benny, EasyJet getting another bid. It reminds me of the old joke, you know, what first attracted you to millionaire Paul Daniels? This back when $1 million was a lot of money. I mean, EasyJet has a lot of assets. Is that why Apollo wants it?
Yeah, so Apollo surprisingly coming in this morning, swooping in really. We thought that EasyJet had an accord with Castlelake. That's another US investment fund. And Castlelake, over the course of last month, had made several bids, sort of inching up bit by bit. And then finally, It looked as if over the weekend they were able to sort of drag EasyJet to the altar. EasyJet said, okay, let's open the books for you, let's have a look at this together, and they sort of tentatively agreed. And now Apollo is coming in with a higher bid still, and EasyJet now saying, okay, the Castle Lake bid is null and void, we're going with Apollo. The question now is, can Castle Lake punch back? Is this a knockout blow from Apollo? Can Castle Lake come back with something even higher and sort of reopen the bidding war? Or will they say, okay, enough, you go and elope with Apollo, as it were, and we've had our go. So that's sort of going to be the next step that we have to watch. What's in it for Apollo? EasyJet is a popular brand over here in Europe. They have a modern fleet. They have lots of very attractive landing slots in places that people want to travel to, like Italy, like Switzerland, and so on. And that is really what makes this an attractive asset.
All right, well, we'll watch this space, as they say. Thank you so much, Benny. Bloomberg Space and Aviation Managing Editor Benedict Camel. Coming up, we're going to get you set up for your Friday trading session. This is Bloomberg.
The most important news and financial information whenever and wherever it happens. I'm Michael McKee on the Mexican border, and this is Bloomberg.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. Now a look at what's ahead today. Well, obviously, SK Hynix starts trading its ADRs today at least. Catch Bloomberg Tech's exclusive interview with Chairman Choi Tae-won. That's at 10:30 a.m. New York time. And then we get earnings from Delta before the opening bell. That should be a fascinating read into the consumer and also impact of war and any inflationary concerns. The EU finance ministers wrap up their meeting in Brussels as well. And here's your macro picture for your Friday session. Even as trading just starts to get into the summer season, we're seeing much bigger lull in trading than we have over the past few weeks. Nasdaq 100 futures pointing to a decline. That might all change after the SK Hynix ADRs start trading. We're seeing the 2-year yield down about a basis point. We have all the personnel for all the task forces. There'll be a lot of chatter about that today. And Brent Crude expressing calm this Friday too.
Do you mind being called an ideological lunatic or a bunch of left-wing nut jobs?
You know, I've been called worse things than that.
Oh! You'd think she owned the place.
23andMe, I think, is so incredibly valuable. We're coming back.
It had that kind of detective story feel to it. You know, when you're hot on the trail of something, you know that it's very exciting.
What magazines were you reading as a kid?
I don't think I was reading magazines until I was in them.
You are on the cover of all of these.
Oh, and there's many, many more, but we just don't have time.
Why should people trust you?
I don't think anybody should trust any company or entity completely with any of this.
It's very uncomfortable. Artificial intelligence is this force that is far bigger than we are.
I want to build better businesses around these brands.
The shock will never wear off.
So you're a brother and sister running one of the most powerful companies in the world. When you argue, who wins?
No one. The way I could see AI being banned or blocked is if something really went wrong. And if something really went wrong, then maybe it deserves to be.
So is it Paradise ahead or Gattaca?
Maybe somewhere in the middle.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
The demand for stocks remains very healthy.
When there's a lot of enthusiasm, people tend to get a little bit ahead of themselves.
If that falters, I think we've got a real problem on our hands.
You have to be prepared that this could shift, and it could shift very, very quickly.
The summer's going to be volatile.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Let's get Bramo to the weekend. Live from New York City this morning. Good morning, good morning. Let's get meat to the weekend.
Thank
you. For our
you.
audience worldwide, Bloomberg Surveillance starts right now. Coming into Friday within 1% of all-time highs. The tech rebound sending stocks towards a second straight week of gains, leaving the equity market wide open for SK Hynix to raise more than $26 billion. Just as fixed income investors are becoming more discerning, S&P downgrading Oracle to one notch above junk.
Just want to say thank you for correcting the record that it wasn't just me. I think a lot of people are looking forward to the weekend. One thing that's notable is, as you're pointing out, this is a market that can walk and chew gum at the same time. It just isn't very graceful. You can see right now the outperformance once again reasserting itself from big tech, even as people are with their eyes wide open. They understand some of the risks, perceiving them with respect to Oracle, understanding that if you are spending more than the cash flow is offsetting, all of a sudden it becomes a little bit more of a concern about that long-term AI investment. At the same time, still pouring money, the biggest foreign debut for a U.S. IPO by SK Hynix on record.
Just to take a step back, a little bit of a breather and think about framing the week. Bit of pushback to an Amazon debt offering, arms wide open to an SK Hynix equity offering. And on the debt side, the questions are different. When we spoke to Vishal Kandudra of Morgan Stanley earlier on this week, he said it pretty clearly that the hopes and dreams will get paid in the equity market. We won't get the upside in the debt market. So show me the yield. And I think that's part of the pushback. You want to raise the capital over here, you need to pay up.
The pendulum is swinging just a touch back to debt investors having a bit more leverage. You're seeing equity investors still really believing in the upside story. This has been happening slowly over a period of time. It isn't just happening, though, in the AI trade. And this is what I find interesting. You also see this in the government debt sale side of things as well. You see people in the bond market saying, we have lots of cash. We want to put it to work, but we want to get paid. This is a new dynamic. This is not a market cracking. This is not a market breaking down. This is a market being more discerning and a lot of investors seeing the opportunity to get more money.
It's a market repricing. The competition for capital continues. More on SK Hynix in just a moment. I want to talk about Japan. We should all talk about Japan. The Japanese government just giving the pension fund a bit of a nudge here. The finance ministry, to be specific, to bring the money home. Yields down across the curve at the long end, down by more than 10 basis points. This is the $2 trillion beast, almost $2 trillion beast, potentially sparking the great repatriation trade. The takeaway this morning, it'll take time.
What a lot of people are looking for is just how broad the implications are. Look, this was the finance minister in response to a question saying that there should be a policy, or there will be policy, to support the repatriation of assets in Japan. It led to this rally in some of the Japanese assets. It also has implications for U.S. treasuries and for other assets around the world, because that's where these Japanese money is currently. So do you start to see actual policy prescriptions to ease the pathway to make that happen? Is this verbal intervention? This was clearly prepared, even though it was a response to a question.
We'll take a beat on that particular topic in just a moment. Fantastic guest coming up. Equity futures this morning erasing this morning's losses and heading towards another week of gains. S&P 500 futures down by not even 0.1%. Coming up this hour, we'll catch up with George Goncalves of MUFG with equities on track for a second week of gains. Jing Ji Yu of Morningstar as SK Hynix launches the largest ever foreign debut in the US. And Kit Jukes of SocGen as Fed Chair Kevin Walsh names his new task force leaders. We begin this hour with stocks inching lower following a chip-led rally. George Goncalves of MUFG writing the inconsistencies in various market metrics will be ironed out, helping bring back convictions into the fall. George joins us now for more. George, good morning.
Good morning.
What do you have convictions about this Friday morning?
I have convictions that it's Groundhog Day every other week. We have a bond market that always goes to 4.5 in the 10-year, 5% on the 30-year. You get tech stocks kind of rebounding, and you get all-time highs, but we're kind of stuck in nowhere's land.
Yields are range bound, 4.2%, 4.1% on twos at the front end of the curve. We've seen that quite a few times, but there is an aggressive push from both corporate America and the tech trade worldwide to raise capital in this market.
Yes.
We started the show by talking about the distinction in the equity market and the debt market right now. What do you see?
Yeah, look, I think it's interesting. If you actually take from an upside-down pyramid perspective, there has been dispersion within leveraged loans. There's been dispersion within high yield, but IG has been very homogeneous. It's been very, very tightly knit. Almost every spread kind of tracks the overall index. You know, if there's going to be more kind of discerning nature coming from the credit investor world, well, we should start seeing it in IG. IG is way too tight, and there should be some sort of concession given all the capital has to get raised.
So do you think there's any takeaway in some of the spread widening, at least in the new issues in the bond market, versus the robust demand for some of the equity offerings? Do you think the pendulum is shifting more to the bond investors? Do you think bond investors are getting a little bit more wary about a high yield environment more broadly? What's your take on that?
No, I think your opening remarks were spot on in the sense that yeah, now you have to kind of pay to play. And so I think that aspect is going to be with us. But it's been an amazing year so far, a lot of issuance. But you know, in the second half of the year, if there's a lot more capital raising that's needed, I think that yields and spreads are going to have to widen to facilitate.
When is spread widening the window closing? And this is the distinction that we're having trouble understanding, because at one point it was investors pushing back could potentially curtail some of the spending ambitions of big tech. At this point, it's going to cost them a little bit more. Is there a tipping point where suddenly it becomes a constraining factor?
I mean, given the sort of estimates for sort of revenue potential. If you pay an extra 10 basis points, that's really not going to move the needle. I think it really starts to matter when you have bigger moves, and it's going to be a function of both, like bond market volatility as well as spread widening. That's going to really, maybe not necessarily curtail credit availability, but might kind of close down markets, and that's where you get nervous around the fall.
We should know we're picking up on small signals here. Getting deeper into the summer, it's still quite snoozy. 260 on high yield spreads, which historically, as you know, Lisa, better than most. Incredibly tight.
It's incredibly tight. When you take a look at bond market volatility, it is absolutely nowhere. So when people start saying, well, it could get more volatile, it's not getting volatile in any way, shape or form, either in bond or overall stock index level types of metrics. So again, not necessarily screaming warning bells.
Step up Kevin Walsh. Does Kevin Walsh make things more volatile? The reluctance to communicate, to provide forward guidance?
Well, I do think that, it's kind of refreshing that we're taking the opportunity to kind of slow things down a little bit. I mean, perhaps we've had over communication in some angles, right? And so I think it's good to see kind of a rethink about the communication strategy. I mean, the 5 task force are now fully in motion. I think it's an opportunity to kind of rethink what is the appropriate policy, like how to communicate with markets. And markets, the bond market's a sophisticated group of individuals. We can discount things too. We don't have to be kind of handhold.
At the same time, to the degree that we are hearing anything, it is increasingly hawkish. Even New York Fed President John Williams yesterday came out, and he has been actually pretty dovish for the past couple of meetings, and he came out sounding really hawkish, saying that the inflationary problem is not necessarily just tied to oil prices, but AI is his bigger inflationary concern. Are you starting to change your perception of the reaction function at a Fed that has no doves left?
I'm not sure if it's no doves left. I mean, I think people are kind of falling in line. I mean, you heard it even last week at Sintra, and the idea that we want to reduce forward guidance is now becoming a theme amongst all central bankers, both here and abroad. I'm not sure if it's dovish. It's just that we're used to having too much information, so that anything less than that is going to be viewed as hawkish. Maybe they're just kind of letting us figure things out on our own. I'm not thinking that's a signal per se.
Two's at the moment close to 420. That is still a decent gap above where policy rates are right now. Max Kettner of HSBC is still quite bullish on equities and overweight risk more generally. And he points out that it will be difficult for this Fed to out-hawk market expectations. I think that's an important question. How hard will it be for this Fed to out-hawk what is already in the price?
Yeah, well, the thing is interesting. I mean, what does out-hawk mean? When you look at the WIRP page on Bloomberg, you have the market pricing in one hike and then followed by cuts. That, to me, looks like risk management. It doesn't look like a market that's really that hawkish. They're just scared of this unknown that there may be a risk of a hike. I don't buy it.
Do you have a base case if you don't buy it? What do you buy?
So we think that the Fed's on hold, and in fact that they're going to end up coming back to square one, which is that neutral still is somewhere close to 3%. And at the end of the year, this is going to be a big exercise in just kind of figuring out that we're coming back towards 3%.
I want to go back to where John began the show when he was talking about Japanese bond yields and the fact that you did see a rally into them, and this question around Japan being the big repatriation trade that hasn't happened for about 20 years. This does seem like it is potentially a bazooka later in the year, should there be true policy efforts to support Japanese investment firms bringing back their investment thesis to their home country. Is there any teeth in this?
I mean, look, the Japanese, both investment base, banking system is so integrated with the U.S. economy on so many different levels. It's very difficult to see like a wholesale kind of repatriation. But we all know that it's on the margin that prices are set, and so it really comes down to like how much how much capital could come back to Japan, or is it more a function of there's going to be less capital leaving? I think it's more about the capital will stay at home and look for the higher yields within the Japanese bond market and the Japanese banking, like regional banks, the pension systems. They can allocate more there. Yields are more attractive.
Do you think markets will achieve that without it being mandated?
I think at the right price, there's people will be interested.
Close to that right price.
I think we're close to that right price. I mean, and that's why we have a pretty decent reaction overnight, just on one headline, and you see the Japanese bond market favorably moved over 10 basis points.
If less money is leaving Japan, that means less money is available to buy into some of the issuance in places like Europe that the Japanese have turned up to buy. Where do you think it's vulnerable if you do start to see that turn?
Yeah, that's a great point. I mean, I think that the U.S. bond market, left to its own devices, will be fine, and we'll be able to find capital. Yeah, I'm more worried about the smaller markets, even emerging markets that benefited from carry-type trades. Like, that's probably would be more at risk.
George, it's good to see you. It's always good to catch up. Yep. Thank you, buddy. George Concambus there of MUFG. You're reluctant to make too much of a big deal about what's happening in Japan because I feel like we've talked about it so many times over the last 10 years.
Can you do verbal intervention that's successful without following through time and time again? And ultimately, the Japanese finance minister is doing an incredible exercise in verbal intervention. Will there be the follow-through where we get details about how they're exactly going to support this?
The move in dollar-yen did not hold off the back of those headlines, that's for sure. Equity futures right now in the S&P just about unchanged. Let's get you an update on news worldwide with your Bloomberg Brief. Vonnie Quinn has more.
Good morning, John. The US and Iran are resuming peace talks even as they exchanged strikes earlier this week. A US official telling us here at Bloomberg the talks are at the technical level and saying the US is aiming for a permanent peace agreement by mid-August. SK Hynix raising more than $26 billion in its ADR offering, the largest ever U.S. first-time share sale by a foreign company. It sold nearly 178 million ADRs for $149 each. They'll begin trading on the Nasdaq later today. And do tune in to Bloomberg at 10:30 a.m. for Ed Ludlow's interview with the chairman of SK Hynix. Fed Chair Kevin Warsh announcing the leadership of 5 task forces to examine the central bank's approach to key aspects of monetary policy. The leaders include prominent academics, former central bankers and corporate executives. And that is your Bloomberg Brief. John.
Hey, Vonnie, thank you. We'll have more on that story a little bit later this hour. Up next on the programme, pressure rising for a deal.
To me, I think it's over.
We just hit him very hard. I'm not sure I want to make a deal with him. Let's just finish the job.
But reportedly, the talks are ongoing. Stephen Cook of the Council on Foreign Relations joins us next. Live from New York City this morning. Good morning.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo. And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine. Watch, listen, stream.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Heading towards a weekly gain on the S&P this morning. Some muted losses, down by not even a tenth on the S&P 500. On the Nasdaq 100 this morning, down by a third. The money going back into tech. More recently, semis in the last 24 hours. Lisa Shallett of Morgan Stanley joining the program later on this morning. Lisa Shallett pretty punchy about getting out of semis and into hyperscalers. Let's switch up the board and get to the bond market. 2s, 10s and 30s. 2s and 10s, yields bleeding higher through much of the week. This morning down a basis point, still close to 420 on 2s, 450 on 10s, 5% on 30s. How many times have you heard me say that through the week? A range-bound bond market. In Japan, nothing range-bound about it. Big bid coming into the long end of the curve in Japan. A conversation in Japan about the pension fund investing at home. This could spark a major rally in Japanese assets. Yields are lower. Dollar-yen a little bit stronger off the back of these headlines, but still, dollar-yen down by just 1/3%. So I stress only a little bit stronger.
Yeah, if you're waking up and you're wondering what were the comments that actually did spurk this move, it is this from the Japanese finance minister. One priority is to encourage households as well as pension funds, including the GPIF, to increase their investment in Japanese financial assets. We intend to pursue policies that support that objective. No more details, no more rhetoric. This was in response to a question in a routine press conference. People taking this as signal that they will follow through on something, and that is what's led to such a rally in the bond market.
Let's see if they do indeed follow through. Let's see if markets, just through price and yield alone, keep the money at home. Let's turn to commodities this morning. Brent at 76, WTI at 72. Did you see oil production in UAE?
It was a record.
Record high.
Absolutely amazing.
Supply coming back online.
And it shows how UAE has broken away, as they have said, listen, we're out of OPEC and we're going to do what we want. But it also highlights how much supply has really offset some of the lack of what's going through the Strait of Hormuz. It explains why it's been such a difficult trade to get right. Why it's like the ultimate widowmaker trade, try to bet on oil.
Yeah, we often say on this program, if you want to make a fool of someone on Wall Street, ask them to forecast crude. It's kind of the story of the last few months, isn't it? Where are we then? Strikes continued through the week. Talks reportedly ongoing. Under surveillance this morning, pressure rising for a deal.
To me, I think it's over. I don't want to deal with them and with this scum. As far as I'm concerned, it's over.
We just hit him very hard. He did a little something today, but it was really retribution for last night.
I'm not sure I want to make a deal with them. We can play games, but I'm not sure I want to make a deal. Let's just finish the job.
So here's the latest this morning. Sources telling us here at Bloomberg, technical talks between the US and Iran are ongoing, following renewed hostilities this week, threatening to shatter fragile negotiations. Joining us now from Washington, Bloomberg's Tyler Kendall. Hey, Tyler.
Hey, John, good morning. Well, this White House official reiterated to us that the White House remains committed towards a diplomatic solution, which could ease fears that this conflict is headed back towards an all-out war amid what was such significant escalation earlier this week. That is in line, though, with our analysts at Bloomberg Economics, who say that this recent bout of fighting follows a, quote, familiar pattern where both sides are trying to gain leverage at the negotiating table. Because going into this week, we already knew that talks were set to slow in some regard, as Iran held several days of funeral rites for the former supreme leader who was buried yesterday. But what feels markedly different now at the end of the week is that the U.S. removed that key waiver, allowing Iran to sell its oil to market, as the Strait of Hormuz still remains the top point of contention and the top focal point. Overnight, we heard from CENTCOM disputing Iranian media reports that the country has control over the strait, confirming that the U.S. military has helped to transit through more than 800 commercial vessels and more than 380 million barrels of oil since May. But, John, even as more supply comes online and we've seen this progress, it is being threatened. New this morning, we heard from the International Energy Agency, which said that these renewed hostilities risk derailing efforts to rebuild depleted global oil inventories when it comes to their projections for the end of this year.
Those inventories in some places have been plunging. Tyler, thank you. Tyler Kendall in the nation's capital. More from Tyler later this morning. To build on this conversation, Stephen Cook of the Council on Foreign Relations writing, the president was insistent on a return to the status quo and the Iranians were not willing to go along. There will be pressure on the White House to return to negotiations. Stephen joins us now for more. Stephen, welcome back to the programme. The president's own words, let's just finish the job. What does finishing the job mean at this point?
Well, it's unclear what finish the job actually means and how they would accomplish that. Finishing the job would essentially mean forcing the collapse of the Iranian regime, which I think the president has come to the determination is not really feasible. So this seems like bombast, trying to shape the behavior of the Iranians at the negotiating table. I'll point out that American strikes have gone further than they have before, hitting some infrastructure as a warning to the Iranians that should they continue to fire on shipping along that U.S. naval declared safe zone in the Strait, they'll pay a heavier price. I think this is all about negotiations. I don't think the president is returning to full-on combat with the Iranians, who refused to capitulate during the most intense phases of Operation Epic Fury.
Stephen, how do you get negotiation between two parties who profoundly do not trust each other?
Yeah, this is a real problem. And this is essentially a negotiation about the Strait of Hormuz. And I think the Iranians have made it clear that in the language of the MOU talks about arrangements for transit through the Strait of Hormuz. And they see that as their administration of it. It's a geographic power that they've discovered as a result of this conflict. And they're not willing to give it up, which is why they're firing on ships that are being guided through the southern route of the strait. The United States wants to return to something more akin to the status quo that existed on February 27th. There is huge differences between Iran and the United States on this issue. It's not quite clear to me what these technical committees are talking about, given this gulf between Iran and the United States on the strait.
From market's perspective, they're not exactly looking for some sort of wholesale, long-standing solution. They're just watching how many ships are transporting through the Strait of Hormuz. Is there enough of a U.S. presence and potentially even allies participating in that to protect a certain critical mass of tankers getting through the Strait of Hormuz without getting attacked by Iran, even if there is no agreement?
Yeah, I think that the most realistic outcome here is kind of what you see is what you get. I think the U.S. Navy is going to be involved in providing guidance through this southern route, with the Iranians periodically firing on ships to make a point and try to establish their control over the strait. This is something that could go on for quite some time. As you pointed out, there's a huge differences between these two governments. This may be the status quo. Let's look back to the 1980s and the tanker war. We lived with this for quite some time. So we may yet again be involved in a prolonged operation to ensure the free flow of energy resources out of the region. And it will mean a more consistent American investment in the region than the president even signaled not long after he signed the MOU.
Steve, this goes against the theory that we had a number of months ago, and it came out of the Treasury, and it certainly wasn't original, but it was called Operation Economic Fury, that you'd put so much pressure on the Iranian economy that ultimately they'd have to change their approach to negotiations. Any sign of a change of approach?
No, the president did revoke the license of the Iranians to sell oil, which will have an impact on the Iranian economy. But what has been striking about this entire episode is that the Iranians are neither willing to capitulate on the battlefield nor the negotiating table under very significant economic pressure. This demonstrates what analysts have been saying for a long time. The regime remains intact and willing to apply a lot of pain on the Iranian people to ensure its survival. So Operation Economic Fury has not yielded any greater results than Operation Epic Fury.
Is there a vulnerability, Stephen, that they need to look at? They've looked at economic pressure. It's not worked. Military pressure, overwhelmingly, the American military is superior in a number of ways. That's not worked either. What would work?
Well, what would work would be the Iranian people rising up and bringing down this regime itself. That's what the United States and Israel tried to do to create an environment in which that would happen. But that underestimated the capacity of the regime and its ideological cadres to hang on. We don't know what will happen 6, 8, 10, 12 months from now. There was a significant time lag between the operations against Iran in the summer of 2025 and major protests that shook the regime in December and January. But we have very, very little insight right now as to what is happening inside Iranian society. We know times are tough for the Iranian people, but there's been no sign so far that they are coming out into the streets and demanding an end to the regime.
Stephen, earlier in the conflict, there was some discussion around the U.S. running out of munitions, and that was part of the pressure to relieve maybe some of the most serious bombing efforts. Do we have a latest update on that? Do we have a sense of where that is?
Yeah, I've seen some data on this, and that we have run down by almost 2/3 some of these munitions that we had built up over the years. And that is likely one of the reasons why the president has said, we're going to hit them hard, and then says they're begging for negotiations, a signal that he remains committed to a diplomatic solution to this problem. The munitions issue is a big one, and it is a very significant discussion here in Washington about the evolution of warfare and how these exquisite weapons that take lots of time and lots of money to build may not be appropriate in the age of drones and AI.
Steve, it's good to see you. Stephen Cook there of the Council on Foreign Relations. To Steve's point, the asymmetric nature of a lot of this, that you can basically hijack an international waterway with some cheap drones.
You have to completely rethink how you deploy your munitions and what timescale. Being able to do it rapidly doesn't mean that that is the best policy.
The new normal. I don't know how you all feel about that. This could be the status quo for quite a while.
I think you know exactly how they feel about it.
I'm sure they're not very happy about it.
Yeah, exactly.
Us, them, us, we, they.
Look at the more successful economies in the region. The key to their success is continuity. But the way our Constitution is written, it actually encourages a lack of continuity. And that's a problem. The terms for local government is 3 years. When I first became a congressman, it takes you a few months to learn the business and to make your connections, to network, etc. If, for example, you are not particularly favored in the majority, passing a law in a year and a half is not that easy to do. After about a year and a half, you already hear that there's somebody in your district beginning to campaign and is going to oppose you in the next election. So you have to go back to your district to take care of that. And how much work do you get done?
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Earnings from Delta Airlines just seconds away. We'll get to that in just a moment. Equity futures on the S&P 500 unchanged. On the Nasdaq down by about 1/3 of 1%. On the Russell we're down by 1/10. A snoozy start to this Friday morning stateside. Let's get you some single names, some morning movers. Yahara has more. Hey, Yahara.
Hi, John. Ahead of SK Hynix's debut later this morning, we are seeing some pressure across the memory trade with names like Micron and Western Digital feeling the pressure, but it has been a rough stretch, a choppy stretch for these names as investors rotate out of their biggest winners. And yes, these are the biggest winners in the market this year. So that makes SK Hynix's $26.5 billion U.S. listing a real test for investor appetite. It's already, SK Hynix is already one of Asia's biggest success stories. So now U.S. investors will get a chance to weigh in. Meanwhile, we are seeing Meta shares gaining, outperforming the Mag 7 this morning, up more than 2% in the pre-market after a report from the research firm SemiAnalysis argued the company has the best chance at catching up to OpenAI and Anthropic. It points to Meta's massive AI infrastructure build out and even projecting the company will have more AI compute than both rivals by year end. And we end on this company, CCC Intelligent Solutions. Shares are jumping 7.25% in the pre-market after Reuters reported that the insurance solutions company is exploring a sale. It comes after a difficult stretch, of course, for software companies as investors fear AI disrupting their business. And it has hit this stock especially hard with shares down 30% year to date. John?
Yahara, thank you. Thank you very much. We promised you an update on Delta Airlines. The earnings just dropping. Here's the stock price reaction. The latest from Delta reaffirming its full year profit guidance.
Yeah, for $6.50 to $7.50. The estimate had been $5.95. Interesting to see the shares up on this, and I'll tell you why. Even though it's an outperformance pretty much across the board, those shares are up more than 28% so far this year. The expectation was the bar is so high that for them to out-deliver, to outperform, they had to really deliver something amazing. They did beat when it comes to when it comes to just general earnings. Passenger sales, passenger revenue, however, came in just a little bit light. Where did the outperformance come from? It came from the American Express partnership, increasing 16%, and it came from business travel and premium travelers who saw their bills go up significantly, and they were a lot more active. So is Delta a story for the rest of the airlines and for the rest of the economy? Or is Delta a story of a K-shaped economy where the upper part of the K is doing well enough to offset really big fuel bills that didn't seem to really impede the full year forecast?
The execution is pretty impressive. We came into the year, let's just take oil. Oil came into the year in the 50s. It averaged the second quarter in the low 90s, around 93 on WTI. And this morning, they acknowledged that cost of fuel is still up 50%. So you've seen a massive spike higher in fuel. What does it mean for the broader economy? Ed Bastian saying this morning. I would not anticipate any decline in airfares. That's what the airline business is telling you, because the airline business is going through something very significant off the back of this spike in fuel.
And pretty much every executive in the airline industry, and they are uniform in saying this, will go out there and say that airline tickets have lagged behind inflation for so many years, they're just playing catch up. Prices are not going to go down, and a big key issue has been capacity just hasn't really expanded. So how much are we going to see consumers continue to absorb these higher prices versus pushback? Right now, the top line growth at Delta looks like people are continuing to travel, and business travelers in particular. Interesting to see which areas, aerospace and defense, banking and automotive, were the biggest business travelers. So maybe some big deals in those areas.
Delta this morning up by 3%. Compare and contrast the words of Ed Bastian with the words of the PepsiCo CEO just yesterday. The consumer is worse than we had anticipated, and it's driven mainly by gas prices.
Two different consumers, and that I think is what we're seeing. And how much do you continue to see that bifurcation throughout different consumer-facing companies? Interesting to see who's going to succeed, who's going to fail, and can we draw larger kind of conclusions, or is this going to be a company and part of the consumer story specific issue?
Bramo on tour Monday morning. Don't miss it. 8:45 Eastern Time. Lisa catching up with Ed Bastian, the Delta Airlines CEO, next week.
Yeah, I'm curious to see what he thinks for the forward outlook. They are maintaining their forward guidance, but do they start seeing some pushback from the lower income consumer? Does the lower income consumer fly Delta? That's another question. And how much they see the other aspects of their business increasingly financing what they do when it comes to the bread and butter of actually flying, right? Is it a credit card company, or is it actually an airline industry?
Credit cards with wings, isn't that what you often say?
You know, if it's a beautiful credit card with lots of beautiful seats. And I'm also curious about what we were talking about yesterday, the sort of basic business and how much lower that's going to be, because I think a lot of people would actually be into flying flag.
I'd get seat anxiety. I need to know what seat I'm sat in and where I'm going to be on the plane.
You have seat anxiety.
Seat anxiety.
So
yeah.
how much are you willing? How much are you willing to pay for seat anxiety?
Well, I want to see how big the spread is between the basic price and whether work forces that on us or not.
Okay, this is good. Yeah. Then you could sort of weigh your seat anxiety.
I get one of those dogs to go on the plane with me.
You could peacock.
Get one of those dogs or a peacock or whatever the animal is, so I can get through that seat anxiety of finding out what my seat is on the plane.
Yeah, your comfort peacock. You can borrow mine.
Is that what you've got?
Big time.
I remember when Matt Miller took a Rottweiler on as his comfort pet. Yeah.
And I believe that another member of his family was in the back of the cabin.
I'll tell that story another time. Delta Airlines this morning up by about 3 to 4%. On our radar this morning, the top story, SK Hynix ADR set to begin trading on the Nasdaq today. The company raising over $26 billion, making it the largest ever listing by a foreign company in the US. Elsewhere, Fed Chair Kevin Warsh naming the leaders of the 5 new task forces created to advise the central bank. The leaders include 3 former central bankers, university professors and corporate executives. And finally, Japan's finance minister making a bid to strengthen the country's currency, calling on the nation's pension funds to boost their investments in domestic assets as the yen sits near multi-decade lows. And that right there are some of our top stories this morning. Let's turn back to our other top story then. On Wall Street, investors are waiting the blockbuster US debut of SK Hynix. Jing Yu of Morningstar writing, I do not think the listing itself will largely impact the sector view as a whole fundamentally. We could possibly see some shift in fund flow in the near term. Jing joins us now for more. Jing, welcome to the programme. I just want to build up on that last line. I think it's important. People talking lots about that trade, that maybe you short the local listing and get long the listing here in the US. How do you see flows emerging off the back of this listing?
Yeah, well, I think, the most important thing here, I think we can all agree upon is that, this listing there's massive appetite for the listing, right? I think what investors are looking out for, most importantly right now, is the fungibility of shares. Should shares be fungible, should there be any restrictions on fungibility in shares, we could very well see shares trade at a persistent premium over what they are, over what they're currently trading at now, in terms of Korean shares, and we could possibly see greater demand over there.
Do you see others following suit, given what we've seen and how this has played out and how welcome this listing has been, the amount of demand? Jing, do you see other names following?
Yeah, well, that's definitely a possibility. Right now, I don't think there hasn't been any concrete announcement, but I think as a whole, memory players in Korea do trade at a discount towards their US peers. Part of the goal of this listing is to actually close that gap between the Korean memory makers as well as the US memory makers as well.
There's also been a number of leveraged ETFs and other funds that have launched in tandem with SK Hynix's IPO in the United States to gain access to this in more extreme fashion. Does that concern you from either a creditworthiness or just stock performance basis?
Yeah, well, I mean, I think those listings really play to how strong the AI trade has been over these past 6 months, and also deriving from great investor interest. I think beyond just the leveraged ETFs themselves, we also look at even stocks themselves, right? Margins on these stocks are at record highs, right? Retail participation on these stocks are also at record highs. So there is a lot of interest in these stocks, and and it has resulted in quite a bit of volatility. So we would put more caution towards the stocks as a whole from a risk to reward perspective.
What do you make of the fact that we have seen a bout of volatility that's been pretty extreme in terms of the Kospi and just some of these names specifically over in Asia, at the same time that SK Hynix is able to raise $26.5 billion in the United States with an oversubscribed offering? I mean, how do you explain this dissonance of both an understanding of incredible volatility, leverage, but also really substantial demand?
Yeah, well, I think when we think about the ADR listing, I think it's a mix of strong demand for AI names as well as access, right? Greater access towards Korean tech stocks as a whole. The volatility over the past few months is really reminiscent of how high expectations are in terms of where memory prices can go, in terms of where profits can go for these companies, and perhaps how sustainable these profits are over the long term. And this back and forth between investors as a whole has really resulted in the tremendous movements in the stock. I think more importantly, when we see these profits going up for these stocks, throughout the first 6 months of the year, it really points towards a very positive near-term picture. But I think investors are still debating on the on the longer, longer term views on whether memory is still a structural pricing story or a cyclical pricing story. And we still don't see a very clear answer on this. And I guess that's where a lot of the volatility lies right now.
Jing, best guess. What do you think it is? One or the other as you think about the long-term debate?
Yeah, so here at Morningstar, my base case view is that we should see strong prices well into 2027. There's no supply coming up in the near term, and demand remains robust. However, we are a little bit more concerned with the long term. I do expect cyclicality to return towards the end of the decade, as strong supply comes up in the second half of 2027 onwards. And to us, the AI monetization path here still remains relatively unclear. And we think that the probability of that, positive view coalescing is still not very high right now.
Jing, it's good to see you. Thank you. Jing Ji Yu there of Morningstar weighing in on SK Hynix following a record equity raise for a foreign company, first-time equity raise here in America from SK Hynix.
And it came despite the volatility that we've seen. It came despite some of the warnings that we've heard that maybe some of the memory chip names have gotten overpriced, that perhaps people are pricing in over-optimism in terms of how long you can get these 85% profit margins. Nonetheless, they still saw substantial demand. You asked a great question. Does this open the door to others? Is this saying green light, you don't even have to offer a discount? Because normally you have to offer a discount to where the shares are trading in their home indexes, their home exchanges. This actually was at a 3% premium. So again, it really sort of breaks some molds and gives a real green light to others.
I have a very simple question. Maybe it's easy to answer, but if these guys believe it's a good time to sell, why is it a good time to buy? And that's a question that I would have for a lot of companies issuing equity and debt right now. The supply has really picked up. It's a massive change from what we've seen over the last decade. I know I keep beating the same drum, but I think that's the ultimate question. They've made the decision that now is the moment to issue equity, to issue debt. I get the reason why. Demand is fantastic, but don't you have to question whether this is the peak of the cycle?
Especially if they don't have any need for that cash, because right now the amount of cash flow that the likes of SK Hynix are throwing off is absolutely substantial to supersede any kind of spending plan that they have.
Nasdaq futures this morning down by just 1/3 of 1%, unchanged on the S&P 500. Let's get you an update on news worldwide with your Bloomberg brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, John, thank you. Shares of Delta rising in the pre-market. The airline posting second quarter earnings that beat on the top and bottom lines. Delta also reaffirming its full-year outlook. And tune into Surveillance Monday at 8:45 a.m. Eastern for Lisa's interview with Delta CEO Ed Bastian. Taiwan suspends stock trading and shuts schools and offices in preparation for a typhoon. The storm is expected to dump heavy rain over a vast area and could lead to extensive flooding through Sunday. France is one step closer to a World Cup title, securing a semi-final spot with a 2-0 win over Morocco. The French now take on either Spain or Belgium, who will face off in the second quarterfinal tomorrow. And that is your Bloomberg Brief. John.
Vonnie, thank you. Did you watch this one yesterday?
I didn't watch it, to be fair.
Kylian Mbappe.
Oh, yeah.
Seriously, the window for that goal, for that shot, was like this big, literally, and executed it perfectly.
There are a couple of stars of this particular World Cup. Mbappe is one, Messi is the big one, and then, of course, Haaland, the Viking from Norway, absolutely rocking the social media airwaves.
They are lighting up this World Cup. Haaland versus Kane coming up tomorrow. Up next on the programme, reforming the Federal Reserve.
I'm appointing a task force in each of 5 areas. That'll be taken up by the task force. We've got a task force for that. I've been on a task force or two in my life. It's one of the things we have a task force to do.
I don't mind the list, you know. I think it's a really good list of names. I think it's inspired.
I completely agree. I was really impressed by it.
Doug McMillan on data.
Yeah.
That's pretty cool.
Yeah.
Andreessen on productivity. That makes a lot of sense too.
And job changes. And you have, Merlin King. I mean, you've got a lot of people who have been in the industry a long time who have great perspective.
We'll talk to Kit Jukes of SocGen about that in just a moment. Live from New York City. You're watching Bloomberg TV.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream. And a lot of dreams are, you know, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. You don't start on the third floor or the lobby. You actually have to start in the basement.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers, and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech.
Every weekday, only on Bloomberg Television.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
It's a quiet start stateside in equity markets. Equity futures going nowhere on the S&P 500. On the Nasdaq 100 this morning, down by about 1/3%. In the bond market, 2s and 10s yields bleeding higher on the week, up by single digits, up by a couple of basis points. Down this morning, we're down 1 to 416.82. On 2s, on 10s, still around 450. Heading into next week, next Tuesday is just massive. We'll spend some time on that later in the program. But next Tuesday, we get 5 banks reporting earnings, get CPI in the morning, and a few hours later, the Fed chair speaks. That's quite a day coming up a week away.
Yeah, a key question for people is just how much you do see this inflationary pressure stemming from AI and from other non-oil related metrics. Really edified by what we heard from New York Fed President John Williams yesterday, where he really leaned on the AI component. We'll get that with CPI, and potentially we'll hear that in some of the CapEx plans from some of the biggest banks.
Let's talk about the outlook for the Federal Reserve under surveillance this morning, reforming the Fed.
I'm appointing a task force in each of 5 areas. You'll hear quite a bit more about these task forces. That'll be taken up by the task force. We've got a task force for that. The good news for you is we have a task force for that. We have a task force on that too. I've been on a task force or 2 in my life. It's one of the things we have a task force to do.
So the good news is we've got some details on those task forces. The Federal Reserve Chair Kevin Warsh announcing the leadership for his 5 task forces created to review key aspects of the central bank's policymaking. The list including venture capitalist Mark Andreessen and the former Walmart CEO Doug McMillon. Joining us now to discuss is Kit Juice of SocGen. Kit, various central banks have been through this. More recently, I believe the Bank of England did a number of years ago. What do you expect to be the outcome of these particular task forces?
I'm actually genuinely excited to see the outcome, just because we've come through, you know, since the early 2000s, so many problems for central banks, through from, you know, the bubble bursting at the beginning of the century, then 2008, then the Dubai crisis and the European sovereign crisis, and then on to COVID. And here we are with people asking questions about what the Fed's doing and some of the things that they've been trying to do, and they need to get credibility back internally and globally. Central banks do. They need to get on top of it. And if we're going to go and look and say a bunch of task force on how they communicate, how they run policy, what the limits are to policy, more concretely around what is the plan to exit quantitative easing or vast balance sheets, if they can get their arms around some of that to get some of their credibility back in the right place, then we can move back to a world where we're confident that central banks are going to be independent, or that the most important one can get back to being properly independent, and the whole world's a better place if we can get there.
There's an argument that we should address, get credibility back. Why do you believe they lost it in the first place, Kit?
I think partly they lost it because through the 1990s, being central bank governor was quite easy in the sense that we had all these tailwinds behind controlling inflation. So the growth inflation combination wasn't bad for lots of people. So they wandered around being superheroes. And since then, it's got harder. So, they've strayed outside their remit into looking after other things than controlling inflation, and in the US case, keeping growth on trend or a sensible level, and have kind of got away from what they should be doing, lost control of their balance sheet, done things that were perhaps they said would be temporary and haven't been, didn't sort out QE before we got the next round with COVID. And just sort of left themselves open to criticism from all sorts of corners. And now, frankly, the US has too much inflation and everybody can see it, and they need to get their arms around what they want to do about it.
It was striking to me how many people are on these task forces that are not from the United States. They're from global central banks and generally just outside of the central banking universe. Doug McMillon, John was mentioning, the former CEO and president of Walmart. What do you make of that? That the central banker from Brazil, the former central banker from India, Mervyn King, the former central banker from Bank of England. How much are we looking at sort of a tone that's going to be set for central banks around the world?
I hope so. I mean, it's in a sense, it's only surprising when the US does it and includes people from everywhere, because the US has so many people at home who are good at things. But I think it's a very good thing. And let's not make the mistake of thinking the US is the only central bank that needs to sort out where it stands in the kind of in the next phase of the global economy and get in the right place for some of the challenges we're going to get, from AI, from investment in AI first and then from AI afterwards. And some of those things we get from a world with more protectionism now, very clearly. I think the more global it's seen and the more it becomes something that's sort of kind of a new blueprint for where central banks might go, the better it would be. But we'll kind of have to see where it gets to for that.
Earlier this year, there was some speculation that some investors were finding the dollar less desirable because of concerns around central bank independence, that on the margin, this was shifting people away from the United States. Do you think that some of the shifts that we're seeing from the Federal Reserve could reverse that? Do you expect that to sort of have any market ramifications over the short term? I haven't seen much evidence that any of it was happening from the data so far, in the sense that foreign appetite for US assets has been very strong, largely because they've had better yields and better growth, depending on whether they're bonds or equities. But yes, lots of people talked about it. I think this is the kind of measure that can, if done right, and we'll have to see how it works out, completely put that to bed and restore confidence in the dollar's position in the world.
Kit, do you think, and this is the ultimate question, that this central bank can hike interest rates before these task forces wrap up their work?
Yes, they can, because if they have to, they will, in the sense that I think for now the plan is to do nothing with policy, stay on hold. But if they start looking like they're losing control of inflation over the course of the next year or so, I think the pressure will just grow and grow. I think that's what we learned from the minutes of the last FOMC meeting.
What does losing control look like, Kit?
It means looking as if we're going to go higher inflation or stay here on inflation and not ease back with oil prices lower.
Kit Jukes of SocGen. Kit, thank you, sir. Appreciate it. Above target for 5 years, the pressure on this institution. I think a lot of this is inspired. I like that on communications, they've gone to the former central bank president of Brazil. I like that because I think that DM central banks are facing EM dilemmas continuously, particularly over the last several years. We've both said we like that Mark Andreessen is looking at productivity and jobs because tech will have so much influence over that in the years to come. And also, is there anyone out there that knows more about pricing in America and inflation than Doug McMillon, the former president and CEO of Walmart?
And the data, because ultimately they've got such an incredible footprint to really see real-time consumer activity. How much is this Federal Reserve in a new iteration post-task forces going to be using private market data in an increasing fashion to give them some sort of real indicator of exactly how the consumer is doing? A lot of people looking to this. I think what Kit Jukes was talking about there is really important, which is It kind of sets a tone for the rest of the world when you have global central bankers sitting on the seats in these task forces. This isn't just a Federal Reserve that's reassessing its function. It is clearly setting a tone for the world. And that, I think, is really interesting. And you saw that over in Sintra when suddenly everyone was getting on the train that forward guidance was useless. So is this a shift in just a market cycle, or is this a shift in central banking policy that can get it stated around the world?
Earlier on this morning, I said, if you want to make a fool of someone, ask them for a crude forecast, right?
Yeah.
If you want to make a fool of a central banker, ask for a forecast. And that's kind of where they are right now, scarred and burnt by making some forecasts that turned out to be terribly wrong.
Yeah, the dot controversy and whether the dots will get thrown out and what exactly will be their tool of signaling. I think the key is just reaction function, and that, I think, is what a lot of people are struggling with right now.
Coming up next, we'll catch up with Lisa Shallett of Morgan Stanley, Ed Mills of Raymond James, Stephen Trent of SDT Capital Advisors, and Ed Al-Husseini of Columbia Threadneedle. The second hour of Bloomberg Surveillance is just around the corner.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
As an exchange, what can you do to make it more attractive to be a publicly traded company?
Talk to our customers. We spend a lot of time with our listed companies, listening to their concerns, particularly the offices of the CFO, head of IR, listening to their pain points, general counsels as well, and then act as an advocacy group for those companies to really focus on structured reform to allow a company to tell their story in the most efficient way possible and reward them for the good disclosures that they are making in the market.
Is there any sort of financial innovation that you could drive to get more companies to list? Tokenization has come up.
Well, we did announce our tokenization initiative earlier this year. We already built the technology, we've already done a variety of proof of concepts. It allows for instantaneous settlement, 24/7 trading. It importantly allows for the rights associated with a share to move into that electronic form, but it is going to be a platform that runs in parallel to our more traditional exchanges.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker Playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia Trade.
This is Wall Street Week.
Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Ultimately, the economy is doing fine enough right now.
The Fed
can shift pretty quickly as events shift.
They have to get credibility back, and I think focusing on inflation is a way to do that.
We're going to need to see a few hot inflation prints before they do anything.
I think we will have a period of some pretty strange inflation data over the summer.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. The second hour of Bloomberg Surveillance starts right now. The scores look like this. Equity futures on the S&P 500 just about positive this morning. We're down by 0.25% on the Nasdaq. The headline from South Korea's SK Hynix raising more than $26 billion, a record first-time equity issue from foreign company here in the United States of America. Elsewhere, the earnings are starting. Delta Airlines reaffirming full-year profit guidance. The stock is up in the pre-market by 0.8%. This guidance first offered at the very, very start of the year. The fact that guidance has stuck, even with everything that's happened with costs, is pretty impressive.
The fact that they had the biggest fuel cost in their history and they could still overcome that, supersede those extra expenses with an increase in revenues and maintain their full year guidance is setting people into the shares. Even after a more than 28% gain so far this year, Delta has been the leader when it comes to the major airlines in terms of performance. Key question will be how much is Delta setting the tone for the rest of the airline sector, for the rest of consumer-facing retailers in the United States, and how much is this a story of the K-shaped economy? And it sounds so cliche that I'm almost cringing at myself, but still, people who have money at the upper income levels can spend and are getting more money, and people at the lower income are getting stressed.
I've said it before, it's the Delta Airlines economy, right? Half the country thinks it's Group 1, and the other half is really struggling and can't even afford the back of the cabin, particularly at Delta Airlines.
So who is the person who can afford business, the lie flat bed, but is the basic business, and is it going to be stripped out when it comes to all of the extra bells and whistles? Look, that's, I think, going to be an interesting question. How is the American consumer getting parsed out all of these levels? But still, there is a corporation that is spending a lot of money, and that is in the aerospace industry, that is in the automotive industry, that is in the finance industry. That also helped support Delta. And again, setting the tone for why the economy has continued to do well, even as people really don't feel good on average.
It's a message for the Federal Reserve from Ed Bastian this morning. Delta Airlines CEO, I would not anticipate any decline in airfares.
A lot of people have been talking about how these prices are going to stick. The airline industry in particular has talked about how airline prices have not caught up with the inflation overall. They've lagged behind, so they're not going to come back down. That said, it's not just oil prices. Inputs, cost inputs are rising all over. We heard this from John Williams, tied to AI, tied to new investment, tied to new technology more broadly. And clearly, you're seeing that in the price.
Stock is up by almost 30% year to date. It's up by almost 1 percentage point so far this morning. Coming up on Monday, 8:45 Eastern Time. Don't miss it. Bramo catching up with the Delta Airlines CEO, Ed Bastian, Monday morning at 8:45. Looking forward to that. Coming up this hour, we'll catch up with Lisa Shallard of Morgan Stanley, warning chips may be overbought ahead of SK Hynix's US debut. Stephen Trent of STT Capital Advisors breaking down the latest earnings from Delta. Plus, we'll catch up with Ed Al-Hosseini of Columbia Threadneedle, with Fed Chair Kevin Walsh announcing his task force leaders. We begin this hour with stocks flat as Wall Street braces for SK Hynix's record-setting US listing. Lisa Shallard of Morgan Stanley writing, we advise revisiting the Mag 7 for potential opportunities, especially in light of our view that semiconductors are meaningfully overbought. By comparison, we believe hyperscalers look downright cheap. Lisa joins us now for more. Lisa, let's start with one before we get to the other. Chips, meaningfully overbought. What gives you that idea right now, Lisa?
Oh, my goodness. I mean, all anyone needs to do is look at some of these charts that have gone completely hyperbolic. Whether you're talking about, the Philly Sox over the last 8 to 10 weeks, we're literally at certain points, we're up literally 100% on the year. We've obviously had some churn and some pullback recently. But, whether you're looking at the participation in the Philly Sox, you're looking at semiconductor ETFs, you're looking at levered ETFs, it's all part of this same trade. And so much of it is related not just to swollen order books in across the industry, but quite frankly, folks extrapolating the sustainability of pricing and the pricing power, obviously, that companies like Micron have been able to embed in their earnings and their huge earnings surprises.
Lisa, so many people are waiting before they get out to see a reduction in capex. They're waiting to go to the hyperscalers once they see a reduction in capex. You noted that early this week. Why not wait until that?
Because I think that we're in the early innings of the beginning of that deceleration in the capex process now. Like everything, what we tell people is you can't market time these things to the day. You have to kind of sense changes in the second derivative, and we're sensing it. I mean, just look at some of the news flow that you're seeing from companies like Meta. It kind of signals to you that there are conversations about the rate and speed and return on investment on some of this capex, and how can they pull forward their monetization strategies.
Lisa, yesterday we talked a lot about Meta now creating their own chip, Meta trying to be much more like a hyperscaler. Do you think that some of the reduction in capex that you're feeling out not only is coming from the likes of Meta saying maybe we'll sell some of our compute capacity, that's a better proposition than using it internally, but also because of pushback that you're seeing in financing markets, particularly in fixed income?
I'm not sure that the way these guys are behaving has to do with access to capital, just quite bluntly. I mean, I think that there's ample capital still available broadly to this trade and to most of the companies in it. I think this is much more about engineering and economics. Whenever you have a scenario where supply chains get bottlenecked and folks are extracting excess rents, as some of the memory chip guys are, the engineers get to work. And that's what we're seeing. And we're seeing the AI data center tech stack, if you will, being re-engineered to include lower cost proprietary chips that many of the hyperscalers are now designing themselves and having manufactured white label. They are using a combination of open source as well as frontier lab models, all in the effort to compete on price and essentially to consume less energy per token.
Do you see us entering a phase where AI is less inflationary as a result, where there is more discretion when it comes to how much hyperscalers in particular are willing to pay for chips, for other particular inputs, that actually could reduce how much it's really adding to the U.S. inflationary backdrop?
Absolutely. I mean, I think the front end of this story is NVIDIA, to be honest. I mean, you roll back the clock a year, almost every hyperscaler felt that they had no choice but to, buy NVIDIA GPUs exclusively and continue to queue up for the latest and greatest addition. I think now, those GPUs are actually net losing total market share of data center AI designs, and some of these proprietary ASICs are taking share. And so I think what we've seen with NVIDIA, and the stock has kind of stalled out over the past 6 to 9 months as a result, we're going to start to see with some of the other semis.
So, Lisa, we're talking about 20% of the index, that's semis on the S&P 500 right now.
Crazy.
For some people, 100% of the sentiment, the enthusiasm for this market. Where does it leave the index outlook, Lisa, if you believe that big chunk of this market is overbought?
Yeah, so what we have to remember is that the market is also concentrated on the other end, right? It's concentrated in some of the hyperscalers that have sold off. And so what's happened is that, as we've had this churn, right, we've had this huge move and the change in market capitalization of the semiconductor industry from about 3% of the index to 18%, as you point out, and the hyperscalers have actually lost share of the index, and we've quote unquote deconcentrated, and that's kept the overall index in a zip code. I think if this intra-tech trade continues to churn, right, we can absorb, a 10, 20% decline in semiconductors, as we already have in the last couple of weeks, and not have a lot of damage to the headline index. That's one of the good things, if you will, of having the hyperscalers be as big as they are as a group.
Lisa, it's good to see you. Enjoyed the note earlier this week. Thanks for joining us this morning. Thank you. Lisa Shannett there
Have a
of
great
Morgan
weekend.
Stanley. You as well. The message pretty clear here. Don't wait for a reduction in capex to get out. That's the message I took away from Lisa's work this week.
Yeah, and that some of what we've heard from Meta in terms of selling compute as well as developing their own chips is sending a really loud signal. Also, the idea that you're seeing headcount reductions at places like Microsoft, they say it's not necessarily tied directly to AI investments. Nonetheless, clearly shifts going on to rationalize some of the spending, which is a clear departure from where we were, say, a year ago.
My spidey sense was up too with regards to Meta. My takeaway from our interview that we had here at Bloomberg in the last 24 hours was just a lack of conviction. And I found that unusual for someone like Zuckerberg, who usually is pretty sort of full force thinking about the future and with tons of conviction and confidence. And I didn't sense that at all about where that spend was going and what it would be used for.
Which maybe is a reason why they're selling some of it. Also, after a couple of flops. Remember, they changed the name to Meta because the metaverse is going to become the next best thing. And needless to say, it hasn't. And now question, how do they really justify some of their expenses? Is it going to be becoming very much like some of their competitors with respect to hyperscaler-esque types of characteristics?
A bit of confusion around that name at the moment, that's for sure. Equity futures right now, the S&P 500 just about unchanged, turning positive just moments ago. Let's get you an update on news worldwide with your Bloomberg brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, John, thank you. Volkswagen is cutting its model lineup by as much as half as part of a savings push. The New York Times reporting the German automaker is dealing with falling sales and increased competition from Chinese automakers. Shares of EasyJet rising in London trading. The budget carrier receiving a fresh takeover offer of $7.7 billion from private equity firm Apollo Global Management. That beats out a rival proposal from Castle Lake. Goldman Sachs tightening its personal trading rules, restricting employees from betting on a range of prediction market contracts. According to a document seen by Bloomberg, the policy prohibits trading on companies, election outcomes, or the performance of any financial market. And that is your Bloomberg brief. John.
Vonnie, thank you. The good news for the degenerates, as they call them, the betting, the gambling bros, over at Goldman, if you're over there, is you can still bet on sports and entertainment, apparently, based on this memo that we've seen here at Bloomberg. But repeated violations of the policy might lead to a firing or closing of a member's account. In cases of improper trades, the bank can also require staff to forfeit profit over $200 or donate it to charity.
I want to understand the backstory to this because I am assuming that something transpired to come up with these very specific prescriptions. And honestly, I'm not that surprised. I mean, it is a huge liability, especially at times where people are saying that prediction markets are increasingly rife with insider trading and people who have other knowledge. I mean, why would you expose yourself to that liability?
Some of the bets that I've seen, away from prediction markets, but some of the bets, just the sports gambling of the last week, like people who would bet $100,000 on Haaland not scoring at a game.
Yeah.
Can you imagine the experience of that game? I sit at home, I enjoy the football. Having that much money online, hoping that a certain thing doesn't happen that some people might not even think about?
Some people are created differently. Some people, like people sitting at this desk, might have anxiety that would create such a terrible viewing experience that it would not be worth any money in the world.
I've got a buddy who had several bets on about a score or assist, and there were 4 or 5 different players involved in this in the last week or so. And they were just watching the French game, waiting for Elise to either score or assist to complete this bet and get the payout.
You know, I don't know. I can't relate.
It's not how
No, and I wonder how it's going to change the sport, and also raising questions about some of the referees and some of the calls.
Yes.
And that also leads to other potential issues, but I digress.
Yes, I won't go there. Equity futures right now, the S&P just about unchanged. Up next on the programme, the cost of war hitting home.
I don't care about the midterms. People understand it. They know that, very simple, Iran cannot have a nuclear weapon. I'm doing that for the world. I'm not doing it just for us.
Up next, Ed Mills of Raymond James.
investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
So let's go cross-asset. Equities this morning just about unchanged on the S&P, down on the Nasdaq by 2/10. That's the equity market picture. Here's the bond market story. 2s, 10s and 30s heading into next week with CPI and Fed Chair Kevin Walsh's testimony on deck. 2-year yields near the upper end of the recent range, close to 420, 416.82, yields down a single basis point. Check out the move in crude. WTI and Brent facing down a couple of things this morning. We're up by 0.4%. Some record supply coming out of the UAE. That's notable. And this headline is too from the New York Times. Qatar in talks with the US and Iran to de-escalate. Really matching our reporting here at Bloomberg to some extent, reinforcing it, that the talks are ongoing between the two sides.
Yeah, and this has been a real question about what kind of ability there is for two sides to continue negotiations when there is no trust. We did have reporting saying that there were technical talks ongoing. Again, the goal here, just reducing the frictions to allow tankers to go through and potentially create some more calm in the region.
Under surveillance this morning, the cost of war hitting home.
They're going to outweight me, we'll outweight him. I don't care about the midterms. People understand it. They know that, very simple, Iran cannot have a nuclear weapon. I'm doing that for the world. I'm not doing it just for us.
So here's the latest this morning. The war in Iran weighing on Americans ahead of the midterms. 58% of voters saying the war is not worth the cost. That coming from an FT poll. Bloomberg's Tyler Kendall joins us from Washington for more. Hey, Tyler.
Hey, John. Well, this represents a significant roadblock for Republicans as we head into November, and the diplomatic efforts to resolve the conflict in Iran feel like they are effectively stalled. Now, we've heard from President Trump try to find ways to retake the narrative when it comes to some of the economic fallout related to the war, including in the last week renewing threats to investigate big oil companies, and just yesterday announcing that a series of privately owned gas stations would be dropping their prices. But as the war continues to drag on, it's only compounding the domestic risks here at home, as this FT poll goes on to find that just 36% of voters approve of the job that President Trump is currently doing, down 2 percentage points from the previous month. Now, for context here, Democrats only need a net gain of 3 seats to retake the House and 4 seats to retake the Senate, though that may be a bigger uphill battle, because while Republicans are battling these issues, playing defense basically on the economic component that's been compounded by the war, Democrats haven't necessarily seized the moment. John, we have a new story out on the Bloomberg terminal that examines how party infighting, like what we're seeing play out in real time when it comes to Maine, is just slowing down Democrats' efforts to retake the chamber.
Tyler Kendall with the latest. Here's the latest from Ed Mills of Raymond James, writing the midterm elections loom large, limiting what can be reasonably achieved in the coming months. Ed joins us now for more. Ed, welcome. Let's just build on that particular quote. Is there evidence right now that the midterms have shaped the president's approach to this issue?
I think so. I think that there has been a lot of discussions with clients at Raymond James that before the midterm, he has to find an off-ramp. That part of the reason why we are in a ceasefire and why he continues to insist that the ceasefire is ongoing, even when there's kinetic activity, is a look towards the midterms. A desire to reopen the strait, a desire to cut these deals, to get as much gas and oil flowing to lower the price at the pump. He is the one that made it such an issue to say, I brought down the price at the pump. For it to have doubled for a lot of Americans since the beginning, he has to change that if Republicans have a fighting chance come November, John.
Do you get the sense that where prices are currently is good enough? That essentially this is the status quo that is acceptable to this administration to maintain going into the midterms?
I think that they need it to come down, and I think it's going to be about the rate of change, about the absolute dollar cost. It is a very strange thing that this is probably the one thing that most Americans look at and just kind of see it roll up as they're filling up their tank. There's no other metric out there that gets this much attention by the average consumer. I think if the election were held today, Democrats would win a majority in the House, and it is buoyed by some of this conversation we're having. I do think Republicans maintain control in the Senate. It would have to get worse from here for Republicans for the real shot for Democrats to have that majority in the Senate.
Do you get the sense that there's any focus in Washington about what's going on with Russia not exporting refined products, affecting diesel prices pretty much across the world, more particularly in Europe, but also on the margins here in the United States? I mean, that's one of the biggest inputs, direct inputs into product prices in the United States. How much do you see any kind of effort dealing with another conflict that's been ongoing for quite a while to ameliorate some of those prices?
Yeah, Lisa, I look to kind of a lot of the conversations that are going on here in D.C., and that comes up, but it's not a top issue. What I'd be looking at is that Trump is supposed to host Xi in September. There is some pressure that China could put on Russia. There are other levers that Trump is trying to pull, but that might be his best one. There's not a lot more he can do there without escalating that as well. So, yeah, it's on the conversation agenda, but it's not kind of a top issue. There is a recognition that it's a problem, but what to do about it, not very many good choices.
Ed, I just wanted your take on the recent New York Times reporting. It came out just moments ago, suggesting that Qatar has been in talks with Washington and Tehran to de-escalate the crisis. The headline of this piece reads, mediators are trying to pull the US and Iran back from the brink. How close are we to the brink? Do you think, given what you just said about the influence of the midterms, is this a president really willing to renew this war, restart things again?
Yeah, so Jonathan, what we've told a lot of our clients at Raymond James is that expect to muddle along through this midterm election, that we're going to go through this cycle where we're going to have some kinetic activity, we're going to have a phone call, we're going to have a resumption of talks. It's usually one of our allies in the region that is trying to put these together. And then we get into the ceasefire, then we have talks, those break down, and we repeat that cycle. To me, the big question is, after we get through this midterms, one of the things I'm hearing more and more from clients is a concern that that's actually when things ramp up, that Donald Trump is going to say, I tried for 6 months, they wouldn't negotiate, we have to go hard. After the midterms, he is never going to be on the ballot again. So does he have the kind of limits come off and things escalate? And that, for me, is the big market debate, and whether or not that is going to be the issue we have to deal with in November in the immediate aftermath of the election.
How would you come down on that current debate? What would inform your particular forecast on that issue?
My view is that when Donald Trump has put together military kind of force, he uses it. I don't think that there is a opportunity to kind of have the bid-ask spread condense here between the United States and Iran. I think it's going to take some more time. And I do think that, unfortunately, he probably has to escalate for there to get a final agreement. My hope is that it's not long, but I would put myself in the camp as more likely than not after the midterms. This is where it truly does flare up, John.
As we do head into the midterms, I do just want to get your take quickly on what you make of President Trump firing Democrats on the Election Commission and the resignation of a Republican member. How significant is this?
Well, I think it's, Lisa, one of the things that we looked at is the recent Supreme Court decision on the FTC, the Slaughter decision, gives him enormous powers to fire folks at will. One of the big questions we get at Raymond James is how long, if a Democrat were to win in 2028, how long would it take for the pendulum to swing back for kind of a much more aggressive regulatory agenda? And the answer is it has gotten significantly prolonged because of that Supreme Court decision. So this election firing is the latest example of his ability to fire folks at will. And I know it's a while away, but if we go into the 2028 election and a Democrat wins the presidency, but Republicans have the Senate, there's going to be so many boards and commissions and functions in the United States government where the Democratic president's going to have a choice. They're either going to let the Trump individual continue to run that, or have no commission at all. That's going to be the FTC, the FCC, the SEC. You go down all that alphabet list. So the big question here to me is, how long does that Trump deregulatory agenda continue? And because of the Supreme Court, it's a lot longer than most investors really appreciate.
Ed, it's good to see you. Always is. Thank you, buddy. Ed Mills there, Raymond James. Thank you very much. 2028, the general. That's going to be the focus in a few months' time, you know. Very quickly, primaries and the general just around the corner.
It used to be that who was president mattered less because the muddle in Washington was that much louder. Increasingly, the presidency has quite a bit of power, so that it's going to be an incredibly important election.
Coming up next on the program, Stephen Trent of STD Capital Advisors breaking down the latest earnings from Delta. Plus, Yahira has your morning movers. Meta higher following a positive report on its compute business.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
Stocks unchanged on the S&P, going nowhere this morning. We're down about 0.25% on the Nasdaq 100 as we count you down to the opening bell, a few hours away from the cash open. Let's get to your single names, your morning movers. Yahira has more. Hey, Yahira. Yahira is not available right now. We'll try and call her again soon.
Yeah, call waiting.
Okay.
Do.
Am I put on hold?
Yeah, she was put on, yeah.
Okay.
Do you want me to sing the music?
Try and figure that out.
The music?
The elevator music?
Yeah.
Have you got some?
No, please, actually. Nobody needs to hear that this morning. No, it's fine.
Okay,
no problem.
we'll come back to Yahara another time. Still waiting. I don't know if she's there or not. Anyway, all right. On our radar this morning, Delta rising in the pre-market after exceeding earnings expectations for the second quarter and reaffirming its outlook for the full year. Lisa's going to catch up with the Delta CEO, Ed Bastian, this coming Monday at 8:45 Eastern Time. Shares elsewhere of EasyJet getting a boost in London trading after receiving a $7.7 billion takeover bid from Apollo, the proposal surpassing rival Castlelake, opening the door to a potential bidding war. And finally, SK Hynix raising more than $26 billion ahead of its trading debut on the Nasdaq, making it the largest first-time share sale by a foreign company in the US and the third biggest listing in history. Just absolutely amazing.
Yeah, and it comes, Lisa Shallett really setting the tone, saying that the pendulum is swinging away from semiconductors back to the hyperscalers. It seems like a lot of people are getting a bit queasy by how high valuations have gotten and how much people have just plunged into these names with leverage when it comes to retail trading. I just wonder at what point you start to see this crack in a more fundamental way. If there is an effort to lower costs, which we're seeing increasingly, how much does that start to filter into expectations for semiconductors versus the offset multi-year contracts at very high levels because of memory constraints that continue to be ongoing?
So we've had the biggest foreign debut in the US, we've had the biggest IPO we've ever seen, and we had an $85 billion equity capital raise from Alphabet, all of that in the last 2 months. And we might still get Anthropic and OpenAI in the next 12. It's kind of wild, isn't it? More still to come.
You raised a point earlier that I think is worth sitting on, that what does it tell you if every company wants to raise money right now, even if they don't need it? Some of them really do need it, but what if they don't, which is sort of SK Hynix's issue? And it gives you a sense that they're sort of seeing, I don't know about a top in the market, but definitely conditions are favorable for them. That is the polite way of saying it. Does it mean that it's going to turn south? Does it mean that we're going to trade sideways for a prolonged period of time? Unclear. What it has meant is incredible volatility in single names. And that, I think, is really notable because even though the overall index implied volatility has remained fairly low, single name volatility has surged to the highest on record relative to the index and gives you a sense of how difficult it is for anyone to be able to game out specific stocks. And I still keep thinking that's a good tell of how the story is shifting, but it's shifting under the hood.
To some extent, it is a judgment on current valuations. Let's just put it that way, that so many people want to issue equity right now and issue debt. I know what they want to use it for. I've got all of that. But ultimately, if they want to sell now, you've got to ask yourself if it's a good time to buy.
Yeah, is it a peak enthusiasm? At the same time, cycles are born of these, and cycles can continue a lot longer than the shorts can remain bearish, as I'm reminded again and again and again. And, you know, ultimately...
I thought you got bullish now.
No? I just...
On the fence. Bullish in technology was the last time you phrased things for us.
I think that I don't make market calls. I will say that to be very skeptical of some of the advancements, if you've played around with any of these tools, is to be naive. This is going to be a world that's shifting, but I am not sure exactly how it's going to play out. I don't make calls.
I get it. I don't have an opinion on anything.
Oh, okay. All right. So you're trying to say that, like, I'm making a call. I'm just not making a call.
I don't have an opinion.
That is the biggest load of exciting information I've ever heard in my life.
Let's turn back to Delta. I don't have an opinion on airlines either.
Anything.
The first US airline reporting results following a full quarter of capacity reductions and price spikes due to the war in Iran. I can have a view on food and football, can I? I think so.
Vacation.
Ed Bastian, the CEO, saying this: we delivered $1.4 billion in pre-tax profit while absorbing the highest quarterly fuel expense in our history, reflecting broad demand strength, growing brand preference and momentum. Stephen Trent of STT Capital Advisors joins us now for more. Stephen, good morning. Good to see you.
Good to see you. Thank you for having me.
First reaction, sir, to the numbers we got from Delta earlier on this morning. What's your takeaway?
Yeah, look, I think the numbers were solid from a fundamental perspective. They did $1.56 per share. That was a penny above our forecast. It was 6 cents above the street. Unit revenue was very strong. And I think that's the story people are talking about. Are these carriers maintaining demand with everything going on? Are they able to raise unit revenue enough to offset what's happening with jet fuel kerosene? I think the answer is yes. The action in the pre-market suggests something a little different, and perhaps elements of the street were looking for a guidance increase, which didn't happen.
Don't you think it's impressive they were able to maintain guidance, given they, in their own words, experienced the highest quarterly fuel expense in their history?
Absolutely. I think from a fundamental perspective, the numbers look very good. The guidance looks solid. You know, 650 to 750 a share is above this street at 597, and we're actually a little bit below consensus. So that in itself was a feat. You know, if we go back 2 months ago, 3 months ago, I think the street was looking for big guidance cuts. You know, what's going to happen with fuel? They'll raise fares too much that it's going to start hurting demand. You know, we start getting into these subtleties of the K-shaped economy. You still have premium and co-branded card remuneration outstripping main cabin. And I think that's the driver, and that's going to continue to be the driver.
Yeah, how much can that continue? I was looking, actually, that passenger revenue came in light and everything else beat. And the reason why you can have the bread and butter of the business, which is passenger tickets, not beat and still have a massive profit beat is because of American Express. It's because of some of these other partnerships that have lines of revenue. Is that getting to be kind of the driver of profits going forward? I mean, I know it's not the major driver, but how much do you see that as sort of the make it or break it of which airlines are successful going forward?
Yeah, absolutely. I think that is a key point. You know, the 16% growth in American Express co-branded remuneration over the quarter is a big deal. I believe around the order of $2.4 billion in the quarter. So premium passengers are still the anchor. You have the top 10% of U.S. consumers basically driving all the demand. And not all of that demand is coming in premium cabin versus main cabin. Exactly, you just said, a lot of it is now coming from co-branded and loyalty. And I think if you're a network airline versus a discount airline, that's exactly how these carriers have been able to de-risk their earnings streams since COVID. If you look at what they've done in cash flow from ops, there's been a massive increase in their cash flow from ops.
What does that mean for the discount airlines, for the likes of Frontier, for the likes of JetBlue?
Yeah, so, you know, we think it's a tough one for them. You know, you look at what's happened versus 2021, for example, Frontier's cash flow from ops is down 85 some odd percent if you look at its latest 12 months cash flow from ops versus 2021. And that's in nominal terms. Southwest is up a mere 3%. So if you inflation adjust, that's also down. You look at United, on the other hand, up 360%. American Airlines up 591%. So this whole thing we've been seeing with premium driving the train, we've seen this broadly in earnings wallet share. You know, the network airlines now are practically driving all the earnings wallet share. Okay, Southwest is still profitable and Frontier is improving, but they're not nearly as strong as the others. So I think that's exactly the reason you're seeing the likes of Frontier and others trying to add premium. Are they going to add enough premium? Are they going to add enough co-branded card like United Airlines? I don't think so.
Well, and can they get the corporate clients? I mean, that's the other issue, because corporate really drove a lot of the earnings that we saw from Delta. Can you get that kind of relationship if you don't have the footprint and, frankly, you don't have the same type of long-standing reputation?
Yeah, I think that's exactly it. I think it's really hard. You know, if you don't have the premium lounges at the airport, you don't have global capillarity, both directly and through global alliance partners, and a long history of premium cabin. You know, if you've traditionally been a domestic airline that had sold discount seats pre-pandemic, it is very hard for you to become that different animal. So I think the path is going to be challenging for the discount airlines versus the network carriers.
That raises a big question. You're not in the stuffy seat over at a bank anymore. You've got flexibility to tell us what you think about the world. Apollo versus Castle Lake for EasyJet. It's not a name you've covered historically, but what kind of business are these guys getting themselves into? What's your message to them?
Yeah, that's actually a little bit of a tough one. I mean, you know, airlines, generally speaking, are, you know, they're dangerous, no? I mean, on the surface, they're simple businesses. So everybody thinks they understand how the businesses work. But getting down in the weeds and the subtleties and the way these things trade and the undercurrents that I was just mentioning about premium and co-branded can get really choppy. So I've seen over the years, you know, private equity get burned. Maybe you have some instances where you've had some really powerful activist shareholders come in and do a reasonable job in terms of share price reaction. You can say that, for example, with Southwest, even though Southwest is still not getting the job done in terms of their cash flow from ops. So this EasyJet thing, I saw the headline. I would advise them to proceed with caution. This is a tough space, and that's a tough segment of the market as well. Maybe if we were talking one of the network carriers, I'd be a little more comfortable.
What's one of the headlines? What's one of those quotes? The best way to make $1 million, start with $1 billion, buy an airline. Right? I forget whose line that is, but ultimately, that's how tough that business is.
Yes. I like that you have no opinions.
I got no opinion on this.
It was very clear. I love the way that you asked these questions. You're like, what are they getting? What would your message be? And Stephen's like biting his tongue. Like, what are you thinking?
He told us what he thinks.
Exactly.
It's a really difficult business.
Yeah, I mean, we see that time and time again, and especially if you're trying to break in against some of the behemoths in the industry.
You ask people what their favourite airline is, they give you the same answer all the time. It's Delta Airlines. I like the stock.
Delta and United.
Right?
Those are the two.
You've got a different view, though, and I wanted to finish there. Your top picks in this space, it's not number one, it's not Delta. It's something else. Why?
Yeah, we're like a modest overweight in Delta. Kudos to them. Great airline, but it's harder for them to surprise the street versus others. I think the pre-market activity is showing exactly that. The one we like the most is Copa Airlines in Panama. And if you look at Delta doing a low double-digit margin on 2025, for example, EBIT margin, Copa's EBIT margin is in the low 20s. It's levered 0.6 times. It's got a 4.5% cash dividend yield. And in a lousy year, it's going to do $200 million in free cash flow. So for an airline that has, a little more than 100 planes in its whole fleet, we think it's got a moat around its main hub down there in Tucumán Airport in Panama. So this is a carrier that, within the aviation group, comes as close to we see as buying it and going to sleep well at night, which is impossible in aviation, but I'm saying it gets close.
I have no doubt that that's now under Lisa's coverage. And that she's already looking for flights to Panama.
St. Andrews State Park, Sea Dragon, Pirate Cruise.
There we go.
I'm looking relaxed on the stunning beaches.
Appreciate
Dolphins.
it. Stephen Trevor, Stevie Capital Advisors. It's just depressing. All these great places Bramo gets to go.
I'm going to Atlanta on Monday, please.
Okay. What's wrong with Atlanta?
Absolutely
Fantastic
nothing.
Barbecue.
Fantastic.
What's wrong with you?
Barbecue.
Yeah, good food.
Oh, really?
Yeah.
Have you spent a lot of time there?
I'll give you some places. I've been a couple of times. I'll give you some places to go. Yes, sure.
Please, that would be great. No, actually, no, look, I'm not going to do a channel check, although if you're going to invite me to Panama. I do think it's interesting. South America definitely getting a lot more clout, especially as people try to go there more. And you see that in the business routes, too, because sometimes these routes actually track where people are thinking about trade and business partnerships increasingly in South America.
The Brit telling the American where to go in the South.
I love this. This is great. This is fun.
All right. Let's get you an update on stories elsewhere this morning. With your Bloomberg brief, Bonnie Quinn has more. Hey, Bonnie.
Hey, John, thank you. Anthropic appointing former Fed Chair Ben Bernanke to its long-term benefit trust, a governance body designed to safeguard the startup's public interest mission. The trust will advise management on decisions around AI risks and impacts. S&P Global downgrading Oracle's rating to BBB-, one level above junk, citing the company's growing spending on AI. The agency says Oracle's rapidly expanding infrastructure business is increasing its overall credit risk. Netflix is looking for ways to increase subscriber engagement. The Wall Street Journal reporting the company is considering adding live channels that would continuously stream certain programs. Netflix is also exploring bundling other subscription-based services. And that is your Bloomberg brief. John.
Bonnie, thank you. Thanks for the update. I'm next on the programme. Regime change at the Fed.
I'm appointing a task force in each of 5 areas. That'll be taken up by the task force. We've got a task force for that. I've been on a task force or 2 in my life. It's one of the things we have a task force to do.
Ed Al-Husseini of Columbia Threadneedle joins us next.
Western countries, all of them are cutting funding to Africa. And some of these programs were supported by funding coming from Western countries, like for human resources, for testing, for transportation of samples. And suddenly, African countries have to think how to fund money and to cover this gap. But it takes some time. And I think the combination of all of these factors are fueling this mistrust that we see at community level. We value the support we got and we are still getting from the US. And we think that if we continue to work together, and there is no reason for the US not to work with Africa CDC, Africa CDC is the leader in terms of public health in Africa.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you the latest business news wherever and whenever it happens. I'm Scarlett Fu, reporting from America's biggest military shipyard. This is Bloomberg.
Stocks negative by not even 0.1% on the S&P. We're down 1/3 on the Nasdaq 100. SK Hynix making the headlines, coming out with an equity offering, raising 26.5 billion.
Yep, biggest ever.
Record for a foreign company tapping the US equity market. Let's turn to the bond market, a more discerning fixed income investor that we can talk about. The 2-year, 417.65, 10s at 455, 454. We've had a lot of debt issued this week on both the sovereign and on the credit side. And on the credit side, don't forget Amazon came to market this week and got a bit of pushback from credit investors.
Yeah, people forced them to both pay up and potentially they weren't as interested. There was only 2 times oversubscribed versus, say, 5 times oversubscribed earlier this year. How much is this an Amazon issue? How much is this a broader pushback? Not necessarily saying that the market is closed in any capacity. Still plenty of money willing to put to work, just for a higher cost. And that, I think, is important both for the corporate issuers as well as the United States.
We'll buy your debt, show me the yield. That's the story right now. Heading into next Tuesday, CPI and Fed Chair Kevin Warsh on deck in just a few days' time. Under surveillance this morning, regime change at the Fed.
I'm appointing a task force in each of 5 areas. You'll hear quite a bit more about these task forces. That'll be taken up by the task force. We've got a task force for that. The good news for you is we have a task force for that. We have a task force on that too. I've been on a task force or 2 in my life. It's one of the things we have a task force to do.
So here's the latest this morning. Fed Chair Kevin Warsh following through on his word, creating 5 task forces set to look into how the central bank can improve in very specific areas. Among those appointed, 3 former policymakers, as well as the former Walmart CEO, Doug McMillon. Ed Al-Husseini of Columbia Threadneedle writing, markets are attempting to balance 2 caricatures of Warsh's thinking. His silence has left a vacuum that will be filled by other speakers who have largely inched closer to tightening policy. Ed joins us now for more. Ed, good morning. Good to see you.
Good morning.
Let's start about the task forces and the individuals on it. What are you expecting to come out of all of this?
I think the task force I'm paying closest attention to is the balance sheet. I think that's clearly an area where the Fed is ripe for reform. It's an area where Warsh has focused a lot of his attention in the course of the past several decades at this point. And I think it's the area that's going to have the most salient impact on markets.
So Karen Dinan, Raghu Rajan, Jeremy Stein, what do we need to know about these 3 people?
I think relative to some of the other appointments, these are much closer to the academic side. Stein was involved in formulating the quantitative easing program under Bernanke. And so deep expertise, academic expertise, and of course market expertise. He's been a market participant for several decades as well. So a very deep pool of expertise coming into that area. And I think people who've had, again, quite strong opinions about how the balance sheet should be reformed.
At the same time, I think some of the other task forces have gained a lot of interest simply because some of the non-traditional central banking type figures have been put on them. I'm thinking of the data task force with Doug McMillan, the former president of Walmart, or, for example, what we see with productivity and jobs, the idea that a Microsoft executive and Mark Andreessen are among those on leading the task force. What do you make of that? Sort of a different type of voice playing a big part in this.
Yeah, look, I think it looks like they've cast a really wide net. As a market participant, I think what, again, I'm most focused on is where is this going to translate into an impact on bonds? And clearly, the balance sheet is closest to that. Communication is probably a second. The rest of it is extraordinarily loose and a very wide mandate. So we'll have to see what comes out of that.
Do you think that because these task forces are ongoing, that Fed Chair Warsh has bought himself time to really make any kind of major move? Or do you think that this is a Federal Reserve that's going to be swayed by those that are speaking most, the other central bankers that are increasingly concerned about inflation?
Yeah, I think the focus in the near term is squarely on monetary policy and what do we do with respect to inflation. I think it's a matter of having a conversation about the next several meetings, whether they are live.
Are they?
I think they are. I think the minutes made it quite clear that the majority of the committee has moved in that direction. And then the question becomes, look, if we embark on a tightening process, how do we calibrate it? How far do we have to go? This stuff works, obviously, with a lag. Once you abstract from that, you're left with the balance sheet. And the balance sheet, again, is going to be central. How much room to maneuver do you have? I think it's going to be quite limited. And then the rest of these committees, I think, might have an impact in the more medium term.
Ed, what do you believe has prompted that shift? For quite some time, this Fed believed they were sufficiently restrictive. So much so, they believed they could address labour market weakness by reducing rates by 150 basis points over the past few years. So what prompted this change?
Look, I think they got it right. They lowered policy. Labour markets have stabilized. And then they got unlucky with respect to the quantum of inflation that's still left in the system, about 100 basis points of inflation. It turns out that inflation is largely interest rate insensitive. It's largely insensitive to the decline in the wage story. And now we've had some new shocks in the form of tariffs, in the form of energy, and a little bit of AI demand. So they've run out of luck this year.
So what do you achieve with a 25 basis point hike?
Nothing.
A second or a third? What does it do?
I think this is where guidance is important because it's a force multiplier to the extent that you can move markets. And look, let's take a step back. Markets have priced in much tighter monetary policy. The inflation-adjusted two-year rate is up about 175 basis points from the lows this year. You know, that's a significant change in the Fed's posture that's currently priced in. Is that enough? Probably not. As a rough rule of thumb, you can think about them having to unwind the cuts from last year. So it's about 75 basis points. We have somewhere between 1.5 and 2 in the price at the moment.
What caused the meetings, whether it's later this month or whether it's in September, to truly be an actionable meeting when it comes to the CPI and other data that we're getting? Do you have sort of a threshold that could potentially make the difference?
I think this is where it's really interesting. So in the last several years, because the starting point of monetary policy was quite tight, there was consensus in the committee, we're starting from a pretty tight place, the incremental data carried a lot of weight. You could calibrate how much easing you want to do based on incremental data. Most of that data was on the labor market side. This year, in some ways, the incremental data is taking a little bit of a step back. It's the overall state of play. In other words, you hear this reference, inflation's been above target for 5 years. Well, the next several months of data is not going to change that fact. If the animating feature here is we want to assist inflation and coming back to 2% over the next couple of years, the next couple of months of data becomes irrelevant.
Ed, it's good to see you. Thank you, buddy. Appreciate it. Ed Hosseini there of Columbia Threadneedle on this Fed meeting, and those meetings are live. according to Ed, in the coming months.
Yeah, adding some more confusion, though, to the reaction function. Again, this goes back to people not knowing exactly what the threshold will be or what will make the difference. You asked the question, what caused the shift for the likes of John Williams to come out earlier this year saying that he still sees disinflation, to suddenly, a couple months later, saying that inflation is likely sticky and coming more from AI than even energy prices. Again, a massive shift, leading a lot of investors to say, where is exactly the trigger point to potentially take action?
You're expecting clarity on that from Chair Walsh next week in his testimony?
Full clarity. I expect full treatise with lots of descriptions that are not at all related to task forces or the weather.
Scenario analysis and real depth.
No, we're not going to get anything.
Okay.
Maybe we'll get something.
We'll be taking it live right here on Bloomberg TV. I believe it probably will. So tune in for that. Tuesday morning. There you go. There you go. Coming up next, Liz Ann Saunders of Charles Schwab, Jay Goldberg of Seaport, Nancy Lazare of Piper Sandler, Jonathan Krinsky of BTIG. We appreciate the honesty, Bramo. The honesty.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, succession starts now.
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacroix. Listen and watch on Bloomberg Television or wherever you get your podcasts.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars, Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech.
Every weekday, only on Bloomberg Television.
Oh, hello there. Just wanted to say, Primer is back. We've been scouring the frontiers of science and technology to help explain the difference between the next gold rush and whatever this thing is. And in season 2, we're upping the stakes. More danger.
Now that is some high-grade uranium mineralization.
We used to have a stable climate on this Earth. Right now, we do not.
More science.
We're pushing the envelope of technology in multiple directions. Software, hardware, chemistry, physics.
The cable is very cold.
And more CEOs that can nail the photo shoot.
Hundreds and hundreds of billions of dollars are at stake.
While the problems are economic, the solutions are too.
And yes, we will be talking about AI.
There is a lot of humanoid hype out there.
But our future doesn't run on hype. It runs on innovation. Watch season 2 on all these lovely channels.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Joanna Bersecci in El Ola, Saudi Arabia, and this is Bloomberg.
The demand for stocks
remains very healthy.
When there's a lot of enthusiasm, people tend to get a little bit ahead of themselves.
If that falters, I think we've got a real problem on our hands.
You have to be prepared that this could shift, and it could shift very, very quickly.
The summer's going to be volatile.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, the third hour of Bloomberg Surveillance starts right now. You're almost there, Bramo. 1 hour to go.
I love how you just blame me all the time.
I'm almost there. 60 minutes
to
go. Weekend's just around the corner. Equity futures on the S&P negative here by 1/10. We're down by 0.4 on the Nasdaq. Still heading towards a weekly gain on the S&P 500, the second consecutive weekly gain. Into the airlines we go. The earnings begin. Delta Airlines a little bit earlier on this morning, reaffirming guidance following a really big run up in the stock. Lisa mentioned it a few times this morning, up by close to 30%. Year to date, down to this morning, down by 0.75%.
Is this a sign of what's to come? And we get earnings next week, kicking off with the big banks, JP Morgan leading off. And a real question is, how high is the bar for them to outperform? And of course, that is amid a question about whether we're seeing an earnings bubble, an earnings expectation bubble. Delta did deliver, despite the fact that oil prices were substantially higher, and they faced the highest fuel bill ever in their history. They still were able to overcome that and still maintain their projections, seeing increasing revenues coming from premium, coming from their American Express partnership, coming from some of their corporate travel. Does this sort of indicate how much investors need to see something absolutely astronomically phenomenal for them to buy up stocks that already are rich?
We've just worked through a really positive earnings shock, and the bar is reset higher. It's much, much higher. Going into earnings season this time around. Talked lots about the consumer. This drop from Bank of America moments ago. Heading into the summer, consumer spending momentum was very strong. Total credit and debit card spending, based on their data, rising 6.3% year over year in June. That's pretty punchy stuff.
And we're seeing confirmation of that, the likes of Delta. At the same time, then you have Pepsi. They came out yesterday and said that they are seeing pressure in the lower income consumer. How much can Wall Street continue to lean on the higher end of the income spectrum to support the consumer in a time when there is this increase in K? Right now, quite a bit, and that seems to be the tone coming from Wall Street.
The increase in spending growth, almost entirely a discretionary story, driven by online promotions and the FIFA World Cup.
Well, yeah. How much are we going to be
it's getting a bit of a bounce there.
Increasing? Yeah, although, we were asking, were people going to show up? Were people going to spend the money on the tickets? And it turns out
they did.
They did.
I think it's great news. Fantastic.
Yeah. Are you going?
No, because I can't afford it, Bramo.
Well, that's what
we're talking about. How much is it to go to the final here in New York?
You think I've checked?
I checked a few months ago.
Yeah, what was it?
I think get in is probably like cheapest tickets, probably 10K.
All right, well, write in your responses, and I'm going to look in a second, and then we'll reveal it at the end of the segment. We'll reveal how much it costs to attend the final.
Everyone's going to stay tuned for that and not look at it themselves, right? On Ticketmaster. Stay tuned. Bramo's got it for you in just a second.
Just wait. Hold on.
Equity futures on the S&P, negative by 0.1% on the S&P 500. Coming up this hour, we'll catch up with Liz Ann Saunders of Charles Schwab, with stocks eyeing a second straight week of gains. Nancy Lazar of Piper Sandler on why the Fed faces an uphill battle on inflation, and Jonathan Krinsky of BTIG saying chip makers could fall another 25%. We'll begin this hour with stocks pulling back as markets await the US training debut for SK Hynix. Liz Ann Saunders of Charles Schwab writes in the following: stay in gear with AI theme by avoiding crowded direct plays and leaning into less crowded derivative plays. Liz Ann joins us now for more. Liz Ann, welcome. I just want to take it from the top, and I want to pick up on something I heard you say earlier this week, that unlike what we saw more than 25 years ago in the dot-com bubble, that this time the bubble might be in the earnings and not the price. Liz Ann, can you flesh that out for us? How different are things now versus then?
Yeah, and thanks for having me. I think maybe not the earnings where we stand right now, but the earnings expectation is, I think, where there could be a bubble. And I think we got a little bit of a flavor of that with the recent Samsung report that pretty nicely beat the sell side estimate. That's the consensus that analysts publish. But there's also a buy side estimate out there, and that's not something published. It represents maybe the whisper number or the hyped up number and the higher bar. And we saw what happened to the stock. That is one of the things I'm paying close attention to during earnings season, is whether that sell side versus buy side estimate has a very wide spread, and what's the sensitivity in terms of the market reaction. I think it probably continues to fuel these rapid fire rotations that just have become the name of the game in this kind of market.
Do you expect that to be a recurring theme across earnings season or just in select industry groups?
I think probably select industry groups. I think in those higher beta segments like tech and comm services, anything AI related, I think you have that wider spread between the sell side and the buy side. But we're seeing just a huge increase in dispersion. I think Kevin shared a chart with you guys this morning that shows a record spread between a relatively subdued VIX and that dispersion. You're seeing it in terms of the retail trading cohort. The turnover has never been higher. They're a little less active in individual stocks and more on the thematic side of things, as well as ETFs. But the dynamics of how the market is trading, who the players are, and the way they're attacking this has also shifted quite a bit. And it's just a different backdrop than what might be defined as a normal sort of earnings season backdrop.
Is it healthy? I think that's what a lot of people are wondering. Or does it signal, Lizanne, that potentially you could see some sort of crack if there is this incredible churn under the surface in specific name volatility?
The churn is not necessarily detrimental because it can lend support when you get some of the leadership names pulling back. When we saw the big, bout, in many cases ongoing bout of underperformance by a cohort like the Mag 7, you saw a lift in other segments of the market, in industrials, in healthcare at times, and enough underlying strength amid this rotation, not to mention the intra-sector, intra-industry rotation. So I think the base case is probably a continuation of this type of a backdrop where you don't see an aggregate whoosh down on the part of the indexes, but a lot of churn under the surface. An example is the Nasdaq's up 13% year to date. The average member maximum drawdown within the Nasdaq year to date is negative 40%. So that's a sort of the poster child for that type of activity.
Perhaps a bigger question for a lot of people is whether this signals an exhaustion in some of the tech names and potentially that rotation that we saw try to assert itself before the reignition of the conflict over in the Middle East. How much do you see that as a path of travel in the last 6 months of this year? The idea that people will go into other names expecting them to benefit from AI efficiencies and other types of growth and maybe fade what we're seeing in some of the tech names.
Yeah, I first of all, I do think it's a tricky trading environment, and at least our message that we impart to our $13 trillion worth of individual investors is to not necessarily think that the only way to perform well in a market like this is to try to get ahead of these really short-term rotations. There's so much short attention span money in the market, and maybe it's a little more boring to talk about or to think about, but I think the diversification story is more powerful than it's ever been, particularly within asset classes and even within sectors. But then consider portfolio or volatility-based rebalancing. A lot of rebalancing gets done based on the calendar. It might be quarterly, it might be annually. Move away from that calendar-based rebalancing and take advantage of these rapid-fire rotations by, adding low and trimming high a bit more frequently and stay in gear that way, as opposed to trying to get ahead of some of these short-term trade.
Lizanne, I wanted to pick up on something that you've noted. We often talk about these short-term tactical rotations, these shifts in the market, and we point to small caps. Small caps will have its moment. To your point, small caps has been having its moment for quite some time now. What's been driving those gains?
So, there's been different forces driving small caps. And you're right, John, it's been the trailing 2-year period that Russell 2000 is pretty handily outperforming the S&P 500. So this is not some new story. A couple of years ago, I think the impetus for the initiation of that outperformance was a move by the Fed toward easier monetary policy. Of course, we've had fits and starts with that. Almost 2 years ago, the Fed embarked on an easing campaign after 3 cuts that included a 50. They had to pull back because the economy accelerated again. Same thing happened last year when the Fed embarked, but then you had the much more sticky inflation problem driving that. And I think now the story is one about opportunity in that let me look beyond just the mega cap AI plays and look for opportunity. And you're finding in other areas like healthcare and like biotech and smaller names. But what I would say about the small cap space is last year was a year where the non-profitable components of the Russell 2000 had double the performance of the profitable components. It was up 20% versus up 10%. That is starting to shift this year, and you're seeing this convergence where you now have a little better performance on the part of the profitable. So that's the way I'd look at the small caps. I would sort of lean into the profitable side, the higher quality, the high interest coverage and strong cash flows, and fade the non-profitable, lower quality segment.
Lizanne, this was great. Really thoughtful stuff, as always. Lizanne Saunders there of Charles Schwab on the equity market. The enduring outperformance we've seen in small caps over the last 1-2 years relative to, say, the S&P 500. And the cost of everything right now, Bramo, you want to go there?
Of course.
Go on. Let's get to the price. What's the get-in? Nosebleeds at MetLife.
True.
World Cup final.
True nosebleeds. I mean, actually,
Like
your nose is going to be bleeding because
row.
you are actually standing up on the press, like on the top. $7,576. That is how much to sit on the roof, to essentially sit and kind of try to see if there's anyone playing. If you want to get really close to the field, you can spend $70,000. And then if you want to spend $70,000, yes, just to sit in a seat that's relatively close.
And this is not
to the
MSG.
field.
Let's sort of frame that out. We're talking about 5x the capacity. What is it, 82,000?
I didn't check the capacity, but yes, it's a massive stadium, football stadium that you normally would see completely packed to the gills, and the amount of money they're bringing in case that's not enough, you could buy food. I mean, things like $75 caviar topped tater tots.
Oh, right. That's once I've paid 70K, Bram, I expect the food to be free.
You expect your caviar topped tater tots to be delivered to your seat.
That stuff needs to be free.
Or how about a Twinkie cheeseburger for $22?
That sounds gross. That really does.
That's welcome to America,
yeah,
Tom.
that's I love America, but that does not do it for me.
Not a Twinkie cheeseburger.
If we get a blockbuster final like Argentina versus France,
then you'll eat a Twinkie cheeseburger.
No, I was going to say that 7.5 won't be the get-in price.
That's true. This is for now.
Yeah.
Just wait. So if you want to get in, it's a hot deal.
Right. Once the real fans who are price insensitive and just ready to go to the final.
Yeah.
Once their team gets there.
I don't know how many people are truly price insensitive at this kind of level. But nonetheless, it is bolstering consumer spending, which brings us back to our story, which is resilience.
I'm impressed by how many people can afford to go and travel the States for a whole summer and go and follow their country.
I've seen them. I think it's wonderful.
I think it's the house.
And I mean, frankly, they've bought out the beer at certain kinds of bars and
good for them.
You know, been able to take road trips.
Spend 4 years paying for it and then do it all over again.
Yeah, that's understand the living of life, right? So it's like work to live rather than live to work.
Something like that.
Yeah, exactly.
Okay, I respect that. Futures this morning down by 1/10% on the S&P with an update on stories worldwide with your Bloomberg brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, John. Thank you. New comments coming out of the Middle East. Iran vowing to retaliate in response to attacks on its infrastructure. In a statement, the Supreme National Security Council saying Israel, quote, which is behind these wicked acts, will not be safe from the response, unquote. Boeing opening a new 737 MAX assembly line at its Everett, Washington facility today. Sources telling us here at Bloomberg the line will produce mostly wide-body models. Boeing is looking to pay down debt and boost output. And Micron is increasing its spending on new plants in the US to $250 billion to help meet unprecedented demand for its memory chips, fueled by the AI boom. The plan adds $50 billion to a prior commitment on expanding domestic chip making, including projects in New York, Idaho and Virginia. That's your Bloomberg brief. John.
Bonnie, thank you. Thanks for the update. Up next, the Morning Calls Plus, Jay Goldberg of Seaport on the concentration risk facing chip stocks. That conversation just around the corner. Live from New York City this morning. Good morning.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine. Watch, listen, stream.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
All anyone needs to do is look at some of these charts that have gone completely hyperbolic. Quite frankly, folks extrapolating the sustainability of pricing. We can absorb, a 10, 20% decline in semiconductors and not have a lot of damage to the headline index.
That was Lisa Shallard of Morgan Stanley. Her message pretty clear. Get out of the semis, the chip makers, get into the hyperscalers. Her message throughout this week. Equity futures right now in the S&P, unchanged on the S&P. On the Nasdaq, down by a third. Pretty punchy stuff from Lisa Shallard. Her message quite clear. Do that. Don't wait for a reduction of capex to make a move.
Her spidey senses are up. She got something from Meta, and she said that it is telling a very strong signal that there is going to be some sort of reduction in capex, and you're starting to see the whisper of it. And if you wait until you get the confirmation, it's going to be too late. I wonder how much, to sort of reiterate what she said also about what that means for inflation, whether we've seen the peak in AI inflation or the rate of increase in prices, and whether you're going to start to see more moderation there. Really interesting for a broader story.
The deceleration in spend that she's beginning to sense. Lisa Shallard there of Morgan Stanley. That's some of the price action, some of the calls. Let's get to your morning calls. First up, Citizens cutting its price target on Meta to 800, saying it's on track towards competing with leading AI labs. That stock is up by 3%. Your second call from Susquehanna, initiating coverage on IBM with a neutral rating and 303 price target, seeing, quote, so many reasons to like the stock. And finally, Stifel raising its price target on AMD to 635 from 450, saying the slide in chip makers is more of a valuation reset than a fundamental slowdown. AMD is down this morning by 0.5%. There are three your morning calls. Let's get to SK Hynix. The ADRs begin trading on the Nasdaq today. The company raising more than $26 billion, the largest first-time share sale by a foreign company in U.S. history. Bloomberg's Ed Ludlow joins us now for more before he heads off to the Nasdaq. Ed, good to see you. What do you make of the issue?
Yeah, look, there's clearly demand, heading towards $200 billion of demand for a $26.5 billion deal. When we talk about it being oversubscribed, that's how I'd frame it in the dollar terms. And, clearly they need the capital, right? They are committed both in Korea and probably here in the United States to building out memory capacity. They have a 57% market share in high bandwidth memory. But right now, you just take the memory market in aggregate, HBM is like single digits. But because of the pricing, in dollar terms, it's so much bigger than that. So they're going to have to work out their capital strategy. But really, it's about getting in front of the American investor that SK really believes understands the AI story better, because this is where so much of the AI story is playing out.
Ed, it's hard to make that argument when you've seen the run-up in South Korea over the last year, no?
Yeah, I mean, the Korean market has been volatile, and even in the short term, in the last week, that volatility doesn't seem to have dissuaded the appetite of US investors. What's interesting about SK in particular, right, is if you think about fund managers around the world ex-Korea, it's very difficult for them to access that market. It was a very conscious decision for SK to price the ADR at a premium to the Korean shares, but they felt confident that they could do that, tap the demand without leaving money on the table. So, yeah, I think that the idea is that if you think about SK's footprint, what is it they got going on in California? They have their sales channels there, and they have their R&D there. Their biggest customers are there, NVIDIA being king among them. So it is about being in front of the American investor, but also the companies that are driving the infrastructure build-out where that high bandwidth memory is going.
The records keep dropping. Ed, thank you, buddy. And looking forward to the conversation later this morning, 10:30 Eastern Time, from the NASDAQ, the SK Hynix chairman catching up with Bloomberg's Ed Ludlow. Look out for that and more coverage on Bloomberg Tech a little bit later this morning at 11 a.m. Eastern Time. Let's build on this. Jay Goldberg of Seaport writing the following. The entire AI trade is driven by spending from 7 companies. So long as they keep spending, semis will see earnings growth. But any hiccup and the stock market gets spooked. Jay joins us now for more. Jay, welcome. Do you sense any deceleration in spending on the horizon?
I don't. Now, in all fairness, I'm not a hyperscaler analyst, so I don't have the contacts at Meta and Google and Amazon that some others do. But certainly what I'm seeing from the supply chain and from people in my community locally in the Bay Area, there's no slowdown in sight.
So do you think that, Jay, what we've seen in terms of the valuation reset or the sell-off in semiconductors is creating an attractive entry point? Or do you think that ultimately there's something else driving some of this activity?
I think your previous guest, Lizanne, had it right. It's a very confusing time. It's a really difficult trading environment right now. If you look at some of the spending plans that are out there, and these are committed contracts that data centers that people are going to build, there's a huge ramp starting next year, late 27, early 28. Numbers get really big. The problem is a lot of that is already reflected in the share price, and timing is always a little uncertain. And I think we have a situation where sentiment got a little ahead of fundamentals, and that was sort of the correction we saw, this month or last month. I mean, the way I sort of think about it, there are stocks in my sector which could double or triple from here. The numbers are that big. The problem is they could all trade down 50, 60% before we get there. So it's a difficult trading environment.
Jay, it seems like a difficult moment, especially considering that a lot of people are increasingly skeptical, and yet the market can continue rallying for longer than they can remain skeptical. As someone who does have a sell rating on NVIDIA and Qualcomm, and as someone who has been more bearish in some of the trades, how difficult has it been to remain bearish given sort of the freight train that seems to be recycling back in every time anybody sees any kind of dip?
It's tricky. I'm not universally bearish, right? I am picking my targets here. I have buys on AMD and Intel. I think both of them have pretty strong prospects next year. Intel is fundamentally re-rating. It's a company we'd left for dead 2 years ago, and has a new CEO and a new lease on life. And as you know, if you look at NVIDIA, it's the worst performing stock in the SOX index this year to date. So I've been saying all along, NVIDIA is going to underperform because we have a really good sense of where that company is selling, what their prospects look like. That's the most scrutinized company on the planet right now. I think that what we've seen this year is people have been looking towards other sort of less appreciated corners of the industry that are benefiting from this just as much.
Well, South Korea being part of that story as well, Jay, just to jump in. They've now got a listing here, ADRs. How do you think about that in terms of competition for capital in the sector with other names listed here?
I think it's a big and growing issue in the industry. 30% of that AI capex this year is going to go to memory. It's going to be 40-50% next year. We're talking about $1 trillion of capex, and a very large portion of that is going to memory. It's a phenomenal time to be a memory company.
Right now, would you say it's the peak?
No. I don't think we get into supply-demand equilibrium for memory until 27 or 28. Calling memory stocks is very, very difficult. They're very, very cyclical. I think there's still a lot of room for the fundamentals, for the earnings to go up. How that gets reflected in the share price is difficult.
That's the key phrase, Jay. You said it. You just said it. They're still very, very cyclical. Some people don't believe that. They believe the story's changed. Why do you believe that's still the case?
Every bubble somebody says this time is different. Look, there's obviously huge demand for memory, but at the same time, the memory makers are expanding very heavily, right? Micron is building 5 plants, 5 fabs right now. Hynix is raising a lot of money at this IPO. They're gonna plow that back into building more capacity. Samsung announced a massive investment plan a few weeks ago. So this is how these cycles work. There is lots of demand. They spend a lot on capex to catch up. I think the only thing that's different here is they have a lot of customers paying for it up front, paying cash up front. That levels it out a little bit. But there's a lot of capacity that's going to be coming online in 28, 29. we'll see what memory looks like then.
Jay, it's good to see you. Thank you, sir. Jay Goldberg there, Seaport. Not bearish on everything, just super bearish on Nvidia. More recently, looking at 2028, when can you start worrying about a few years' time?
Yeah, I mean, ultimately, maybe not so optimistic on Nvidia, and we actually have seen an underperformance there. So to that, kudos to him for going against the grain and being the one sell rating, but also saying things like, this isn't my first bubble, and seeing a lot of analogs, at least earlier, when he's been on to the 2000s and what happened with Cisco. Here's the issue. There's clearly skepticism about how far the buildup can be, but it's been very difficult to time it, and you can feel that in all of our conversations with everyone who comes
Multiples are not excessive, which is why Lizanne Saunders is asking the following question. Is there a bubble in earnings expectations?
Right. And
that's what we're trying to tackle.
And maybe we'll start to get some hint of that next week when we get earnings.
Coming up next on the programme, Nancy Lazare of Piper Sandler and why the Fed is a ways away from reaching its inflation target. Plus, Yohira this time has your morning movers. Delta are raising earlier gains. Their stock is down 0.9%.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors.
We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
The open about 60 minutes away. Equity futures this morning just about unchanged on the S&P, softer on the Nasdaq. We're down by a third. No drama there. Let's get you some single names, some morning movers. Let's cross over to Yahara for more. Hey, Yahara.
Hi, John. Delta is giving back its earlier gains. Shares are now down 0.7%. The airline reaffirmed its full-year outlook with strong demand for premium seats, helping to offset the highest quarterly fuel bill in its history. But now investors are now asking whether that can continue, with fuel costs up 50%, according to CEO Ed Bastian. Turning to Circle Internet, shares are absolutely soaring, up 13% in the pre-market on news this morning that the OCC, that it won an OCC charter to launch a national trust bank. It's a significant regulatory milestone that brings more of the company's business under federal oversight instead of on a state-by-state basis. And investors see it as another step toward bringing stablecoins further into the traditional financial system, which is ultimately where the industry wants to go. And we end on Meta. Shares are up 3.4%, leading the Mag 7 and building on yesterday's gains on a new research report from this company, Semi-Analysis, arguing that Meta has the best chance at catching up to OpenAI and Anthropic. It points to Meta's massive AI infrastructure spending, projecting the company will have more AI computing power than its rivals by the end of the year. John?
Yeah, thank you. Thanks for this morning. Better news out of Canada. That data just dropped in moments ago. 18,000 jobs added in June, a little more than 18K. The estimate was 10K. Unemployment dropping back to 6.5% from 6.6. The estimate was 6.6, so back down to 6.5%. Better news there. The reason I bring this up is that economy has really struggled all year when their neighbour, southern neighbour, the US, has been absolutely flying.
Well, and it hasn't been totally without relation, right? I mean, a lot of people will say that a big part of the reason why the Canadian economy isn't doing so well is because of certain trade tensions that have curtailed some of these sales. Also, though, noting earlier this morning that inflation came in slightly below expectations. You're seeing some of these things kind of going the way of central banks around the world. Is this a sign of reset? A lot of people are saying that Canada had entered a technical recession.
Yep.
Was that going to be a brief type of issue that really wasn't going to be a prolonged downturn? This suggests maybe that's the case. That's your Canadian assessment for the morning.
That's the latest. That's the 60 seconds, right? Is that it? Got some more? No, you're done. OK, you sound like you're really done. 28 minutes,
really
Bramo.
done. Oh, my God.
28 minutes,
you are
right.
so projecting.
Let's get the Bramo weekend clock
you
going, all right?
are literally projecting. But
I've been ready
on.
to look ahead to next week.
Yeah?
All week. OK, so let's do that now. A blockbuster week ahead for the US economy. Inflation data just around the corner. All the big banks start to report on Wall Street. Fed speak and testimony from Fed Chair Kevin Walsh coming up on Capitol Hill as well. Look out for all of that. Joining us now to discuss, Enda Curran from Washington, D.C. Enda, let's talk about that testimony. What's the most we can hope for from Kevin Walsh in front of the House Financial Services Committee?
I think, does he give any clarity on his reaction function, John? John, that's what a lot of, I think, Fed watchers are looking out for. Yes, they kind of understand his argument and forward guidance. That's been articulated. People have their views on that. Some agree, many disagree. But the bigger issue, the kind of void when it comes to understanding the Fed under new chairman Kevin Walsh, is what exactly is making him tick? How is he reading the economy? How would he respond under different scenarios over the months ahead? You know, to use the jargon, the reaction function. So I think people would like to hear him articulate some of that. They get where he's coming from. He wants less communication. He's trimming back on he's making changes where he can. But in terms of the core, you know, what will be driving the Walsh Fed, that's probably one of the biggest talking points I think that people are looking for next week.
And what about these task forces? You've seen the names on it. Impressive list of names, I've got to be honest, to cover several stories at the Federal Reserve. What was your reaction to the list?
I think really significant and serious names, John, no doubt about it. You look through it, former policymakers like the Bank of England Governor, former Bank of England Governor Mervyn King, former Reserve Bank of India Raghuram Rajan. Then you have Karen Dinan from Harvard and the Peterson Institute, a well-known fiscal expert and economist. And, of course, then you have the likes of Mark Andreessen from the tech world. I mean, it's crossing business and academia. It would be wrong to underestimate it. It is a signal of intent from Chairman Walsh. The question then becomes, where will this go over the months ahead? I mean, they've been set a pretty short time frame for all of this. Chairman Walsh said they're going to report back by the end of the year, and then those reports will go to the FOMC. So, you know, it's a big statement. These are big names. but it's not yet clear where the process ends and what the deliverables will be out of it. That's, I think, what people will be looking for in the months ahead as this process goes on, John.
And thank you, buddy. As always, looking forward to your coverage from you and the team down in Washington, D.C. next week. Ahead of that testimony from Kevin Walsh, the Fed chair, we always get excited about these testimonies, and the same thing happens every single time. You get ridiculous questions in the House, things like, are you going to be a sock puppet? Remember that one out of the Senate Banking Committee last time, those kind of questions? Is that what we're going to get this time next week?
How are you going to remedy affordable housing? What kind of policy projections
all things that are out of his control.
That are completely out of his control. How are you going to deal with AI power plants and what that's doing to pricing? I mean, things that he's not going to really have an answer for. That said, he's probably not going to have an answer for anything relevant either. So if someone asks a very good question, there probably is a task force for that. So, you know, to the extent that I'm excited, it is...
it's probably a good thing for him that he gets those kind of questions, right?
Exactly. It's actually fantastic. But my enthusiasm is dramatically curbed.
Nancy Lazare, 5%. Looking ahead to next week's inflation data, expecting headline CPI to come in line with Wall Street estimates, but calling for a lighter read on core. Nancy joins us now for more. Nancy, welcome to the programme. If we get that, does that close the door on a rate hike this summer?
No, it really doesn't. The pieces of the CPI this month are going to matter more than what we've seen historically. By that, I mean, we do know technology has a bigger weight in the core PCE deflator. So how much of that, AI-related inflation does indeed show up in the CPI, then we have to pull it out and come up with estimates for what that's going to do to the core PCE deflator. In addition, you're getting bifurcation within I hate that word, but you are getting bifurcation within the inflation data. As you mentioned, headline is going to be down, probably both CPI and PPI, but the core components, again, you could see things that are incrementally sticky. The World Cup, you could also say the World Cup has added to inflationary pressures. Let's see if airfares go down. Let's see what happens to hotel rates. Let's see what happens to ticket prices. And so we saw this a couple of years ago where the internet entertainment space also could be an area of sticky inflation. And then last but not least, yesterday we also heard that the health insurance industry is going to raise rates double-digit, 15 to 20% in 2027. So I keep getting hit over the head basically by companies having more pricing power than we thought. And so, inflation, bottom line, is sticky. 1 month doesn't make a trend, and you have to really pull it apart and see where, there just continue to be surprises on the upside.
So bottom line, I hear hikes as you're speaking, Nancy. Do you see hikes in the future?
Well, my colleague Kurt Lewis, that's his focus right now, and he's reviewing. Reviewing that. To be sure, the interest rate structure is stimulative to the economy. I am a monetarist. Confessions of a monetarist. Money supply growth is reaccelerated. You're up almost to 6%. Bank loan growth is 7%. Why are you having that? Well, it's not because the Fed is tight. It's because the Fed is indeed been supportive of growth, and that's supporting obviously right now more so the high-end consumer than the low-end consumer. But if you can see some release on the energy side, then maybe even the low-end consumer can kick in. And then the next thing I have to worry about is maybe wage inflation, given the sluggishness in labor force growth and what we think is going to be stronger employment going forward. So net a healthy economic backdrop, and the Fed has really helped to support it through keeping the interest rate structure so low for so long.
So how excited are you, Nancy, to hear from Fed Chair Kevin Walsh on Tuesday all about the reaction function of exactly how the Fed's going to be handling incoming data?
So I'm not going to try to anticipate what he's going to say. I'm excited about the new Fed chair. The financial markets, if you look at gold, if you look at the dollar, are sending a lot of confidence in the path that he is taking. Status quo is not always good. Change is good, and I think the financial markets are embracing that, and they're impressed that he truly is taking control of the monetary policy outlook for the next many years.
At this point, we heard yesterday from the New York Fed president talking about John Williams talking about how he sees AI spend as potentially a bigger input to inflation going forward than even the energy side of the story. Do you think that that's an increasing concern? Do you think that that's valid and actually the potential driver here going forward?
So, yeah, absolutely. Right now, you've seen 20, 30% price increases from certain tech companies that will show up first in the CPI. And then, as I mentioned, have even a bigger impact on the core PCE deflator. Tech is almost 4 times bigger in the core PCE deflator than it is in the CPI. And so I think it is valid, but I would actually connect the dots. We had the tariffs that kept inflation sticky. Then we had oil. And we saw some pass through of that into other components within the CPI. Now we have tech and maybe something going on in healthcare. So to me, it's not just one, it's the path of companies having more pricing power than I certainly initially expected as we moved into 2026. And so bottom line is, it's not just AI. It's a trend that we're seeing that inflation is indeed stickier. And as I mentioned, I'll say it again, I think next thing we're going to potentially have to worry about is wage inflation. There's not a lot of labor supply. I do think employment's going to get increasingly healthy, not as robust as we've seen in previous cycles, but unemployment claims tell us that AI is not destroying the labor market. Claims are down 8.5% on a year-over-year basis. And so are we going to next be talking about wage inflation?
Do you think monetary policy has contributed to these themes, Nancy?
Yeah, I do. I mean, I look at nominal GDP growth. Nominal GDP growth is what's actually calculated. We're paid in nominal dollars. Companies report nominal revenue growth, and it's nominal growth minus inflation that equals real. And nominal growth is 5.5, probably closer to 6%. Fed funds of roughly 360. That's a pretty healthy gap between the underlying trend in economic activity and the cost of capital. And so the Fed has certainly helped to engineer, positively so, a pickup in economic activity. Started with a high end. We hope now moving broader into the middle to lower income consumers. But absolutely, monetary policy has contributed to growth and now maybe incrementally to inflation.
So, Nancy, where do you think neutral is?
I prefer using this concept of nominal relative to Fed funds, and the bottom line is it's probably higher than what some of the Fed watchers think it's been. But at the end of the day, you have a 250, 300 basis point gap between nominal growth and Fed funds, and that is stimulative.
Nancy, it's good to see you. Thank you. Nancy Lazada of Piper Sandler wouldn't tell us she thinks this Fed's going to hike, but everything that Nancy said in the last 5-6 minutes just screamed rate hikes, didn't it?
Yeah, the Fed actually does have some influence over inflation, and you're seeing inflationary pressures from many different places. And she talked about wage inflation in particular. And yesterday, the Atlanta Fed put out their wage tracker, their wage growth tracker, and you did see a slight inflection higher. So job switchers, 4.1% from 3.7% in the prior month. So you are seeing a little bit of that around the edges, albeit 1 month does not make a trend.
Unemployment's at 4.2%. Inflation is the highest in 3 years. It's been above target for 5. No wonder there's additional pressure on this institution to be thinking about hiking and not cutting interest rates at this point.
You asked a good question, though, which is how much control do they actually have? And for every person we ask, we get a different answer. Some people saying that it's absolutely out of their control because the spending is rate agnostic when it comes to artificial intelligence. Other people, like Nancy, talking about the monetary supply and talking about how ultimately borrowing conditions are relatively loose as a result of where the Fed's at.
CPI on Tuesday and a much anticipated testimony from Kevin Walsh in front of the House Financial Services Committee coming up on Tuesday as well.
Excited. Really yeah, I know. And you could see we're all going to learn.
Full coverage live right here on Bloomberg TV and the after show with Bramo coming up a little bit later that afternoon. I've made that up.
Drinks.
I made that
with
bit
drinks.
Up. Let's get you an update on stories elsewhere this morning with your Bloomberg brief. Vonnie Quinn has more. Hey, Vonnie.
Good morning, John. President Donald Trump firing 2 Democratic members of the U.S. Election Assistance Commission and a Republican resigning. It's the latest move by the president to put his stamp on how elections are run. Last month, the Supreme Court expanded his right to dismiss government officials. S&P Global downgrading Oracle's rating to BBB-, just 1 level above junk, citing the company's growing spending on AI. The agency says Oracle's rapidly expanding infrastructure business is increasing its overall credit risk. JP Morgan has built an AI agent that beat a traditional 60-40 portfolio in MAC tests. The results are based on historical simulations rather than live investing. And the bank warns that treating them as proof that AI can consistently outperform markets is not a good idea. And that is your Bloomberg brief. John.
Ivani, thank you. Thanks for this morning. Up next, we're setting you up for the day and a week ahead. And what a week ahead we've got coming up. Plus, we'll catch up with Jonathan Krinsky of BTIG saying the correction in chip makers could be far from over. That's next. You're watching Bloomberg TV.
Look at the more successful economies in the region. The key to their success is continuity. But the way our constitution is written, it actually encourages a lack of continuity. And that's a problem. The terms for local government is 3 years. When I first became a congressman, it takes you a few months to learn the business and to make your connections, to network, etc. If, for example, you are not particularly favored in the majority, passing a law in a year and a half is not that easy to do. After about a year and a half, you already hear that there's somebody in your district beginning to campaign and is going to oppose you in the next election. So you have to go back to your district to take care of that. And how much work do you get done?
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia Trade.
This is Wall Street Week.
Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Bringing you the most important news and financial information whenever and wherever it happens. I'm Michael McKee on the Mexican border, and this is Bloomberg.
That is one of the things I'm paying close attention to during earnings season, is whether that sell side versus buy side estimate has a very wide spread, and what's the sensitivity in terms of the market reaction. I think it probably continues to fuel these rapid fire rotations that just have become the name of the game in this kind of market.
That was Liz Ann Saunders of Charles Schwab weighing in on this equity market, framing things quite nicely this week. A provocative question compared to where we were more than 25 years ago in the dot-com bubble. The bubble then was in the price. She's asking now whether the bubble is in the earnings outlook. It's a worthy question, worthy of debate. Equity futures right now in the S&P 500 just about unchanged on the S&P. On the NASDAQ, we're down by 0.4% following a massive equity offering coming from SK Hynix in the last 24 hours.
Yeah, the biggest ever debut of a foreign company into the U.S. equity markets ever, $26.5 billion, upsized from the expected $24.5 billion, and coming at a premium to where the shares closed in Korea. Does this open the door to others? Does this highlight just how good conditions are for financing? You can take that whatever way you want, given the fact that companies are able to tap a wide open market, even with some of the skepticism that we're talking about.
Those ADRs stars begin trading a little bit later on today. That's the day ahead. This is the week ahead. The week ahead is basically Tuesday morning and a bit of Wednesday. That's basically it. On Tuesday, JP Morgan, Bank of America, Wells Fargo, Goldman, Citi, all reporting earnings on the same morning, 8:30 Eastern Time. After all that's wrapped up, CPI data, and then, catch your breath, then Kevin Walsh testifies in front of the House Financial Services Committee later on that day.
Yeah, most important will be the earnings, because we'll get a sense of whether there is an earnings bubble or a bubble in earnings expectations just by the response in markets, as well as what the forward look is from some of these companies. That said, increasing questions around the reaction function of the Federal Reserve, so the 1-2 punch of both inflation, and Kevin Walsh telling us all in this confession to the House Financial Committee will be really important.
I haven't forgotten that sprinkle of data on Wednesday, PPI on Wednesday morning, and got lots of friends over at Morgan Stanley. Always enjoy speaking to you, Ted. Morgan Stanley numbers drop Wednesday morning too.
Yeah, to sort of put a cap on what we get from the big banks. And ultimately, big question, will the IPO window and frankly the debt issuance window be as wide open in the back half of 2026 as it has in the front half?
But stock so far this year up 25%. Morgan Stanley,
really well.
Goldman have done really well, given the backdrop for capital markets. Let's turn back to our top story on Wall Street. Investors are awaiting the debut of SK Hynix on the Nasdaq today following a volatile stretch for chip makers. Jonathan Krinsky of BTIG writing, as US markets get ready to trade a new mega-cap semi, we remain cautious given the plethora of warning signs in recent weeks. Jonathan joins us now for more. Jonathan, welcome. Good to catch up with you. The warning signs, what have you seen in recent weeks?
Yeah, so I think the only thing more impressive than the performance of semiconductors of late has been that volatility. And we've seen, a host of signals that historically have been quite negative for the semis. So if we go back to June 16th of this year, you had a down 3% day for the stocks immediately following a 52-week high. That's been a pretty bearish signal over the last decade or so. Then on June 28th, you had a negative 7% week immediately following a positive 7% week. So kind of a whiplash on a weekly basis. We last saw that in March of 2000 at the dead highs of the dot-com bubble. And then yesterday was the 15th day in the last 30 trading days where the stocks has moved at least 3% in either direction, so up or down. The last time we saw that was, again, in the February to July 2000 period in the immediate aftermath of the dot-com peak. And then finally, we had a 3% up day that closed, this is a little bit technical, but it closed above its 50 and 200-day moving average, but below its 20-day moving average. And what that does, that isolates periods where you've seen a big rally, but within a primary uptrend. And when you look historically, that has led to some significant drawdowns, 95, 2000, 2004, 2007, 2020, and most recently in July of 2024. So you kind of add all these up, and it really just paints a picture that this increase in volatility is something that historically has meant further downside for the sector.
This sector went parabolic. You noted that several times over the last several months. You became cautious on the semiconductors. Jonathan, just looking at things and how they've corrected, we've come in now, based on the recent rally, we're down about 11%, I think, from the June 22 high. You told us maybe a month or so ago that we would see an equal and opposite correction in that particular index. So with that in mind, is that still the case, Jonathan? And how much downside do you think there is?
Yeah, I think that's still the case. I think we held the 50-day, thought we might get a little bounce there, but I think there's still 20 to 25% downside for the index broadly. If you look at something like the precious metals, which went parabolic in a similar fashion at the end of January, it's only 5 months removed from that, and the silver's down 50% and is in a pretty strong medium-term downtrend, right? So I think people have short memories, and I think the downside is still pretty meaningful at this point.
Do you think that this is a downside that pulls other areas of the index down with it? Or do you think that ultimately it is just a big rolling ball of cash that goes from the semis to the hyperscalers and potentially to equal weight, and that we'll just see more of the same with a further downdraft in the stocks?
Yeah, so at this point, it has been rotational in nature, and I think that's the good news for investors. There's plenty of areas that are, breaking out of multi-year trading ranges. We've highlighted eco-weight healthcare just broke out of a 5-year base. Insurance has broken out of an 18-month base. The REITs look poised to break out from 5 years of sideways action. So at this point, is rotational nature. I think the one risk we're watching is the correlation. The dispersion is so low, or dispersion is so high, the correlation is so low. It's basically at all-time lows. That could become a risk as we get into the the end of July or even August. And that's what we saw in 2024. Correlations were extremely low. And then once you kind of got through the rotation in the middle part of July, there wasn't anything left to rotate into, and that was what led to a bigger market correction. So I think that is a potential concern later this month or into the third quarter. But it's at this point we're still looking for that rotation.
How much pushback do you get on calls that are somewhat against the grain?
Yeah, the semis trade has been a very hot topic, right? I mean, I think there's people on both sides of the coin. I think the bulls will argue it is different this time. Our pushback is, again, the memory is so short. If you go back to May of this year, the hyperscalers and the Mag 7 were at all-time highs, and the thesis was very much that they were insulated to macro concerns. And then all of a sudden, 2 months later, we're talking about their capex going through the roof, and they're in a big drawdown. Just go back to software in October of last year. It was at all-time highs for the software sector, and by February of this year, it was trading down 30-40%. And so we just want people to keep an open mind. It could be different this time, but the gains have been significant. And again, when you get this host of sell signals, I think it at least warrants some caution and maybe hold off on some of that buying at this point.
Jonathan, it's good to see you. Jonathan Krinsky there of BTIG. It's been Jonathan Krinsky. Lisa Shannard of Morgan Stanley has warned about the same thing. Jay Goldberg of Seaport earlier on this morning. Bearish on some of these semis.
Yeah, and partly because people have just gotten so excited about it that maybe valuations have started to get a bit stretched, even as the valuations have come down. When you take a look at the hyperscalers, it is a relative trade as much as it is specific to semiconductors.
You made it, Bramo. Well done.
I love this.
You've done it. We've made it to the weekend.
You have been projecting
I said we made it to the weekend.
That is your first acknowledgement.
Just excited about a weekend of football, all right?
Yeah?
Just very excited about a weekend of football.
You're going to go right to the stadium. Shell out $10,000.
I am not. All right. Next week's a massive week. Here's the lineup on Monday. Jeff Yu of BNY, Sonal Desai of Franklin Templeton, Erica Najarian of UBS, Steve Pagliuca of Bain Capital. Get some rest. Have a wonderful weekend from New York City. This was Bloomberg Surveillance.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg.
More than what you need to know, it's what you need to think about.
Now, some people have written that your bank, Revolut, is worth $75 billion. Have you ever thought of taking your organization public?
Well, the way I think about it, we kind of will be ready probably in 2 years' time. But then again, depends on how good the market is.
Since you don't have an IPO, how do people who work for you make some money? Do you make a market for people to sell their shares internally?
Yeah, so we do secondaries every 1 or 2 years when people can sell a certain portion of their stocks to external investors.
So you've done secondary sales for your employees. So employees can then get some liquidity. Do you expect before you go public you'll do any more of those, or are you just going to wait till you go public before you liquefy any more stock?
Yeah, I think so. We might do secondaries as well before we do IPO, because we do it every 1 or 2 years, so we might do secondary as well.
All right, well, if anybody wants to sell their shares to me, let me know. And have any investment bankers told you why they're the best to do the IPO for you?
Yeah, obviously every single one is the best.
Everyone is the best. You're not in a rush to do it. You don't need the money.
So we're a bank, and then for the bank it's super important to have trust, and then public companies are trusted more compared to private companies. So that's the reason.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream, and a lot of dreams are, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is, nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. You don't start on the third floor or the lobby. You actually have to start in the basement.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
Happy Friday and happy SK Hynix Day. 30 minutes until the start of your cash trade. I'm Danny Berger.
And I'm Bonnie Quinn. Bloomberg Open Interest starts right now.
SK Hynix makes Wall Street history with the biggest ever U.S. debut by a foreign company.
Meanwhile, Delta delivers an earnings beat, but shares fluctuate on a cloudy outlook.
And here come the bank earnings. Wall Street's biggest firms are set to report another blockbuster quarter.
Well, we're keeping an eye on the AI trade today, that's for sure, Danny. And while semis may have saved us the last couple of days, it's a little bit mixed today. We'll see what kind of a test we have for investors' appetite for chip makers with the SK Hynix offering a little bit later on. And a report from SEMI-Analysis found that Meta's AI compute capabilities make it the only hyperscaler able to take on OpenAI and Anthropic, and you can see the market reaction.
Yeah, tough day for the chip stocks considering all the supply we have to absorb from SK Hynix. Bonnie, you mentioned this. On the earnings front, we also have Delta. Shares are unchanged at the moment. Initially, they moved higher because they had a full-year profit guidance that beat expectations. Demand withstood some of those high fuel costs. But then we started to see gains paired back with the CEO, Ed Bastian, discussing the challenging macro environment. Analysts also noting that Delta is among the least impacted carriers from the Iran war. Even so, profit has started to be challenged. Challenge from them, challenge from Pepsi. Difficult to sustain any gains, Vani.
Well, Danny, all eyes, as we've been saying, on SK Hynix this morning as it raises more than $26 billion in the largest ever U.S. first-time share sale by a foreign company. Bloomberg Tech's Ed Ludlow joins us now, and he's from the NASDAQ. Ed, explain to us, how is this going to go down? When do we see ADRs start trading?
Yeah, later this morning. It's probably interesting to frame it in the context of demand, right, Vonnie? You know, you could say, OK, it was 7x oversubscribed. But the better way to put it is there's $200 billion of demand for a $26 billion deal. And that is completely in line with SK's rationale for doing this. You know, yes, they need to raise the capital. This is dollar-denominated capital to fund expansion of capacity. They have a 57% market share in high bandwidth memory that goes into data centers for both training and running of AI workloads. But they need to also get the kind of name out there. This was as much about getting in front of the American investor that SK believes understands that AI story. And maybe from a valuations perspective, just bridging the gap a little bit. Remember, 57% market share in HBM, but Micron and Samsung trade at that premium that SK is trying to address.
I'm really interested in the mechanics of this, Ed, because typically with these ADRs, you'd be able to move back and forth. You could convert your U.S. ADR into a South Korean one into an American one, but it is just one way at the moment. You can only move your on one way. So is that arbitrage, is that premium going to forever exist with the American ADRs if you can't necessarily convert the South Korean ones into the American ones?
Yeah, even in the immediate term, it was a conscious decision to price the ADR at it's very modest, but a premium to the closing price last night of the Korean common shares. $149 was about a 3% premium. You know, in terms of sort of equivalents and parallel case studies, TSMC's ADRs do continue to trade at a premium. But in this case with SK, basically one ADR is valued at a tenth approximately of one Korean common share. So that fungibility issue is interesting. But again, remember, like $26 billion seems like a lot to raise in terms of proceeds. But in terms of a percentage of this company, it's like very small. So there are longer term questions about the ongoing and returning behavior of SK as it relates to the US capital markets.
Ed, thanks for joining us. And can I say we are so pumped for your interview. That's Bloomberg Tech's Ed Ludlow. Ed's going to be sitting down with the SK Group chairman, Chae Tae-Wan. That's going to be at 10:30 a.m. New York time.
probably the interview of the day. You don't want to miss it. Elsewhere in earnings news, Delta shares, they are fluctuating after reporting earnings this morning. The company's CEO, Ed Bastian, expects ticket prices to remain high as it attempts to recover higher costs. Joining us now is Sid Phillip, Bloomberg Global Aviation Chief Correspondent. Sid, is this just the fault of high energy costs, the reason that we're seeing shares under pressure this morning?
Yeah, so every investor is looking to see how demand's going to play out and what higher fares will really do to demand. So far, demand's been holding up. I mean, Delta has been sort of talking about how demand has held up despite higher fares, and they expect that to continue. And so analysts are concerned that the longer these higher fares go on, what will be the purchasing power of the American consumer, and will they continue to buy at those higher prices? Because Bastian did talk about how fares aren't coming down anytime soon because they have to recover those higher costs.
Speaking of, the K-shaped economy and the premium consumer versus the non-premium, EasyJet got another bid, this time from Apollo. And I'm curious, what does Apollo want with EasyJet beyond the obvious assets?
So the assets obviously remain attractive. I mean, EasyJet's got a fleet of about 300 aircraft, and they've got orders for almost 300 on their books. And those orders are for A320 aircraft. Those aircraft are very high demand. Beyond that, EasyJet's growing its holiday business. They've been sort of adding more capacity. They've been sort of expanding their business types. And so for them, this is an opportunity to get in at a low price, given the fact that the airline has been, especially since the war began, the airline had been trading much below its previous prices. So it's a very good opportunity for a bidder to come in and sort of, when the market takes off again and when that holiday business actually starts delivering, this is an opportunity for any investor to sort of cash in on that. And so we've seen Apollo come and best Castle Lake, and it remains to be seen whether or not there will be some sort of bidding war, whether Castle Lake will up their offer. We still wait to see that.
Yeah, climbing all the while. Sid, thank you so much. That is Bloomberg's Sid Phillip. By the way, we're going to hear from Delta CEO Ed Bastian on Monday. That's live on Bloomberg Surveillance, so do tune in. Turning to Wall Street now, and 5 of the 6 largest U.S. banks set to report earnings on Tuesday, offering investors a crucial read on lending, trading and the broader economy. Let's get more with Bloomberg Chief Wall Street Correspondent Sri Natarajan. Sri, you're going to have to parse out your time pretty well on the morning of all of those earnings. Where will you be training your eyes first? What's the most important metric we should be looking for?
I think the most interesting number will be the trading figures. That's where you will expect. The banks are already very giddy about it. You've seen some of the chatter come out of inside Goldman Sachs. Halfway into the quarter, people have been super excited, especially on their stock trading desk. So we will be paying close attention to those numbers. But just going back to the idea that we talked about, this is SK Hynix Day. Think about anyone with a view of Midtown Manhattan last night and you saw the JP Morgan building lit up in the Korean flag. Like, they raised $26.5 billion. And yet they barely make the podium finish in terms of equity raises in the last month. We've had Google that came in and raised $40 billion. You had SpaceX with $86 billion. Google again with another $40-odd billion over the next few months. It just shows you what enormous appetite there is, and also that capital markets are wide open. Trading desks are humming. When you talk about the deal-making desk, year over year, M&A growth has been phenomenal. Goldman Sachs has been touting the fact that it has hit $1 trillion in deal volume at the fastest pace ever. This is going to be a phenomenal quarter, but it also augurs well for what's ahead. Expect Ted Pick to get on the call and talk about the flywheel effect in an animated fashion, because this will feed into and amplify all parts of the business.
Right, and I mean, we had Stefan Feldgois on this very show after Goldman hit that metric, and he was incredibly bullish for the second half of this year. So deals are firing on all cylinders. A record first quarter and a huge first half. The trading desk looks good. What about everything else? What about the Bank of Americas of the world? What are they going to say about their consumer lending businesses, Sri?
And again, so let's look at the other part of the business. Yes, we've talked about the Wall Street operations. What about the consumer operations? Commercial and industrial loan growth, that appetite exists. Even consumer loan growth exists right now. When you think about the rates, yes, we've been going back and forth on where rates are headed and where we might end up at the end of the year. But where rates are right now feels like almost the Goldilocks level for banks. It is 2 years ago when I think about it, Mike Mayo talked about the roughly 3% level as what is bank heaven in terms of rates. If it goes much higher, it can become bank hell. But right now, it seems near perfect. The one note of caution, and one thing I will be paying close attention to, is what they say about the health of the consumer, because you heard commentary from Pepsi yesterday saying higher gas prices means fewer snacks are getting sold. Bank executives have consistently over the last several quarters talked about the strength and the resilience of the consumer. And it is also entirely possible that they once again tell us the same thing because they're not exposed to the lowest consumer segment anymore, like some of the fast-moving consumer good companies.
By the way, I loved your and your team's reporting on Mike Mayo skipping gym day to do the 5 bank earnings on Tuesday.
I will tell you, it might seem frivolous, but it is a very big deal for Mike Mayo to skip gym day.
Anyone who follows Mike Mayo and his powerlifting knows that is certainly a big deal.
2 years ago, his deadlift record was 410 pounds, and he assures me it's much higher now.
I wonder what's more, him or Chris Waller. I wonder if they compete out.
We should have them on Bloomberg TV compete.
Deadlifting, yeah, I like that. It's an open invite to both of you, by the way, if you're listening. Sri, thank you so much for joining Sri Natarajan of our Wall Street team. A check on markets this morning as we gear up for the SK Hynix listing. We are within 1% of all-time highs, but we are seeing chip makers challenge this morning. Look, we're going to have to absorb a lot of supply, the biggest cross-listing ever from a foreign company coming in. So you're seeing Micron, SK Hynix, the likes of which starting to fall as we start to think about, okay, are we all competing for the same capital? So we're down just under 0.5% for the NASDAQ as the S&P holds ground again within 1% of all-time highs. Yields a little change this morning as Brent crude also little change with talks maybe restarting in the Middle East. We are trading at $76 a barrel. Some of the other individual movers on our radar this morning, Triple C Intelligence Solutions climbing on a report that the insurance software company is exploring a sale.
Lubricant spray maker WD-40 boosted its net sales forecast for the full year, up 16.5% now.
And stablecoin issuer Circle was approved for a U.S. bank charter that will allow it to custody assets with under OCC oversight, shares up 12.6%.
And coming up, we're going to get back to Delta earnings. We'll be speaking with Jefferies senior analyst Sheila Kayoglu. This is Bloomberg Open Interest.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors.
We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Anything we do in Africa is going to be more risky than the U.S. I think the approach we want to take is how are we being compensated for that risk? And one of those is obviously going to be a valuation question. In our minds, valuation is a lot more attractive in Africa, even if we adjust for some of those Africa risks that a lot of Western investors see. So yes, in a lot of ways, you take some of those models that, as I said, might be more asset medium or asset heavy. There might be some more inherent risks. However, if we're saying we're adding some risk because of that kind of model, but we're now solving a core problem as opposed to maybe a nice to have solution in Africa, that might actually offset it. Where if you're solving something that people really absolutely need and can't live without, in a way that then that's a lot less risky. So again, we'd encourage investors to have a less binary view. In other words, the US isn't risky, Africa is risky. That's going to lead to a lot of complications down the road.
U.S. jobs numbers are released, Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Now to high interest to look at what's making headlines around the world. Talks between the US and Iran over a permanent peace deal continuing despite 2 days of clashes this week. An American official telling Bloomberg the US is still committed to finding a diplomatic solution with Iran, describing ongoing discussions as technical talks. The two countries are aiming to reach an agreement by mid-August, roughly. A Ryanair flight was forced to make an emergency landing in Greece this morning after a window on the Boeing 737 dislodged soon after takeoff. Several media outlets reporting that one person was almost sucked out of the plane. The window reportedly shattered after a piece of the engine broke off and hit it. Delta delivering stronger than expected earnings and reaffirming its full-year profit guidance. The airline saying stronger demand for premium, corporate and international helped offset the highest quarterly fuel expense in its history. CEO Ed Bastian cautioning that ticket prices, well, they're not going down anytime soon. They're likely to remain elevated as the company looks to cover higher costs.
Let's get more on Delta earnings, and we're joined by Sheila Kayalu, Jefferies Senior Equity Research Analyst. She has a buy rating on the stock with an $105 price target. Sheila, great to see you.
Thank you for having me.
Can I just get your first reaction to what we heard from Delta this morning?
Yeah, I think Delta earnings were pretty good, as expected, but the stock has outperformed its peers by about 20%. So I'm not surprised to see it trade down a little bit pre-market. The revenues were up 14% year over year in Q2. They had robust results, mostly on pricing. Capacity is flat, so you're seeing low teens revenue growth on pricing, and the exit rate should be much better than that. So Q3 is sustained and likely into Q4 as we see capacity rationalized in the U.S. So good things from Delta this morning.
Good work. Yeah. Is this partially because of Delta's hedging strategy, and will all airlines be different because of their hedging strategies?
No. So the costs were actually up for Delta about 7%. We're expecting other airlines to report costs ex-fuel in the low single-digit range. So Delta's costs were a little bit elevated. That's due to their pilot premiums that they're paying, kind of because the capacity cuts are happening, delayed flights a little bit. So you actually saw costs a little bit elevated. That was embedded into our numbers, so it wasn't necessarily a miss. It was kind of a somewhat known item into the mix. But their hedging strategy is helpful, not as helpful as one would expect as we head into Q3.
Does that just mean in general that we have seen profits peak if they continue to face these higher expenses both for their staff and for fuel?
No, not at all. In Q2, costs, fuel costs were up about 100%, but EBIT was only down 50%. So margins held in there at 8.8%. So margins were actually down versus last year at 13%. So there's lots of runway to go. Delta, we think, could get to a mid-teens market, and they have a lot of ancillary revenues that get them there. For instance, their MRO business, it's only about $1.2 billion in sales today for the 2026. We forecast it could get up to $5 billion of revenues at mid-teens margins. They hit 13% margins this quarter. So they have a lot of other line items like their MRO, like their credit card, that drive some of their additional earnings power.
So what should Delta be aiming for next? So looking forward, right? It obviously has a little bit of a lock on the premium consumer and business travel and so on. How does it grow?
Continue buy up in fares. One of the things we're disappointed about is the continued segmentation of the fare structure, where business class is seeing further segmentation, where it's basic business, business main, and premium. So you could accidentally get locked out of a lounge if you don't pick that main business.
It's so ridiculous, Sheila, but surely they're doing this and like following United and the others that maybe have the strategy, because it's what the consumer wants. Like, I personally, as a consumer, want to know that if I'm buying business, I'm getting the whole suite of things. And I guess what their bet is that people are just going to pay up for that, or willing to pay a little bit less to not get that.
Yeah, I mean, if the fare cost is $200 difference and the cost to them to operate the lounge is $100, that's a great margin driver. So I think that's one of the drivers of Delta from here is continued margin expansion. And as capacity comes in, expanding that, whether it's Atlantic or Pacific.
Well, I was going to say, is that the next frontier for competition between the premium airlines, right? Because seems to me like everybody's charging roughly the same, but the way that they can outdo each other is perhaps on just the little luxuries, you know, in the business seat. And I mean, they can't expand those too much more. So it has to be the lounge.
Newer fleets, where I think, you know, there is sort of an upgrade cycle coming across the U.S. carriers and the European carriers and Asian carriers. We're heading to the Farnborough Air Show next week. And I think there's going to be a lot of competition for wide-body aircraft. You're seeing Singapore Airlines, Qantas, Philippine Airlines, and I think you could see the U.S. network carriers too. United already has a lot of aircraft on order, but everything you fly to the Atlantic or Pacific is an outdated 767, or you might get lucky and get on a Virgin A350, which is, you know, has its setbacks as well. So I think, you know, newer fleets are a big driver because that lowers maintenance expense, fuel savings, but obviously
I like
as an
the
output.
club lighting and the Virgin jets, yeah.
These are also airlines that have discovered that they were able and continue to be able to raise prices, especially when the cost of fuel went up. And it's something that they're all maintaining. And I wonder if at any point, because we do see in consumer surveys this really big pushback to what they feel as inflationary pressures. Does there come a point where the consumer is less willing to spend? Or do we need to segment this and say, as long as it's a premium consumer, Delta can keep their prices elevated?
I think you're seeing the main cabin also improve this quarter, which was so important for Delta. Main cabin also took the fare increases. In the U.S., the consumer is taking on fare increases. Not so much in Canada, but I think the U.S. consumer is hungry for travel, and that's being sustained. And airline prices have been deflationary, so this is just level setting them to where they should be.
By the way, did they get a World Cup bump at all? Like, do you think we'll see that in the numbers or not really?
We didn't see that in the Delta numbers, although I will say domestic travel was the highest growing area. Atlantic was fairly strong, up 8%, but point of sale out of Europe remains weak as Europeans are reluctant to travel to the U.S.
Sheila, you cover, you know, several major airlines. What are you looking for in terms of the rest of earnings season for the airlines? Where will the weak spots be?
What United says about American and what American could do in terms of controlling its costs.
But you mean United talking about what, M&A again, you think?
Yeah, I think that's hampered the stock a little bit. So I think going forward from here, they'll continue to talk about their premium strategy and look forward as they think about, you know, increasing their pricing power and expanding their network as well.
The deal conversation maybe fizzled out here. I mean, it's happening in Europe with private equity and EasyJet. Now, do you expect, though, the conversation to pick back up again in the United States looking for more mergers?
No, I think that's what's so interesting. I think the U.S. market versus the European airline market is so different. The European airline market is actually enthusiastic about the low-cost carriers, where they tend to do really well. Ryanair, Wizz did for a very long time. EasyJet obviously has a very young fleet. And in the U.S., it's all about the premium legacy network carriers. So it's an interesting bifurcation in the different markets that we're seeing.
All right, Sheila, thank you so much
Thanks
for joining.
having me.
So great to have you. Enjoy the rest of your Friday and your
Thank
weekend.
you.
That's Sheila Kayabu of Jefferies. And then just another reminder, we will be hearing from the Delta CEO, Ed Bastian, this upcoming Monday, speaking with Lisa Abramowitz on Bloomberg Surveillance. Breaking news coming out of Washington. President Trump just posting on Truth Social, quote, "I will not sign the housing bill, which has been fully approved by Congress and sent to the White House in protest over the fact the United States is not capable of passing the Save America Act." If you remember, this is a housing bill that had been passed in a bipartisan manner, trying to prevent institutional ownership of housing, a single-family housing. It did have a lot of caveats that perhaps the industry was more happy about. This was considered a slam dunk, but President Trump initially saying he wouldn't have a signing ceremony, but then saying that he won't sign the housing bill.
All right, still ahead, Danny, strategist Emily Rowland on the market moves she's calling a dip buyer's dream. This is Bloomberg Open Interest.
weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
Bringing you the latest geopolitical news whenever and wherever it happens. I'm David Gura on the Salar de Uyuni in Bolivia, and this is Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe. I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie. This is your opening trade.
Only on Bloomberg.
Five minutes to go until the start of your cash equity trade. S&P futures just hanging in there. We are trading just within 1% of all-time highs after a rally yesterday that did see chip makers gain. Today that flips. Every day we wake up and we say, what did South Korea do? What are chip makers doing? It's literally the toss of a coin. It feels like every other day. But we are having to absorb $26.5 billion worth of SK Hynix getting listed into the American market. So that's making it very challenging for some of the American listed chip makers. Micron and some of the other ones as well starting to fall. SanDisk, that was the one I was looking for in my brain, are starting to fall in today's American session because of what we have to absorb.
Your memory chip wasn't working.
Ooh, I like it, Bonnie. Good pun. Good pun. My memory chip needs an upgrade. 10-year yields, those are a little changed. And Brent crude, Bonnie, it's only up, but only up 0.25%. This is an oil market that, despite all the back and forth we've seen over the war in Iran and talks now apparently restarting, not that much of a reaction.
Well, the market was able to absorb it pretty quickly, right? And this was another case of President Trump saying something and then maybe walking it back slightly, and the market trying to decide what does this actually mean. Bear in mind those discussions have to start up again after the funeral, so they're really only resuming.
It's a very good point, and we're going to talk about all that and more. 4 minutes until the opening bell. Manulife, John Hancock's Emily Rowland joins us right after this commercial break.
Anytime you have an industry that grows like that, there will be pockets where things are more difficult. So if they're smaller companies, it's harder to deal with tariffs, it's harder to deal with labor, and with rising interest rates. So there you may see some poor performance. That doesn't necessarily mean that lenders will lose money, but it may be more difficult. And then pockets of software, everybody's been worried about how will that play out. I think there was a lot of capital that was put in from very smart private equity and very smart institutional investors into software really in the 21-22 vintage that was pretty highly priced. And that, as that works its way through the system now 4 or 5 years in, you may see pockets there. But I also think that the need for income, people want income in their portfolio, and they can get that in many ways. You can get that from the treasury market. You can get that from a bank. You can get that from high yield right now is pretty good. High yield has very little exposure to software. And then you can get it from private credit where you maybe get more return and a little less liquidity. And so that, I don't see that going away. In fact, I see investors wanting more of that and wanting it from real estate, wanting it from real assets.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia Trade.
This is Wall Street Week.
Welcome to Balance of Power.
You're watching Bloomberg Deals. Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Tyler Kendall in Geneva, Switzerland, and this is Bloomberg.
Just seconds to play for until we start trading. On this Friday, the last day of your trading week, you're watching Bloomberg Open Interest. I'm Danny Berger. The S&P, again, just hovers around 1% of all-time highs. The NASDAQ, though, that is declining about 1/3% in the future session heading in to the open as we open markets. It is a lot of supply we have to absorb, so that seems to kind of be taking some of the steam off the boil. And Dow Jones, that's up about 1/3%. Here's the people everyone wants to talk to, and Ed Ludlow will be talking to them at 10:30 a.m., so in about an hour's time. But it is SK Hynix ringing the opening bell, the biggest foreign listing ever to come to these American markets as they look to get maybe some of the same valuation as Micron and some of their other peers. Man, rough to be down at the New York Stock Exchange, competing for attention with what's happening down at the NASDAQ. We have a data center company ringing the opening bell, so at least it's still like AI related. But again, it's all about SK Hynix today. Looking at what some of the big AI-related stocks are doing, NVIDIA, that's up about 1/3%, as I mentioned. Ahead of SK Hynix's debut, we are seeing some of the other chip makers start to decline as we make space. You'll make space in their portfolios. For SK Hynix, Micron down almost 3%. Meta, it has been declining, down 26% from its all-time highs. Helping them today was a report from SemiAnalysis finding that their compute capacities make it the only hyperscaler able to take on OpenAI and Anthropic. And in recent weeks, we have heard news that Meta looking to sell more compute, becoming a cloud company. Those shares up 5%, Bonnie.
All right, Danny, on the earnings front, Delta Airlines reaffirming its full-year profit guidance as travel demand withstands higher fuel costs. Shares pared gains as CEO Ed Bastian discussed the challenging macro environment. Analysts noted that Delta is among the least impacted carriers from the Iran war.
Let's get back to the NASDAQ, where SK Hynix poised to become the third largest listing in history after raising more than $26 billion. Bloomberg Tech's Ed Ludlow gearing up for an interview with the chairman. Ed, it's countdown time to both your interview and the listing of this stock after we saw them ringing the opening bell. What do we know so far about how this thing is likely to price and be received?
Yeah, the demand is clearly there. It's a memory chip moment in financial markets around the world. So you see the leadership of SK Group, the parent, including the chairman, Chae Tae-won, who we'll speak to in just over an hour's time, along with other leaders, including Vice Chairman Chae Jae-won and the SK Hynix CEO, Kwak Mo-jung. The company sold 177.9 million ADRs for $149 each, with each ADR equivalent to 1/10 of a sole traded common share, but they priced at a slight premium, which is interesting. They didn't want to leave money on the table, raising $26.5 billion. We keep saying it's a record for a first-time U.S. share sale by a foreign company. They need the proceeds, right, to boost memory capacity, particularly high bandwidth memory, a market in which they have 57%. But the mantra here is we want to be where the AI is. They wanted to get out in front of US investors as they ring the bell here at the NASDAQ. These ADRs set to begin with when issued trading this Friday on the NASDAQ Global Select Market under the ticker SKHYV, but that will change to SKHY when they begin regular way trading on July 13th. There are lots of questions about the trajectory for the memory market, the tightness, how long it lasts, but on the capital market side, already questions about what happens next there too.
Ed, we're really looking forward to all of your coverage. Bloomberg Tech's Ed Ludlow. And again, tune in to Ed's interview with the SK Group Chairman, Che Tae-wan. That will be at 10:30 a.m. New York time, the conversation of the morning. Joining us now as we beat the drum to that SK Hynix listing, Manulife John Hancock Co-Chief Investment Strategist Emily Rowland. Emily, great to see you this morning. What does it say about this market that we can have something of a bear market in Korea led by a sell-off in these chip makers? We can have the Philadelphia Semiconductor Index not see a move of less than 1% decline in either direction for more than 2 weeks. And amid that volatility, SK Hynix can come to market and raise $26 billion.
Yeah, Danny, nothing can stop this market in terms of the AI and semiconductor memory trade right now. It is just remarkable. I feel like we're going to see our grandchildren sort of studying this in business school someday. It's just amazing. And what's so incredible about it is just the power of the earnings. We're huge believers that over time, stock prices follow profits. And we're just seeing incredible numbers within semiconductors, over 100% earnings growth last quarter. Analysts on the street looking for the same this quarter. So as long as a fundamental case here can remain intact, it's hard to see the broader trend of market strength here halt. And the other element that's going on right now is that it's just a dip buyer's dream market. Every time news comes across the tape, to your point, attempting to cause some kind of selling pressure in markets, it's almost like a beach ball that's underwater and it just pops right back up. And you get this transition from buying the dip to seeing stocks rip it once again. So as long as that behavior continues, I think, again, the broader trend here is intact.
Emily, it's been a dip buyer's market, right? It's been a dip buyer's dream, but there is a certain level of confidence that's necessary here. I mean, what if one of these times the dip buyers just don't reemerge? We've seen huge downswings several times over the last couple of months.
Yeah, Bonnie, I mean, that's why it's so important to think about owning other things. The biggest challenge that we found right now is that concentration risk is more epic than ever. So if you look at something, for example, like the MSCI Emerging Markets Index, 27% of that index now is concentrated in semiconductors and semiconductor equipment. 44% of the EM index is now in technology. The entire global stock market is now a giant technology index. So the biggest challenge we have is, and we're seeing sentiment shift to those markets. So as asset allocators, how can we think about owning other things if there is some type of sell-off or downside volatility in this very popular corner of the market? So for us, it's looking down in market cap, thinking about things like mid-cap stocks, looking to areas like industrials and healthcare, and then also thinking about fixed income. We have income. And that's really critical. It's tough to talk about right now because there's so much excitement in these other sort of pockets of the market. But we still think leaning into a 4.5–5% yield in high quality bonds makes a lot of sense as we approach the back half of the year.
Well, what the bulls would say about this equity market, and Emily, I'm sure you would agree, is just that earnings and earnings expectations look so strong. I was though listening to Liz Ann Saunders earlier on Surveillance talk about this idea that where there is a bubble, it's not earnings, but earnings expectations. We are expecting an earnings growth of 22% for profits versus a year earlier. That is something we haven't seen in the post-pandemic period. Emily, that's an incredibly high bar to pass. Have we gone too far in what we're expecting from earnings? Are we going to get more Samsungs of the world in that they report and they beat, but it's just not good enough?
Yeah, it's such a great question, Danny. And it's really the reason that we're looking for sectors that have a lower earnings bar into next quarter. Financials are one example. 7% is what's being penciled in right now. We think financials can beat that. Industrials is one of our favorite corners of the market. The earnings estimate there is for about 9.5% earnings growth next quarter. There's a lot of tailwinds there. You've got the one big beautiful bill that's helping industrials. You've got this onshoring CapEx boom that's helping industrials, really the picks and shovels around the AI build out. So that's a favorite area. So we want to look for areas where maybe the expectation is not quite as elevated as it is in other segments of markets like technology.
You say healthcare is cheap as well, Emily, but where would you go there when you see people coming off of insurance rolls, for example, and lots more problems in the sector?
Yeah, I mean, active management, to your point, is gonna be critical there in terms of identifying those great fundamental stories. But when we think about healthcare, it's really high quality, great return on equity there. We see it as being less impacted by AI in terms of people's healthcare needs. And it does all right in periods where we're seeing negative wage growth, which is where we are today. So sort of stickier businesses, if you will. Healthcare has also not been the best performing sector out there. So it's another area where we think the bar, again, is more manageable.
Emily, we're going to have to end it there. Thank you so much for joining us. Enjoy your weekend. Manulife, John Hancock, to Emily Rowland. Let's get a check on your equity markets almost 10 minutes into your trading day, and we are higher. We're not yet at a record. We need to get to 76.09, just above there, to hit another all-time high. It's this trade that keeps flipping. It is, I'll say this again, I said it all week, the check writers versus the check takers. Today, it's the check writers that are moving higher. It is Meta, Microsoft, Nvidia, Amazon, so all these companies that need to spend a lot on memory. To the downside, it is the chip makers. It is Micron, Intel, Lam Research, Broadcom. Eli Lilly is up there too. That's declining. So we are getting ready to absorb all the supply from SK Hynix. So some pressure coming into that. So maybe a little bit of technicality in today's trade, less than fundamentals. Eli Lilly being down is dragging healthcare with it. Infotech, again, it's the semis. That means that we're moving lower. And communication services is at the top with some of those hyperscalers like Meta having a very good day. And energy moves higher as the price of oil also goes up to the upside. Coming up on our show, why S&P cut Oracle's credit rating to just one notch above junk. That's coming up. This is Bloomberg Open Interest.
We should not deny that change is coming. And change is not coming just in data centers and AI. As a world, we are building infrastructure, we're building energy, we're doing energy transmission, we're building next-gen manufacturing, we're ramping defense, and we're doing this thing called AI and data.
Yes.
We will see the largest need for capital ever. And that's what we've seen so far this year. And so now to your specific question, it's about underwriting. There are a number of very strong US tech companies who run diversified businesses, Amazon, Google, Microsoft, who are interested in seeing these centers built and are interested in not consolidating the debt on their balance sheet. And to the extent they are prepared to lend their credit, one can lend against those types of things and make sensible underwriting decisions.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker Playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Bringing you up to the minute geopolitical news whenever and wherever it happens. I'm Anne-Marie Hodern in Beijing, China, and this is Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine. Watch, listen, stream.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
All right, a check on markets here on open interest. We are eking out 1 point of a gain on the S&P 500. I think, we're at low volume, 2-month lows when it comes to volume. So we're really heading into the summer lull after a massive, massive June in terms of volume. Today, everybody is just going to be waiting on the SK Hynix offering. For the moment, the Nasdaq 100 down about 1/3 of 1%. But we did see 2 days of gains after that shock from President Trump on Tuesday morning at the NATO conference. The Philly Semiconductor Index, well, it deserves a break. It's up 5% over the last 2 sessions. Down 1.5% so far today. We'll see if SK Hynix changes that. Brent crude staying where it is. It's sort of hanging out and watching to see what exactly happens over the weekend and into next week, particularly with the Strait of Hormuz. Time now for our top calls. Some of the analyst action in focus this morning. And first up, Citi upgrading Toll Brothers to buy, saying that the home builder is on the right side of a K-shaped housing market. Those shares up 2.25%. Next up, Stifel raising its price target on AMD. And it's talking about a recent sector weakness as a valuation reset rather than a fundamental slowdown. And finally, Susquehanna initiating coverage of IBM with a neutral rating, seeing, quote, so many reasons to like IBM, but noting concerns around the consulting division and automation disruption. Danny.
Bonnie, staying with tech, and S&P Global Ratings has just downgraded Oracle just to 1 notch above junk. They've cited the heavy spending needed to build out its AI infrastructure. Joining us now is Bloomberg Senior Markets Editor James Crombie, who also hosts the excellent podcast Credit Edge. James, great to see you. And look, this is a management which has consistently highlighted their aim, their goal, and their ability to stay investment grade. Just how teetering on the edge are they to losing that promise?
For credit markets, it's the slow-moving train wreck. We flagged it 6 months ago as the big risk coming into this year, that they would be cut to junk. They are burning through cash. They're borrowing more than ever. They are, if you take out the banks, they're the biggest borrower in the US credit market. So they just have a ton of debt, and they need to start earning a lot more.
Why just Oracle, though? I mean, S&P said demand is strong now, competition intense, other tech companies pouring money into AI. They have a greater capacity to raise capital, but why? I mean, everybody seems to love AI debt right now.
Yeah, I just think the ton of debt that Oracle has already got, and then going into this, they need to raise, between them, the hyperscalers need to raise trillions more. We're already seeing pushback from investors, which is kind of worrying when you're so early into this phase of, multi-year massive borrowing spree. So, I think there's going to be trouble all around. Spreads are going to go wider.
Can you outline some of the pushback we've seen? Because we've certainly seen it in the case of SpaceX, for example, that has started to see their debt start to fall back. You've seen Amazon not as robust as a demand as we've seen. How much of that is just teetering around the edges? It's not that big of a deal. Or are you really starting to see investors pushing back against some of these new issues we're getting around AI and AI spending?
Well, if you saw Matt Brill last week on Bloomberg TV hoisting a red card, wearing the Team USA top, I think, it's pretty widespread that investors, that's a big portfolio that Matt's running. So I think, investors around the world are saying, look, this is a lot of debt and there's a lot more coming, and each one comes cheaper and each one comes bigger. And, we've got to make capacity to buy that.
But are we about to see a host of downgrades then? Is that what you're saying, James? Maybe not to just one level above junk, but some kinds of downgrades.
I think the others have a much bigger equity cushion, and so they have more capacity to do more borrowing without affecting their ratings, and they're also higher rated, so they have a much more of a better buffer. Oracle has always been the weaker one in that group.
Can I just ask, because one of the very bullish theses for this market, and a credit executive told me this, so I will remain nameless, basically said credit spreads will never widen because there's just so much money that needs to be put to work. And that's kind of one of those things I feel like people say and then they regret it 5 years later. But where is kind of this supply-demand balance sitting right now?
I mean, there's a ton of demand for yield, so people are kind of looking beyond spreads, which are very tight. And we know that net supply has been very low over the last 5 years, so basically investors are getting more inflow, they don't have anywhere to put it, so spreads are getting tighter. But in this year, we're going to see a lot more rebalancing of that equation. So there will be a lot more net supply, close to $1 trillion of net new supply of investment-grade debt, which we've never seen before, from the hyperscalers, from M&A, from all other fundraising that's going on. So that's going to push things back, and I think that there will be widening spreads, and I think that whole, there is demand, yes, there is demand, but at some point, spreads have to go wider.
James, contrarianly, could this downgrade actually be an opportunity for some investors? Bloomberg Intelligence pointing out that Oracle's spread gap versus high-grade peers, including SpaceX, is leaving room for excess carry now, and that might be, attractive to some people.
Yeah, there's always an opportunity, but, when it goes down to junk, that's $120 billion of debt. That's 10% of the junk index. It's a complete flooding of that whole market. A lot of those investors have capacity limits on what they can take by single name, so there's going to be a lot of problems absorbing that in the junk market. Yes, there's always an opportunity when things go wider, but I think there's a bigger problem of that hitting the junk market and just flooding it. And that happens when, James? Well, I'm not going to predict it, but it's a slow-moving story. These things take time. It will happen eventually. It will, and we have a request out to the S&P analyst, so maybe he'll tell us eventually. And our thanks very much to Bloomberg's James Crombie. Coming up, the SK Hynix listing has unleashed a wave of new leveraged ETFs. We'll talk about that next. This is Bloomberg Open Interest.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
SK Hynix's U.S. debut paving the way for a fresh wave of leveraged ETFs tied to the South Korean memory giant. Let's discuss with Bloomberg Intelligence ETF analyst James Seyffert. Why invest in the company or its ADRs when you can invest in something synthetic related to it, James? How many are being traded literally today and how many next week?
Yeah, so it looks like there's going to be about 8 that are going to launch that are going to track SK Hynix, which is a lot. But again, we had just the SpaceX IPO, and there's already 11 levered long or short SpaceX exposed ETFs. So SpaceX actually has the most single stock ETFs tracking it. So yeah, we're looking at 8 that are going to come live likely on Monday.
Wow. There had been a big conversation, James, and you've been writing about this, about the impact of these leveraged ETFs, specifically in Korea, this concern that a lot of the sell-off was due because of deleveraging coming from them, and you have issues around dealers trying to get the correct exposure, and banks may be pushing back. As we get more of these listed, does that just increase the risk that you see wobbles, that you see quite technical issues in the stock trading because of these leveraged ETFs?
Yeah, I mean, there is definitive evidence that there are instances of the tail wagging the stock dog. SK Hynix is an example of what happened in Korea. But even here in the US, you can look at some names where these single stock levered ETFs, they're getting so big. The one thing the listeners and viewers got to understand is they reset every single day. So there's kind of like maneuvers that happen at the close every day. There's a lot of the Greeks with gamma and different things that have to happen with options for these dealers to get these things set. And there are moves that are happening because of the size of these things, where if you look at Bitmine Emergent Technologies, one of those Ethereum DAT companies, that, for example, in late April and early May, the notional exposure to the levered ETFs that track it, the volume was more than the underlying stock. And when you look at a lot of these, you get to points where, like, if you're looking at the notional exposure of trading, when you incorporate the leverage, we're getting north of 50-70% of some of these stocks on a weekly basis. So these things are definitely starting to impact their underlying rather than track them.
James, we're getting a first indication here of where SK Hynix will start trading. The ADRs, that is, indicated to rise 21% and to open at $180. Would you anticipate that that's, a fair game in terms of a premium to its shares in South Korea?
Yeah, I mean, I wouldn't pretend to know exactly what premium or discount or whether it should trade in par with it, but I would say that these ETF issuers, they would love to have their levered single stock ETFs trading today, but the SEC is just not going to allow that. So we're not going to see these levered versions of SK Hynix here in the U.S. likely until Monday.
Has the SEC been pushing back at all, James, against some of these leveraged ETFs, especially considering some of the risks that you just outlined?
Yeah, I mean, so there are rules around what you can and cannot do, and all of these ETFs fit within the rules. My concern is more so the names we were just talking about, Bitmine Immersions. If you look at Strategy, actually, the Bitcoin DAT company, Rigetti Computing, Quantum Computing, Oklo, Nuclear, those type of like really heavy favored retail names, the stuff you see on Reddit message boards, those are the ones where we're getting like these single stock ETFs are getting too big for the underlying. The single stock ETFs in Micron and even SK Hynix, for the most part, yeah, they're getting big, but they're not getting to the level where they're trading more than the underlying or significantly impacting because the underlying have more than $1 trillion in market cap. So there is nothing from the SEC that they're like kind of trying to stop this just yet, because as long as you keep within 2x and there are VAR rules, value at risk, not the FIFA reffing side of things, but there are VAR rules that kind of limit this. But right now, everything is within the rules. But I wouldn't be surprised if something comes out where the SEC kind of needs to put like some sort of lid on some of these with how big and impactful they're getting.
Is the appetite for the quote-unquote regular ones as big as in, places like Korea on the retail side of things, James? And I don't, obviously, the total market is much bigger here in the United States, but just per capita wise or what have you, is there a way to see if retail is way over invested in these things when they're not in the stocks?
Yeah, so I would say there's no indications that retail is like super overinvested. Actually, a lot of the information where you look at this, I talk about how much trading is happening. What you want to see is a lot of trading in these things. The worst thing I would say for these is that there's a lot of assets that come here and there isn't a lot of trading, because that means people aren't using them the way that they're intended to be used. They are trading vehicles. You see a lot of money pouring in as these things do well, and a lot of money coming out as these things do well, a lot of money pouring in as they go down. Basically, people are taking profits, trying to call bottom. So for the most part, there's some like a level of like intelligence in the people that are using these things. So it's been kind of healthy, but obviously if you look at Korea, they are like outsized in their ownership. But here in the U.S., we have about $200 billion in these levered ETFs. If you account for notional exposure, the leverage that's embedded in them, it's over $500 billion. So it's huge. But for the most part, the biggest ones are in the biggest names.
All right, James, thank you so much for joining us. James Seyfarth from Bloomberg Intelligence. ETF wow, every Monday, 12 p.m. New York time, as SK Hynix indicated to rise 21% to open at $180.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, "Succession starts now."
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacroix. Listen and watch on Bloomberg Television or wherever you get your podcasts.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Preston. President Trump says this morning in posts on social media he will not sign the bipartisan housing affordability bill in protest over his voter ID law not being taken up in Congress. That bill was a rare piece of legislation. Both Republicans and Democrats strongly supported the housing bill. By not signing it, it becomes law. The president removing 3 remaining members of a bipartisan federal commission that tests and certifies voting machines. That move alarming Democrats, says ABC national correspondent Stephen Portnoy.
Stood up to help states update their voting systems after the 2000 Florida recount. The Election Assistance Commission certifies equipment and offers guidance to state officials. It's meant to be bipartisan. An aide says the president has the right to remove officials who, quote, may not be totally aligned with the important task of securing America's elections and ensuring every legal vote is counted. Top Senate Democrat Chuck Schumer calls the firings a brazen attempt to seize control of elections months before the midterms.
No new attacks on Iran overnight as technical talks on Iran's nuclear program continue on the ground. Flash flooding in the Midwest has led to life-threatening conditions, especially in the state of Missouri. ABC Chief Meteorologist Ginger Z has more.
In Iron and Reynolds County, Missouri, they've got people needing rescue at campgrounds. They've had 6 to 10 inches of rainfall in just a couple of hours. So what's happening here, we have training thunderstorms, meaning they're rolling over the exact same area over and over again. So if you've already had 6 to 10, and now you're going to try to add 3 to 5 inches, that's a big problem. Cape Girardeau, Paducah, also in those flash flood warnings.
Extreme heat across much of the country over the weekend, including in Billings, Montana, where it's expected to be over 100 degrees. Oil prices have been yo-yoing over actions in the Middle East. Checking the markets this hour, they just opened. The Dow is up 50 points, S&P up 14. You're listening to ABC News. Former Olympian David Hearn pleading not guilty to damaging the reflecting pool in Washington.
Hearn told me that he simply touched a part of the blue coating that was already partially detached, telling me, quote, I did not remove, I did not damage, I did not rip, tear, break, destroy, or harm any part of the reflecting pool. His lawyer says every American is at risk and should be alarmed by his prosecution. And now 3 more have pleaded not guilty who have been charged with damaging the pool as well.
ABC's Selena Wang. The family of Mississippi teenager Nolan Wells is calling for answers. He and his friends went out on the 4th of July to an undeveloped island off the coast of Mississippi. The friends came back. He did not, and his body was found 2 days later.
ABC News confirming one of Wells' friends on the trip made a missing persons report to the Coast Guard around 11 p.m. that night. Wells' mother filing her own report with the Sheriff Department just after midnight. Authorities have said they believe Wells drowned, but the sheriff stressed their work is still ongoing to determine exactly what happened.
ABC's Alex Perez. Lawyers for the man charged with killing Charlie Kirk continue questioning the reliability of evidence in the case. They're hoping to raise doubts about the prosecution's case against Tyler Robinson before Robinson stands trial. Fire at a Chinese shoe factory in Xinjiang province has killed 28 people, making it one of the deadliest ever. The Chinese state media reporting the factory's owner has been arrested. Sherry Preston, ABC News.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals and the Bloomberg Business app.
Good Friday morning, summer Friday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. We're streaming live on YouTube and we're streaming live on Bloomberg.com as well. Scarlett Fu and Paul Sweeney here with you with the Bloomberg Intelligence Broker. Coming up, we're going to check in with Anthony Hughes, Bloomberg U.S. Equity Capital Markets report to get the latest on this SK Hynix U.S. listing of ADRs. It priced and indicating higher here in the pre-market. Louis Navallier, Chairman and Chief Executive Officer of Navallier Associates, get his thoughts on these markets. Into the bottom of the hour, around 10:35-ish, SK Group Chairman Che Tai Wang will speak with BTech anchor Ed Ludlow. That's going to be down there at the NASDAQ exchange, so that we'll bring that to you as well. So we've got a lot coming up over the next couple of hours. Let's kick it all off with John Tucker and a Bloomberg Business Flash. John.
All right, happy Friday. This Bloomberg Business Flash brought to you by IBKR. Trade, election, climate, and economic outcomes with IBKR prediction markets right alongside your stocks and options. Earn interest in your position. Receive $1 per contract if you're right. Learn more at ibkr.com/predictions. Right now, the major averages, I would call it higher little change. Healthcare, information technology, the worst performing major industry groups in the S&P 500. And the semiconductor index, the SOX, right now, that is lower, down 0.7%. Then you have the hyperscalers, the Mag 7 index, that is up 1% right now. Delta Airlines reaffirming its full-year profit guidance, but the shares right now, they are lower. Take a deeper dive into that in just a moment. Meantime, George Congalvis at MUFG Securities says the same story seems to be repeating for markets.
It's Groundhog Day every other week. We have a bond market that always goes to 4.5 in the 10-year, 5% on the 30-year. You get tech stocks kind of rebounding, and you get all-time highs, but we're kind of stuck in nowhere's land.
Right now, the S&P 500, 10 points higher, 75.53 on the index. The Dow up 60 points. That's up 0.1%, 52,549. And the Nasdaq Composite Index just turning lower, now down 19 points at 26,189. Because I was confused, I'll try to explain. But so the SK Hynix ADRs set to begin when issued trading, I guess any moment, on the NASDAQ Global Select Market under the ticker symbol SKHYV. That's going to change to SKHY when they start regular weight trading. That'll be July 13th. Got it? Good.
Yeah. So July 13th, the ticker changes.
Yes.
Yes. Okay.
That's not confusing, but okay.
All right, there we go.
Yeah, I used to know about this when issued thing, but it's a market, and we'll make a market in this ticker. But I pull up the Bloomberg quote for that ticker, the when issued, and I don't see a bid or ask. Yeah, so I'm going to not quote any indications until I see it on the Bloomberg.
It just says IPO positioning window started.
Yes. Yep.
All right, we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Scarlett and Paul.
All right, John Tucker, thank you so much. Appreciate that. Scarlett Fu and Paul Sweeney live here in our Bloomberg Interactive Broker Studio in New York City, streaming live on YouTube as well. As John is reporting red and green on the screen here. Let's take a look at some of the stocks on the move here today. We can do that with Avalon Purnell. She's an equities reporter for Bloomberg News. Avalon, what are you looking at?
Have to start off with Meta, that's ticker Meta, currently jumping about 6% after just a lot of positivity across the markets. Part of that is coming from a positive note at SEMI-Analysis, which said that Meta is the only hyperscaler on track to be world-class at data, talent, and compute. They say these three things are integral to building a new frontier model that has the best chance at catching up with both Anthropic and OpenAI. Separately, KeyBank has also upped their price target, saying that the stock is their preferred mega cap into the second half of the year, given more evidence that their AI strategy seems to be working. And obviously, they also had earlier this week a lot of good news about their aggressive pricing for their AI tools, and all of this is making them the top gainer on the S&P 500 this morning.
All right, good stuff. So we'll keep an eye on that one in terms of big tech. Earnings season is actually underway.
It is. Delta starting us off. That's ticker DAL, currently dipping about 3.3% right now, despite posting a really solid second quarter results that topped Wall Street's expectations. Analysts still see a little bit of volatility ahead, understandably so, because third quarter jet fuel guidance was slightly higher than expected. Still, many analysts view this report and also that reaffirmed full year guidance very positively, with many expecting the stock to potentially move higher later on today. Morgan Stanley also writing that the revenue growth is very encouraging and that the company did deliver what the market wanted to see and is setting a high bar for some of their peers that we will be seeing
This is the kind of guidance that frustrates investors. You beat on your quarterly numbers. Okay, take up your numbers by the amount you beat. No, you keep your full year guidance the same, which implies that actually growth in the second half of the year is going to be less than we thought. Boom, sell the stock.
Yep.
Come on, guys. All right, one more.
Yes, Aritzia, Canadian stock, that's ticker ATZ, currently gaining about 4.9%, though earlier jumping as much as 10%. And that's after the Canadian clothing retailer that's also popular here in the US reported better than expected adjusted earnings per share for the first quarter. The company also boosted its full year guidance to account for that boost. And Desjardins analysts saying that the company did deliver another outstanding quarter, really based on that strong product demand and also increasing brand awareness from social media.
They have a great clothes for work.
They do.
Fantastic. Really? Yes. Like if you are a young woman just about to get going on your career, work there for summer first, get the employee discount, and then build out your wardrobe from that. And my hack is you go to Canada when the dollar's strong and you buy your clothes there.
Okay, wow.
I tried that last summer. It worked well.
Is Rent the Runway still a thing?
It is still a thing, but every time I look at it, there's stuff that's not available in my size, so I give up.
There was a while where a lot of the young women here were doing it. And
Yes.
they're saying it was the greatest thing ever.
Yeah, but then when you can't get what you want, it's not worth it.
Exactly.
Right?
And it's tough to actually surf through their website to find things that you actually want as well.
Right. After a while, you're just thinking, whatever's in my size, just send it to me, please. And that's probably not what you were thinking when you first signed up for the service. All right. Thank you so much, Avalon Purnell. She is our equities reporter here at Bloomberg. And of course, for more conversations like this, be sure to subscribe to our Stock Movers Reports, where we offer 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. Let's go back to the big listing of the day, which is SK Hynix, the Korean high bandwidth memory chip maker, although once upon a time was just a memory chip maker. Anthony Hughes, who is our U.S. equity capital markets reporter, is here with us. And this is a huge listing, the biggest by a foreign company in the U.S. so far, right?
Yes, well, it just pipped out Alibaba, which, if you remember, was back in 2014, and it was just a little bit less than this. So, I think by pricing this offering at a premium to the effective price in Korea, they managed to get a little bit more proceeds and sort of meet that record.
This is an ADR or ADS, American Depository Shares Receipt, whatever you want to call it. It's trading on the when issued market. then it'll go regular way in a week or so?
Yeah, that's just a matter of the paperwork, that's required. There were a lot of complications with this offering around the fact that, the Korean government was sensitive to the fact with how many ADRs the company issued. There's a cap on the ADRs they issue, and there's a lot of paperwork that really just means that they want to get this thing listed as quickly as possible, and then you work out all the paperwork later in terms of actually delivering the shares. But all the investors have been allocated their shares, and they're free to trade them now. But just the settlement happens a little bit differently, and then on Monday the stock trades under that different ticker, which will be the ticker long term, of course.
Okay, so they want to get moving on this quickly, and time is of the essence, in part because we've seen these memory chip makers go on this amazing tear, but then since let's call it late June, they've had a little bit of a wobble here. Is Samsung, is SK Hynix going with this listing from a position of desperation or to capitalize on this while they can? I mean, just kind of characterize for us the urgency here and how it relates to the recent price action.
Yeah, well, I think it's important to emphasize that there is a use of proceeds for this offering. They are intending to, they're building a big plant in Korea, and they're also buying these big lithography machines to make these more advanced chips, which sit side by side with the GPUs in these data centers, and they're getting huge demand. A lot of the demand's coming out of the US. I think from what I looked at, 2/3 of their revenues are coming out of the US. So, this is a great moment in time. And I think if you look at the roadshow, they emphasized the structural changes in the industry. And that was the big selling point, I guess, that, even though a lot of these hardware companies, these chip makers have been very cyclical and brutally, it's been a brutally cyclical industry in the past. They're obviously making the argument that it's different. Some people will maybe challenge that. But I think, maybe even if there is some moderation in the business in the next few years, it may not be a massive downturn because of so much demand that's driven by this AI revolution. But the stock is up 600% in the last year, even notwithstanding the fact that it's down a quarter in 2 weeks, but it's up 600% in a year. So obviously by issuing all of this stock, that may have caused investors to free up some money and help to contribute to this downturn a little bit. But in the context of what's happened to this stock and the memory industry in the past year, it's been extraordinary how there's just been a step change in the valuations and $1 trillion valuation for this company joining the $1 trillion club.
Yep. When are they going to? Is this like a typical IPO? We won't get this thing open for trading until late this morning, maybe early afternoon. Is that?
Yeah. Sometimes you'd think that ADR is a little bit different and not quite. Technically, we wouldn't call it an IPO. Some people might not call it an IPO. Right. They might say it's more of a secondary technically, but it is a new listing in the US, and the way the process works here is similar to an IPO, and that's why it hasn't come on straight away. But obviously, as we've talked about with other IPOs before, you want to make sure that the opening price is really reflective of the true market for the stock, and that takes some time to get in all the buy and sell orders, and that's just the way the process works.
So let's talk about demand. We heard that it was oversubscribed, like 7 times oversubscribed.
Yeah.
Is that right? And institutional investors who had wanted to be in from the very start, I don't know if these are cornerstone investors or key investors, but they did not get as much of an allocation as they had wanted.
Yeah, well, with any IPO, you want to obviously rustle up as much demand as possible, but then you want to scale people back so they want more. So that's exactly what happened here. Apparently there was a huge amount of interest in this offering. The 7 times was the number we quoted, and that was the case. And a lot of people were reporting this morning they got very slim allocations. You tend to concentrate the allocations with a small group of investors who are the long-term investors who you like, the company likes. And we've seen with those cornerstones, you've got at least 1 or 2 of the investors there are people who are really gung-ho on the AI trade, and I guess they're the sort of people you want to, the true believers, you want to have them in the offering. But yeah, a lot of people would want to participate in this offering, but there's a technical shortage of the stock here because the amount of ADRs that are being issued here it's only 2.5% of SK Hynix as a whole. It's 28 billion sounds like a big number, but we're talking about $1 trillion company, so do your math.
Good point.
There's a scarcity. And that's part of the structuring of the offering, that's where the banks come in and they create this scarcity factor, which contributes to the early trading. We saw that with the other SpaceX and other IPOs, and the question is always whether that can be sustained longer term.
All right, Anthony, thank you so much. Anthony Hughes will be keeping track of when this ADR begins listing. He's our U.S. equity capital markets reporter here at Bloomberg. And just a reminder that B-Tech anchor Ed Ludlow will be speaking with SK Group Chairman Che Tae-wan in about 30 minutes time, 15 to 30 minutes time. We will keep you posted when that begins.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. This on a day when, volumes are kind of The major averages are kind of So let's get back to SK Hynix. Again, the ADRs indicated open about 17% above the offering price. The company raised $26.5 billion, largest ever U.S. listing by a foreign company. And again, the ticker symbol is going to be SKH, or it is SKHYV, as in Victor. Major stock averages, again, little change.
And John, you mentioned the volumes are kind of Can I put some numbers on the
Yeah.
Okay, about 30% less than typical day at this point in time.
And you do that by going to WEI and looking at the volume this time of day, down 24% for the Dow Jones Industrial Average, 32% lower volume for the S&P 500. The NASDAQ volume 32% below
So I think you're
what it
pretty
normally
spot
is.
on with your
Well, it's like bad, I guess.
We're
It
trying
wasn't
to
is
quantify
kind of
eh?
iffy.
Yes, exactly.
So,
we could do that on the Bloomberg Journal.
That's the kind of day it is.
S&P 500 is up 7, and Dow Jones Industrial Average up 87 points, and the NASDAQ Composite Index right now 53 points lower. Did I say Meta, the best performing stock right now in the S&P 500? Not entirely sure why, though. 6% higher. The Philadelphia Semiconductor Stock Exchange index there, that is down 1.2%. At the same time, the Mag 7, the Bloomberg Mag 7 index, that is up just about 0.8%. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash. Scarlett and Paul.
All right, John Tucker, thank you so much. We appreciate that. Scarlett Fu and Paul Sweeney, we're live here in our Bloomberg Interactive Broker studio. We're streaming live on YouTube as well. Next week, we kick off earnings, kids. Buckle up. And that's got to be some good earnings because we had great earnings in the first quarter from the S&P 500, and the stocks moved on that. And I think folks are looking for, kind of similar type good, strong performance in the second quarter. Let's check in with a professional here. Louis Navalier, Chairman and Chief Investment Officer of Navalier and Associates from one of my favorite towns, Reno, Nevada. Always had some good times there. Louis, talk to us about your expectations for earnings here starting next week.
Well, they should be stronger than the first quarter, which was the best in 6 years. And I think the big thing is going to be are the order backlogs for the data centers, the hyperscalers, still increasing, because that was the big news last quarter. I'm already seeing positive analyst estimates. We're seeing, relative strength in, NVIDIA and things like that already. And so that's a good sign. Obviously, what's going on in memory stocks is good. I know Micron's down today, but it's screaming by. It's 6 times forecast earnings. So I think I want to see the order backlog. But yeah, it's going to be another incredible earnings announcement season. The expectations are high, but we're not going up as much as earnings. So PE ratios are getting compressed.
Okay, so a lot of that is driven by the AI excitement and companies like hyperscalers, as well as those that are the suppliers to the hyperscalers. If you back out of the whole tech and tech adjacent space, what do earnings look like there?
Well, energy has the best earnings this quarter. So I have refiners. I have a lot of midstream. And believe it or not, I have a bunch of Canadian ones. The Canadian ones are less volatile than the American ones because Canada doesn't have the ESG push up there. I know ESG is not a big thing anymore, but we do have a lot of states that still don't want to invest in fossil fuels. So it just seems to screw up some of our integrated energy companies in America. So, but I have tons of oil tanker companies because they're running around trying to replenish inventories everywhere, and the routes are longer now. So, energy is going to be phenomenal. And after that, it's materials, aerospace, something like Carpenter Technology. It's a metals company.
So, Louis, we had a guest on earlier this morning on Bloomberg Surveillance. Tom Keen's a big fan of this guest. He painted a really bearish call on AI. He just feels like it's dramatically overvalued by financial markets today. How do you think about that?
Well, I keep hearing that too. Yeah. I keep hearing that people are, they bought ChatGPT and they're not going to renew. They're using up their tokens. And obviously Claude is the best one right now. Okay. So I'm sure their sales are fine. I'm sure that their Anthropic's IPO will be phenomenal and that'll get everybody excited. OpenAI's IPO is going to be more problematic because I don't think they're monetizing things properly. But, the orders are real. And, I'm here in Reno, where it's dominated by Apple and Google. But we're now working on our third valley. It'll be all data centers. We have these mountain valleys out here, and then all of a sudden, they're all filled with data centers. The Earth's crust's very thin here, so you can get high geothermal real quick. So the data centers do like green energy, if at all possible. And of course, we've got natural gas, which is what they want too. if they have their Bloom Energy fuel cells or their GE Vernova turbines.
I keep trying to steer us out away from AI, but it's impossible to, because they are the driver, they're the engine of the stock market rally. So Louis, let me just get a sense from you. There's all these single stock leveraged ETFs, SK Hynix, of course, listing today, and already there's going to be on Monday a rollout of leveraged ETFs on that stock. Do you engage with any of these products in any way? Do you see other people engaging with them? And how do you think about the risks that people take on when they do so?
No, I don't. And I want to be very honest with you. I rang the bell on the stock exchange, had my own ETF, got 80 million pretty quick. I shut it down because my average spread was 3.54 and I was unleveraged large cap stocks. So when you get to ETFs that are leveraged, you can drive a truck through the spread. And the spreads tend to be tight in the morning, tight at the close, but in the middle of the day, you can drive a truck through them. What's really interesting, Paul Hickey at Bespoke has thoroughly documented how much money you can lose in ETFs if you start trading them. In fact, I'll tell you right now, if you bought SPY or GLD at the opening and sold them to close every day since they've been around, 40 plus years, you don't earn money. The worst is QQQ. If you bought at the opening and you sell at the close, you're actually down 53% in the last 40 plus years. But if you buy at the close, sell at the opening, you're up like 3,600%. So all these specialists make a lot of money in the last 15 minutes after the close, okay? And this is becoming a problem with the crypto ETFs. Paul Aiken's the new chairman of the SEC, is trying to get all this stuff going. You can look at the iShares Ethereum ETF,
yep.
And it's 40% off the price of the crypto. I don't recommend crypto, but it just shows that there's a problem, with spreads.
Right.
And one last thing I'll leave you with, okay? There was an ETF firm out there that used to brag about the pod ETFs. Yep. Well, those are all thinly traded Canadian ones. And at one time they had 20% spreads. I think it's down to like 12% now. So if you don't mind getting fleeced on spreads, yeah, go load up on ETFs, but I think you're going to be poor.
All right, Louis, thank you very much. We'll leave it at that. Louis Navalier, Chairman and Chief Investment Officer at Navalier and Associates out there in Reno, Nevada. Great Bloomberg Opinion column out here today. Meta ushers in the era of the K-shaped company. A new class divide is emerging in big tech between those at the top of the artificial intelligence hierarchy and everyone else, with the former receiving high salaries and resources and the latter being viewed as disposable. Beth Coet joins us here. She is a Bloomberg Opinion columnist, author of this piece. Beth, what's going on out there with some of these big tech companies? It seems like if you're in AI, they love you.
Yeah, I mean, it's really interesting because I think tech has long thought of itself as this egalitarian utopia, and that's a much more complicated story, and we're seeing that play out again here, where I really think there is an AI hierarchy. There's the AI elite, and then there's everybody else. And even if you're doing things with AI, even if you're using AI tools, unless you are at the very top of this hierarchy, you are at risk.
Unless you're the kind of person who is recruited to work at, say, a Meta and in charge of developing the AI capabilities, everyone else just feels like they're, hired hands and disposable increasingly. What is happening at Meta that is really exacerbating this divide?
So we really are seeing this here. So there's, executives have thrown massive pay packet, like 9-figure salaries at developers, researchers, engineers who are really at the top of this field. Everybody else has faced the prospect of mass layoffs. I mean, we're talking, 10% of the company, multiple times over, right? We've seen multiple rounds of mass layoffs here. Workers have been surveyed in order to basically train their AI replacements. They've been drafted onto teams that are described as sort of soulless gulags. So it's this company that once was really one of the most coveted employers in Silicon Valley for a lot of people has now become, it's people are sort of hoping to get laid off. They want out.
What are the companies saying, if anything, these days? How are they responding?
Well, what's really interesting here is Meta has walked some of this back. They've acknowledged recently that the way some of their various initiatives were rolled out was atrocious. They've said the environment is brutal. And I don't think this is because all of a sudden they've discovered empathy. I think this is because it wasn't working, right? Like they are not winning the AI race. And I mean, that's not a big surprise that if you treat employees this way, they're not going to perform for you. So I think they've kind of realized that a little bit. They know what the problem is.
They know what the problem is. How are they solving it? Because there is a talent war. You just talked about these 9-figure salaries for folks who are at the top of the AI game. But at some point, you also need everyone else to kind of continue to keep the ship moving in the right direction.
Yeah, so it's interesting. They've said things like, we're not going to have any more mass layoffs this year, better micro kitchens, sort of smaller teams. They were having in some cases where one manager would have 50 reports. So it was more attentive leadership. They stopped their surveillance program because there actually was a data leak attached to that.
That's why they stopped it.
That's why they stopped it. And so we're kind of seeing that they're saying, okay, we're going to try to move back to how things were a little bit. But I don't think it's that simple. It's once you break the trust of employees, it's really not that easy to gain it back.
So are the established Silicon Valley companies like the Metas of the world, the Googles, are they seeing AI startups in the Valley take poaching talent away? Is that at risk as well?
Yeah, well, what's interesting here is that the way Meta actually got some of its top AI talent was by acquiring, by investing in and then bringing on some of the, well, yeah, it was a big investment. They invested and then brought in some of the talent. So these are the employees that they are really focused on. And then there's sort of the bottom of the pyramid. And, I think just like we see in the K-shaped economy, these employees, they're fearful, they resent what's happening. And, that is also happening here in corporate America.
Well said. Let me just interrupt for a moment because we do have a headline here. President Trump says the U.S. has agreed to continue talks with Iran. He posted this on Truth Social. He said, "We have alerted Iran ceasefire is over. Iran has asked us to continue talks, and so the U.S. has agreed to continue Iran talks." In terms of the market impact, looking at crude oil, WTI, getting a little of a blip higher, but it was momentary, and now back to meh territory where it's up marginally, pretty much unchanged at about $72 a barrel. So we'll continue to monitor the market impact there. But let's get back to Beth Coet, who is joining us to talk about the K-shaped economy that has kind of morphed into the K-shaped company that she identifies as Meta. You know what? I think we have to leave it there.
No problem. Thank you for having me.
Thank you so much, Beth.
Absolutely.
Really appreciate
Thanks.
it. Check out Beth's columns on the Bloomberg Terminal. Let's go over now to our colleague, Ed Ludlow, who is speaking with the chairman of SK Group, Chae Tae-won.
Well, we've been waiting for that for a long, long time. And since I acquired that Hynix about 15 years ago, so this is one of our milestones. So we have to go to access to the U.S. capital market. So now dream comes true. So people asking why now, but this is kind of earliest moment we can have.
The earliest moment possible.
Yeah.
$26.5 billion is a lot of money. But in the context of SK's commitment domestically in Korea and internationally, not so big. Can we expect multiple returns to ADRs, the sale of multiple rounds of ADRs?
Well, yes, I expect we can deliver those things too. So we try to expand our ADR size. And also better, that actually requires a better return. So once we have the better return, then there is more demand. So first thing is that we have to keep the stock price stable, and hopefully in the long run, then we can have that upside potentials. And I see that this moment. So this is the AI era. So this AI era is actually spiked at a lot of demand for the memory. So this is a kind of time for us.
Is this something near term? Did you, with the leadership group and your CFO, say, we will need to do this with regularity, or you haven't discussed that yet?
Well, to tell you the truth, yeah, we've been discussing that one, but I cannot just saying that in a detail yet. So
I appreciate that, Chairman Che. The US listing gives SK a new source of equity capital. But what about the broader US capital markets? Do we see SK Group, SK Hynix as well, become an issuer of global bonds, global debt?
Well, that's possible, but I guess right now, we have enough cash for that, the SK Hynix. Some other company could actually issuing that another the bond and access that the capital market.
Chairman Che,
right.
Bear with me. I'm going to get this out for our audience around the world. This is why we're all here, right? This, you can't even see it. Tiny, HBM4E, high bandwidth memory, 12 layers in this case.
Right.
The whole world knows is the supply right now of HBM, and more importantly, how long is that going to last? Do you have a sort of a year where you see the supply situation changing?
Well, if you really understand all the requirement and the condition for that HBM memory type, and you have to understand that the AI side first. So people know that the large language model.
Yes.
Yes. But that large language model is very important things. But I guess in the future, so the more we're using that AI, and the AI actually requires more.
The inference phase.
Yes, but I see that memory. The main is a KB caching. So it generated a lot of KB caching. Due to that, keeping that the performance of the LLM, then you should have that the large lump sum volume of the KB caching, and you have to actually. This is kind of a memory in people that is the same thing. We store that the memory in our brain, and AI need that those kind of KB caching. That memory has to store somewhere. So, if you had at the better size of the memory, then better performance. It's as simple as that, and that memory cycle is is turning to it's a different cycle. I shouldn't say that the cycle is a different momentum. So, and back then, the old days, the memory chip demand is actually depends on the number of people, number of the hardware set.
That was a consumer electronics story, in part.
Yes.
Boom and bust.
Yeah. Mostly, you had that your own smartphone, but you don't need that tens of different type of the smartphone. You only using that to just one, like a PC.
Right.
So the demand is actually limited by the number of the people. But in AI era, it's different. You may use that your own AI agent in probably in a few years from now. Then you might have that tens or the hundreds difference of your own agent. So that every agent needed a lot of memories because they created a lot of KB caching. So you have to actually store somewhere. That actually needs that huge amount of the memory. Well, that's the AI the era. So I guess that memory business is turning to that, it's a different stage.
You still called it a cycle, though. That's the demand side. A reason to do the ADRs is to raise capital, in part to boost capacity. Your industry peers, Micron, had said very recently they have line of sight to supply improving 2028, the other side of 2027, in part because of the capacity that is coming online. What does SK Hynix see?
Well, we didn't talk to our customers. So we just announced that, a few months ago, so we're going to double up our capacity.
Yes.
Within 5 years. So that means that we've been doing the business more than 25 years. And then with next 5 years, we're going to double up our whole capacity. People see that that's unrealistic and probably the oversupply, and people worry about. Yes. But my customer said that that's not enough. We needed more. So I double up is not. it's not enough. Actually, what they want us that we're quadrupling, or the 5 times, 6 times. So the more is the better, because that demand will be exponentially grow in the future.
Based on that customer demand, what do they see then? If they are the crystal ball, the lens to the future, they believe that their level of demand will stay where it is 2029, 2030? How long does supply tightness respond to that?
Well, nobody expected, I don't know, what's going to happen in next years. But I'm saying that, I have some confidence that the demand will be grow. And our supply capacity never going to catch up. So I don't know how long, but if I think it's going to be until that our society, human society, has set some settlement with the AGI. Then, I guess that that's a kind of normalize at all the cycles. But anyhow, that until then, we need that a lot of memories.
You're with us live on Bloomberg Television and Bloomberg Radio worldwide, and we're in conversation with SK Group Chairman Chae Tae-wan, and we're talking about a record for SK Hynix in terms of US ADRs. Take me back to 2012. SK acquires Hynix. At the time, people questioned that decision. What did they not see? Did they miss that you saw about the potential of that memory market?
That's a kind of a bold decision, and I think that I made it really risky bet in a sense of the financially, because the companies really suffer from that deep debt, and also has to fighting with its own survival. Because 15 years ago, that company is under control by the banks. Simply it's a Chapter 11, and yes, but in Korean sense, what we doing that the banks is a workout program. So, but they doing that more than 10 years in the workout programs. That actually means that nobody really wants that this portfolio, because it's too risky. Reason why is memory business is cyclical. And that actually suffer from that uncontrollable cyclical business cycle. And it requires that every year multi-billion-dollar capex, no matter how.
Yeah.
So even though you don't make the money, but the business require that the machines and expand and adapting new technologies and buying the new equipment. And they have to spend a huge size of the capex. That's why, and nobody really wants that those kind of danger business.
But you did.
But yes, I see it a little bit different, because that if you see that different angle, this memory manufacturing is most sophisticated the manufacturing business. So if you really do it, then you can do anything.
Like if you crack the technology, the process.
Yes, and also the whole process of that manufacturing as it actually once you make the little chips, but chip inside that 380 billion transistor in it.
Yes.
So that's the business. So how are we going to create those kind of things? And it's a small, small size in the silicon things, and we actually put it in the huge size of the transistors. That's a state of art of the technology. So once you're doing that, and I can manage anything, and I can actually challenge anything. Also, in digital world, create a lot of memory in the future.
Right.
So that's
you saw that.
Yes, I just bet on that, and people need that memory. Yeah.
You talked about managing the process and the idea that, at that time in 2012, debt was a very big consideration in the market. It was boom and bust, cyclical. How much is this, you've been asked about this a lot, but the idea of the long-term agreement with customers changed that history.
Right. But there is a supply shortage, and every customer wants to have to secure that their own supply to cover up their own demand. So they're asking us that we need some kind of the long-term contracts. It's not suggested by us, and they actually require
It's
that.
them that's making
yes.
the proposal, not SK.
Not SK.
So they are more willing.
Well, we also love to do it because it's not cyclical business anymore. If we had some long-term agreement, even though it's a downturn, and we still maintain that our volumes and the certain level of the price. So that actually gives us a different momentum. And that actually created another opportunity for we can change it to our business model even.
What about SK's commitments? Where are you going to prioritize your investment, domestically versus here in America? Not just with the proceeds from this US share sale, but generally with your balance sheet.
Generally, outside of the Hynix, and the most important matter is AI data center business. So we announced that almost at the $1 trillion investment in the next 10 years and to set up with AI data centers. My target is about 15 gigawatt in Korea. But I guess at the 5 gigawatt in outside of the Korea. So I'm looking for that whatever area, including U.S. side, and if there is a good chance. And the problem is that the main thing is the power. So power and the price of the electricity is that's a very important matter with these AI data centers. But once we build that AI data centers, and then it can actually synergy between the memory chip and this infrastructure matter. So that's what I'm doing in the future.
We're live on Bloomberg Television and on Bloomberg Radio, and this is Bloomberg Tech in conversation with SK Group Chairman Chae Tae-won.
Thank you.
You talked about the data center, the issues of the data center. This is an SK Group approach.
Yes.
So you're talking about SK Group looking more broadly at the AI stack, not just memory.
Yes.
Where else will you focus your attentions?
Well, a company like SK Telecom, and they are doing their study on putting their resources on their own LLM. Also the applications and physical AI side.
Yes, robotics.
Yes, and the healthcare side. Well, there's a bunch of opportunities, and we've been actually trying to pursuing all those business opportunities in the future.
An issue here in America and in Korea is talent. There is a deficit of skilled workers in the chip industry in America. And a company like Micron knows that there is a lot of talented people in Korea. How are you going to manage that? And again, your investment plans for here in the USA?
Well, to secure that, bring that more talent is, ADR is one thing, good.
One option.
Yeah, options. And ADR gives us that there was some kind of financial play options. Like even the stock option, then we could actually, using that the ADR directly.
Again.
Yeah.
Right.
So it actually attracted a lot of a lot of talent to our group.
I see the ADRs is also about public perception of SK.
Right. That's another things, and the perception is matter. So, we have to spend a huge money on the recruiting a lot of good talent, and I don't really care about the talent. It could be at the U.S., Japan.
They could be anywhere.
Yeah, it's everywhere. So I try to recruiting that much more the talent, and that's the kind of important things. And I'm asking that our CEOs to, your job is to secure that talent in the future. So let's just set the doing, and we're gonna create a lot of jobs, and we announced that several $1 trillion investment plan for in the future. So we need a lot of talent, right?
Chairman Chae, what is the biggest technological advantage that SK has built?
Or on the memory side?
On the memory side.
Okay.
Process? Design?
I guess that, well, you cannot just say just one thing, but...
What's the most important thing?
Well, one team. So Hynix, well, I really focused on we could bring that to just one company, one team. So this is a simple business model and memory manufacturing. So well, we can actually emphasizing that we are just one team. And so I think that the one team made it with a really one big historical achievement now. So that's what I'm saying, and that's the most important matter. Yeah, you can say that there was some design capacities and process technology. This is right, but that's
or working with TSMC on the base die, which the others do not do.
Also, well, we don't actually compete with any customers. That's another.
You do not compete with any customers.
No.
And you feel that's important?
Yes, that's important. And that actually gives us a lot of room to actually partnership in the future. So that's how we can actually maintain all those partnerships.
Bigger picture.
Mm-hmm.
Can you catch up with Samsung?
Oh, that's. I don't want to answer those kind of questions. So I don't. Well, my main goal is that I have to make our stakeholder happy.
Yes.
Well, in order to that, there is a certain part is a competition, but I'm not really wanting to have that's my main goal.
That's difficult though, Chairman, because the shareholders love the profit.
Mm-hmm.
The customers want more capacity, more supply. Those seem to be competing ideals.
That's what we call that the stakeholders. So it's not only the shareholders. So shareholder wants that there are great returns, right? Yep. And the customer wants that there were cheap product and enough supply. So, but well, I cannot just satisfy every stakeholder. But well, we had at a certain balance. So between that stakeholder and what I'm really see that I also have to make that my members members of the company, well, they have to be happy. So happy company make the happy result. So that's a simple.
I need to say, Chairman Che, the ADRs, one stakeholder, the US investor, the ADRs indicated to open $177 per ADR. Of course, the ADRs were priced at 149. The memory market is also evolving. So while supply is tight, there's a very broad look at other technologies. I'm very interested about SK's, Hynix's approach to NAND and flash memory and the role you see that technology playing going forward.
Right. So it's a different type of the memory storage. So DRAM has their own functions, but that's instant things. And like what people, you just remember the certain numbers, and if you just prepare your exam, then you had the real good memory on those certain numbers and certain target. But you also needed a lot of other memories, and when you was young, then you had some memories. But well, that memory needs not just that in a brain. You probably store that somewhere. But like, AI needed a lot of storage. So DRAM has instant response and the instant the response, the type of memories, and you should store there. But if you had more big size and we call that the cold data. So if it's a cold data, then you could actually store in the
And where is the innovation? Sorry to interrupt you, Chairman Che. Where is the innovation on that other side?
Oh, there's a lot of technologies, and the problem is that in an NAND, it actually response is needed a lot of the time. That means it's latency. So in order to shorting that the latency, we need a lot of special technology on that. And probably what we call that the KB caching, the key value caching, and that the cache has to store in somewhere. So that's a kind of the pyramid, the hierarchy of the world, the whole memory storage systems. And we need that all those evolution of the world, those the memory things.
And SK will invest into that technology?
Of course, that's the main business, and well, we're gonna make it, and we could actually deliver some other the business model even, not just at the memory producers. So we could actually memory servicers, like the memory as a service. In the future, that is another area. So we could actually focus on. So
talk a little bit more about memory as a service.
Well, the
basics of how that would work.
Well, it's right now it's a kind of imaginary things, and
it's an idea.
Yeah, yes, just an idea. So, but I think that our whole AI trend, the direction goes there, because that the memory is a kind of real bottleneck, and we have to solve it. And some of the specialists actually bring that a certain type of solution to each customers and each application. So. It's not just that one solution could actually cover all those problems. It's not going to happen, but it's an influencing market, and that influencing market has their own characteristic. That characteristic, and we have to develop a certain adjustment for the stack up to the memories and how to do it, and we need some special software together. But anyhow, we could actually solve as a kind of services rather than just here is memory and you just use it. But we just fix all kinds of different memory, the memory systems. So once we made it, and we could actually deliver as a kind of service rather than just produce it just a commodity.
It's an interesting look at the future. We are live on Bloomberg Television and Radio speaking to SK Group Chairman Che. In October, when you spoke to Bloomberg's Sherry Yan, you said, everyone asks me about AI bubble, AI bubble, AI bubble. And you said at the time, it's about the cost of AI. The cost of AI is too high.
Yeah.
Has that changed since October? And what is the trajectory of the cost of AI?
Yeah, well, cost of AI as you could actually say that token for dollar.
Token per dollar, or dollar per token basis. Yeah.
Anyhow, we have to lower down the token cost.
But do you see it coming down?
Yes, actually, within 3 years, actually, token cost is about 1/5 or 1/10. So that's evolutions, and there is a lot of players just contributed those kind of the token cost is way down. So even my memory company make some solution for how we can actually lower down the token cost. That's our challenge, and our direction goes there. So that's a kind of ecosystem for the AI, and right now its cost is too high, but somehow our technology down the road, probably 5 years, 10 years, and we actually digested all those problems, and it could actually be everybody's AI, and everybody could actually using their own agent in the future. So that's the direction I see.
But no AI bubble.
AI bubble, and when you see that the AI bubble, and that's real world and the stock market always I see that there's some overshooting, and it's too hot, too cold, so there might be that there is a lot of bubble for the stock price itself, but that doesn't actually reflect the whole real world. But the trend-wise if it's a long run, then 2 years, 3 years down the road, then you could actually reflect all the real world. That's what I see. And, you can say that the AI bubble, but I see that the stock market. But this AI technology is real. So you use it, use it. And actually, the problem is, this AI thing is that right now is a little immature, imperfect yet.
It's the early stage.
Because it's the early stage. It's a kind of, I said that it's only 4 years old, baby. But when you become the college boy and something else, then it has much more mature. So it could actually help us at a lot of productivity, and we just rely on all those things. And this is a kind of race, and well, right now we see that there's some AI trial.
Chairman Che, it's a historic day.